I would say happy Diwali to all the viewers and also happy expiry to all the viewers this time around, largely because it is October series expiry today, and this time around the Nifty will snap a 4-series gaining streak this time around. If you just take a look at the last 5 series on the Nifty, from June 2024 when we saw a big move on the Nifty of almost 7%, that was followed up by 1.5% in July, 3.1% in August and 4.2% in September as well. As of now, we have a 7.2% cut in the October series so far, with the GIFT Nifty indicating a big cut at the open as well. The question is whether we see some recovery from the lows in today's trading session or not. October series, 3 major reasons for decline. Of course, one, there was the big FII selling in cash market. Secondly, there was earnings disappointment. And thirdly, there were a bunch of stretched valuations as well. The market yesterday was slightly weak. The Nifty fell about 126 points. The Nifty Bank was down 400 points, even as the mid-caps outperformed. It was, the reasons why the market was rallying has now come about. So if you look at the FII selling in cash market, which was starting to abate, yesterday picked up. They sold about 4,600 crore in the cash market. Even index futures, they were adding a lot of long positions, covering a lot of shorts. Yesterday, that was unwound. They sold about 1,500 crore in index futures, unwound about 32,000 long contracts. And as a result of which, the FII net contracts, which were closer to 0.9 lakh on the short side, have now inched mildly higher to 1.2 lakh on the short side, with longs coming down from 40% to 36% itself. The short point, what happens today? What is the option writers betting on in terms of range? 24,300 put has a fair amount of action for 50 rupees, telling you 24,250 would be a support. On the way up, 24,400 and 24,500 calls have also seen a fair amount of writing, telling you around 24,450 to 24,500 could be a bit of a resistance. So the option writers range expected today, 24,250 to 24,450. Yesterday's high of 24,498 and Monday's low of 24,135 would be the broader range for the index. As we start November series tomorrow, big triggers for the November series as well. We have the US elections, locally Maharashtra elections, US Fed meet outcome, the China NPC, and most importantly, the remainder of the second quarter earnings.
It's going to be a busy November for all of us, definitely. But let's celebrate today. It's Diwali. Thank you so much, guys, for joining us and prepping us up for the trading day ahead. With that, we'll do one thing. We'll slip into a short break. Up next, we'll get your fine print of L&T's Q2 numbers that came through post-market hours yesterday. Stay tuned for that.
Well, cheers to the festive season that's raising the bar literally. India's alcobev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Reddy, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
Welcome back. You're still tuned into Power Breakfast. Well, big boy L&T reported a good set of second quarter numbers after market hours yesterday. Vivek is joining us with the analysis. Good morning, Vivek.
Well, good morning. Quite a lot of numbers that came in post-market yesterday, but none bigger than L&T. Quite a good quarter, beating our estimates on most of the parameters. core margins continue to remain slightly muted, but on a sequential basis, it has gone up by almost 20 basis points. Now, along with that, the most important development as far as the Q2 results were concerned was the fact that the management went ahead and retained the guidance that they had given at the start of the year. Remember, there was some concerns that the company may not be able to meet the order inflow guidance of 10% that it had given at the start of the year, given the fact that ordering activity was quite muted as far as H1 was concerned. Along with that, the company also went ahead and confirmed its change in stance, and now the company will be bidding for thermal power plant projects as far as India is concerned, and that's another big development. Along with that, remember, the company is L1 in 2 large NTPC projects that have come about. Now, talking about the numbers themselves, revenues higher by 20.5%. That's a slight beat to our poll. EBITDA higher by 13%, again above our estimates. EBITDA margins 10.3%. That's slightly underwhelming. Profitability up by 5.5%. Again, we were expecting a flat profit growth. Now, talking about the order inflow, as far as Q2 was concerned, 80,000 crore. It's down 10% on a year-on-year basis. But remember, Q2 last year, you did see 2 very large lumpy orders come in. Along with that, the international orders now constitute almost 40% of the total order book. Order book was up 13% on a year-on-year basis, now has crossed the 5 lakh crore mark. Along with that, the main margin picture, the P&M, the projects and manufacturing core margins, that is, has come in at 7.6%, up 20 basis on a year-on-year basis. But remember, it's still a way off as far as the management guidance is concerned of 8.25%. Order prospects, the company says 8.1 trillion. Domestic as well as international will form 50% each of the prospective order inflow. So overall, a good set of numbers from L&T. Expect the stock to do quite well in the session today.
Okay, so expect the stock.
No, I think we are staying course with that guidance because I think it's too early to read much into how the year will end. But we are reasonably confident that we would be able to meet the guidance as we see today.
Now, we had sort of said earlier that we'll withdraw from the thermal power plant business as they had originally scoped it out and packaged it, which included not only BTG but the entire EPC for the balance of the plant. Once we kind of communicated that, there has been some discussions and interactions with stakeholders. And I think the packaging has been different now, so we are looking at now more as a BTG, which fits very well into our core manufacturing capabilities. We are currently placed L1 on one of the bundles. The discussions are ongoing. We are hoping to win 2 of those at least.
Okay, that will be the big stock to watch out for in today's trading session. Now on to a CNBC-TV18 exclusive story. Air India has cancelled at least 60 flights from India to the US starting November to December, which is considered the peak of travel season. The airline took the decision owing to shortage of aircraft. Many of the airline's wide-body planes also remain grounded due to maintenance and supply chain constraints. And responding to CNBC-TV18, Air India said it has offered alternate arrangements to passengers, including a full refund. Okay, some more global news now. The disengagement process between India and China in eastern Ladakh's Depsang and Demchok regions has been completed. Sources have told CNBC-TV18 that patrolling would begin soon and the modalities would be decided by ground commanders. Parikshit Luthra joins us with more details on this. Parikshit, what are your sources telling you?
A significant moment in India-China ties. The disengagement process at Depsang and Demchok, which had begun last week, has now been completed. This is what top Indian Army sources now tell CNBC-TV18. Now, this is as per an agreement that was reached between the two countries and also between the Prime Minister Narendra Modi and President Xi Jinping. So the consensus is now being implemented on the ground. The disengagement has been completed. Now, Depsang and Demchok were the only 2 friction points in eastern Ladakh where disengagement was yet to take place. What will happen now? There will now be continuous talks between local ground-level commanders, that is at the level of brigadier and below. Both sides will focus on patrolling their locations, which had existed before April 2020. What the Indian side and the Chinese side will continue doing is verification of the disengagement. See whether both sides have removed any temporary structure, any vehicles that had been put to place. This essentially means that the troops have moved back to areas which they were patrolling before April 2020. That is also before the Galwan attack had taken place. Patrolling modalities are now being worked out between the ground commanders on both sides, and the focus now will be on proper communication during patrolling. As a goodwill gesture, both sides will exchange sweets on the occasion of Diwali. So let's see how things pan out. But disengagement is only a first step. There is no true patrol taking place. If the confidence building measures are implemented well on the ground and both sides are confident, then we will see de-induction of troops as a next step.
Pariksha, thank you so much for joining us with all those important details. It's time to slip into a short break. When we come back, we'll talk about all the cues from the commodities market and big moves there. Stay tuned. Welcome back. Let's talk about updates on the US presidential elections. In the last week of US election campaigning, Kamala Harris and Donald Trump started their tour of swing states. The Vice President Harris visited North Carolina before continuing on to Pennsylvania, one of the 7 swing states that might decide the winner. Trump too was in North Carolina at a location roughly an hour away from Harris' event. Trump will host his second event in Wisconsin, another battleground state. Over 57 million Americans have already cast their ballots via early or mail-in voting, which is more than 35% of the total votes cast in 2020 election. Okay, all right. With that, let's move on and talk about the commodity space. Big moves there. Manisha Gupta is joining in with all the updates as always. Good morning, Manisha, and a happy Diwali to you.
Happy Diwali, Vinny. And I'll start with the gold prices, where we are looking at an all-time high yet again, $2,790 an ounce right now. And we've gained 36% in this year with gold prices running, making that string of all-time highs for very many times. Well, the markets are reacting to the third quarter U.S. GDP numbers, which have expanded less than what the street was anticipating. And it's interesting to see that investors are buying bullion despite higher dollar index and yields as well. It has been good gains overnight for the crude oil prices also, which gained 2%. The prices with this gain are off 7-week lows. There has been a surprise decline in U.S. inventories, and Israel threatening Iran to strike harder if there is another missile strike also seems to be adding some premium to prices.
Okay, all right. That's what's happening in the commodity space. Thank you so much, Manisha, for joining us as always. With that, we will take your leave on this edition of Power Breakfast. But as we wrap on Power Breakfast today, wishing all our viewers a happy Diwali from the entire CNBC-TV18 family.
And my own view on this is, look, again, I haven't seen the joke. Maybe it's a stupid racist joke, as you said. Maybe it's not. I haven't seen it. I'm not going to comment on the specifics of the joke. But I think that we have to stop getting so offended at every little thing in the United States of America. I'm so over it. And my response was, can we all just take a chill pill and take a joke from time to time? This is ridiculous.
Reject the kind of politics of division and hatred that we saw represented. America's ready to turn the page. America's ready for a better story. Philadelphia, we are ready.
Unacceptable. The people from Puerto Rico, since Maria, we've gone through a lot of struggle. Right now, we are demanding to our Puerto Rican brothers who they don't have the vote to do the right to get our vote, and of course vote Democrat, because the Republican Party should finish show the feelings against us Puerto Ricans.
Here today with a message of hope for all Americans. With your vote in this election, I will end inflation. I will stop the invasion of criminals coming into our country, and I will bring back the American dream. We need the American dream to come back home. This will be America's new golden age. It's going to happen quickly, too, very quickly. Every problem facing us can be solved, but now the fate of our nation is in your hands. Next Tuesday, you have to stand up and you have to tell Kamala Harris that you've done a terrible job, that crooked Joe Biden has done a terrible job. You've destroyed our country. We're not going to take it anymore. Kamala, you're fired. Get out, get out. You're fired. And I'm announcing a new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's about time that they were recognized, right? They add so much to our country.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. First up from all of us here, let me wish all of you, your families, everyone at your workplace, a very happy Diwali. This is the Festival of Lights. I don't know if you can see the full newsroom behind us, but it's decked up, it's looking festive, and we are ready for it. Not just today, but tomorrow as well, because it stretches over 2 days this time. Guys, hi. Happy Diwali.
Happy Diwali, Prashant. Happy Diwali, Nigel, and happy Diwali to all of our viewers. The gods and goddesses of prosperity and wealth have been very, very kind to us this year. It's been a good year for the country, for the economy, and of course for a lot of us individually as well. And here is hoping that this festival of lights will keep, sparkling more joy, more wealth, and more health in our lives in the year ahead.
Well, indeed, happy Diwali to you guys, and happy Diwali to all our viewers as well, your families, your loved ones. The next few days are going to be heavy for the markets, but I'll tell you what, take a bit of a break, chill pill, and enjoy the festivities because it's that part of the year.
And let's not forget that, India is actually celebrating Diwali on 2 days this year. Yeah. A lot of you, perhaps in the north of the country, are actually doing your pujas today. So, an even more special greeting coming your way. And I think many of us here in Mumbai would be doing this tomorrow.
So basically I looked up, essentially the Krishna Amavasya, it starts today. Essentially it starts at 3 p.m. today and it extends till 6 p.m. tomorrow. So it does not end with sunrise tomorrow. It ends by 6 o'clock in the evening tomorrow. So I think exchanges, that's why when we will be at the Mahura session, Nigel, you'll be at the NSC and we'll have someone at the BSE as well. The puja will happen tomorrow afternoon because, it's still Diwali. So I think that's the, but as you said, lots of people in the north, Delhi, a lot of my family, they're all celebrating Diwali today, and we're celebrating Diwali too. Well, I just sort of turn our focus just a little bit to markets here because we've got a market which is trading, even if many of you are at home and watching this. So let's just start by telling you what you need to know, and we'll rewind the clock back and take a look at where we left things off yesterday. So equities in the US were slightly lower. And the Nasdaq ended about 0.6 odd % down. There was a bit of a cut which came through. Semiconductor stocks, essentially that is the pack which hurt. That was down 3.5%. SMCI fell 30% plus on auditor resignation. There was, of course, AMD earlier which had reported numbers. So a combination of these two, both from the semi space, you had a rub-off effect, and that entire space, of course, has been the leader. And that's the reason why the sell-off on Nasdaq was more pronounced. Actually, you can't even call it a sell-off, just a bit of a pullback. Data was strong, though. You look at, I'm going to put out two. There were actually three, but just these two numbers. ADP, which is private payrolls, private job addition, that number came in much stronger than expectations. So 230,000 compared to 110, which was essentially the consensus. The prior number was about 160,000. So this is 230,000 plus. That is one. Second, the third quarter GDP had come out and many were saying that, well, it's kind of weakish, tepid, etc. But what stood out within the GDP number was the consumer spending part of it. And that was very, very strong. Along with it, in the GDP data, there was also PCE, which is the inflation data, which was subdued. So in a way, it was like Goldilocks, right? Strong growth, but inflation components, which were actually quite weak. And I think that's these are the two macro-ish data points which the market kind of was also responding to. Microsoft and Meta earnings came in. They were okay. I think stocks in after hours trading are slightly lower, but I didn't see anything vastly it was not a big miss or a big beat. They were largely in line. 10-year yield, 5 basis points higher, weighted about 4.3%. By the way, the 2-year went up 7 basis points. But the dollar index cooled off about 0.25% to about 104.09. Typically, they would move in the same direction, both up or both down. So you got a bit of an idiosyncratic kind of move happening, and that largely could also be because of, the dollar index, there's outsized weight of what the euro does. I think 60% of the dollar index is just the euro. So there is that happening. Oil prices 3% higher, 73 plus is where Brent oil prices finally are at. Now, just to circle and tie in the levels here for the market, yesterday we had a bit of a pullback. There was no follow through from the day before. The Nifty struggled to hold the 40 hourly exponential moving average. That's point number one. But the silver lining was that the broader market breadth looked better. You look at the mid caps, small caps, micro caps, and it was almost 5:1 in favor of advances by the end of it. So the levels is what we want to put out. On the way down, the Nifty should not break the lows of 24,073, which of course is the recent, and I don't think that should come into focus. It's not very far away, mind you, about 200, 250 points away. But hopefully that does not again come back into play. On the way up, we need to get above the swing low of 24,567. As of day before yesterday's close, we were exactly 100 points away. We are a little bit more to that point. So 24,567 on the way up. The Nifty Bank ended lower. It gave up about 50% of day before yesterday's gains, but it remains above the 20-day moving average. Here, we need to get above two levels, 52,534, and then the 61.8% retracement of the full decline that we've seen from all-time highs to the recent low, which is 52,835. And on the way down, Nifty Bank support comes in at 51,481. So that's essentially the picture that we are going with. Remember, today is the full, sort of, in a way, the last full trading session for the week. Tomorrow, you've got the Diwali holiday, but you've got the markets trading in the evening for an hour or so. So for all practical purposes in that sense, I mean, it's kind of the last session. 100 points lower is what the GIFT Nifty is implying in terms of an open this morning. Surabhi.
Oh, yes, absolutely. It's been a tough October, hasn't it? I mean, and I thought as we're kind of winding down this month, it's good to have the numbers in context again. So let's put that up first. This October that the bulls would definitely like to forget. We've got the Nifty down about 5.7%. The mid-cap index has fallen a little more, about 6.5%. Then you have the small cap index down 4, and the Nifty Bank is down 2.2. So relatively speaking, banks have been the best of the lot. How has the world done? The world has done, largely a lot better than us, barring the South Korean market, because the Nasdaq is up 3%. The S&P has managed about a 1.5% gain. Shanghai has been the big story of October, 15% up. Nearly on the Shanghai market or the Hang Seng, whichever one market you're looking at, and even the Japanese market, it's continued its upward trajectory. Will November, end India's massive underperformance? And I think a part of that answer lies in the flow situation, which is still not looking good. Because remember, we came in yesterday and we were talking about just a triple-digit sell, just about 500 crores of FPI selling. Well, guess what? Yesterday, it wasn't like they'd taken off on a Diwali holiday. Not at all. There was lots of selling again, 4,600 crores of selling coming in from the FPIs. And as usual, it was more or less getting offset by the domestic institutional buying. So the flows picture is still not looking good as we are winding up this month. Just a couple of cues coming in from the neighborhood. So the factory numbers from China are again actually very good. After 5 months, we've seen the official PMI go back into expansion territory. So it's above 50 again, which is better than anticipated. I mean, most of the, I think, polls were looking at numbers of around 49.8, 49.7, 49.8. But it's been better than that, the September number. We will be hearing from the Bank of Japan. The expectation is that despite whatever is happening in terms of politics and the recent elections, right now they're not going to change policy at all. They'll stay pat, at that 25 basis points level of the benchmark rate. So let's watch out for what the BOJ has to say and if that triggers any kind of a further move in currencies as well. Important watch points today from China and Japan. Oil, now this uptrend that we saw yesterday overnight, and it's continuing this morning. You can see an additional gain on the screen as well. That's because there's a lot of murmur and chatter in the market about OPEC Plus, which is OPEC Plus Russia, them perhaps not ramping up output as much as they had earlier promised by December, that maybe they're looking at the market and they'll say that we'll just delay this output increase. And that's been triggering that rally in oil prices. Now let's come to some macros here at home as well. To put it in a nutshell, the fiscal deficit situation continues to look really, really great because the numbers for April to September, the first half, look at the deficit. It's 4.75 lakh crores, which is so much lower than the same period last year. So that's the good news. The deficit is tracking lower. We're only at 29% of the full year target in the first half, which is fabulous. Now, the undercurrent here is that the government is not spending as much on capital expenditure as it was doing last year. So if you're a bear, you're going to pick up on that point because that capex number is, of course, lower. Tax collections are great, which is why the overall deficit is coming down. But government spending has been lower in the first half of this year. So that needs to be kept in mind. Speaking of spending and speaking of the macros, we had the September 8 core industries growth number come in. That's looking better. Month on month, we've got some growth at 2%. And, I noticed cement in particular because the cement output has surged almost 7% higher as the monsoon period gets over. So that's something positive. And finally, again, ending, since we're talking economy, I think L&T is the best barometer. We'll spend a lot of time talking about it. Numbers are looking good. They have managed to beat expectations on the top line, on the profit. The margin debate will continue on L&T because the core margin, again, is a little underwhelming. So let's see if the market will want to treat this as a glass half full or empty. The order inflow is also lower. It's actually dropped in the second quarter, but that's a high base effect. Largely, I think L&T numbers are fine. The margin debate shall continue.
Well, that's right. And let's get straight then to the top cues that we got from, overnight. So if you look at the top three indicators, Brent crude prices, still it's pretty much well behaved. It's still holding at around that $72 per barrel mark. The yields, well, they continue to stay elevated at around 4.29% odd, while you have the dollar index, which has cooled off a little bit, and that's a bit of a positive. Well, two big cues coming in. On the domestic front, today we'll have the monthly expiry that plays out on the Nifty, and the bulls have got used to their winning ways, but that streak is going to get broken today because for the month of October, well, the Nifty has seen a correction, and that's after nearly 4 series that we've seen a bit of a downtick. On the global front, we've got a lot of cues because you have the jobs data that'll be out, the inflationary data as well that'll be out from the US, and a lot of earnings as well. So plenty to react to in the next 36 hours or so. Moving to the FI data, well, what did they do yesterday? They unwound some longs, they covered mild shorts as well. And that's why they move back into the net short position. Now the short positions by the FIs are close to around 1.22 lakh contracts. While the clients, they remain net long with close to around 2 lakh contracts on the long side. So both those two data points come up for you on the screen. What happened yesterday? Well, we had a bit of an off day and the call writing came back into play. Remember, we're getting into a monthly expiry and you had call writers that were back into play. 24,600, 24,500, 24,400. Put it together, that's more than a crore shares getting written out there. So the bears believe they have got these upper end covered, added on this 24,500 odd mark, and we visited that mark, and from there we did a bit of a U-turn. So that's going to be the crucial resistance zone. For starters, we're going to be starting off below the 24,300 odd mark. Yesterday we bounced off there. So the 24,250 mark, that's a crucial reference point. Though the firm support comes in at around this 24,000 odd mark, resistance you have out there and 100 DMA as well comes up for you on the screen. The Nifty Bank is a little bit more interesting. It was giving that sense that it wants to break away, but now it's it's got a couple of reference points, which is the 20 as well as the 100 DMA. You don't want the Nifty Bank to break that 51,500 odd mark. So we're going to be winding down the series, but let's see whether or not the bulls have got some kind of a fight towards the end of trade. It's going to be an interesting one.
Okay, all right, got that, Nigel. So we're going to keep those levels and a lot of those cues in mind as well. So let's kickstart the action as Nigel rejoins us right here with the equity call of the morning. And this one's coming in from Citi. Surendra Goyal of Citi says that headline EBITDA trends in the second quarter so far are slightly below expectations. Excluding OMCs, EBITDA and PAT growth stood at 6% and 9% respectively year on year. He says while consumer sectors missed earnings, healthcare, industrials and financials continue to deliver relatively decent mid-teens operating profit growth. He adds that the second quarter and the festive demand commentary from non-auto consumer discretionary companies remains something to watch out for. He says after an 8% decline from the peak, the Nifty now trades at near 20 times one-year forward earnings. Both absolute and relative valuations are slightly below the one standard deviation level above the 5-year average. He says their September 2025 Nifty target is 2025, a modest upside from here on.
Okay, so one more call coming in. This is Mahesh Nandurkar of Jefferies, who says that strong domestic demand for equities is finally meeting its match on the supply side. He says equity supply is ramped up to $7 billion per month over the last 4, taking the total supply in 2024 so far to $60 billion. He expects the supply to stay strong, while domestic flows would be likely peaking as calendar 2024 equity flow as a percentage of household savings is getting close to the OECD levels. He continues to stay cautious on the markets. Banks, two-wheelers, healthcare and e-commerce are key overweight sectors for Mahesh. Okay, well, Taimur Beg is now joining us. He's Managing Director and Chief Economist at DBS Group Research, and he's with us here in our studios. Taimur, great to have you with us here.
Happy Diwali
to you.
Happy Diwali. Great to be here.
Thank you so much. We're all decked up, and I thought we were going to see you in a kurta pajama.
Huge opportunity lost. You guys are looking amazing.
We're going to thank you. I'm going to give you the opportunity again after this, Taimur. So how are things looking? 5 days to this big US election. Is that going to be it's going to dominate the news cycle, but will it dominate the market cycle as well, in your opinion?
I think there is enough on the economic and financial market side, independent of the election dynamic. Just look at the GDP number out of the US for the third quarter, 2.8%. Look at the earnings. On the margin, disappointment here and there, but overall, very strong. Look at retail sales, both including and excluding autos, very strong. So the big sort of takeaway from the US economic narrative is the underlying strength is undiminished. Despite all the high rates, despite all the anxiety about how much the Fed can cut or not cut, the fact of the matter is the economy is humming. Independent of who wins next week, hopefully we get a result next week, I think that underlying momentum remains.
And so 7th of November, you think we'll get a cut? Or you think the bar perhaps is not so high now for the Fed not to do anything?
I think the Fed has tied itself. It has to cut, both in November and there has to be a Christmas present in December. The question is 2025. I think the pace with which the market started pricing in over 100 basis points, maybe even 150 to 200 basis points of rate cut in 2025, that will have to be revised in a very substantial manner. And I think the long end of the market is telling us that already.
Yeah, now that they've spoken, they have to walk the talk, right? It's a question of credibility and their own projections. But Taimur, also, there's enough going on in Asia. This morning, I was looking at the PMI print from China. First time we were seeing expansion there. And that's really affected us because I think sentimentally, foreign investors started looking elsewhere as well. It was a bit of this, let's sell Indian equities, let's look for growth elsewhere. What's happening in China and what's your sense?
So clearly, there's a big valuation gap. Chinese stock market is basically trading at distress levels. Even after the rally that we saw in the last couple of months, they're very, very cheap. They're cheap for a good reason. There's lots of bad news and anxiety around China's outlook. But there are companies that basically print money. Very large market, very big e-commerce space, very big transportation sector, pharma sector. So companies that can finally begin to go beyond the overall gloomy construct of China can start delivering very substantial return to their shareholders. Even when I go to the US now, talking to money managers in the US who would not touch Chinese equities in the last 2 years, getting very excited, very interested. So I think there's a big pool of competition out there for the rather rich Indian stocks.
So this is interesting. You're saying the underlying Chinese economy may take its own sweet time to pick up, but some of these e-commerce plays and some of these specific niche companies will keep getting the capital.
There's definitely deep value in a variety of companies and sectors in China. In terms of research, development, commercialization of patents, pretty impressive what's happening in China despite 8 years of trade and tech war.
Hi Taimur, good to have you in the studio today. What about the Indian economy? How do you see things shape up out here? Because till a few months ago we were the only game in town, and suddenly you have talk about China coming back into play as well. Pockets of Brazil are doing well. Could you tell us what is your estimates with regard to the Indian economy? What are the growth targets you're looking at? Inflation seems to be under control, and what are you pricing in with regard to the RBI?
So start with the RBI. I think they have room to be deliberative and data dependent. I don't think there is anybody in the country that's crying out for lower interest rates, given that returns, nominal returns on selling, on doing.
Count me. Lower interest.
So we have some exceptions.
You guys are not crying out for lower interest rates?
For sure.
I don't believe in debt.
I'm talking about a system-wide situation. Are we seeing spikes in NPL or are we seeing distress in credit? And the answer is no. And therefore, when we look at bank profitability, for example, things are fairly sound as far as the financial sector and individual participants in the economy's nexus is concerned. I think the economy has done very well since the pandemic. It's sort of come back in a roaring way. We've seen that reflected in the financial markets, not just the stock market, but also in the property market. Going forward, there is some noise around rural demand versus non-rural demand, outlook for exports. But I think those are on the margin. I think underlying story for India, which is one of substantial growth, both in nominal and real terms, remains high. And again, I talked about US money managers being excited about China. That again is a recent phenomenon. They've been excited for India for the last 10 years.
Indeed.
So you're not seeing this whole consumption slowdown be a real worry, at least as of now, here in India?
I think you're spoiled for choice. I think the weakness, again, is on the margin. Underlying story, most EM markets would die to have that.
But, but it's all relative, right? I mean,
Correct.
the incremental change is what sets the price. So we're cruising along and suddenly you've got a bit of a speed bump. And that is a speed bump, isn't it? Many are acknowledging credit. You look at credit card data. We had the largest car maker, Maruti, telling us that passenger car sales, small car sales are below levels where they were 6 years ago. It's not new data, we know that, but it's once again coming into sharp focus. So are we hitting a slightly softer patch for the next few quarters, in your opinion?
So I think the answer is yes, but also additional rejoinder is it's okay for a bit of a bump. I think 2024 is a bit of a reset. India is not the only game in town. There are other economies out there who will present interesting value proposition to investors globally. Even within India, there are issues related to cost of living, volatility around monsoons, some friction around how far India's export-oriented strategy can go. All of those things are legitimate concerns.
First cut by the RBI, December, or?
I think 2025 early.
25?
Yeah.
25.
I mean, and you're saying that 2 cuts by the Fed this year?
Right.
And nothing from the RBI?
Because domestic inflation concerns, I think, supersede what the Fed is doing.
All right, Taimur, we'll leave you there. Thank you very much for joining us. It's a pleasure. I hope that we get at least one and kick off the rate cutting cycle here in India as well. Thank you very much. Happy Diwali.
Happy Diwali. Thank you.
Okay, well, we'll continue the conversation on economy. Lots of corporate interactions also lined up. So let me quickly tease out what's lined up here over the next 2 hours or so. So at 8:40, you'll have Suresh Sethi of Protein eGovern to talk about their second quarter earnings. At 9 o'clock, you'll hear from Amit Anvani of Prabhudas Lilladher as they talk about their Q2 as well. We have at the L&T Q2, we have Pratik Gupta join us at 9:20. He's a market master of the day. He's, of course, with Kotak Institutional Equities. 9:30, Tata Power Management will be with us. Again, on earnings. It's, of course, the thick of earnings season, so lots of companies are on earnings joining us. Keynes is another one you'll hear from at 9:40 this morning. A little later after that, 9:50, Anil Yadav of IRB Infrastructure will be with us to talk about their second quarter performance. And at 10:15, we'll have our Market Master Special. Lata will be in conversation with Neelkant Mishra of Axis Capital. That's coming up.
Well, time to slip into a short break, but we've got a lot of stock-specific action to track for you. We get to that in just a bit. For the time being, we run you through the list. You're looking at L&T, Cipla, Tata Power, Yatharth Hospital, Sonata Software. All of them will be reacting to positive news flow. And we're split down the middle today. 5 in the green, 5 in the red. We'll have Biocon, Dabur, IRB Infra, TCI Express, and Manappuram Finance. Slip into that break, come back. We'll get into further detail on all of these names.
Spoken of ever, but they're going to be spoken of now. Thank you all very much. The United States is now an occupied country, but it will soon be an occupied country no longer. Not going to be happening. Not going to be happening. November 5th, 2024, 9 days from now, will be Liberation Day in America. It's going to be Liberation Day. On day one, I will launch the largest deportation program in American history to get the criminals out.
Okay, so the setup is all right. It's a little mixed, like we've been telling you, because some of the Asian markets are negative, and then markets like China are positive on the back of good data. What about individual stocks? As usual, we've got lots of earnings to cover, and our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning and happy Diwali to all of you. Yeah, there we go. We have all of them there looking nice, against that green backdrop. So yes, happy Diwali to all of you. Let's start with the big number after market hours yesterday, and that was L&T. Vivek, so the margin debate continues.
But quite a lot to cheer as far as L&T is concerned. Core margins, like you mentioned, missed estimates, but still, both sequentially as well as on a year-on-year, there has been an improvement, and that is something that the street will like. Now, talking about the numbers themselves, good quarters, margins slightly muted, but remember, both sequentially year-on-year, there has been an increase over there. More importantly, despite the fact that there were worries on the street whether the company could go ahead and retain its order inflow guidance, the company has retained its guidance across all of the key parameters that they had kept for FY25. Along with that, important development, something that we had reported earlier, the company says that yes, they are now looking to bid towards building thermal power projects in India, and that is a change in stance as far as L&T is concerned. This is due to a change as far as regulations are concerned, as far as the bidding process is concerned. Now, talking about the numbers themselves, beats expectations across most of the parameters. Revenues higher by 20.6%, EBITDA higher by almost 13%, profitability up 5.5% against expectations of a flat year-on-year growth. The key highlight, consolidated order inflow, despite the fact that it's down 10%, remember Q2 last year had lumpy order wins. Order book very strong, over the 5 lakh crore mark now, and very importantly, the P&M, the project and manufacturing orders, coming in quite strong at 7.6%. Misses the guidance, but the management has alluded that the guidance will be maintained at 8.25%.
Okay, all right, Vivek, thanks a lot for that. Well, let's hop across to Vinny. She's here to tell us about Biocon. Vinny?
Yeah, so talking about Biocon, we are seeing that the Q2 FY25 numbers were a miss versus what the street was expecting. Revenue just saw a growth of around 4%. EBITDA margins have seen a decline of around 200 basis points, while in terms of the profits of the company, they have seen a very sharp decline, 27 crores versus 173 crores, so decline of 84% on a year-on-year basis. What led to this weak performance? Because the generics segment, as well as Syngene, which is the research service side of the business, that has seen a degrowth this time. Generic business, mainly this faced a bit of a pricing pressure, as well as demand pressure also was there for the generic business in this quarter as well. And biosimilar business, that was in line with what the street was expecting. $260 million is what the sales came in for the biosimilar business, a growth of 9%. Other than that, the net debt of the company, that's seen an increase this time as well. $1.4 billion is what the net debt of the company is at. And that's a priority that the company has been focusing on in terms of reducing debt. But as of now, an in-line set of numbers, largely generic and Syngene side of the business, not doing well, and we're expecting a bit of a subduedness in the stock today.
All right, Winnie, thanks very much. But there's Biocon, but there's Cipla to address as well. So back to you. Morning.
Cipla, we are expecting a strong positive up move today. A big positive development that we're seeing, that the Goa facility that has received a voluntary action indicated. This facility had been, facing a lot of issues since 2020. Now this has gotten a clearance. The re-inspection of the Goa facility was done in June 2024. Now this obviously getting a clearance means it paves way for one of its drugs, which is a very important drug, that is generic Abraxane, which is almost a $700 million market size that it has. And analysts believe that this could actually lead to some bit of a sales of somewhere between $70 to $90 million for the company on an annual basis. Launch obviously will be sooner than expected, because Street was anticipating somewhere around in FY27 for the launch coming in. Now, obviously, with the VAI coming in, this will be a positive for the company. As of now, in this drug, we are seeing only one generic player who's gotten an approval in October 2024. That was Sandoz. So, surely a positive up move there. Keep an eye out on Cipla. Strong up move is what we're expecting.
Okay, all right. Got that, Vinny. Thank you very much. So, Cipla is going to be on our radar for sure. But it's time to get back to Vivek and figure out how the quarter stacked up for Tata Power. Vivek?
Good morning. A bit of a miss as far as Tata Power is concerned, as far as top line is concerned, but the EBITDA growth as well as profitability beat, the kind of limited street estimates that we were working with. Power demand in the quarter gone by was muted on the back of the fact that the monsoon, unseasonally high monsoon, led to lower generation. Now, talking about the revenues themselves on a year-on-year basis, largely flat. However, EBITDA, strong higher by almost 20%, and this was aided by both much better solar manufacturing and also a favorable regulatory development coming in as far as the distribution side of the business was concerned. On the back of that, margins quite strong, expanding over 400 basis points on a year-on-year basis. Profitability higher by almost 6%, and this was also aided by the fact that other income this time around was over 500 crore versus just around 291 crore last time around. Couple of key highlights to mention. Remember, now as far as the solar EPC order book is concerned, it's very strong. Almost 15,900 crore is where that order book stands at. And along with that, the 4.3 gigawatt solar cell as well as module facility is now fully functional, and that is expected to start aiding earnings in the coming years.
Okay, Vivek, thanks a lot for that. In fact, we have the management joining us at 9:30 a.m. later today. Just stay tuned for that conversation. But Dabur was the stock in focus towards the final minutes of trade yesterday. Manglam's gone through the con call, and he's here to tell us more about that. Manglam.
Well, for those expecting any sort of, reprieve coming in from the Dabur con call, will be a little disappointed, largely because, much hasn't changed. The management has said that they will deliver mid to high single-digit top-line growth in the second half of this year. Demand will be led by volume growth in the winter portfolio and no pricing growth expected in the second half itself. For the market margins, they expect flattish margins in the second half, which implies that for the full year, they will actually see a margin decline of around 40 to 50 basis points. So that would be a slight negative. And on inventory correction, though a large part of it is done, it's down from around 30 days to 21 days. It will settle to around 19 days by December. And the results were weak as expected. The outlook as well weak. So see some bit of red on the stock, but not much because it's already corrected about 12 to 15% in the last 1 month.
Mangalam, thank you very much for that. That's Dabur in focus. IRB Infra should also be reacting to earnings. Back to Vivek. Vivek, morning.
Well, good morning. Slightly subdued set given the fact that the unseasonal monsoon actually went ahead and impacted construction activity and also impacted tolling revenues as far as IRB was concerned. But when you're talking about the conference call, quite upbeat in terms of the order prospect pipeline. Talking about the numbers themselves, revenues down 9.1% on a year-on-year basis due to the mentioned factors. EBITDA down 3.5%, margins too at 48.4% in this particular quarter. Profitability, however, was higher by close to 4.5%. What did the company say as far as the conference call was concerned? Toll collection impacted due to heavy rains, especially in an InvIT, something that we will be asking the management earlier. There has been some disruption as far as toll collections are concerned. Along with that, the total order book now stands at 32,600 crore, with the O&M portion being at 28,600 crore. Along with that, the company said order prospect pipeline is very strong. 37 crores worth of order prospects is there, with almost 1 BOT project and 4 TOT projects lined up. So that is something that we will get some clarity from.
Absolutely, we will, because we do have the management joining us on the show itself. At around 9:50, we touch base with Anil Yadav to get more details into that second quarter performance. That's IRB Infra in focus. All right, let's move on and figure out, what's the latest with the TCI Express in terms of the performance. Manglam is joining in with the details. Manglam, over to you.
Well, no positive surprises here. In fact, weak performance coming in. 2.5% decline in the revenue, 27% decline in EBITDA, and 30% decline in the net profit. What does the management allude this to? Prolonged monsoon, which led to supply chain disruptions and delivery delays. And secondly, because of lower activity in manufacturing and automotive sectors, there was softness for logistics demand as well. See some red on TCI Express.
Okay, all right, Manglam, thanks a lot for that. Well, let's hop across to Abhishek. He's here to tell us about Manappuram because Ashirwad is in focus. Morning, Abhishek.
Morning, Nigel. So happy Diwali to our viewers as well as everyone at CNBC-TV18. To begin with, Ashirwad MFI, the stress on MFI sector has persisted with Ashirwad MFI as well. Look at the net interest income. That's grown by 25% YOY and about 3.5% sequentially. The loan growth is much higher, which suggests that the net interest margin might have come under pressure on a YOY and quarter-on-quarter as well. Now, provisions increased by 122% YOY and about 19% sequentially. That's on account of the fact that asset quality has deteriorated. So the PAT came in at 75 crore, which declined by 36.5% YOY and about 25% sequentially. Loan growth momentum remains strong. On balance sheet loan growth was 5.5% sequentially and about more than 50% on a YOY basis, which suggests superior loan growth over here. However, asset quality has weakened, so gross NPA ratio has increased to 4.34 versus 3% in the previous quarter, and net NPA ratio has increased to 1.99 versus 1.4% in the previous quarter. It is a subsidiary of Manappuram, so you can expect Manappuram to be weak in trade today. Back to you.
All right, Abhishek, thank you very much for that. So we'll keep an eye on Ashirwad as well as we open up. But more stocks with news flow. Vamakshi has got that list. Vamakshi.
Well, good morning, Prashant. Let me first start off with Yatharth Hospitals. They've acquired a 60% stake in 400-bedded hospital in Faridabad, Haryana. This is for a cash consideration of nearly 91 crores, and this in turn values the acquired hospital at an EV of 152 crores. They additionally announced that they do plan to invest another 100 crores in the new facility to equip it with the latest advanced medical equipment. So, given this development, going with the green for Yatharth. But apart from that, also keep an eye out on Sonata Software. A Fortune 50 American multinational technology conglomerate has partnered with the company. They will be leveraging Sonata CX, which is the company's customer experience measurement solutions, to enhance its products as well as services. And this partnership in turn will encompass nearly 16 key markets across North America, EMEA as well as Asia. So given this development, going with the green for Sonata Software.
All right, Vamakshi, thank you very much for that. So that's the list of stocks that we are watching out for. There's some flashes at the bottom of the screen. This is Bank of Japan essentially saying that they will adjust degree of easing if outlook is realized. There was a meeting today. No change was expected in terms of any action. But there are some comments which are coming saying that we'll raise interest rates if the outlook is realized. Remember, inflation is rising in Japan after almost 25, 30 years. And, very minor adjustments were made. Then there was an election. And of course, after the election, for the first time, I think since 2008, 2009, the party in power lost its majority. The general expectation is that they will pump prime the economy with more fiscal spending, which means perhaps lower currency. But at the same time here, the central bank is saying that you perhaps they may adjust rates higher if if there is the need to do so. I think there is a small uptick as far as the yen is concerned, not the dollar yuan, dollar yen. The yen's moved up slightly, just slightly, because I don't think the market seriously believes that we will see anything from the Bank of Japan this year, despite, of course, what the Fed is doing and the strength in the dollar, etc. So that's essentially what we are looking at. But let's just quickly recap, the stocks, the top 10 stocks for you. You've got L&T, Cipla, Tata Power, Yatharth Hospitals and Sonata Software, which should open up in the green at the back of earnings. On the downside, you've got Biocon, Dabur, IRB Infra, TCI Express and Manappuram Finance, which perhaps are going to start lower on the back of earnings and news flow. Stay with us.
Okay, all right. So those are all the stocks that we have to watch out for today. But what about the commodity cues that we are getting? We have Manisha joining in for that. Manisha, good morning. Happy Diwali. And to start off with, we're seeing a bit of a rebound in oil prices.
Oh, well, yes. As Prashant was talking about, there's a lot of uncertainty right now in Japan with the coalition led by ruling Liberal Democratic Party has lost its parliamentary majority. So there is a bit of a concern coming in from that one. And apart from that, especially when it comes to crude, it also is about the U.S. inventories that have seen a decline. And there are reports that OPEC and allies may delay a planned oil output increase from the month of December. So that is the reason we've seen 2% of gains overnight. Prices are off its 7-week lows. Remember, earlier the prices did decline 6% in the early part of the week, but we seem to be clearly climbing up at this point in time in the Asian markets. Also, good gains continuing in case of gold prices. All-time highs yet again onto that one. $27.90 an ounce is what we've done onto this one. The third quarter U.S. GDP numbers expanded 2.8% versus estimate of 3%. That is yet another thing that seems to be supporting prices right now. The markets will, of course, continue to watch out for the U.S. data that will come in today as well. But in the meanwhile, it's a mixed bag when you look at metal as a space. Copper, aluminum, zinc seem to be doing well. Can't say the same about the other metals. The China manufacturing data has come in stronger for the first time in 6 months. That seems to be supporting many of these metal prices as well.
Thanks a lot for that, Manisha. Well, for the time being, though, we'll slip into a short break. You come back, we'll continue our focus on the markets. We'll get stock specific. Deepan Mehta will be joining in to give us some fundamental analysis. Welcome back. Well, let's get straight to our first management on the show. Protean e-Govern Technologies is the first management on the show. The past quarter's numbers a little bit weakish, but as we have been saying, there's a big potential in this space, massive runway out there. But to understand how do the various segments perform and what's the outlook from here on, we're joined by Mr. Suresh Sethi, the MD and CEO of the company. Hi, Mr. Sethi. Good morning first, and wishing you, your family, everyone at the company as well, a very, very happy Diwali.
Yeah, well, thank you so much, and wish you the same.
Thanks a lot for that. Well, let's talk about your numbers. The past quarter seems to have been a little bit of a softish one, and the start to the year as well has been quite soft. Could you help us out with what kind of a number are you looking at by the end of this year? Because you would be factoring in a recovery in the second half of the year. Last year, I think you did revenues of close to around 880 crores. For this year, on that sort of a base, what kind of growth are you looking at? Point number one, because there's a degrowth in the first half. And secondly, margins are gradually making its way to the mid-teens. Sustainable?
Yeah, sure, Nigel. So I'll pick up on both points. In terms of the numbers, as you would see, there's a quarter-on-quarter growth. This quarter has been almost 12% higher than the first quarter. Our businesses, the core businesses, especially on the tax and pension front, have both shown robust growth quarter on quarter. Again, as we are seeing that there was some impact in terms of comparisons with last year, where the overall market from a PAN issuance perspective was slightly lower in comparison, because last year there was a deadline in terms of Aadhaar PAN linkage, which showed a spike. But as far as we are concerned, we've shown strong gain in market share, almost from 51 to 55% over the course of last year, again, comparing in the same period. Similarly, in pension, we are seeing good growth, and the new scheme which the PFRD has launched for the miners, that has taken off well. It was announced on the 15th of September, and within almost 30 days, we have 25,000 plus accounts opened on NPS Vatsalya. So we are seeing good opportunity on the core businesses, and we will expect it to sustain. And there was also a bit of a lax period with the elections in the first quarter. So we are seeing that momentum coming back and businesses growing quarter on quarter. In terms of margins, yes.
Sorry, go on.
Yeah, in terms of margins, definitely we see that with the numbers flowing in and things picking up, it should show a similar trajectory as we are seeing it now.
All right, so 14-15% of margins is what we could work with. What about the growth? You gave us all the factors at play. First half was impacted by a couple of factors. You seem to be quite enthused that the quarter-to-quarter basis you've seen a growth as well. So how much better can it go? On a yearly basis, FY25 in comparison to FY24, what is the growth you're penciling in?
Difficult to do a forward-looking statement. But from a macro perspective, definitely we see that, again, these are strong businesses with us with the reasonable headroom. When we are looking at the PAN and the pension business, clearly a market out there with under 50% penetration on the PAN front in our country, and not being a saturation ID, there's definite issuance every year. And with more digitization of India, as we see issuance of government schemes for, welfare benefits, again, we are seeing PAN becomes a very important identity to secure. And that is where the growth comes in. Pension, hugely underpenetrated in our country. As we know, when we compare to OECD markets, we are talking about a 6% to an 80% comparison in terms of penetration as percentage of GDP. So good
Mr.
headroom
Sethi.
in this.
Yeah.
Mr. Sethi, hi, good morning. Prashant here. So I just have two questions. One, is PAN issuance going to be the dominant driver? Or are there other legs of sort of growth as well? When we talk about digital public infrastructure, if you can just list out, the top three drivers, because government will come up with more schemes, various other digital public infra sort of rails are being built, and there'll be new ones as well. RAN records, etc., for example, got investors quite excited at one point in time. The importance of PAN and to your business going forward, and two or three other drivers, new drivers, which you think could become significant. Go on.
Sure. So Prashant, definitely core businesses is one I commented on. The other areas in DPI in which we are clearly contributing and building both at the infrastructure level and at the application level is in the area of e-commerce and mobility, which is ONGC, which is again showing good growth. What you were referring to earlier was the agri stack. which we worked with the central government in working on the core agri stack at the center, which was more data exchange with the states and managing those protocols. And that is where almost 13 states are now there, which are enabling and working on the agri stack and running the initial, engagements from there. And we see that going to be strong in building from here. And other areas that we are seeing, there's an opening of the ONDC categories. We've gone into open finance, where we are connecting buyers and basically borrowers and lenders and providing various financial services on the open network, a product which we announced in the last quarter. And that again is a promising area because it opened up the financial market, leveraging the account aggregator framework. And likewise, on a DPI front, we are also have launched something we call as Protean Life, where we are absolutely looking at sustainability and CSR coming on an open network and enabling a fragmented ecosystem which exists today to come together for easy discovery of seekers and providers. So these are some of new engagements which we feel will be very positive in contributing to our business. And last but not least, let me add that other than the core identity services we provide, we build a full stack of digital services, whether it is for digital onboarding, for lending services. And that is one area where we are seeing a clear alignment with the Digital India vision and strong growth on various aspects.
Mr. Sethi, my question is very simple. All that you just described, all of these different business lines that you're scaling up, if you could give us some idea of how they will translate into your revenue mix, not by March of 25, but say March of 26. So as they sort of keep growing over the next year, year and a half, how much of the business will still come from PAN services, how much from data, from identity? Because they have been the big segments for you till now. And just some more clarity on both ONDC, which is going to be the commerce piece, and the financial services piece that you just spoke of, because that's where one would imagine there's also a lot of competition, right? I mean, while ONDC is the open network, there are B2B aggregator networks, there are B2C networks on the commerce side already. So how much can you hope to sort of scale this up in terms of the revenue pie?
Sure. So Surabhi, I'll call it out on two fronts. One, we are contributing at the foundational or the infrastructure level. So today we are powering the ONDC network. And what I mean by that is that the entire gateway, the switch, and the registry tech on which all the buyers and sellers are today being showcased for easy discovery is provided by Protean. And that is where we are contributing at the infra level, where we are the only company today providing that services to ONDC. You are absolutely right. At the application level and buyer and seller applications, there's a lot of competition, but we definitely see our competitive advantage from our perspective as a DPI company. Similarly, on financial services, I think the market is huge. Today, when we see the growth in eKYC, eSign, and the applications being provided for consumption of these services, the market is big enough, so we see growth over there. From a business mix perspective, we are aspiring to clearly see that our concentration on the core businesses gets diversified, and we are aspiring that over the next 2 to 3 years, we work towards a model where the new businesses start contributing around 20 to 25% of our top line.
And that would be ONDC and finance, as well as the insurance.
We have 4 new verticals. So it's ONDC, it's finance or data stack as we call it. It's our international business where we are taking again the DPI assets global, and it is on cloud and InfoSec services.
All right, we wish you all the luck, Mr. Sethi. Thank you very much for coming on. Happy Diwali once again. Season's greetings from all of us here at CNBC-TV18. We'll take a break. We're back on the other side. Okay, I think what we'll do is we won't take a break now. Deepan Mehta is with us of Elixir Equities. He's been waiting by. Deepan, good morning. Good to see you. And season's greetings. Happy Diwali to you. Good to see you all sort of dressed up. So
I got inspired. I got inspired by the entire team. I think all of you are looking really lovely, and really the festive cheers coming through so nicely through the channel. So happy Diwali and happy New Year, and thank you for having me on your show today and so many times in the past.
Absolutely, today and tomorrow, right? So we're celebrating both days.
Yes.
So it's that time of the year. Deepan, you heard the conversation with Protean. Any thoughts? Stocks run up quite a bit. Last 3 months, though, it started consolidating.
So Prashant, I was seeing the interview and the only thing going in my mind is the PE multiple. How can you buy this stock cheaper? I think it trades at beyond 90 times trailing 12 month. I know it's a great business and they have a very high, very strong competitive strengths, very nice moat as well. But looking at these valuations, a lot of the future has got captured in it. Maybe whenever there's a correction or if the price remains stable and the earnings catch up and you get it in that 50, 60 times PE multiple zone, that may be a good entry point. But right now, I think you buy this company and although the numbers will come through, I don't think in terms of returns, you will get such a good return on this stock. So for the time being, I think it's a pass. Existing investors should remain invested, definitely.
Deepan, you've been off the view. You've been cautious at the margin, right? In this correction from the highs, which is about 8-9% from all-time highs, many mid-small cap stocks fell 30-40%. Did you pick up any?
No, Prashant, not really. But our Diwali pick this year is Waaree Energies. Very bullish on that particular company. A big disclosure that we and our clients are in the process of investing in it. And since we have a positive view on the stock, it could be biased. But we're looking at the entire energy space, and the more we know about Waaree Energy, it looks very interesting. And although it is expensive, but I think the growth will be phenomenal over the next few years as it expands capacity. And what we like best is the diversified nature of the revenues. So it's not necessarily dependent only on the Indian market, and the fact that it supplies globally as well certainly kind of endorses their quality.
Okay, Waaree is the Diwali pick for you. Got that. And we'll talk more about this as we go on. Autos, Deepan, from the two-wheeler space, Hero, big correction from the highs. You look at four-wheelers, Maruti, recently numbers came through recently. There's Tata Motors, which has come off quite a bit. Just your thoughts. Tomorrow we get the October monthly sales numbers as well. Do you think we could see some moves here?
No, I think, Prashant, better to stay a bit underweight auto. I think existing investors should remain invested. Prices have corrected also significantly, but I would just wait for a fresh investment perspective. Given that, the volume numbers are slow and also the inventory levels have increased at the dealer levels. We keep hearing about higher discounting as well. So I think autos are in a bit of a cyclical slowdown that could last for a few quarters. Long-term trajectory is good. Valuations are not completely out of whack. So I'd remain invested, but I would wait on fresh investment.
Deepan, 30 seconds. PSU banks, the PSU bank index is up, I think, about 7-8% last 2-3 days. Do you like anything there? You own anything?
Tier 2 PSU banks, IOB, Central Bank, Bank of Maharashtra, I think they delivered exceptionally good numbers. Punjab and Sindh Bank also. And I think that there's a case, definitely a case for PE re-rating over there, and that could give good outperformance.
Okay, all right. You may want to hear the story as well. So private equity firm Blackstone is exploring options for a strategic review of its portfolio. And one of its firms, of course, which it owns is EPL. Ashwin Mohan of Money Control now joins us with what he's picking up from his sources. Ashwin, good morning. Take it away.
Good morning, Prashant. So no formal sale process has begun yet. These are early days, but what I'm given to understand from my sources is that private equity firm Blackstone is currently exploring options to conduct a strategic review of its portfolio firm EPL Limited, which was formerly called SL Propack Limited. Now, my sources tell me that a strategic review would consist of a full majority stake sale, no partial dilution. Blackstone currently holds 51.47% stake in EPL, and at current market prices, that stake is valued at around 4,400 crore rupees. Now, sources are also telling me that early feelers have been sent in from potential suitors, that's both private equity firms as well as strategics. An email sent to Blackstone and EPL remained unanswered at the time of Money Control breaking the story. A few quick pointers about the company. For FY23, FY24, the revenues and net profits stood at 1,280 crores and 176 crores respectively. And it's 5 years back. That's when Blackstone first acquired a majority stake in EPL. So they're clearly now looking at a strategic review to unlock value. With that, it's back to you, and also happy Diwali to all of you in the studios.
Well, happy Diwali to you, Ashwin. Keep breaking those stories. Thank you very much for joining us. We'll take a break here. Deepan is with us, but we'll also have Mitesh and Sudarshan join in with some technical trading ideas. Stay tuned.
I've known Michelle for years, and she is an inspiration. I know everybody here knows this. She is a truth teller, and she motivates us to get to work, especially when the stakes are high, because as she reminds us, as my mother taught me, don't just sit around and complain.
Welcome back. Hope you're having a good morning. Well, let's get in our technical experts. We have Mitesh Thakkar as well as Sudarshan Sukhani who join us on the show. Good morning, gentlemen. Happy Diwali to you all. Thanks a lot for always being a support to the channel. Wishing you and your family very, very well on this Diwali as well. Well, Mitesh, you go first. Tell us what's your take on the index. We pulled back a little bit yesterday. We're likely to start off with a cut-off close on 50-60 points out. How would you approach trade?
Morning, Nigel. So, two observations. Last few days I've been trading on the positive side. But yesterday, I think towards the second half, we kind of diluted most of our long positions, barring a few. And the reason is that if you check the Monday, Tuesday, and Wednesday's high, Monday's high was 24,492, Tuesday was 24,484, and yesterday was 24,498. Clearly, 24,500 is weighing in heavily in the short term. So either you buy once the markets or the Nifty is ready to break beyond 24,500 and then look for another 250, 300 points, which is 24,750, 800 zones could be revisited. Or you wait for the trend line support to come into play again, which is now closer to about 24, 180, 200 zones. So either you buy there. So on the index, I think I'll wait it out. But these are the two very important levels to watch. In case we start breaking below 24, 150, 180 zones, then I think, we'll even look at aggressively shorting the markets.
Okay, just those numbers again, Mitesh, those two numbers.
On the upside is about 24,500, looking at the last 3 days high, and the downside trend line support is at about 24,180.
24,180 on the downside and 25,500 on the upside. Thanks for that. Again, happy Diwali to both of you. Sudarshan, good morning. What about you? How would you trade the market?
Yeah, good morning. Well, we've been seeing significant resistance at higher levels, and that tells us that the Nifty is not prepared to break out, at least not for the time being. Today's trade is on the downside. It's very rare that we get a short trade, but the chances are that today's monthly expiry, weekly expiry, the market is likely to make a big move. It's unlikely that the big move will be on the upside. So traders may look to buy puts or simply go short in the Nifty today, keep a 75-point stop loss, and look for a significant trend day. I can't give a level because the markets can go anywhere. But just for the day, I don't think we should be buying. We should either be stepping aside or looking for short positions.
Okay, all right, got that. Well, I'll tell you what, gentlemen, stay with us. For the time being, we'll slip into the short break. Come back, we'll get the pre-open rates. We'll also connect with Amit Advani of Prabhudas here. That he's here to tell us more about L&T. Stay with us.
Injustice and we will win because together, and this is about all of us, we are fighting for America's future.
There are good reasons why so many women and physicians are horrified by what's happened since Donald Trump's justices overturned Roe v. Wade. We're seeing women scrambling across state lines to get the care they need. So please, do not hand our fates over to the likes of Trump, who knows nothing about us. Vote for him is a vote against us, against our health, against our worth. Let me warn you, your rage does not exist in a vacuum. If we don't get this election right, your wife, your daughter, your mother, we as women will become collateral damage to your rage.
Welcome back. So let's go back to our technical experts and get some ideas going in terms of today's trading picks. Mitesh and Sudarshan, wish you a very, very happy Diwali. Let's come down to stocks. Mitesh, what are you working with today?
Yes. On the stock side, I have a mix of buy and sell calls. Good morning, Surabhi. Happy Diwali to you and the entire team. I have a mix of buy and sell calls. On the buying side is Ramco Cement with a stop at 864 for targets of 920. And Federal Bank on a mild decline, say a rupee and a half kind of a pullback. Buy here with a stop at 197.5 for targets of 212. Disclaimer that I have positions and bullish bias positions on Federal Bank, so there's vested interest. And on the selling side is Godrej Properties. Keep a stop at 2,900. Look for targets of 2,820. And Dixon Tech, I think after a long time, there's signs of pullback and a correction over here. So sell this if it starts sitting below yesterday's low. And keep a stop at 14,500. Look for targets of around 13,500.
Okay, all right, got that, Mitesh. Thanks for the calls. Sudarshan, coming to you as well. Good morning and very happy Diwali. What stocks today?
Yeah, good morning. Well, the stocks are not relevant for today. They are really Diwali picks, so you have to take it that way. The first is HCL, and I own shares in it. HCL is probably likely to be an outperformer in the next 1 year, so consider buying this. The second is the PSU Bank Group. So rather than, you could actually listen to the experts here and buy one or two of the PSU banks which they recommend. Otherwise, a much easier way to invest in PSU banks is simply to buy a PSU bank ETF. There are plenty available. That's two. The third is Manappuram, which has had a battering and is likely to have another one today. This is a buying opportunity in Manappuram. Here I can give you a stop loss of 150. And the fourth is TCS, where a small decline is a buying opportunity. Keep a stop at 4,060. But consider all of these as an investment or positional trading ideas, swing trading ideas, not for the day.
All right. We'll leave it there, gentlemen. Thank you very much for joining us and running us through all of that in terms of specific trades. Talk to you again soon. You know, the dollar rupee is opening up. I mean, the first minute, 2 minutes. The pre-open, of course, is also kicking off, but it's too much all over the place. I think a few minutes more, and we'll have a better sense of where we are starting. Deepan, of course, is still with us. Deepan, thanks for waiting. Just a couple of stocks I want to throw your way. One is 5-Star Finance. Sold off 12%, ended down 12% yesterday on the back of numbers and the guidance, etc., which was lowered. So if you have a view, stock's not done anything since the IPO. Good quality pedigree, though. That is one. And MCX sold off about 6-7%. Some buzz chatted in the market that maybe a large block is around the corner. But, of course, nothing confirmed yet. Go on.
No, Prashant, very positive on MCX. I think amongst the entire exchange space, I would rate MCX as the best stock to consider for investing. That's because its options market is still at a nascent stage and it has considerable scope to scale up that segment. And all the costs also now have significantly come down. Their entire platform has stabilized and it's a great operating leverage business. Gold is doing extremely well, and that means volumes are going to go up in value and volume terms as well. I know it's slightly expensive, but the earnings will surprise you on the positive side. With 5-Star and all other NBFCs, I know they are reporting good numbers, like a few of them are, but considering the environment and the overall situation in the industry, I just want to wait and watch.
Okay, all right. Got that, Deepan. Thank you very much for all the advice, all the calls today through the year. Wish you a very happy Diwali, and we'll keep chatting again. For the time being, let's actually turn the spotlight on L&T. Now, the company came out with what looked like a really good set of numbers because you did get that beat on the top line, on the profits, margins more or less in line. There's a bit of a dip in the order book, though. Let's go across and understand more details in the internals with Vivek. Vivek, so now fill us in on the big picture, L&T.
Well, that's right. So going into Q2, what are the key worries of the markets? Number one, execution was a bit of a worry, especially, given the monsoon factor, and Q1, you actually saw quite a bit of halting as far as execution was concerned, given that the elections were underway. So that was one worry. The second worry, of course, was the order inflow. as well as the order prospect pipeline. What are the worries as far as order inflow is concerned? Government spending in India so far has been quite muted. The other worry was moderation as far as Saudi capex was concerned. But this has been addressed by the management. And along with that, the bigger worry that we always discuss is the core P&M margin guidance at 8.25, but the company has been underwhelming as far as execution is concerned. But let's take out the top 5 key takeaways as far as L&T's results were concerned. Number one, the core P&M margins at 7.6%. This is up 20%, 20 basis points on a year-on-year basis. That is one key takeaway. Order inflow as far as H1 was concerned, while optically down 10%, it has surprised positively, coming in at 80,000 crore. And remember, last year you actually had a couple of one-off large order wins that came through. Number 3, guidance across all key parameters, top line, order inflow, all of that has been retained. So that takes away all of the worries as far as moderation in capex is concerned. Number 4, look at the order book. Order book stands at 5.1 lakh crore, very strong order book. And lastly, change in stance as far as entering tenders or bidding for tenders as far as thermal power projects are concerned. Company said that they would selectively bid for BTG part of the thermal power projects. Yesterday evening, the company did hold a media conference call. Let's listen into bites from that particular call.
No, I think we are staying course with that guidance because I think it's too early to read much into how the year will end. But we are reasonably confident that we would be able to meet the guidance as we see today.
Now, we had sort of said earlier that we'll withdraw from the thermal power plant business as they had originally scoped it out and packaged it, which included not only BTG but the entire EPC for the balance of the plant. Once we kind of communicated that, there has been some discussions and interactions with stakeholders. And I think the packaging has been different now, so we are looking at now more as a BTG. Which fits very well into our core manufacturing capabilities. We are currently placed L1 on one of the bundles. The discussions are ongoing. We are hoping to win 2 of those at least.
Okay, so that was a word from the L&T management. Vivek, thanks for that. By the way, in the pre-open, the stock is up about 4.5%. So the market does seem to be excited about the fact that execution seems to be absolutely on spot. And at the top line level and the profitability level, absolutely no issues over there. We have Amit Anwani from Prabhudas Leeladhar joining in to talk about the trajectory ahead and sort of what you can expect from the stock. Amit, thank you for joining in. Wish you a happy Diwali, first of all. So I think the market is in a bit of a festive mode. For once, it doesn't seem to be sort of complaining and being glum over this whole core margin issue, because the management keeps saying that as those legacy orders sort of get executed, the margin will move higher. Your thoughts?
Right. So be wishing you all a happy Diwali. And then coming to margins. So if you see, margin issue has been shadowing the stock from almost 5-6 quarters post-COVID. After the legacy order execution, all of us were expecting some margin revival. But I think on positive side, somewhat in H1, they are able to maintain the kind of guidance and margin versus last year when they given much higher, I would say higher guidance. And then each subsequent quarter, the margin guidance was lowered and not favorable. But having said that, comparatively, the P&M margin, they have maintained at 8.3% this year as well. And seeing H1, there is 10-20 bips improvement. And H2, I think, can be expected to be stable. So in that sense, we are also not building in too much improvement in core P&M margin. And next year, I'm building in some 20-30 bips improvement that is there on margin. So I think if you see, execution was expected to be healthy because of the opening order book was quite strong, and we saw international orders also contributing quite strong. So I would say healthy performance, stable performance, considering the geopolitical challenges as well as the core business infra margin were under pressure in previous quarters. Yeah.
So the question is, I mean, in terms of stock, a kicker from here on, I don't think the order inflow dip is much of a concern, because I think that what I've read is that the last quarter was a very high base. And overall, they're retaining their full year order intake guidance as well. So do you see any concerns at all? And if not, then what can we expect on the stock? What would your target price be? L&T's delivered a 20% growth this year in terms of the stock price, very much in sync with the market. What do you see ahead in the next 12 months?
Right. So if you see, Surbhi, this quarter, the intake was about 80,000. H1 is about 150,000. So considering that there's a 10% growth, the H2 ask is about 180,000, including service orders, and the core EPC orders should be about 150,000. The company has guided for 8 lakh crores of pipeline, which indicates 19% conversion, so better conversion than H1. So I'm assuming that they have been also building in this large thermal order, which has been talked about, where the company is L1. This could be as big as 4 gigawatt, and considering the BTG component should be more than 15,000 crore order. And I think thermal itself, if you see broadly, thermal power EPC has also been developing as a good order intake prospects for many companies, and now L&T chipping in and guiding that they have been on the favorable terms to get this orders, and they have decided to go in thermal. So I think that improves the prospect. And as you rightly said, the base quarter was having 40-50,000 of lumpy orders from Middle East, which might not be the case in H2. But having said that, the domestic market, especially the thermal ordering, which they are now getting into, can improve the prospect, and they are able to meet 10%. So in short, I think also going in FY26, I think domestic market has been muted for the company from past 2 financial years, despite very strong export market. And now is the time that the domestic also should come back when the tendering and power defense, power and infra is going to pick up. So the highlight was also on a lot of orders in data set, in hospitality, real estate, and other infrastructure projects, which can actually kick in H2 and H1 of next year. So I don't see inflow as a concern currently.
Okay, what's your target price?
Right, so our target is about 4,100. We are maintaining buy.
Okay.
And I feel the stock has been sideways from quite some time, but positive for me is that they are able to maintain the key parameters like working capital, good growth. So we believe with a longer term perspective, there's a potential, but near term, there's a side.
Got it. So around 4,100. Got that. Thanks very much. And you take your point completely on the, that big aggression coming back on the thermal side for L&T. We've seen that in the recent past. There was a large NTPC order where I think L&T was competing with the likes of DHEL, and I think eventually it did go to them. So yeah, they're getting back on the thermal power generation side in a big way as well. That's L&T. Right now up 3.5%. By the way, the other pre-open stock we should keep our eye on is Cipla. This Goa facility VAI, which is basically less severe FDA action than an official action indicated. I think that's, look at that stock, 10%. Cipla is a big rocket this morning as well.
Indeed, and that paves the way for visibility in the US market, besides this approval coming through. So there will be a recovery sooner than expected in the US business. But let's go across to Vinny. She's here to tell us exactly about Cipla, why that stock is high and Biocon is lower. Vinny, take it away.
Good morning. So yes, Cipla, we were expecting this strong up move to come in for Cipla. Big positive development. That Goa facility, which was under a bit of a regulatory issue since 2020, now that clearance has come in because they've received a voluntary action indicated. Let's not forget, this paves way for some of these niche products that they wanted to launch and which were pushed back previously because there was no clearance coming in on that front. So when you talk about one of the important drugs over there that they will be manufacturing, that's going to be that's generic Ebrexan. This is a market size of around $700 million for this drug, and it's mainly used for chemotherapy drug in treatment of cancer. So this is a very important one for the company. As of now, the competition in this also is very low. There's only one player on the generic side who's gotten an approval, and that also was in October 2024. So good up move in terms of, we could see for the sales of this as well. Analysts are highlighting that a $70 to $90 million sales is possible for Cipla on an annual basis. They're factoring in an EPS upgrade coming in for FY26. So thumbs up even coming in from brokerages on this front, as well as overall. There are two other drugs also which will be manufactured here. So big positive on that front. While Biocon, when you talk about that, a bit of a red that we are expecting here. when you look at it in terms of the numbers, that was a miss overall coming in. Margins were much below the estimates that we saw, as well as mainly weak performance in generics. Syngene was the impact that came in on the earnings of the company, and debt of the company has seen a rise. $1.4 billion is what the net debt of the company is at. So keeping an eye on that.
Okay, all right on time. Vinny, thanks very much for that. So those two names in focus, one up, one down. And the first rates, we'll look at, of course, the indices, we'll look at the Nifty heat map, and then we will proceed to look at individual stocks. I mean, it's nowhere near what GIFT Nifty in the morning was showing. And yeah, I mean, it was showing a 100-point downtick, and it did seem strange. I mean, why should market overnight was slightly lower, but a 100-point cut didn't square. The Nifty is absolutely flat. The Bank Nifty is absolutely flat. That's more like it. And you've got the mid-cap index, which also will come up on your screen. Remember, yesterday, the broader market did much better. And that was a silver lining. Micro, mid, small, everything did very well. Mid-cap index is down about 0.25% right now. And the Nifty is down about 20, 30 points. Mid-cap index is down 70. So that's under 0.25%. Overwhelmingly, the Nifty heat map shows you that 35 odd names are in the green, in the red, and about 15 odd names are up in the green right now. So yeah, it's a lower start. And maybe it will expand and the cut will become larger. We'll see. But to begin with, it's about 20, 30 points. Surabhi.
Okay, and it's all about Cipla and L&T, the stocks that we were just discussing. Cipla is up 7.5%. Remember, this VAI, voluntary action indicator, is not as severe as an OAI. So basically, it's good news for their Goa facility, which is really helping the sentiment around the stock. L&T up 4.5%. Smart showing over there on the second quarter performance. There's Dr. Reddy's, which is up and about. And some of the auto stocks, by the way, are still continuing. A little bit of green from yesterday. Hero Moto, Bajaj Auto. These are stocks that are managing about 0.5% to about 1% sort of an up move. There's ICICI Bank that's trying to fight for the bulls. Let's see. HDFC Bank and Kotak, even Axis. The banks are absolutely at the flat line. The next couple of minutes and hours will determine where they go and where they take the market with them. Right now, they're at the flat line. So let's watch. If we talk about the weak hands, then IT is selling off today. Tech Mahindra, Infosys, TCS, all these stocks on the downside. Apart from this, there's some profit taking on consumer names like Titan and Trent. Both are weak. Even Asian Paints is weak. ITC is weak. So yeah, those seem to be the early trends as of now. Consumer weak, IT weak, banks, undecided as yet, and Cipla and L&T are your large cap stocks of the morning.
Well, that's right, Surabhi. And from the broader markets, so plenty of stocks moving around. Akzo Nobel, there are a couple of articles that suggest that the promoter entity will be looking at, getting out of this business here in India. That stock's up close to around 8%. So volume's not very, very high though on that one. Prudent Corp, that stock is up close to around 7.5%. Volume's picking up on that particular name. DCM Shriram, that's another one that's gaining big time in today's trade. So that, in fact, is up close to around 7.5%. So good move is what we're seeing out there. A couple of stocks have been in upper circuit. DCX Systems, they had that order win that came in there. The stock, though, had corrected sharply from the recent peak. Then a couple of other names. Coffee Day is up close to around 5% or thereabouts. On the losing end, you get a couple of stocks actually that are moving on very, very large volume. Genesis is now down close to around 8%. So big down move is what you're seeing. Five-star business, they trimmed down their growth guidance. They've trimmed down their yields as well. And after seeing a cut of 14% yesterday, well, it's down another 5% today. So big downtick is what we're seeing out there. Automotive Axles, that's the other stock in there. That's down close to around 5%. But otherwise, the headline index is more or less flattish. Breadth of the market pretty much even, Stevens. The Nifty Bank putting its hand up once you get counted today.
No, I mean, absolutely. And, we'll sort of get you more stocks as we go along. For now, we're down Nifty. I think I saw a larger cut, but it's been quickly pared back. We're down about 30 points. So 24,300 or so is where the Nifty is now trading at. Autos is another pack, right? I mean, we keep an eye. So we get sales numbers tomorrow, and you get a glimpse of what at least part of the festive sales have been like. So in that sense, whether it's as bad as what the sentiment or perhaps is a little better. So at the margin, there could be some moves here for individual names. Hero ended up 2%. It's up another 0.5% right now. And the other auto companies are all coming up on your screens as well. Maybe just a few other things. It's actually out of the gates, it's 1:1. 1 up for 1 down. So advanced decline is flattish, absolutely flattish. Walkhard is up 3%, and it'll come up on your screen, 1186 or so on Walkhard. There is Prudent, which is a mutual fund distributor, 6% higher, 28.90. It's got large volumes in it. There's New India Assurance, 2.5% in the green. Life insurers have all been seeing a flip-flop. Day before yesterday, they were all higher. Yesterday, they were all lower. So not very much change by the end of the two sessions. You've got Godavari, which is up about 2.33%. DCM Shriram is up 7%. I think it was mentioned earlier. Reddington is up about 5%. These are all got large volumes. The number one volume traded counter right now is, of course, L&T, which is looking very, very good. But it's 1:1 still in terms of what's up and what's down. 5-star is down 6.5 after yesterday's near 12% cut. It's down another 6.5 and it's ranking as the 5th largest volume-led loser across the board on the NSE. And look at Manappuram. Manappuram is down about 4.33%. And look at IRB as well. IRB is down 3.5. You'll hear from the management a little later here on the program. So lots happening as far as specific stocks are concerned. Not very much to show for it on the Nifty, which is down about 14-15 points at this stage. Nigel, you want to take it?
Just one more stock.
Yeah.
You know, Genesis, the volumes are very, very high. Last couple of days, the stock actually was up close to 12-13%. Yeah. It appears large equity has changed hands out there. So it'll be interesting to see who exactly was the, the party out there. Because if you look at it, the stock was down close to 10-12%. Now it's pulled back from the lows. Very large trade took place at much lower levels. So we'll keep an eye on that.
You know, so from 666, it went up to about 830.
Yes.
And in 2 days, and now it's seeing a bit of a reversal, 4.5% lower. 2 million shares. Don't see that usually for a name like this, right at the word go. Prateek Gupta is our market master today. He's CEO and co-head of at Kotak Institutional Equities. Prateek, thank you very much for joining us. Happy Diwali to you, your team at Kotak, your family. And it's, of course, great to have been chatting with you over the years. Thanks very much. So let's tackle the big question, Prateek, which I think you maybe won't have a definitive answer, but you can give us some color. Foreign selling, Prateek. You service pretty much all the large FIs here in India and in the region as well. What's the sense you're getting really?
Good morning, Prashant. Happy Diwali to all of you at CNBC and also to all your viewers. Thank you for having me on the show today. As far as foreign selling is concerned, we think, unfortunately, the worst is not over as yet, especially as you head into a volatile period over the next 1 or 2 weeks. Couple of things. Firstly, fundamentally, you have the valuations in India, which is still somewhat expensive, even though we've come off about 9 or 10% from the top at the Nifty level. But as far as overall index is concerned, we're still trading at roughly 21 times 1 year forward earnings. Earnings growth is actually slowing down, and we don't have any signs of interest rate cuts either in the US or even in India. Even the RBI sort of pushing back rate cuts. So when you look at it from a valuation, earnings, interest rate or cost of equity perspective, all these factors are working against us. Now, on top of that, like I said, you've got a couple of events coming up. First is the US presidential election next week, which could, either way, we think it'll result in bond yields going up. They've already gone up quite a bit as the US economy seems to be pretty strong. Inflation's still running high. And that in turn is putting pressure on EM funds, EM outflows. And as and when the US election gets out of the way, we believe the Chinese stimulus is also likely to come through in response. One way or the other, they've been holding back for the US elections before they come out with their big stimulus package. We don't know how big or the exact timing of that, but in anticipation of that, the Chinese markets are also likely to be somewhat more robust. They've already run up a bit, but they've corrected, and everybody's waiting and watching to see what kind of stimulus China comes out with. So in an environment where with US bond yields going up, outflows or at best steady state situation with EM flows, you could see more foreign selling with money shifting from India to China or other parts of the world. That's one. Second is you have a ton of issuance coming through, IPOs, QIPs, which are coming through, which are likely to suck out liquidity. And even locally, investors are becoming a little bit cautious. And you're right, at Kotak, we do speak to pretty much anybody, any FII who invests in India. And by and large, unfortunately, despite the market correction so far, we still aren't getting any major inquiries or which stocks to buy or what's looking interesting, or are we getting close to price levels which are now worth considering. So by and large, investors still cautious and no rush. We are seeing decent participation in some of the IPOs and QIPs and blocks, but that's very tactical. Most of these things come at a discount to their prevailing stock prices or to their peers. So therefore, there's some interest over there. But it's not a very broad base. So unfortunately, in the very short term, things are looking a bit, we maintain our cautious view in the short term. But then again, if you take a slightly longer term view, we are more constructive. So, but let me just pause here and see if you've got anything else to ask.
No. Yes, we do, Pratik. Hi, plenty of questions. Season's greetings to you. Wish you a very happy Diwali to you and your team and all at home. So, yeah, I think, the festive season has come at an interesting time where I think investors are being forced to pause and sort of reflect, take a look around and reassess what they need to do. So then let's actually address that. Till we get more clarity on things like US elections, pace of US rate cuts, pace of India rate cuts, when these are beyond investor control, right? Till we get that clarity from a portfolio perspective, would you advise any more tweaks? There's been talk about, of course, taking money off the great capex trade, which I think you folks have already been fairly cautious on, just given the valuations in the run-up. But then consumer isn't quite kicking in. So what do you do? Portfolio call now.
So that's a great question, Surabhi. And I think basically what we are saying is in the coming year, if you look from Diwali to Diwali last year, we've had a great year. I think especially in the small mid caps, they are up about 45%. The Nifty is up some 23, 24% or so. So you've had a great year. Now it's time to get into capital preservation mode and moderating your return expectations for the next 6 to 12 months. And especially at a time when we're getting into a choppy global environment. Maybe things don't turn out to be as bad as we think or as the world is worried about. But nonetheless, one should be worried, especially just given where the valuations are right now. So from an overall perspective, we're advocating a slightly more defensive stance. And what does that mean? That means one, for example, in the BFSI space, you stick more to the large private banks where asset quality is less of a concern, or perhaps even an SPI, which is another one on the PSUs that we like. We like life insurance, which is especially you have, the worst of the life insurance woes are behind us. They've had a pretty bad period last 3-4 years with COVID, with regulatory changes, surrender value, taxation, and so on. And there again, we think the worst is over, and also with interest rate cycle in the next 1 year turning down, that looks quite good. Telecom is another sector that we like, where again, with competitive intensity, with the third player sort of, facing, still struggling. So, you can look at stocks like Bharti, for example. Or one could look at still, I think real estate still looks good to us. We're going through a little bit of a slowdown this quarter and maybe another 1 month or two, but that's structurally on a strong upcycle. There's plenty of demand out there. People are looking to upgrade. There's not enough, it takes time to put supply online. So, some of these are the sectors that we like. We would stay away from some of the defense type of names. We have been cautious over there. We still remain cautious, even though these stocks have corrected in some cases 30, 35, 40%. But still, from a valuation perspective, still expensive, would be a bit cautious. As far as the other capex plays are concerned, we think one can selectively start getting in. I can just share one name. We just today have upgraded Larsen and Toubro, just given how the stock price has declined. But even then, it's not a strong buy at this current valuation. It's something we like, but from a longer term scenario. But again, in the short term, next 3-6 months, this may just about move sideways. So basically shift to quality, shift to defensive, protect your returns, move to large caps away from small mid caps, where typically the valuation is a bit more frothy. So that's sort of the broad approach we are recommending right now. And consumption, we think it's still a bit too early. This slowdown could persist. You first need more of job creation, exports picking up, agricultural income coming through, government capex to pick up. Then you will start see a consumption pick up. So that's still, we think, probably 2-3 quarters away.
Hi, Pratik. Good morning. Good to see you in. I think from the consumption basket, you were leaning more towards staples versus discretionary, I think, a couple of months ago when we spoke. So is that still your preference? And also, the next indicator that we'll be getting with regard to how's the economy shaping up will be the auto sales. And the commentary has been mixed. The numbers as well on some counts have been disappointing. How are you approaching that space, the auto space? What do you prefer, two-wheelers?
Firstly, on the staples versus discretionary, yes, in a weaker consumer environment, you have to, people will spend on the essentials and the potential for upgrading premiumization would be somewhat limited. So focus more on the staples, less on the discretionary. Discretionary usually picks up when, when income levels are good and people are willing to spend. That's not the case in the current scenario. So focus on staples. As far as autos are concerned, we have been cautious and we remain cautious. But at the same time, I would just say, I don't think things are as bad as perhaps the market commentary now is making out to be. We think a lot of the auto players have been far more disciplined this year in terms of stuffing inventory down the channel. Most of these companies report on their wholesale numbers, which can be quite misleading. So we think this time around, the situation is not as bad as it seems, but nonetheless, the overall weakness in the consumer space implies that auto sales will also remain weak, probably in single digits for both PVs, passenger vehicles, and for two-wheelers. In two-wheelers, we would still be cautious given the increase in competitive intensity. You've got the pure EV players who are who remain quite aggressive, and meanwhile, the incumbents are also coming back, and they're also ramping up in their distribution and product launches and so on. So autos, we would be careful. The only stock we like there is probably M&M, which will benefit from the tractor upcycle in our view.
Okay. Just briefly, Pratik, two things if you can address. One is, had China not risen, right, from the ashes, if I can put it a little dramatically, would all of this slight slowdown at the margin, etc., have mattered? Because now that's in a way, legitimate competitor for foreign flows, right? So you've got options in that sense. That is one. Is that what has changed for foreigners at the margin? Another option. And the second, you said, this consumption slowdown could persist, and then you said some of job creation. Those are all structural, fundamental kind of issues, right? Which take time to resolve. It's not something you can do just like that. So this slowdown perhaps could persist because the general feeling is the top end of the consumer is kind of maxed out. At the lower end, there isn't very much happening, and the middle part, the upper middle part is also has spent itself out quite aggressively over the last 3-4 years. So go on.
Prashant, yes, by and large agree with you. First on the FII part, yes, China was the main trigger, but even before the China factor, FIIs were not really overly enthused with India at the valuations we were in back in August or early September. So they have been complaining about high valuations. We were not seeing fresh money coming to India in a big way, apart from some of these IPOs and blocks and QIPs, which was very tactical. The bulk of the outflow that we've seen from FI so far is really from index funds, from hedge funds, from proprietary trading desks who trade India sitting out of the region. This is somewhat more what I would say tactical, somewhat more momentum type of money. The deep long-only money is yet to move out of India in a big way. If I remember correctly, FIIs own about $850 billion of Indian assets, Indian equities. And so far, we've seen only $12-13 billion or so moving out. So if China really were to take off, you could see a lot more selling. But that's not the base case. That is not what most people expect. There are structural issues in China which will take a long time to resolve. A little bit of stimulus here and there could lead to a rally in the short term, but most folks are still, sort of skeptical. So that's as far as the foreign selling is concerned. It was more our own valuations which were keeping foreigners away. China just turned out to be a trigger to book some profits in India, move on elsewhere. As far as the consumer side is concerned, I think one or two important factors to keep in mind. We've also had very weak government spending in the last 6 months from, let's say, April, May till September, October. And the government is now sort of, realizes how it's been falling behind. And we think in the second half of this financial year, we will start seeing a very sharp uptick, although it may still not catch up to their full year targets. But you will see an uptick. IT services, which is another source of high-end jobs in India. That again, the worst is over. Till 6 months back, you were seeing IT companies still cutting net headcount. Now I think it's getting to neutral, and in our view, will start turning a bit more positive as we go into the second half. And also, the rural income, monsoons have been good, so the farm income should pick up. Exports, we had the worst of the Red Sea crisis, freight rates going through the roof. European and US economies doing not so well. Now, those things are all, again, the worst is over. So export should also perhaps not do as badly. So overall, it will pick up, but as you rightly said, it may persist for a bit longer. I don't think it'll last for, we structurally, the economy is doing well, and we are recovering post-COVID, so that recovery should continue. The consumption recovery, all we are saying is will take a bit longer. It won't recover until, some of the things start working out.
Okay, all right, Pratik, got that. Thank you very much. That's really helpful perspective. We'll keep it in mind. Once again, wish you season's greetings and a great festive weekend as well. We look forward to connecting again soon.
Thank you.
Thank you. Thanks. All right, let's move on now to our next corporate conversation. And the company and the stock on the radar now is Tata Power. The stock's actually a little flat, reacting to, well, a mixed set of numbers for the second quarter, you can say. Now, the company's revenue was marginally lower. This is because the generation part of the business saw a little bit of softness. I mean, the power demand itself was weak because of the monsoon period. However, Tata Power's solar business has done really well. And there were a couple of one-offs on the distribution side as well with the Delhi Discom business, which helped, accelerate the profit level growth. And on the solar side, one of their key facilities, the solar, cell and module manufacturing facility, that's also coming on stream. So we have with us Mr. Praveer Sinha, MD and CEO of Tata Power, to give us some more color on how the next half of the year is looking. Mr. Sinha, thank you for joining in, sir. Happy Diwali, season's greetings to you and your teams back at the company and all at home. So let's start by understanding, power demand itself, and then talk about generation, what's happened there. Now, is there a sense that power demand is kicking back in? I think anyway at Mundra, you had a shutdown from August. That was a planned maintenance shutdown. The Section 11 has been extended now till, I think, December. So let's talk generation first and what you're expecting from that part of the business in the second half of the year.
Good morning, and thank you for having me on the show. Happy Diwali to you and to all your viewers. I think for Tata Power, we have been consistently doing quite good. This is, in fact, the 20th consecutive quarter in which we have shown a growth in profit. And for us, this has been the trend because of very strong foundation that we have set for all our businesses. You mentioned about generation. So our generation is our cash cow, continues to do very well. And all our plants are operating at good capacity. Of course, Mundra, we had an issue in the month of September, and that's why the generation was little less. And that's why it has the impact on the revenue. But the performance per se has been good, and it continues to generate the cash that it is supposed to do. All our plants, I think all our generation plants have consistently done well, including our renewable plants, our solar and wind plants. Of course, the solar was little less compared to the plan that we had, but we definitely have seen very good wind speeds, and that's why our wind generation has gone up. I think what is important is that some of the things that we had said we have implemented, and the results will start coming in. Our 4 gigawatt, 4.3 gigawatt of solar cell and module manufacturing is now operational. The 4.3 gigawatt module is fully operational and has stabilized production. In fact, in the last quarter, we had record production, and that will be the way going forward. The cell plant also got commissioned during the last quarter, end of the last quarter, and it is at present getting stabilized, the first 2 gigawatt.
Right.
The next 2 gigawatt will get commissioned in November. So I think by the end of this third quarter, you will find both the cell and module plant operating at full capacity. And the results, of course, will start coming from the fourth quarter onwards. So we are in good shape in all our areas.
So, sir, exactly on that, I mean, because there's so many different businesses, right? So if you put it together, we're just trying to get a sense of the top line for the company, FY25, as the solar picks up and perhaps Mundra is, going to come back as well. And also a word on the distribution side, right? So top line growth, what can we expect from Tata Power, all the businesses put together this year?
So I think the top line is about 10% growth that we are looking at. But our other financial metrics will be much better than that. And you have seen that our EBITDA has improved because our margins have improved and we are able to do much better in our distribution business. Odisha Discoms, the billing and collection has improved and the AT&C losses have reduced over there. Similarly, the impact of the solar cell and module we'll start seeing from Q4 onwards. So that will help us in our both top line as well as in our financial metrics of EBITDA and PAT. We will also see some of the projects that we are implementing, the renewable projects, they will get commissioned within this financial year. So the impact, of course, of that will start coming from the next year. So I think generally we are on track and whatever we have planned, we will be implementing. And we yesterday also approved the pumped hydro, the 1,000 megawatt at Bhivpuri. So there the work will start in January. So I think what is important is that the fundamentals of the company are very good, very strong foundation. And many of them will start coming, the results will start coming in the subsequent quarters.
Okay, Mr. Sinha, good morning. Prashant here and season's greetings to you, sir, and your team. I have two questions. As you know, the industry as such catches up with the power demand now and power demand projected over the future. Is there a risk, and you've seen the industry a long time, and this is more of an industry question as well, are we over-investing in power? I think there is some 80 gigawatt worth of thermal capacity which is lined up, which will come up on stream by 2032. Do we run the risk of perhaps over-investing? We'll only find out a few years down the line, but just your sense, sir.
Good morning, Prashant, and happy Diwali to you and your family. I think what is important is that the consumption growth has gone up tremendously because of the availability of power. If you remember a few years back, we had large number of places in the country where the consumption pattern was not there because the availability of power was not there. Thanks to the government program of Saubhagya, now virtually every village is connected and their consumptions have gone up. We've seen that. In fact, in Odisha, we have seen that the consumption has gone up by 25 to 30% because now that the distribution system has been taken care and the last mile connectivity to the houses has been done. So I think what is important is that once the consumption increases, then whatever capacity that we are planning will not only be just adequate, but possibly little less than what will be the demand. Similarly, the industrial growth that we have seen, the offices that have come up, the data centers that we are seeing, which are coming up in the country. So I think there is a huge upsurge in terms of the demand of electricity. And whatever capacity that we are actually building today is getting fully consumed. In fact, we still find that certain hours of the day, the peak power, especially in the evening time from 6 to 11 in the night, there is still a shortage. And that's why some of the peaking power like the pumped hydro and the hydro plants will support them to meet the requirement during these hours. So I think what we are doing is right. Possibly there is a need to enhance the speed at which some of these projects are setting up.
So finally, I was also going through some of the analyst reports. One of them pointed out that while, of course, the prospects are looking very, very good, the only risk is any potential delay. So let's address that in terms of your targets, 15 gigawatts on renewables, and also the capex trajectory. I think you're supposed to put 20,000 crores to work this year. Is that still the plan? Are the timelines intact? Because you're doing a lot more. I mean, you're buying, I think, a hydropower project in Bhutan. Then there is this 5,600 crores going towards pumped storage hydro. So outlook on capex and whether you can meet these timelines, 15 gigawatts renewables by when?
So in the first 6 months, in the first half itself, we've invested 9,900 crores and against the 20,000. In fact, now we have enhanced the budget for investment in this year to 22,000. By another 2,000 we have, because many of the projects which we were planning to do in the next financial year, we are trying to complete it before March. And I think the impact of it in terms of higher EBITDA and PAT will be seen from next year. So we are very much on track. We monitor all these projects. And what is important is for our renewable project, we now have a control on supply chain. We were earlier dependent on importing these cells and modules. Of course, plan got delayed, so some of the projects of the first half will come up in the second half. But now we have full control of 4 gigawatt of cell and module, which typically will be used for our own projects as well as for projects, third-party projects, and the rooftop that we are doing in a very large way. So I think we are very much on track, and whatever we have promised, we will possibly end up doing much better than that.
All right, Mr. Sinha, we'll leave it there, sir. Thank you very much, and look forward to speaking to you again soon, and enjoy the holidays, the Diwali break. Thank you very much for joining us here on CNBC TV18. Markets, by the way, are down about 55 points. There is selling, which of course is emerging, but there is also from the lows a little bit of buying which has come through. So we're about 50 points off the day's low, but there is a bit of a struggle, definitely. Look at market breadth as well. 1560 stocks are higher and about 800 stocks are lower. So that's clean 2:1. And that's the silver lining, really. Broader markets doing much better, like yesterday. So let's hope, that counts for something, and it shows up in the frontline indices as well. We'll take a quick commercial break here. We'll be joined by the management of Kaynes Technologies. So that's a leading EMS play, getting into the semiconductor value chain as well. Shriram Sampath of Kaynes on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy?
Okay, welcome back. If you're just joining us, wishing all of you a very happy Diwali from the entire team here at CNBC TV18. We've, of course, been in conversation with various managements on the back of earnings, and let's welcome in the next one. Kaynes Technologies reported numbers for the second quarter. Numbers are largely in line with expectations. Margins have expanded. Revenue growth has been aided by strong UPC growth, while profits have also surged near 90% on a year-on-year basis. We have the management now joining in to take some questions. Shriram Sampath is CFO at the company. Shriram, good to have you with us here. Good morning. Season's greetings to you and your team, your family. Thanks very much for being with us here. I just want to start with the margin beat that you've reported. What were the drivers behind the margin improvement that we've seen, and what can we expect in H2 and the full year FY25?
Yeah, thank you, Prashantji, and a very happy Diwali and a nice New Year to all of you and your viewers. See, fundamentally, margins are driven by two things. Okay, one is at the gross margin level, which is driven by the mix of the business. We are, as you know, diversified portfolio company. So we have 6 different business verticals. So there were more business probably we did in industrial vertical with a slightly better margin. So there was a margin improvement. The second driver of margin is also the kind of leverage you get. So we think that in the second half, we will be benefiting by both of these drivers. So probably we will do almost twice as much as what we did in the first half in terms of revenues. So that will give you good operating leverage. Plus some of the verticals, which are high yield verticals for us, will also be firing up. As you know, there have been some small delays in the government spending taking off, but we see sure signs of these coming up now. So you can expect in the second half slightly better performance on margins and so on. And so we think that it will be probably a good margin expansion in the second half, leading to about 15% plus kind of EBITDA at the end of the year.
All right. Hi, Shriram. Good morning and good to see you in. This is Nigel on this side. On the revenue front, if you could give us a sense, will it be closer to 3,500 crores? You're saying 3,000 crores is the guidance, but you're not ruling out a beat out there. So what could that number be? Margins, you've told us it should improve in the second half, so we'll maybe take it at more than 15%. And also, I wanted your order book breakup between the segments. You've got the absolute number, but between segments, if you could break it up for us.
Yeah, so at this stage, we would still maintain 3,000 crores plus. And we do see a lot of bullishness in terms of order booking, and some of the customers are coming back with more and more commitments for the future. Maybe by third quarter, we'll know more clearly how much more we can do. But this 3,000 crores plus is certainly very high probability. And of course, we do have better margins also coming up due to the reasons that I said. So in terms of color on the order book, right now the order book is dominated by industrial and automotive segments. And we have some railway and some aerospace and those segments coming up now. So post, let's say September, in October, November, December, we probably will see some increase in the order booking in those segments too. It has taken maybe due to the election quarter, the first quarter was election quarter. So there was a kind of delay, but I think it will all pick up now. So we think that we'll exit this year with a fairly good order book, not only in terms of numbers, but also in terms of those sectors which are high yielding for us.
Okay, all right. In the longer run, how do you see the smart meter segment shaping up? There's a big potential over there, but what is the revenue outlook as a percentage of the total, industrial contribution? What can it give?
Yeah, so see, right now we are looking at about 15% to 20% of the total market of smart meters in India domestically. Smart meter business has got two parts. One is domestic, and then I think slowly the international or the export portion will also come up. We have a very large European client, and we have kind of got approvals from them. And then maybe as the domestic business stabilizes, then the export business will also start off. So I see next 5 to 10 years time frame. This will be a significant portion. I think at a peak, we will do about 1,000 crores of smart meters on an annual basis based on whatever capacities we have planned. So I think it will be fair to say that of the total revenues, maybe this year smart meters might be just about 10-15%. And then going forward, it probably will remain similar because the other businesses also will grow. And so that's the outlook on the smart meters.
Okay, let's talk semiconductors, Mr. Sampath, because that's what the market gets really excited about, right? So how are the sort of plans and the works coming along for the Gujarat facility? And also now do you have some more clarity on how the breakup is going to be between OSATs, what perhaps could be the revenue potential? Some more details now on semiconductors.
Quickly. So the land acquisition is completed and we have started the construction there. And hopefully by end of the year, we would have the lines coming in, and maybe we'll establish in the first quarter and we'll do the POC line, which is called proof of concept. And we should get approvals in place before the first half of next year. And then by fourth quarter, we should start doing reasonable revenue. That's 40% of, let's say, what we call the phase one implementation. And we have now better clarity in terms of how we are going to have, who is going to be the anchor customer in the beginning stage, and then how the entire thing is going to shape up. So we think that for a total capex of about 3,300 crores, the revenue potential by, let's say, FY30 should be close to about 4,000 crores of revenue. And the way we have configured and the way we have strategized and planned our capacities is that this should be margin accretive compared to the existing businesses. And so we are trying to be future ready in this business. Yes, right now we have huge amount of support from the government on capital subsidy. But going forward, we think that this business should be able to generate resources by its own to add capacities beyond the 3,300 crores that we are talking about. So yeah, going is good. We have got the team in place and some of them are camped in Gujarat right now. And so maybe by the next quarter, you will know better about how the building is coming up and so on. And yeah, first quarter of next year, we should probably have the POC running and maybe some customer approvals. Though we have promised by fourth quarter FY26 commercial revenues, we are trying hard to advance it by a couple of quarters so that we...
Your investors will absolutely love that, sir. Like I said, it's the buzzword, the hot area right now, right? So you're saying fourth quarter of FY26 for sure, maybe even earlier than that is when the first revenue starts coming through. You also mentioned that the margin is going to be more accretive. Typically, how much, as you look at the calculations right now, what will be the gap between, say, the blended margin? Right now, you're talking about 15% EBITDA margin. With this business coming through, how will the margin profile improve and change?
Yeah, so see, we have to look at both the things. One is margin, the other is the ROC. So we are more worried about the ROC because these are capital intensive businesses, right? So they give you 1 to 1.5 times the asset turns. So we are quite acutely aware of the fact that margin cannot be 15%, it has to be something like a 27% kind of number. And we think that may not be by Q4 of 26, but eventually by FY30, we should have a margin which is 25-27% kind of number on EBITDA, so that we do have a fair chance of giving a 20% plus ROC to the investors. So this is how we look at it, and because the EMS business is asset light and it has 6 to 7 times asset turns, so a 15% EBITDA with whatever profile of working capital that we have yields a fairly reasonable ROC. So we are trying to balance out all. See, we are also looking at the sustainability of the business on its own.
Right. Jairam, if I can just come in.
Yeah.
Sorry, apologies. CG also was one of the players which got the PLI, right, along with you and Tata's
Yes.
for this business. If my memory serves me right, I may be wrong, and apologies if I am. They said that margins would be 16-17% in this business. Are they doing? Is it something very different?
Yeah.
What they're doing?
Yeah. So I mean, this similar story to what EMS play is. So it depends on what exactly you do. The margins will differ. So there are two. Let's say broadly for the purpose of this discussion, we split the entire assembly parts into two. One is the legacy kind of work, which is predominantly what perhaps the other players are doing because they have one anchor customer and they move the legacy business here. That's also good to do if they have large volume and they have some other strategies in mind later. But in our case, 25% of capex only we are aiming towards the legacy production. The other 75% is aimed towards what is known as advanced packaging. And we let's say, there's a bold initiative on our part. What we are straddling this entire advanced packaging, one at the entry level, which is like stacked dies and 2.5D, etc. And one at the other extreme high-end level, which where we'll do prototyping, etc., which is like the co-packaged optics and so on. So what we are trying to do is, while we find our feet in this business through legacy packaging, etc., we quickly transition to be a company which can be trusted to do advanced packaging, and especially for the new products. So that is the strategy right now. So I think we will get there because there is a gap in that particular part of business with a lot of front-end fabs trying to develop as OSAT for advanced packaging. So we think that companies like us and some other people who set in capacities later, if they do it for advanced packaging, I think the margins in advanced packaging are far superior to the legacy packaging. Legacy packaging is the kind of number that you're talking about, and advanced packaging will be twice as much actually.
Okay, this requires a full other conversation, but it's a new line of business and lots of excitement here. Thank you very much, Jairam, for joining us. And once again, wishing you a very happy Diwali from all of us here on CNBC-TV18. Markets around about 65 odd points, 24,275. I think we have the management of IRB with us.
Yes, and IRB has had a slightly subdued quarter. if you look at the Q2 trends, the company's revenue and EBITDA declined. Profit also saw low single-digit growth. The toll collections took a bit of a hit due to perhaps heavy monsoon, slightly lower traffic. But let's find out how the second half is looking like. We have with us Anil Yadav, Director Investor Relations at IRB Infra, joining in. Mr. Yadav, thanks for joining in, and season's greetings to you. Happy Diwali. And that's really the question, right? I mean, what are you now noticing? We're already, well deep into the third quarter. Are the traffic trends, toll collection trends picking up? And was it just pure, seasonality, or was there anything else that led to the subdued performance in the second quarter?
Thank you. Thanks.
Anil.
Yeah, hope I'm audible.
Yes, yes.
Thank you. Thanks for having me here. Wish you happy Diwali to you and your team members, including your viewers. Now coming to the numbers, I think second quarter is anyway impacted because of the monsoon, and we have seen a severe monsoon in this financial year. And in fact, in spite of these challenges, result is in line with the analyst expectations. Now coming to the Q3 and Q4, anyway for us Q3 and Q4 is more robust quarter, and we will expect better performance in terms of toll collection as the festive season is starting. We have already started witnessing higher volume growth on our road project, and that typically is higher in Q3 and Q4.
But Mr. Yadav, the thing is that, toll collections, maybe there's seasonality there, but your EPC order book, and that's a concern, right? And this has been discussed quite widely, the fact that NHAI simply is not giving out as many orders this year as it was doing earlier. One argument is that maybe a lot of the, at least from an NHAI perspective, a lot of the network is already built. So what are you expecting in terms of future, order activity? What is the order book growth that you are going to aim for in the second half? So total order book for FY25, if you could share some projections and numbers.
Yeah, so I think as far as long-term opportunity is concerned, we have national highway. The government has planned to double the national highway to 2 lakh kilometer. So far, we have constructed only 1 lakh kilometer. And if we will talk about 1 lakh kilometer to be constructed, there the cost will be roughly 50 trillion rupees, and which needs to be constructed over the period to 6 to 8 years. For long-term visibility, we have a good order visibility as far as road sector is concerned. And considering the finances of the government wants to push for the PPP project. And out of the 50 trillion opportunity which is going to unfold, out of that, we believe that around 20 trillion, 40% of that will be on PPP basis. And we will eye to get at least 10% of the PPP project, which will translate around 2 trillion kind of opportunity for IRB. And we have
that's Anil. So let's put some timelines to this as well. If you could tell us, your total order book as of now is 32,600 crores, right?
Yes.
As you look to capture this 10% potential market, where does your order book go by the end of this year and maybe then FY26?
Yeah, so as I was talking about the long-term opportunity for 6 to 8 years, now I will come down to the near-term opportunity which will get bidded out recently. So we have a BOT project which are lined up, almost 37 to 38,000 crores of BOT project which are already lined up. And plus there are 4 TOT projects which are also lined up. Probably this will get bidded out in the November and December, and we expect good order inflow. And if you look at the historically also, the most of the award happens as far as NHAI is concerned, second half of the financial year, and that also towards the end of the financial year. So I think considering this thing, we have a visibility for next 6 quarters as far as order book is concerned. We have executable order book for 6 quarters. And considering the pipeline, we expect that we will get good order inflow in the coming months.
All right. Hi, Anil. Good morning, and wishing you, your team, a very, very happy Diwali. Give us one final number before we let you go. You've told us the longer term projections. What about FY25? The revenue growth, EBITDA and profitability. On the revenue growth, you can break it up for us. How much will EPC contribute? Please go ahead.
Yeah. Wish you the happy Diwali and your team as well. Now coming to the FY25, as we have guided at the beginning of the year, we expect around 10% kind of growth in terms of the revenue and in terms of the profitability. First half was a little bit impacted, and it will depend upon how the second half will pan out. We are the numbers of the October is quite encouraging. We expect that we should be able to deliver what we have guided at the beginning of the year.
Okay. All right, Anil, we'll leave it there. Thank you very much for joining in and giving us some more projections and some perspective on the business. That's IRB Infra talking about a better second half. We do have to take a break right now, but as we do that, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. So you don't want to miss this.
Getting deep insights into their businesses from top Indian honchos before putting your money on the line. How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Investing.
Okay, we've still got a tinge of red on the benchmark indices. Sensex Nifty lower by about 0.25% as of now. And if we look at some of the major movers and shakers, of course, the tall leaders of the day continue to be Cipla and L&T. L&T is now surging 6% higher, and Cipla is retaining a bulk of that 7% gain as well. ONGC Power Grid, actually interesting day for some of these PSUs, BPCL. So after a long time, large PSUs at least, count in SBI, good day for the large state-run companies.
Just one name, Vari Energy, we should put that name up. Deepan was telling us that his Diwali pick for the year is Vari. Disclosure, he said, well, he and his clients are looking at, are sort of in the process of building a position. Stock's up 9.5%. It's at the day's highest point. So yeah, I mean, that's something. It basically made it to the market at 2,500 and right now at about 2,680 at this stage. That's the second biggest volume-led gainer across the board. L&T is, of course, as Surabhi said, 6.5 higher. Cipla is up about 7.5. There's Reddington, Poly Medicure. Again, a company we spoke with recently. I think it was day before yesterday. Yes. 10% yesterday, another 5% this morning. UTI AMC, 10% yesterday, another 4-5% this morning as well. So there is a fair bit of action, stock-specific wise. Let's talk about commodities and what's top of mind. Manisha is here with exactly that. Manisha, good morning.
Morning, and thank you for that, Prashant. And what a year it has been when you look at commodities. Almost everything surging up. And it has been a year for precious metals, really, because you did see gold and silver prices gain up so strong. It has been an all-time high for gold and silver prices in this year. We've seen 41% of returns in case of gold, 47% for silver. And platinum clearly has been a bit of a laggard, but positive gains coming in for that one as well. With the kind of geopolitical uncertainty that we are looking at, and of course, the geopolitical tensions, all of that has been supportive. Well, metals clearly has been a mixed bag, really, because we've seen copper, aluminum, zinc do quite well. Double-digit percentage gains coming in for this one. The best gains clearly coming in for zinc with 24% of gains there. And the other metals have been actually negative in this year. This weak Chinese demand, also higher inventories, higher supplies continue to take the prices down for this one. So lead, nickel, steel, iron ore, as you can see, double-digit % decline onto this one. I want to take you through energy now, where we've seen the crude oil prices continue to decline, down 14% in last 1 year, and that pretty much has been the case with the rest of the energy basket as well. Natural gas, heating oil, double-digit, more than 20% of a decline in the past 1 year. That is because Europe has now enough inventories, and markets perhaps could see some gain ahead of the winter season, but at this point in time, the supplies are higher, and the US is producing nearly record highs. Come to the soft commodities now, and this also has been a mixed bag. The gainers gained a lot, and the losers also fell down by double-digit % decline. So within the edible oil space itself, you had soybean prices falling by 24%, and the gainer clearly has been palm oil. Remember, Indonesia has come out with B40. That means blending of palm into ethanol is going to be much higher, and that clearly has been taking that commodity higher. Rubber, again, the automotive demand has been strong, so we've seen 35% of gains onto that one as well. Within softs itself, you had coffee, cocoa gaining quite strongly, nearly 93% of gains coming in for that one as well, and sugar prices have seen a decline in this year. Well, this is what we've seen in last one Diwali come in for commodities, but getting into the new year is going to be quite interesting because you will see the presidential elections, the way geopolitics panned out, weather, and of course the Indian markets as well going forward, the policies that will tell you on where the commodities really go.
The commodity queen, come on over, join in. And viewers, you can now see right behind us, this is Team CNBC-TV18 in full force and full strength in all of their Diwali splendors. Guys, are you ready? You know what to do. 1, 2, 3. Happy Diwali! We have to keep that.
Setters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Hello and welcome to our Summer 2081 Market Masters special. It has been a sobering October as we ride into, midway into Summer 2081. The Nifty is down 7.5% year to date and, from its all-time highs. And it is still trading at nearly 23 times FY25 earnings. That is, in 6 months, the year ends. The Q2 earnings has also been marked by slowdown at the bottom of the pyramid. MFI and FMCG, microfinance and FMCG companies are showing pain at the bottom. But cutting-edge companies, EMS and e-commerce and private banks have all been a picture of strength. So how will summer 2081 pan out or the rest of fiscal FY25? Let's invite our market master, Nilkant Mishra of Axis Bank. Nilkant, thank you very much. Happy Diwali to you and everyone at Axis and your family. It's very important to have you because I think macros and markets are in a spot of bother. First, the macros. The GST collections was the first heart attack, at least for me. 6.5% when nominal GDP should be 10-11%. Are you worrying that the economy is slowing or is it just seasonal?
I think the economy has slowed, and this is something we've been flagging for a while. For a while, people thought it was just the intense heat or the elections, and then it was heavy rains. But no, we have to face reality. Most high-frequency indicators have slowed very sharply. And so everything from cement volumes to power volumes to car sales to CV sales to you name it. I can't think of any high-frequency indicator which has actually improved in the last 6 months. So
I'll show three pieces to counter, to play the strong advocate. Vahan data is now available for the first half of the festive season. And there the two-wheelers are up 12%, a damn good number. Not PVs, passenger vehicles are still flat. But two-wheelers at 12%. And the other data, the core sector data for September that came out, cement alone has done well, though it has had a very bleak
4.7% or something, so I don't think, remember that.
Not good enough.
Cement was growing at 11-12%. This is an investment-driven recovery. If the GDP has to grow at 7, cement has to grow at 9-10. So it is, thankfully it is not zero, which is what for the quarter our analyst expects, that is estimating that the industry as a whole pretty much didn't grow, or even if it is 2 or 3%, I don't think that suggests a strong economy. The Vahan registration, I think there are several distortions that can happen if you only look at 15-20 days of data. The bigger picture is that the car market is a much bigger market than the two-wheeler market. From an overall economic perspective, I think even the credit impulse is down, right? So credit growth had slowed below 13%. So I think on a whole range of parameters, the economy has slowed. The question for all of us is this a temporary slowdown? If it is a temporary slowdown, then we should be buying into the weakness. If it is a much longer term slowdown, then it is better to book profits and stay out for a while. I think it is the former. Of what I call unintended level of fiscal and monetary tightening that the economy has slowed down. We can see that corrective action is underway. And my expectation is by maybe Jan, maybe Feb, the high frequency indicators should start improving.
Okay, so you're saying that the lack of expenditure in the first 2 quarters by the government meant less fiscal impulse, and the Reserve Bank's liquidity, tightening, not so much rate, but liquidity, yes, which is considerably loosened in the second quarter. Those two will create growth in the second half?
Yes, and I want to spend maybe an additional half a minute on the liquidity side. So it wasn't just the RBI keeping liquidity tight. It was also, I think, the discomfort it had on the high loan deposit ratios, and which were communicated to the banks in March, April, which meant that we pretty much triggered a downward spiral. As you know, deposits are created when loans are given. So if the banks start cutting loans or slowing down loan growth, it slows down deposit growth, and then the whole thing sort of goes into a downward spiral. So if you look at incremental credit impulse, that is FYTD, what we have done, the growth has been far lower than what we saw in FY22 and 23, and in 24. So therefore, I think that has had a very significant impact on the economy as well.
Oh, yes, and perhaps it was called for, at least in areas like microfinance and unsecured credit.
I'm not so sure that, we have to be very clear on this, that while there were possibly excesses emerging in small buckets, there are broad brush tools. So there is, CRR, SLR, overall credit growth, LDR, LCR. But then there are these narrow buckets. So if unsecured personal loans are, say, 7-8% of banking loans, or the MFIs are all put together, maybe 4 or 5% of aggregate loans. If those have to be targeted, and it is perhaps required that there be a slowdown there, then the tools have to be different from an aggregate credit slowdown.
Okay. Now, to be fair, they did do macroprudential rules, like, for instance, they increased the risk weight on unsecured debt. They did not raise rates nor squeeze liquidity out. But Neelkant, therefore, what is the take?
Squeezed out. No.
Yes.
See, let's be very clear on...
Liquidity was squeezed out in August, Neelkant, and that was because last August food inflation went to 7.7.
No, not August. See, the fact that food inflation is very high, and that makes the MPC's job very hard, given that there is now evidence coming through the economy is slowing, but the headline inflation that they need to be targeting is still elevated, is, I think, a very complex problem. I don't think we should underestimate the challenge. But the liquidity tightness and the fact that the central bank created a share, or so the M3 share, as you know, broad money, there are only two entities that can create, commercial banks and Reserve Bank.
Yeah.
The Reserve Bank share of incremental money injection in the last 2 years was 14%. It tends to be about 18 to 20%. Now, what we have seen since July, because RBI has started to ease on that front, I think clearly seeing that problems are emerging. And now, see, the banks then take time to understand that this is the signal. And with the stance changing to neutral in October, I think incrementally things are easing further. And my expectation is in the next couple of months, even the banks that are still, I think it's a lagged response to the liquidity tightness a year back. There's still a rush for bulk deposits. The rates are too high. Some banks are still holding liquidity. That may not be necessary. So as the banking system understands that the RBI's liquidity stance has changed and has changed for good, I think that's when the credit impulse starts to improve.
Okay. So how do you play this in the market? Do you buy the dip? And when you buy the dip, which dips? Which sectors?
So because the flows were happening. So remember, because now that we are moving to the markets, let's put things in context. We've seen FII selling continue through all of October, right? So we've seen about maybe $11 billion maybe go out. And this is a very, very strong pace of exit, meaning that just 7-8 years back, $15-20 billion of inflow in a year used to be a very good inflow. Now we are seeing $11 billion go out in a month. And while domestic flows, I think, have been largely steady, there may have been some HNI numbers, which we'll see in a couple of days. But on the EPFO, SIP, insurance, all of those flows are give or take $4 or $5 billion a month, which is a lot, but it's very small compared to $11 billion of outflow. So if you see that pace of outflow, the market will take a breather. Now, which sectors to prefer? See, from, I would say, April, May, June onwards, there was a move to defensives. So IT, staples, pharma had outperformed significantly, despite the fact that for some of these sectors, IT and pharma, the earnings were still getting cut. And this was, I think, the fund managers responding to the high frequency indicators slowing down, but having to cope with steady inflows. As we start to see a cyclical recovery, so you talked about private banks doing a bit better, because clearly for the banking system as a whole, the challenge over the last 2 years has been that on the quantity side, the raw material that the banks work with, that had started to become a problem.
Shrink.
And therefore, as we start to see that raw material improving and at the margin, the deposit pressures, the deposit rates should start to ease because the quantitative side, we are starting to ease. I don't expect rate cuts to happen, by the way. I don't think there'll be room for rate cuts till February or April. April may be the earliest that we should expect. But on the quantitative side, I think things will start to ease, and that should definitely help the banks. I expect, and we saw some order books from the large industrial companies yesterday, at least surprise on the upside. So the capex cycle, at least so far, seems to be intact. And as the cyclical recovery happens, those would be the sectors that I think will benefit more.
Okay, not consumer discretionaries, EMS companies. EMS was good. I know it's a small sector, but it's doing well.
Yeah, it's doing well. And I expect, I'm part of the India Semiconductor Mission, and I'm actually seeing it from close, very proud of what the country has achieved and the momentum that we are seeing, not just on the...
So your bets are on CapEx and private banks? Okay, that's two very good sectors to work with, two large sectors, give you some choice. Neelkan, we have to cut short this discussion because we've run out of time, but I'm going to take a rain check from you and invite you for a wholly economy discussion. I'm not done with discussing this jarring goal that the MPC has in terms of food inflation as well, and probably growth requiring a bit of help. On that note, we have to wrap up on this special Samvat Market Masters Chartbusters time after a break.
Trump is? He is the person who stood at this very spot nearly 4 years ago and sent an armed mob to the United States Capitol.
Cipla is the top Nifty gainer, rallies more than 8% after the US FDA classifies its Goa facility as voluntary action indicated, paving the way for key niche drug launches.
LMT is up more than 5% after reporting a good set of numbers. The second quarter revenue, EBITDA and profit come above estimates. The management tells CNBC-TV18 that they stick to their guidance for FY25.
Manappuram Finance slips more than 3% after Asirvad Microfinance. Profit declines 36% and asset quality deteriorates in the second quarter.
IRB Infra slides 1% on the back of a weak showing the second quarter. The revenue declines 9% on a year-on-year basis. The management tells CNBC-TV18 that quarter 2 was impacted by monsoon and they should be able to deliver as per their earlier guidance going ahead.
Biocon too slips after missing estimates in the second quarter. The company sees weak performance from generics and Syngene.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam, and happy Diwali to you as well as your family. Celebrations are on here in the studio as well, and hopefully the markets participate. Mangalam, at some point of time.
At some point of time, hopefully the markets participate. But, you know, some Diwalis bulls celebrate, some Diwalis bears celebrate. The short point is that everyone celebrates. We celebrate every day. No buy side, sell side. We're on the ring side. And that's what we get for you every time. Good corporate conversations and a lot of wishes from Team CNBC-TV18 for you and your loved ones. So let's go straight into the first management that we've lined up for you on the show today. Aeroflex, that's the one that registered a 16% revenue growth in the second quarter. Slightly lower than the guided revenue of 25% for the entire year. The margin, however, expanded while the company is also onboarding new capacities in December 2024 itself. So, to tell us about everything that is happening and likely to happen, we have with us Asad Daud, who is the managing director at the company, joining in. Thanks a lot, Asad, for joining in. 25% is what you guided for, 16% is what you've done. Do you still hold on to that 25% guidance, especially with the capacities coming in on December?
Yes, sir. So first of all, a very happy Diwali to you, to all your viewers, and also to all the investors. So yes, in terms of our guidance, so we are looking at a growth of 25% for the entire year, especially in terms of our profit margins, and I'm sure we'll be able to surpass our growth in terms of the profit. In terms of the revenue, we are looking at a growth of about 20 to 25%. Especially on account of the increase in the capacities that we have already commissioned and will be commissioning in this quarter.
So just to clarify, 20 to 25% is the revenue band that you've given, revenue growth band, and profit growth will be upwards of 25%, right?
5%, yes, that's right. That's correct.
All right.
Okay, all right. Hi, Asad, and good to see you in. It's been a long while since we chatted. Well, give us a few more details then. You know, what's the outlook on the working capital cycle? There appears there was a couple of pockets that got stretched. So how do you see this panning out?
Yes. Hi, Nigel. Yes, the working capital in the last 6 months actually have got stretched a bit. This is purely on account of the Red Sea crisis. So a lot of shipments have been delayed. A lot of the vessels have been skipped. So that has lead to increase in the requirement for working capital. I guess for the next couple of quarters, it would remain high. But I think hopefully from the next financial year onwards, I think we'll be able to see some reduction in the working capital cycle. So let's see.
Right. Okay. Some improvement is what you see in the next year. But what about, the margins? You said 20 to 25% would be the revenue growth. Net profit would be 25%. If your revenue grows by 20%, then obviously there is margin expansion that you're building in. But in case your revenue grows 25%, then are you likely to see margins at around that 20.5% itself, which you've done in the first half? Or do you expect it to go to your earlier guided band of 24-25%? By when?
So if you see that in the first half of this year, our EBITDA margin has increased by almost 100 basis points. And we are looking at 24 to 25% EBITDA margins over the next 3 to 4 years. So on an average basis, if you see, it will be like about 100 basis point increase in the margins every year. And obviously with the increase in the the top line plus with regards to the new capacity and the new products that we have lined up, I'm sure that we'll be able to achieve our targets of the profit margins.
Sir, a couple of questions here. One is in terms of the inorganic opportunities. You briefly mentioned about that you're on the prowl. Anything we should hear about in the coming quarter, second half of this fiscal? That's point number one. And in your export mix, are you seeing pressures in terms of demand? Because the talk is that the globe is slowing down, though there are various geographies that are still doing very, very well.
So in terms of the inorganic acquisitions, we have already completed one in at the start of this financial year. We acquired a company called Hyder Engineering, which is into the fittings business. We are also in talks with a few companies for potential strategic investments. Obviously, it is at an extremely early stage, so would we only be able to comment once anything materializes. With regards to the demand, so yes, some regions of the world are slowing, especially in terms of Europe. But our focus has been over the past 2 to 3 years to focus aggressively on the Middle East and also in the USA market. So hence you see that now almost 57% of our total exports is to the America region. So hence the European is down, but the US region is going pretty good.
That's interesting because we have a lot of imponderables from the US as well in the next month itself. We have the elections and a lot of developments out there. Just wanted to know on the metal bellows business itself. Your capacity in December is coming in on metal bellows 120,000 pieces at a peak utilization when both the phases are completed. What could the revenue potential be here? And have you locked in on any clients already? Because I remember you were saying that you were in talks with a couple of them.
So yes, so hopefully in this quarter, we will start with the trial production for the bellows, and the commercial production would follow after that. We have already started the discussion with our existing customers with regards to the bellows. Our design team has already started working on the design of the bellows. And with regards to the two phases of the bellows, so right now we are completing phase 1 of the bellows. So at a peak capacity, we would be reaching a turnover of about 80 to 90 crores from the bellows division itself.
That's in the first phase?
That's in the first phase, yeah.
And second phase obviously would be a little more than that, about 120, right?
Yes, so a total would be about 200 crores after both the phases are commercialized and into full-fledged
and what margins do these bellows give?
They generally give margins, in terms of the EBITDA margins in the range of 25 to 30%.
All right, take that point. Thank you so much, Asad, for joining in. Higher margin businesses coming in on stream on December. You are hoping for 20 to 25% revenue growth with 100 basis points margin improvement. Wish you good luck for this year, more importantly for the next year, as exports hopefully pick up as well and the outlook on the globe improves. With that, we'll get you an idea for profit coming from our colleagues at Money Control Pro. Today we have Madhu Day joining in with a stock that she's been tracking.
We are talking about Wipro that had a decent Q2 FY25 performance on the back of steady execution. Company's IT services revenue grew by a sequential 0.6% after 6 consecutive quarters of decline. In a clear sign that discretionary demand is making a comeback, the company's consulting arm Capco actually did well in the quarter. Thanks to an improvement in operating efficiency, which could negate the impact of 1 month of wage hike, the company succeeded in reporting a sequential improvement in its operating margin. While the near-term guidance remains a dampener, it gets partially countered by the strong commentary on medium-term growth outlook. Wipro further deepened its top account relationship in the quarter. Deal flow was healthy with a sequential growth of 9%, and the company also saw traction in large deals. Wipro saw net addition to its headcount for the second consecutive quarter, which is also reassuring. The valuation discount of Wipro with large peers might narrow should demand environment improve and the company executes steadily under the new leadership.
All right, Madhu, thank you for that. With that, we'll step into a short break. Come back on the other side. We'll have the management of Maharashtra Seamless. Kaushal Bengani joins in.
your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
Turn the will of the people in a free and fair election. An election that he knew he lost. Americans died as a result of that attack. 140 law enforcement officers were injured because of that attack. America, that's who Donald Trump is. And that's who is asking you to give him another 4 years in the Oval Office. America, I know the vast majority of us have so much more in common than what separates us. I know it. And that's why I am in this race, to fight for the people, just like I always have. On day one, if elected, Donald Trump would walk into that office with an enemies list. When elected, I will walk in with a to-do list. Full of priorities of what I will get done for the American people. And I will work with everyone, Democrats, Republicans, and independents, to help Americans who are working hard and still struggling to get ahead. Unlike Donald Trump, I don't believe people who disagree with me are the enemy. He wants to put them in jail. I'll give them a seat at the table. And in 7 days, we have the power. Each of you has the power to turn the page and start writing the next chapter in the most extraordinary story ever told.
Welcome back. Well, let's focus on Maharashtra Seamless. The numbers in the second quarter were in improved performance in comparison to the first quarter. On a year-on-year basis, it's still a little bit softish. Let's understand a couple of details. Then we're joined by Mr. Kaushal, who is the Deputy General Manager of the company. Hi, Kaushal. Good morning. Wishing you, your team, your family a very, very happy Diwali.
Happy Diwali, Nigel. Thank you for inviting.
Lovely. Let's get straight to business then. The EBITDA per ton of the seamless division has improved. If I look at it on a sequential basis as well, it's shown a good improvement. Now, the first quarter was marked because of inventory losses. Were there some inventory gains in the second quarter? Point number one. On a steady state basis, what should the seamless as well as ERW EBITDA per ton look like?
On the seamless front, there were two factors which impacted us disproportionately in the first quarter. We had communicated earlier that those factors will normalize in the second and third quarter of this financial year. We've seen normalization in the second quarter. There were inventory markdown reversals in the second quarter on the seamless front, and as also was the dispatches of high value orders, which could not take place in the first quarter, which affected the EBITDA in the first quarter disproportionately. That disproportionate effect has reversed itself in the second quarter, and the reversal is partial in nature. We expect that reversal to continue into the third quarter as those orders are not yet fully executed as per the dispatch plan of the customer.
Okay, what would
on
it
the
mean?
ERW front, we believe
Kaushal,
that
if you could give us, Kaushal, sorry to come in, but on an EBITDA per ton, what should it look like on a steady state basis? The seamless business as an ERW. Yeah, go ahead.
Okay, on the steady state run rate would be around 15,000 rupees per ton, which we had guided earlier. I think it was met with a significant amount of shock when this guidance was given earlier, because earlier we were doing much higher levels of EBITDA, but that was more on account of macroeconomic factors rather than anything else. We think going forward on a medium-term basis and going into the next quarters, 15,000 rupees per ton is a reasonable figure. On the seamless front.
All right, and on ERW?
On ERW, generally the EBITDA ranges between 4 to 9,000 rupees per ton. The reason for this variation is the product mix, because pipes in the ERW segment are further subdivided into two categories, the oil segment and the water segment. When dispatches in the oil segment are higher, EBITDA is higher.
Right. On the EBITDA itself, I just wanted to know, in terms of your clients, ONGC and oil, their proportion in your overall order book has come down. I'm given to understand that they are better margin businesses for you. What's the plan out here? What's the prognosis? Are you expecting some orders from them?
Yes, we are. We are getting regular orders from them. It is more of a timing difference, the way the order book is reported, because certain orders are under negotiation, certain tenders are in the process of being completed, certain tenders are in the process of being issued. But we should also consider that in the second quarter, dispatches of Oil India and ONGC related products were higher than they were in the first quarter, because bear in mind that in the first quarter, we were not able to dispatch the higher value orders of one of our customers, which ended up causing the EBITDA levels that they did in the first quarter.
So what quantum of orders do you expect from ONGC and oil in the next couple of quarters?
We would not want to give out a breakup of the customer mix, but what we would want to say is that we maintain a 3 to 4 month order book in the past so many years, and we want to continue doing that going forward. The reason why we maintain a 3 to 4 month order book is because we earmark our order book with inventory, so that our margins on a medium term basis are locked in and we are not impacted by fluctuating steel prices on a medium term.
Got it. All right. The rig business now, it's a very small part of your business. The EBITDA contribution has moved up from 12 crores in the first quarter to around 20 crores in the second quarter. So what kind of a quarterly run rate we should look at in terms of an EBITDA? Point number one. And sub-point of the same point is the rigs business could get a good buyer because of the rigs rates being revised upwards. And I think in the past, the street as well has flirted with the idea that you all could potentially do that. Any plans?
EBITDA on the rig business will more or less remain the same going forward, because day rate has not changed. It's mainly a function of the costs that are booked into the P&L in any relevant quarter. So we would estimate around 45 to 55 crores would be the annual EBITDA from the rig segment. In the past, management has taken a view that we want to exit from this business because this is not core to Maharashtra Seamless. We do want to do that, but the proposal has not yet been put up with the board because the contract for the rig is till May 2025. Once we near the date of contract completion, we'll put it up, and as per the approvals, necessary communication will be issued.
So just a follow up to that, because the contracts are all the way up to May 2025, once they are renegotiated, how much higher can they be repriced?
Currently, the last rig which was deployed with ONGC was at $88,000 per day. However, rig rates have since fallen. So we would estimate that for modeling purposes, one should take a rate between $65,000 to $75,000 per day.
Versus your locked-in rate would be what right now?
Our locked-in rate is $23,000, which is paid to us by the drilling contractor. The drilling contractor gets $38,600 from ONGC.
So 3x from here is what it can do in terms of the repricing. And with all costs remaining same, the EBITDA of this business can intuitively just triple if, everything else remains the same and the prices are negotiated upwards. Just trying to understand that.
I'll just correct you on that, because the rates would rather double instead of triple, because 38,000 is the rate received by the drilling contractor from ONGC, which would go up to 75,000 levels. So yes, EBITDA is likely to double on the rig front if we decide to continue with the rig. If we decide to exit the rig, then there will be larger impacts.
So drilling contractor receives 38,000 and you receive around 23,000.
From the drilling contractor, that is correct.
Got it. Got it. All right. What valuation should we give this in case you want to sell it? I mean, what is it? 10 times EBITDA, 8 times EBITDA?
I think you are a better judge for that. We won't be able to comment.
I'm the judge, but you're running the business.
Yeah, and you're the one who's going to sell it, right? So you're the one who will receive the money. There will be buyers. So irrespective of what multiple both of us put out here, it has to be a deal between you and the buyer, right? Typically, what is the multiple?
That is correct, but that working has not yet been done, so it will be too early to comment.
Okay, all right. But you're still sitting on a sizable amount of cash. If this goes, you'll be sitting on even more cash. Now, if I pull up the stock price, the stock has corrected sharply from the recent peak. Is there a possibility your shareholders would be interested to know what you're going to do with this cash? One time big dividend could come out. Maybe you do a buyback, which you'll have done in the past. Your view?
On the cash front, we have quadrupled the dividend which we paid out for FY24 from the levels that it was at FY22. Going forward, dividend is a way to distribute cash to shareholders. So is buyback, considering the new guidelines, because the impact of dividend or buyback is similar on shareholders from a taxation perspective. Therefore, both proposals can be considered, but nothing is on the cards right now. Whenever suitable approvals are received from the board, we'll let you know. But nothing is on the cards right now. The reason why we are keeping cash is because we have a capex of 852 crores, which we had announced some time ago, which we are working upon. Secondly, please bear in mind that the plant and machinery which we are operating is quite old. There will come a point in future where we'll have to replace the plant and machinery with absolutely new machinery, because old machines are no longer available as they were available 20, 30 years ago.
Right.
When that happens, the replacement cost being prohibitive, and that is the reason we are able to maintain our market leadership position, we'll use the cash for replacement of plant and machinery.
Point taken. Thank you so much. Right.
Thank you.
Thank you so much for joining in, Kaushal, for giving us the details on your business and outlook on the EBITDA per ton across your verticals. Some more orders coming in the next couple of quarters. But most importantly, everyone will be looking at whether the rigs business gets sold or not. For now, from Nigel and me, we'll wrap up on this edition of Chartbusters with the news that there has been no respite in selling in the market. In fact, the Nifty is down by almost 100 points. We'll leave it to the team of Trading Hour to take the markets forward.
Well, cheers to the festive season that's raising the bar literally. India's alcobev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Radico Khaitan, which has seen steady growth in its premium segment during the festival.
Hello and welcome to Trading Hour. I'm Sonal Bhutra. With me is Vivek Iyer. It's a happy Diwali. Much for the bears than the bulls today. The selling pressure continues. The Nifty is down 84 points and it has come off sharply from the highs as well. So there was some expectation of a recovery like yesterday, but no, that hasn't come through. Mid caps falling in line with the benchmarks, down 0.3%. Bank Nifty is flat, but small caps, for instance, they are the ones which are actually outperforming the markets today. Pharma index is higher and a lot of stock specific moves. We have lesser earnings, but the reactions are massive on either side. So there you go. Nifty is at the day's low. We have Nifty Pharma, which is doing well, which is up around 1.2%. The likes of Cipla and the other names doing really well. We'll discuss that in greater detail, but a lot of stocks otherwise in focus, Vivek.
That's right. And you mentioned one point, that's very important for the day. Slight or a brief respite from earnings. Earnings flow has been very thick and very fast. Quite a lot was actually in focus. Just a couple of stocks on the radar. Some of the stocks that are actually keeping the markets higher today. First one, have a look at L&T. Earnings largely in line, slight beat to what the poll was. But the fact that the company managed to maintain its guidance across all of the key parameters is something that has led to a 7% move on L&T. It's a very large stock with a significant weight on the index, and that's something that's keeping the market quite steady. The second shot, of course, was Tata Power. Quite a mixed set of results, but the management has gone ahead and increased the capex guidance, gave positive commentary as far as renewable energy capacity addition was concerned. After that, post the management chatting with us, there's been quite a bit of significant recovery in Tata Power as well. And lastly, one stock from the broader end of the markets that will be on the screen, which is TD Power System. Good set of numbers, strong order book. Yesterday, the company marginally increased its top-line growth guidance. On the back of that, you actually saw the stock doing quite well. But moving on, another stock that's doing very well in the session today is Cipla. The US FDA gave its Goa facility a voluntary action indicated status. Winnie is here to get us more details and explain to us what this means.
Good morning. Yes, Cipla surely is buzzing in trade because big positive development. Like you mentioned, that Goa facility voluntary action indicated. This means that now one of the important drugs for the company, the launch of that, it gives way for that. That is generic Abraxane, which has a market size of around $700 million. And for Cipla, it indicates around annual sales that they could be getting from this would be somewhere between $70 to $90 million. Launch also, what analysts and the street was estimating would be coming that by FY27. But now, because of this VAI status that they've received, this could be preponed as well, and we could expect the launches soon coming in. Analysts have said that they are giving a EPS upgrade of around 3 to 4% for the FY26 estimates that they had. And other than that, it paves way for a few other drugs of the company as well. So big positive coming in for Cipla because this facility had been under those restrictions for some time, and there were a lot of issues that were going on since 2020. So clearance on that front, and that is why the stock is buzzing in trade.
Okay, yes, it's a big move, almost 10% higher on Cipla, and yesterday we saw a fall considering the weakish Indian performance coming in from the Cipla numbers. But L&T, as Vivek was highlighting earlier, it reported a good set of numbers, a big mover in the Nifty pack. Tell us more, what was the management commentary like?
Well, let's understand and let's give some context as to what exactly the market was pricing in going into the results. Number one, there's quite a bit of worry regarding the order prospects or the order inflows. In fact, there's quite a bit of worries because government capex spending was quite slow. Also, there were worries about moderation as far as Middle East spending was concerned. So, the street was anticipating that there could be a slight cut to the 10% order inflow growth guidance that the management was giving earlier or at the start of FY25. Other than that, margins, have actually seen a bit of an improvement, and that is something that has assuaged investor concerns. Order inflow, the company has retained both the top line as well as the order inflow growth guidance. And they've said that as far as West Asia is concerned, most of the order wins they were getting as part of their segment continues to be something that they are still getting. Order book, very, very strong. Over 5 lakh crore is where L&T's consolidated order book stands at. And along with that, a significant shift as far as strategy in Indian thermal power plant bidding is concerned. The company has said that they would be bidding selectively for the BTG portion or the boiler turbine generator portion as far as thermal order wins are concerned. Now, talking about the numbers themselves, revenues higher by 20% above what we were working with, EBITDA higher by almost 13%, profitability higher by around 5.5% on a year-on-year basis. The main business, the projects and management business, management has given a guidance in the range of 8.2 to 8.25 for the year. It's come in at 7.6, that's slightly muted, but still it's up 20 basis points on a year-on-year basis, and that is something that the street will take a lot of heart from. No wonder then you're seeing the stock doing very well in the session today.
Okay. Let's listen.
I think we are staying course with that guidance because I think it's too early to read much into how the year will end. But we are reasonably confident that we will be able to meet the guidance as we see today.
Now, we had sort of said earlier that we'll withdraw from the thermal power plant business as they had originally scoped it out and packaged it, which included not only BTG but the entire EPC for the balance of the plant. Once we kind of communicated that, there has been some discussions and interactions with stakeholders. And I think the packaging has been different now, so we are looking at now more as a BTG, which fits very well into our core manufacturing capabilities. We are currently placed L1 on one of the bundles. The discussions are ongoing. We are hoping to win two of those at least.
All right, that's the word coming in from L&T, but it's time to slip into a break. When we return, we'll be joined by the management of PDS to discuss their Q2 numbers. Stay tuned.
marking a 15 to 20% volume increase year-on-year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now, let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
Welcome back to Trading Hour. Well, shifting focus temporarily to the commodity space, Manisha joins in, and today we are focusing on gold.
Well, yes, Vivek, we've been putting a lot of focus on gold in the recent few days, and that's because it has been hitting all-time highs constantly. Yet another all-time high in the Indian markets right now, where we have seen 79,800 being hit. Some bit of a profit taking coming in on your screens right now from those kind of levels, but we are not too far away from those all-time highs. In the global markets as well, we have seen an all-time high of $27.90 an ounce. Well, the US third quarter GDP numbers have come in slightly lower than the street estimate of 3%. We've seen a number of 2.8%. That has led to some buying. Apart from that, there's a lot of uncertainty in Japan after the recent elections, and the US presidential elections on 5th of November also are bringing in a lot of jitteriness to the market. And in any case, when you look at the charts and go back, you will see that gold does get bought in and around the US presidential elections. So that's exactly the pattern that we are looking at this point in time as well. Well, apart from that, if you look at the buying that's happening in right now, this is happening despite the dollar index increase. The yields are on the higher side as well. This is not as per textbook, and that puts further confidence and trust excuse me, with the investors to continue to buy gold. Markets also are looking at the geopolitical tensions, where we have seen Israel now come out saying that if Iran does any more excuse me, any more missile attacks on Israel, then they would go all out and not spare the facilities as they have done the last time. So that has added some geopolitical premium to the prices also. In the Indian markets as well, even as the prices are at all-time highs, but the Dhanteras, Diwali demand has been on the higher side. There are expectations from experts that in this week itself, which is Dhanteras and Diwali, we are perhaps looking at 40 tons of gold being sold. So this is a number that we see on an average as well. And all-time high prices are not making a dent, and that has been another additional support to prices.
You know, one would have thought that all-time high prices would have impacted demand. That hasn't happened. Thank you, Manisha, for joining in, and as always, and take care of that cough as well. The demand for cough syrups also seem to go higher at this particular time. But thank you for joining in today. That's the update coming in from the commodity space. Let's talk about a corporate conversation now. PDS reported its quarter 2 numbers with consolidated revenue growth of 34%. Profit after tax growth came in at 5%. Margins, however, have come under pressure at 4.48% versus 5.6%. To discuss more on this, we are joined by Mr. Sanjay Jain, the Group CEO at PDS. Mr. Jain, good morning. Thank you so much for joining in, and happy Diwali to you and everyone at the company as well. Well, busy times for everyone, so let's get started and talk about the revenue growth, because you had indicated it would be a 10% growth in FY25. First half, you've already seen around 30% growth. Would you be revising it on the upside in terms of revenue growth? And margins, they have been under pressure both on the quarterly basis and half-yearly basis as well. What is the margin guidance for FY25?
Hi, good morning, and happy Diwali to you and everybody at the CNBC channel as well. I think we were very cautious in the beginning of the year. You know, the global scenario was a bit under pressure, and that's where we felt that a 10% growth for entire year 24-25 is something that we would be achieving irrespective of the global conditions. We had curated a careful strategy wherein on one hand, we wanted to grow in line with the overall growth of the customers, but there was a lot of focus on US market. There was a lot of focus beyond UK market as well. UK, we have been very strong. We thought, let's focus on US, let's focus on Europe as well. We customized our offerings in line with the changing demand of the customer, wherein sourcing as a service, was the need of the hour. Customer is looking at more and more outsourcing. So what that translated into is that against a 10% estimation, we actually achieved 30% overall growth. And this was led by growth in, coming in from the US market, which were at 62%. So therefore, the plan that we had put in place to derive more sales from North America, really translated into real numbers. Europe, we had a 40% plus growth rate. The sourcing as a service business that we started to cater to the changing demand had a 100% growth rate over the same period last year. So therefore, a careful curated strategy worked out very well. And I think on top of it, yes, global situations are looking better. As you know, the inflations are peaking out. There has been a beginning of an interest rate reduction cycle. Yesterday, we all witnessed US data coming in well. So going forward, in terms of the guidance, we are having an order book on September 30th, which is 20% above. So therefore, on the whole, we believe from a 10% original estimation, we should be doubling it up for the entire year. As far as the margin goes, we've been investing carefully, as I said, into the growth markets. And for an asset-light company like ours, the investment happens through P&L. And every quarter, this investment is coming down, results are pouring in. So if you see my normalized PAT margin before this investment, they have actually gone up, in the first half to 3.8% PAT margin versus 3.4% last year. Sequentially, as we keep moving ahead quarter by quarter, as these investments yield more results, company is very positive that this year, 24-25, would be an important year in a journey to eventually arrive at 4 to 5% PAT in about 3-4 year horizon.
Okay, take that point, Mr. Jain, and thank you for explaining that in detail. So there has been a strategic shift to focus towards, more high growth markets, like you mentioned. Does that mean that the steady state EBITDA margin is something that we will have to relook? And what is the kind of steady state EBITDA margin you are expecting FY25 and FY26?
See, the steady state, as I said, normalized EBITDA margin. I talked about PAT margin. On the steady state EBITDA, we believe anywhere closer to 6%, that we have achieved in the Q2 of this financial year. We should see it somewhere 6 to 7%, as a steady state EBITDA margin. And the other thing also is that while there is growth coming in from the chosen markets of US and Europe, in UK, wherein we are well established, there is a game plan in place to get a larger share of wallet of the customer. So all along, on one hand, growth. At the same time, as PDS is gaining size, we believe the benefit of economy of scale, the benefit of procurement synergies should see us maintaining going forward a healthy 6 to 7% EBITDA margin.
All right, 6 to 7% EBITDA margins. Mr. Jain, last question before we let you go. You spoke about 17 to 18% business coming in from high margin business this year itself. Where are we on that number currently? And is this the reason why you'll see that 6% EBITDA margins this time? And how much contribution would come in from the manufacturing business now? Because you've been trying to make that shift as well. A little short in time, so we request to keep your answer a little short.
Yeah, on the manufacturing, we are having 7% of the revenue coming in from manufacturing. We expect it to be sub 10%. We've grown 70% in manufacturing over last year. So manufacturing is going to be sub 10%. As far as the contribution from the high margin, businesses, sourcing as a service, brand management, having our own brands for our B2B relationships, these would be circa 20% of the top line going forward. So therefore, these are margin accretive. And as a result, we are probably positive on a 6 to 7% outlook for EBITDA margin.
Thank you so much for joining us and giving us, and we wish you all the best, and you and your team a very happy Diwali. Moving on, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Tech Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You don't want to miss this.
And my own view on this is, look, again, I haven't seen the joke. maybe it's a stupid racist joke, as you said. Maybe it's not. I haven't seen it. I'm not going to comment on the specifics of the joke. But I think that we have to stop getting so offended at every little thing in the United States of America. I'm so over it. And my response was, can we all just take a chill pill and take a joke from time to time? This is ridiculous.
Reject the kind of politics of division and hatred that we saw represented. America's ready to turn the page. America's ready for a better story. Philadelphia, we are ready.
It's unacceptable. The people from Puerto Rico, since Maria, we've gone through a lot of struggle. Right now, we are demanding to our Puerto Rican brothers who they don't have the vote to do a right to get our vote, and of course vote Democrat, because the Republican Party will finish show the feelings against us Puerto Ricans.
Welcome back. You're still tuned into Trading Hour. Let's get in Vishal Malkan, who's joining in for a quick technical check on the markets. Vishal, good morning. Thank you so much for joining in. Well, the last day of the monthly expiry, do you think the last 1 hour could see some more selling pressure? What are the important levels to watch out for on the Nifty?
Yeah, hi. Once again, thank you so much, and happy Diwali to all of you at CNBC TV. Thank you so much. And now let's look at the Nifty chart, which has made a bottom on last Friday, which is 25th of October, which is an important date as per time cycles. And that bottom has been protected so far in the last 4 trading sessions as of today. So if that holds, we are looking at intermediate bottom, and we can look at a bounce back to 24,700, 800 in the next few trading sessions. But once that bottom breaks, then we can look at further downside. In my opinion, the way charts are looking at right now, we should take that support and bounce back in towards the second half of today's session.
Vishal, any individual stocks on your radar?
Yes, couple of stocks which are making good support and good double bottoms and divergences on the indicator are PFC, which is Power Finance Corporation, which with the stop loss of 445, we can look at 485 and 495 in the next few trading sessions. And second would be HCL, which is also making good support after that stupendous run in the last year. It has gone into a consolidation mode in last few months. Now looks like it's ready for a next launch, which is with a stop of 4190. We can look at targets of 4350 and 4450 in the next few trading sessions.
Okay. All right. Thank you, Vishal, for joining in, and season greetings to you as well. That's a technical check on the markets, but let's get stock specific again. Manappuram Finance has slipped more than 3%. The unit Ashravad Microfinance has reported a weak quarter. Abhishek is joining in with the details.
Well, there is stress in the MFI portfolio across the lenders, and that's also seen in the numbers of Asirvad Microfinance, which happens to be a subsidiary of Manappuram Finance, and that is why we are seeing pressure with respect to the stock price on Manappuram Finance. So Asirvad Q2 FY25 shows that stress has weighed on their performance. The NI growth is 25% YOY and about 3.5% quarter-on-quarter. Provisions have spiked up by 122% YOY and about 19% on a sequential basis. Hence, the profit that they have reported came in at 75 crore, which is a decline of 36.5% on a year-on-year basis and 25% on a sequential basis. With respect to their loan growth momentum, that had remained strong, about 56.2% on a YOY basis and about 5.6% sequential basis. Remember that in October, RBI has banned Asirvad Microfinance from disbursing and sanctioning of new loans, so that can further weigh with respect to their earnings momentum in Q3 as well. With respect to the asset quality, it deteriorated. Gross NPA ratio increased to 4.34% versus 3% in the previous quarter, and net NPA ratio increased to 1.99% versus 1.4% in the previous quarter. Back to you.
Thanks so much, Abhishek. Manappuram under pressure today. Moving on, let's take a short break. Up next, we'll discuss the way forward for the market with Nilesh Shetty of Quantum Advisors.
Today with a message of hope for all Americans. With your vote in this election, I will end inflation. I will stop the invasion of criminals coming into our country, and I will bring back the American dream. We need the American dream to come back home. This will be America's new golden age. Going to happen quickly, too, very quickly. Every problem facing us can be solved, but now the fate of our nation is in your hands. Next Tuesday, you have to stand up and you have to tell Kamala Harris that you've done a terrible job, that crooked Joe Biden has done a terrible job. You've destroyed our country. We're not going to take it anymore. Kamala, you're fired. Get out, get out. You're fired. And I'm announcing a new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's about time that they were recognized, right? They add so much to our country and are never spoken of, ever, 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 but they're going to be spoken of now. Thank you all very much. The United States is now an occupied country, but it will soon be an occupied country no longer. Not going to be happening. Not going to be happening. November 5th, 2024, 9 days.
Welcome back to Trading Hour. Well, one section of the market today that's seeing quite a bit of selling pressure is actually the IT pack. In fact, the Nifty IT index is amongst the top laggards as far as today's trading session is concerned. One of the reasons for that is that yesterday, IT peer Capgemini actually declared its results, and the outlook coming in from Capgemini was not too encouraging. In fact, Capgemini revised downwards its revenue estimates for the year ending December. Remember, they follow the calendar year. It now expects a degrowth of 2 to 2.4% in constant currency. Earlier, they had previously guided for a degrowth in the range of 0.5 to 1.5, a significant downgrade as far as the revenue forecasts were concerned. And along with that, when you're talking about the margin guidance, the margin guidance too, they've gone ahead and downgraded it to 13.3 to 13.4%. Earlier, they had an upper range up to 13.6%. So revenue downgrade coming in, along with that also a margin downgrade, and on the back of that, you've actually seen a negative rub-off, a sentimental negative rub-off coming out across the IT pack. Tech Mahindra, Coforge, all of them under significant pressure today.
Okay, that explains why we are seeing that big cut that has come by. In fact, because of this, the selling pressure is intensified. Now Nifty is down around 100 points, and Nifty IT, which was I think down around 2.5% when we started the trading session, is down around 3.5%. The broader markets, though, we do have a lot of movers that we'll discuss in greater detail. But for now, we have to slip into a break. When we come back, we'll get chatting with the management of Capri Global Capital on their Q2 numbers on the other side. So stay tuned for that.
Will be Liberation Day in America. It's going to be Liberation Day. On day one, I will launch the largest deportation program in American history to get the criminals out.
Welcome back. You're still tuned into Trading Hour. It's time to talk about market fundamentals. Nilesh Shetty from Quantum Advisors is joining us to discuss the way forward for the markets and the top sectoral bets as well. Nilesh, good morning. Thank you so much for joining in, and thank you for joining on an auspicious day. So happy Diwali to you and everyone at Quantum Advisors. So looks like it's a great day for the bears. It's a happy Diwali there, but bulls seem to be taking some, there seems to be some profit booking that we've been seeing for last couple of trading sessions. Give us a sense of where do you think the market is headed? And today even IT is under a lot of pressure. What's your take here?
Happy Diwali to the entire staff at CNBC and to all your viewers. Unfortunately, I don't have that much good news. I think the correction was long overdue. I think despite the correction that we've seen this month, about 5-6%, markets, at least the small cap index and the mid cap index, is still up 25% for the year, which is a fairly strong return in equities. This is on the back of consistent strong returns over the last 3 years. So, and valuations are fairly stretched right now. And on the horizon, you see bad news coming through. Demand has just taken a hit, and nobody's quite sure what is causing this dip in demand, which you're seeing especially in passenger vehicles and consumer staples. You are seeing some stress building up in the banking sector, especially the unsecured personal banking, personal loan categories and microfinance categories, which the RBI was sort of aware of and was trying to push banks to sort of get their house in order. But given the risks that are building up and where the valuations are, our sense is the returns over the next 12 months will be fairly moderate, if not negative. I think investors have to brace up for a period of not that greater returns from equities.
Nilesh, totally take that point on board. Nilesh, have you had a chance to go through the commentary that's coming from Microsoft? That's been slightly muted. Capgemini too yesterday went ahead and cut its guidance. So as far as IT is concerned, are you tracking that particular space? And what are you suggesting that investors do with IT stocks currently?
Yeah, IT, despite weak numbers of the last sort of 2-3 quarters, they have done really well as a cohort. It is only sort of recently you're seeing some correction coming through. And one of the reasons was that order book or the order book that they were carrying was increasing all the time, despite that not translating into revenues. And the feedback from IT services companies, especially from India, was that clients are deferring spends, perhaps waiting for the elections to get over and trying to see when the rate cuts come through in the US. Our sense is at some point that order book starts translating into revenue. That is why despite near-term correction over the last sort of 6 to 8 months, they've had a fairly decent run. Our sense is, given where market valuations are overall, IT is not that expensive relative to the rest of the market. It is not that cheap, but it's still a place where you can have some allocation and hope for some sort of equity kind of returns over the next 12 months. But I expect, barring this correction that we've seen recently, I expect numbers from IT companies, especially IT services companies from India, to improve over the next 12 to 18 months compared to what they've delivered over the last sort of 4 quarters or 5 quarters.
Okay. Nilesh, that's on the IT space, but what about banks, the financials? Do you think that is something which stood out? Anything that you like in particular from there, the private lenders versus the public sector banks? Canara Bank reported good set of numbers this time.
So our preference clearly remains private sector banks. I mean, when the cycle turns, you sort of start separating sort of the men from the boys. And traditionally, private sector banks, well-run private sector banks have fared really well in trying to manage the quality of the book versus public sector banks. It is in a benign cycle that public sector banks sort of move up, and then given the nature of the management and given the nature of underwriting, you start really seeing the quality of the book that they've built. So our sense is, I mean, this is the lowest gap we've seen between private sector banks and public sector banks over the last probably 10 years. I think that gap will widen. I think either public sector banks will correct and private sector banks will move higher. So at least in our portfolio, they are the largest sort of weight at the moment, given that we have valuation comfort. And I think a lot of the stock-specific problems are behind them, and they will start doing really well over the next 12 to 18 months.
Pushing further into financials, how are you looking at the NBFC space right now? On one hand, quite a few companies have called out weakness in terms of collections, etc. On the other hand, also the upcoming rate cut cycle is something that's expected to benefit them higher. In that context, how are you looking at the NBFC space?
So we've been very selective in terms of the kind of NBFCs we wanted to have in the portfolio. We did not want sort of any governance risk there, and we wanted to be very. We wanted to have exposure to managements who've seen multiple cycles and they build their book accordingly. Surprisingly, despite private sector banks not doing well, some of the NBFCs have done really well over the last sort of 18 months. And we've actually trimmed our position there where we think now the risk reward is not that favorable. I think investors who are at the lower end of the quality cycle in terms of NBFCs which have exposure to subprime or risky kind of lending, they should be really careful. I think the cycle is turning and you might see a lot of pain there as sort of NPA levels build up. But if you have quality NBFCs, which have done really, really well over the last 18 to 24 months, I think that is where you may need to start booking profits as valuations reach the upper end of the valuation band that we see for this bucket.
All right, Nilesh, thank you so much for joining in today and giving us your take on the markets and the way forward as well. With that, let's move on and talk about auto sales numbers for the month of October. They'll be released tomorrow. Sudarshan is joining us with what to expect. The auto sector has been in focus of late. Sudarshan?
So it would be an interesting month. Along with the monthly sales, the main number that everyone will be focusing would be the festival demand. So talking about the monthly sales, we are expecting a mixed trend where two-wheelers and tractors are expected to see growth, while PV's performance may be a flat, while CV may see a decline. Retail festive demand might be healthy for two-wheelers, followed by passenger vehicles and tractors, while CVs may see a decline. So talking about segment-wise, first is two-wheelers. Growth for all the companies is seen in the range of 4 to 20%, where TVS and Eicher Motors are expected to outperform, while Bajaj is expected to underperform. And positives for two-wheelers, first, retail festive demand is best amongst all the segments. As per brokerages, retail festive demand is seen somewhere in the range of 10 to 12%. Second positive is rural growth remains healthy. If we talk about negative, urban continues to lag the rural growth. Now coming to passenger vehicles, retail festive growth is seen somewhere around 6% for the industry. Maruti and Hyundai may see a decline in the wholesales, whereas M&M is expected to outperform the peers. For Tata Motors, weak CVs may weigh on its performance. Negatives, high base. Second, urban growth again. Here also it's lagging. And third is companies continue to give major discounts due to competitive intensity. And if we talk about the positive, second half of the festive season has been better than the first half. Last is commercial vehicle. Ashok Leyland may report a decline both year-on-year and month-on-month. If we talk about negative, it's a decline on a high base for the cargo vehicles. And if we talk about positive, e-way bill generation has been higher than the last year. Last one is the tractor. Again, tractor may give the flat performance year-on-year. On month-on-month basis, it may see a growth in the double digits. Positive triggers here are improving farmer sentiment on surplus rainfall and better kharif production. So overall, it's going to be a mixed trend for the auto companies for the month of October.
Thank you so much, Sudarshan. Very important set of numbers that the markets will keep a close eye on. Moving on, it's time for a short break. We'll get chatting with the management of KP Global Capital on their Q2 numbers on the other side.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
ये लाइट्स का त्यौहार है, ये दिए जला के मोमबत्ती जला के हम अपना त्यौहार मनाएं, ना कि पटाखे जलाएं। पटाखे जलाने से प्रदूषण होता है। प्रदूषण से कोई ऐसा नहीं है कि किसी पे एहसान कर रहे हैं, हम अपने ऊपर ही एहसान कर रहे हैं। जो प्रदूषण होगा वो हम ही उससे भुगतेंगे, हमारे बच्चे ही, छोटे छोटे बच्चे वही उससे भुगतेंगे। तो इसमें कोई हिंदू और मुसलमान और इसका कोई वो नहीं है। सबकी सांसें ज़रूरी है, सबकी ज़िंदगी ज़रूरी है।
Welcome back to Trading Hour. Well, the market breadth has significantly weakened even in the last half hour. The IT pack sell-off continues. Names from the broader end of the IT pack, so names like OFSS, Persistent, some of the stocks that are witnessing increased selling pressure. Another stock, especially from the NBFC space, is 5-Star Business. Yesterday, we highlighted that the company had gone ahead and cut its growth guidance for the year by 5 percentage points. On the back of that, yesterday you saw the stock fall close to 10%, and today the stock is down another 8%. The second stock yesterday, despite posting an inline set of results that saw quite a bit of a sell-off, was Voltas. Now, Voltas today continues to see selling pressure. The stock today too is down, and it's down quite significantly. The internals appear to be weak, and analysts are now enthused with the management commentary on the conference call. But moving on, KP Global Capital reported its Q2 numbers with net interest income growing 22% year-on-year and 1.2% quarter-on-quarter. Disbursements declined 2.8% QOQ, while AUM growth came in strong at 55.9% YOY and 10.4% QOQ. To discuss more on the numbers, we are now joined by Rajesh Sharma, MD at KP Global Capital. First of all, thank you so much for joining us, Mr. Sharma. Wish you and the team a very happy Diwali. First up, when you're talking about the NII growth, it's lagged the AUM growth. How was the operational environment in the quarter gone by, and what is the guidance that you're giving for FY25?
Yes, first of all, wish you and everybody at CNBC very, very happy Diwali. So, on the back of launch of addition of new products and addition of the branches, I think we continue to show good, strong momentum in the growth side. We, as you said, we grown 28% quarter-on-quarter and year on about 55%. Besides that, there's an uptick in the profitability, profit margin as well, that our profit have gone to about 97 crore, which is up about 28% quarter-on-quarter. And this has happened because we have not only invested in technology, but also focusing on branch productivity. This quarter, we have also added the new product, the rooftop solar financing under MSME vertical. So I think that also we will see some growth coming in the coming quarters. Overall, this has been a satisfying quarter despite all the challenges on the cost front and everything else.
So when you say there was some challenge on the cost front, can you talk about the incremental cost of funds versus the average cost of funds that you saw? Even provisions declined massively. So what is the credit cost guidance that you have for FY25?
So we talk about credit cost is quite stable at about 1%. And I think we being on the all secured space, be it MSME, be it affordable housing, be it micro lab, which we started in a couple of quarters ago, all are secured portfolios. So we don't see much delinquency pressure there. So credit cost is going to remain stable. However, cost in terms of cost of funds, I think that is where we see that now interest rates are tightening and banks financing is for the sector itself becoming a little difficult. But we have a little advantage over here because we are only in secured space where in every loan there's a collateral, be it gold, be it housing or the business premises in the product specific. So I think there banks are still comfortable. But overall, as we all know, yes, there are little headwinds. But we see that as far as the on-ground growth is there, we clearly see that the second half is going to be better than the first half.
You did allude to the fact that the funding environment currently is slightly tight. How's the liquidity scenario for you? Are you able to source money easily at this point of time? Has it improved in Q3?
So the first half we got line close to about 4,500 crore, which is massive for us. And I think on the back of very robust performance in terms of asset quality and our banking relationship with the banks, they have seen our performance quarter on quarter. They are quite comfortable. So we are getting the bank credit lines adequately, and this is not going to hamper our growth. So we are adequately having the liquidity and credit line from the banking system.
You know, while we spoke about how the NII growth lagged the AUM growth, the AUM growth was really strong for you, 56% on a YY basis, 10.5% on a sequential basis. What is the momentum that you're expecting in the rest of the fiscal? What's the growth rate that you're looking at in FY25?
So on a broader perspective, for the 2027, we are targeting a AUM size of 30,000 crore. And we are on that path. We have now achieved already 19,000 crore plus. So we expect that this year we should close about year-on-year basis about 30 to 35% growth, and all in secured portfolio space. And we see that we should be there by 27, about 30,000 AUM, which we have given the guidance in the past as well.
So AUM growth guidance is quite robust. Now let's talk about indirect retail lending. That's seen quite a bit of a sharp decline. Are you focused on bringing it down further? Is this a calibrated approach that you're following?
So earlier we used to fund the small NBFC and housing finance company, but now we are not lending them to much. So we have slowed down there and focusing more on our own direct sourcing product. Since we added micro lab and now we added rooftop solar, so we have adequate product to focus on rather than giving money to smaller NBFC. So that is where we have seen this change in that trend.
Mr. Sharma, your disbursals have declined 3% on a sequential basis. It's largely coming from the MSME space, going by the numbers that I'm seeing. Is this something which could continue as a trend? Because you spoke about the solar rooftop, which you're going via the MSME way as well. What would the growth there look like? What happened this quarter?
So MSME will overall basis in a year will grow in the range of about 10 to 12%. But since now we added the rooftop solar and micro lab, next year onwards, the MSME will come back with the growth about 20% kind of thing. So we will see that we'll adding more branches also in MSME, and MSME will also start contributing the overall growth. This year have been a little muted year because we have not added more branches, and we are more focusing on the housing finance and other side. But now in the last quarter of this year, we'll add few branches, and the next year full-fledged, we are targeting about 20% growth in even MSME as well.
Mr. Sharma, I want to squeeze in a last couple of questions. We are running short of time. Gold loans, construction finance, they've done very well for you. Gold loans, you saw quite a bit of growth, probably aided by the fact that IIFL Finance wasn't present in the quarter gone by. Can this momentum continue? And secondly, give us a guidance on spreads as well as the net interest margin going forward.
So spread is going to be maintained at about 7%. That is what we are targeting. As far as the gold loan is concerned, that growth was a little on a higher side because of the reason you stated. Going forward, we will come back to the growth of normal growth in the gold loan. There will be not a excessive growth. The growth will be coming equally from our housing finance, gold loan, now new addition of the product, as I said, to product of rooftop and the micro lab, and MSME growing by 10%. So overall, will continue to grow about 30% plus on a year-on-year basis.
All right, we take that point. Mr. Sharma, thank you so much for joining in today with your take on what the outlook is going forward. So sounding bullish, that's the word coming in from the Capri Global Management. But with that, we are completely out of time on Trading Hour. But stay tuned, Halftime Report is up next with all the market action.
Deputy Minister Morrison and I spoke to the Washington Post on background late Sunday afternoon, October 13. We provided non-classified information on the action we had taken to cooperate with India and explained how the evidence showed links to the government of India conducting illegal activities against Canadians, including threats to their lives.
But I think no president's done more for Puerto Rico than I have. So thank you. That's really nice of you to say. Appreciate it. Thank you, Mayor.
Strong order accretion in the first half of the year props up L&T, which now boasts an order book of over rupees 5 trillion. The company holding on to its FY25 guidance also infuses confidence.
Cipla has received a green signal for its Goa unit from the US FDA, clearing the way for it to launch the 700 million respiratory drug Abraxane much ahead of the expected timeline. The unexpected boost fires up the stock.
French IT consulting major Capgemini cuts its 2024 guidance after a weak quarter on continued weakness in its manufacturing vertical. This is the company's second downward guidance revision after a cut in July, has an impact on Indian IT stocks. You're watching us here on Halftime Report on CNBC-TV18 from Hormaz. Me, the entire team of CNBC-TV18 from these glittering studios. We wish you, your family, your loved ones, all your colleagues a very, very happy Diwali. Love, happiness, peace, prosperity, most importantly, good health. Hormaz, wish you as well.
Wishing you and your family a very happy Diwali as well, Mangalam, and absolutely that is what you would wish for. What more could you ask for other than good health, happiness, and of course lots of food and travel?
I guess secondary. Bulls would say a little more respite from the sell-off that we've seen in October so far. But, be that as it may, the market will continue to do market things. After having seen 4 consecutive series of gains, the Nifty is now pulling back. The last 3 days were decent, where we saw some recoveries from the low point. But yesterday and today, there has been some sell-off from levels of closer to that 24,500 mark. So maybe some sort of range-bound moves continue for the market ahead of the big events that are lined up in the month of November as well. But that's not to say that there aren't many stocks which are gaining. In fact, if you look at the advance decline ratio, you will have more stocks advancing than the number of stocks which are declining. So portfolios would be feeling slightly better today than what they were earlier itself. So you have 1,500 stocks in the green for about 930 stocks in the red. And one of the biggest gainers today is Cipla, among the top gainers on the Nifty as well. The US FDA has given its Goa facility a voluntary action indicated nod status. What this basically means is enables them to go ahead and launch some niche products from that factory as well. For more details, we have Vinny joining in. Vinny.
Good afternoon. Yeah, surely a happy Diwali for Cipla, because this is a very big positive move, and that's why the stock is buzzing in trade as well. Goa facility, why is it so important? Because there were some of the drug launches they were planning that had been pushed because of those restrictions that were there, and we'd still not got a clearance from the US FDA. So now this clearance coming in, voluntary action indicated for this facility is a big positive. The drug mainly that they will be focusing on and want to launch specifically from this and will be manufacturing in this facility would be the generics Abraxane, and this Abraxane is a drug that is used for chemotherapy drug for treatment of cancer. Currently, the market size of this is around $700 million. So for Cipla, this could mean an annual basis sales of around $70 to $90 million that could start coming in once this launches actually come up and once it's planned. So yes, surely a big positive. Analysts also are quite positive on the stock now. They said that there could be a 3 to 4% upgrade in the EPS target for FY26. So keeping an eye out on Cipla today, buzzing in trade.
10% higher is Cipla, the top gainer on the Nifty, and indeed a happy Diwali for the stock. But what is also having a very happy Diwali today is L&T, and that is after its second quarter numbers that were reported after market hours yesterday on expected lines. But there were a lot of positive takeaways from that, and Vivek is here to tell us all of those takeaways. Vivek.
Well, that's right. So going into Q2 results, there were quite a lot of worries. Number one, the main worry was the fact that the order inflows are something that analysts were anticipating would not be as strong, because the ordering momentum in India was quite muted, and along with that, ordering momentum in West Asia, given the fact that Saudi Aramco had tapered and moderated quite a lot of capex, was something that was weighing down as far as sentiment was concerned. The other major worry, of course, was the core P&M margins significantly trailing what the company had alluded to earlier. But yesterday in Q2, both in terms of delivery, in terms of order inflow, and also in terms of guidance, a lot of the analysts' concerns were assuaged. First up, let's have a look at the core projects as well as manufacturing margins came at 7.6%, missing estimates, but still it's up 20 basis points on a year-on-year basis. Company maintained its guidance across all of the key parameters, include the margin guidance. So given the fact that they continue to see 10% order growth on a very high basis, something that the street continue to like. Order inflows for H1 surprised on the positive side. Analysts were anticipating a much more tempered outlook as far as orders were concerned. That is something that surprised positively. Guidance for all key parameters, including top line growth, order inflow guidance was maintained. Order book currently is very, very strong at almost 5.1 trillion rupees. And along with that, a significant change in strategy coming in as far as L&T was concerned in terms of bidding for thermal power projects in India is concerned. They would now be selectively bidding for the BTG projects as well, of a lot of the thermal power projects that will come up for bidding is concerned. And this is something that the street likes. No wonder then L&T is doing very well in the session today.
Take that point. Thank you, Vivek, for that. With that, we'll slip into a short break. Come back, we'll focus on Paras Defense and Manappuram Finance as well. Both of them buzzing in trade today. Stay tuned.
Donald Trump is that leader. Donald Trump is not only the right choice for the Puerto Rican people, he's the right choice for all of America. We're here today because we're tired of the empty promises. We're tired of being told how to think, who to vote for, and watch as we have this broken border, a broken economy under weak leaders like Kamala Harris and Tim Walz.
I strongly and fully support and endorse Donald J. Trump to be our 47th president, to make America great again, and of course, to make Puerto Rico shine again.
Welcome back from our glittering studios of CNBC TV18 as we wind down on Samvat 2080 and bring in the new year as well. Plenty of stocks buzzing in the broader markets today, and Paras Defense is one of them, and that is gaining on the back of recent news flow and after the company delivered a healthy second quarter as well. Upasana is joining in with more details.
Well, the company has received 42 crore worth order from Ministry of Defence. This is mainly for the supply of 5 types of electronic control subsystems used in thermal imaging fire control systems, mainly to Indian Armed Forces. Now, let's go through the company's consolidated order book. As of March 21, it stood at 215 crore, which the company has increased to 870 crore as of August 2024. Now, company has also given an order book guidance that that it will be around 2,500 crore by FY28. Now let's see how that pans out. Now in terms of quarter results, companies delivered a strong quarter this time around. Revenue stood at 87 crore with an uptick of 43% on a YoY basis. And this strong revenue growth was led by optics and optronic systems of the company's segment. Now, EBITDA stood at 22 crore with an uptick of 46%, and margins also expanded sharply by 70 basis points at 26%. Coming to company's PAT, that also saw a healthy growth of 46% and stood at 12.7 crore. So all in all, good set of numbers and a good order win by Paras Defence.
All right, a good set of numbers, good order win by Paras Defence. But one of the arms of MotoCorp Finance has, reported worsening in credit quality, and as a result of which we have the stock, which is lower by almost 3.5%. Abhishek joins in with the details on that one. Abhishek.
As seen with other lenders wherein the microfinance portfolio is showing pain, it showed pain in Asirvad Microfinance numbers as well. Now remember that Asirvad Microfinance is a subsidiary of Manappuram Finance, and that is why Manappuram stock is under pressure in trade today. So NII growth was 25% YOY and about 3.5% sequentially. This NII growth is lower than the loan growth that they have reported. Hence, net interest margin might have come under pressure both YOY and quarter on quarter. The provisions spiked up by nearly 122% YOY and about 19% sequentially on account of the fact that asset quality deteriorated for them. They reported a PAT of 75 crore, which is a decline of 36.5% YOY and about 25% sequentially. The on-balance sheet loan growth momentum has been strong at about 56% YOY and about 5.5% sequentially. Remember that in October, RBI has banned them from disbursing and sanctioning of new loans, which could actually put pressure with respect to the AUM growth in Q3 FY25. So their asset quality has deteriorated. Gross NPA ratio has inched up to 4.34% versus 3% in the previous quarter, and net NPA ratio has inched up to nearly 2% versus 1.4% in the previous quarter. Back to you.
All right, Abhishek, thanks a lot for that. With that, we'll take a short break. Come back. On the other side, Manish Hatiramani of Deen Dayal Investments joins in with some trading strategies. Stay tuned for that.
Trump is. He is the person who stood at this very spot nearly 4 years ago and sent an armed mob to the United States Capitol to overturn the will of the people in a free and fair election. An election that he knew he lost. Americans died as a result of that attack. 140 law enforcement officers were injured because of that attack. America, that's who Donald Trump is. And that's who is asking you to give him another 4 years in the Oval Office. America, I know the vast majority of us have so much more in common than what separates us. I know it. And that's why I am in this race, to fight for the people, just like I always have. On day one, if elected, Donald Trump would walk into that office with an enemies list. When elected, I will walk in with a to-do list full of priorities of what I will get done for the American people. And I will work with everyone, Democrats, Republicans, and independents, to help Americans who are working hard and still struggling to get ahead.
Back with us here on Halftime Report. The Nifty continues to trade with losses of close to 100 points, predominantly dragged by IT names. The Nifty IT index is the top sectoral loser in today's trading session, trading with losses of over 3%. All 10 constituents of the Nifty IT index currently trading with losses. The Persistent Systems is the top loser on the Nifty IT, down almost 5.5%, followed by other mid-cap IT names like Coforge, Emphasis, L&T Technology Services, and large-cap IT is not far behind either. TCS, Infosys, all of them in the red, trading with losses of anywhere between 2.5% to 5.5%. That is the big sectoral loser in today's trading session, is the IT index. The other stock that I wanted to highlight, though, was 5-Star Finance. That stock was down 13% in yesterday's trading session after the management had cut its AUM growth guidance for the year. Another 8% shaved off today, almost 20% down in 2 trading sessions is 5-Star Finance. But the big event for the day, other than Diwali, is the monthly expiry for the Nifty. And Manglam, how's the setup looking like on the FNO side?
The setup is looking like just the way the series was. You know, it was a weak series and we're at the low point of trade as well. So that's exactly how it works out. And not every Diwali has to go to the Bulls, right? Some go to the Bears as well. So maybe this time Bears are saying happy Diwali instead of the Bulls. But Bulls over the longer term would be a lot happier because, you know, even as the Nifty is down about 100 points, the Nifty Bank 180 points, slightly outperforming the Nifty out there, but largely in line as well. The mid-cap index is lower by 0.2%. It is the Nifty October series expiry today. And in doing so, what it'll do is it'll break a 4 series gaining streak. If you just take a look at, you know, the market from June itself, it's been on this tear. June 6.9% on the Nifty, followed by 1.5% on July. 3% add to that, and then September one step ahead at 4.2% as well. So you saw a big move. So at some point a decline was warranted. Now so far in the October series, the Nifty is down about 7.5% as well. With this decline which is currently taking place, you know, a lot of the call writers have become active once again at the 24,300 mark and the 24,250 mark. Remains to be seen whether we cross past the 24,250 to 24,300 sort of resistance zone which the option writers are pegging at. But importantly, there is some support coming in that's closer to the 24,200 put. Why do I say that? Because there is action on the 24,200 put, a fair amount of open interest of nearly 2 crore shares. And remember, over this entire week, the Nifty's range has been pretty well defined, 24,150 to 24,500. Why do I say that? Monday's low was 24,135, Tuesday was 24,140, and yesterday's high closer to 24,498 from where the decline actually began. All of this setting us up for all the big triggers which are there in the November series. You know, you have the US elections, locally you'll have Maharashtra elections, an important state for the nation. You have US Fed meet outcome that will happen as well. Then the China NPC, all these eyes between India and China, because last month China has been doing extremely well. And then most importantly, the remainder of Q2 earnings. A large part of October series selling also came in from no respite coming in from, you know, the earnings this time around. There were weak earnings that have come in, and the stock prices had priced a lot more in as well. With the FI selling, all of that combined together, we saw a bit of a decline. But now it seems like, you know, with a 7.5% cut, the question to ask is, where does it stop?
Where does it stop? Indeed, we'll ask that question too. Manish Hathiramani of Deen Dayal Investments is joining us on the show. Manish, good afternoon. Firstly, wishing you, your family a very, very happy Diwali. Where does this stop, as Manglam was highlighting, right? Manish, we have come down from levels of 26,300 almost, now down to 24,200. It's been a series of losses, is this October series. What is lined up for the index in the November series? What's the setup on the charts looking like?
Good afternoon, Mangalam, Hormuz, and a very happy Diwali to you as well. I really hope that this coming year is very good for all the traders and investors alike. Coming to your question, I feel 24,150, 24,200, this is really the key trigger point for the short term. We have been trying to build up, we have been trying to cross resistance levels, but we haven't been able to. 24,500 to 24,650. This is 150 points on the upside that I would be closely looking out for. We will be out of this bearish woods only if we can cross a closing of 24,650. Until then, if we are able to break 24,150 again, this will take us down to about 23,850. What we need to be very cautious about for the November series will be the low that was recorded on 5th of August, which is 23,890. A breaking of 23,890 can bring us down to 23,500.
All right, and Manish, you got to give credit to you because you called out a big decline on the Nifty already, specifically of Reliance. I remember, pre-bonus when the Reliance stock was little around 3,000 rupees. You said it can go all the way down to 2650. Lo and behold, we are close to that. If you adjust for the bonus itself, 1339, add 2 to that, you'd be closer to that 2700 mark itself. Your thoughts now? You said that there is support here. This is an important level for the market. Individual stocks, what are you backing now?
Well, I continue to work with 2 sell calls. The first one is on Infosys for a target of 1725, stop loss of 1845. The medium-term support of 1785 has broken on the back of very good volumes. The threat point again over here is the low of 5th of August, which is 1718 to be precise. The second sell is on HPCL, target of 350. Stop loss of 405. Large blocks of volumes have broken the support of 430 and 395. The stock has also broken the low of 381, which had occurred on 8th of October.
You want to revise your target on Infosys because you said 1725 is your target with 1845 as stop loss. As we look at it, the stock is at 1750. That leaves you only 25 rupees on the downside, whereas the stop loss is a lot higher.
Unfortunately, Hormuz, we've already broken down since I actually prepared this particular stock for today's show. However, 1725 would be the next support. So the only way to trade this would be to wait for a bounce. If we can get a bounce and the target is still not achieved, we can short at higher levels to make a good favorable risk is to reward.
All right, Manish, thank you so much for sparing time and joining us today. Wishing you a very happy Diwali and festive greetings as well. Manish Rathiramani there of Deen Dayal Investments. 2 sell recommendations from him, Infosys being one and the other one being HPCL. Now, the pace of decline in earnings is quite alarming. However, the slowdown is temporary. That is the word coming in from market veteran Ramdev Agrawal of Motilal Oswal Financial Services. Meanwhile, Navneet Munot of HDFC AMC says that while there is some earnings slowdown seen, balance sheets are very healthy. Kotak Mahindra AMC's Nilesh Shah also comments that valuations have taken a bit of a correction. Take a listen.
The pace of decline in the earnings is quite alarming. And their estimate this for this quarter is just about 6-7%. Even if you see the business standard aggregates, it's just about 6-7%. And so we are not seeing too many bright spots in the earnings side. And markets are at all-time high. So these are two. See, market is also dull, dead, 12, 13, 14, 15p. That matches. But right now, market expectations are running at more like 15 to 20% kind of earnings growth. And here is a market which is kind of, and supply is building up.
Last couple of quarters, everything goes up. Good news, not so good news. Good result, not so good result. But market just goes up. The stock just goes up. I think it will change now, and people will start looking at the fundamentals again, which is a good thing. Even now, after the correction, there's part of mid and small caps where there is still froth. Even at this valuation, they haven't become so attractive that you just go close your eyes and go and buy. I think so. It's good that sanity is coming back.
We know where the valuation is. Is it cheap? Is it expensive? Markets is like pendulum. Kabhi idhar, kabhi udhar. So I have no idea where markets will go. But I know now valuations have corrected in many cases. And it's time to look at stock on a bottom-up basis.
All right, interesting conversation out there from the market masters. Take a short break, come back, promise you another interesting conversation. This one is the management of Somani Ceramics. Abhishek Somani, the MD and CEO, joins in.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
Unlike Donald Trump, I don't believe people who disagree with me are the enemy. He wants to put them in jail. I'll give them a seat at the table. And in 7 days, we have the power. Each of you has the power to turn the page and start writing the next chapter in the most extraordinary story ever told.
Well, cheers to the festive season that's raising the bar literally. India's alcobev maker.
You're watching us here on Halftime Report, and we're talking on Diwali Day. Let's get in a couple of managements as well. We have Somani Ceramics, reported a soft set of second quarter numbers. Of course, the first half was a bit of a washout because of extended rains, weather not supporting, and the first quarter itself had the election. So we do have management joining in. Abhishek Somani, the MD and CEO of the company. Abhishek, first up, wish you, your team, your family a very happy Diwali from all of us here at CNBC TV18.
Likewise, happy Diwali to all of you.
Hope that the festive season brings some cheer as well, because, you know, it was a near washout in the first half of this year. What are you looking at in terms of green shoots coming in from the second half? Do you still maintain, for starters, your guidance? You had targeted what? Low double-digit revenue growth in FY25, fueled largely by volumes. I look at the first half, it's absolutely flat.
Yes, we've only grown by like almost just about 1%. And the first quarter was a negative. The second quarter, we covered some ground. But you're absolutely right. And I think we have revised our guidance to about a 6 to 7% growth overall, which means that we would do a double-digit growth in H2. The green shoots are that October has started well. And this time Diwali being early, which is today, I think the next, November, December, and onwards to March is a clean 5 months, which we will get. We're also doing a couple of product launches, which should help augment some volume. But the first half has been a surprise. Incessant rains across the country and various other reasons why the market has been slow. But it's been slow across the segment. All building material has been slow. From that point of view, we're okay. We're not that bad. Our sanitary ware segment has done better than the tiles. Not as per our expectation again, but slightly better. But the other green shoots are that the margins are maintained. Raw material prices are maintained, both gas and also in terms of other raw materials. So at least there is some respite on that end.
Abhishek, good afternoon. Thank you so much for joining in. Festive greetings to you and your family and your team at Somani as well. And I wanted to ask you about your margins, right? From almost 10%, you're down to 8.5% in this quarter. What is the kind of margin picture that you're working with in the second half? Are gas prices now coming under check? And is there a risk that you see to the margin profile going forward as well?
Our margins greatly depend on capacity utilization. And as you can see that we have had a very, very muted growth in the first half. Our capacity utilization on a console level is down to 77%, which used to be close to 80-something% last year, same time. So it's down about 4 or 5%. And that's impacted the margin. We have been able to, get some tailwinds from the more value-added segment. But on the other hand, there's been pressure on discounting. So towards the month ends, both in June and then in September, there's been an extra discounting, but that's had an offset with the added value-added product which we sold. On the gas pricing, no surprises. Gas pricing remained pretty much range-bound. Going forward, also, we don't see the gas pricing going up. If you can see, we're linked to the Brent, which is down, which is around the 72, 73 range, if I'm not mistaken. So margins, if my capacity utilization go up, which it should in H2 for sure, which means that we're looking at a 1% to 1.5% increase from where we are today. So we should be able to get to that 10%, 9.5% to 10% mark by the year end. And we're pretty confident that our capacity utilization will go up.
All right. Would you have a number on the capacity utilization? Because 77%.
Yes, we should be in the mid 80s for H2, if not more.
On your faucetware, the capacity utilization out there is upwards of 100%. Are you considering adding more capacity out there? And what proportion of your revenues now are coming in from sanitary ware and faucetware?
So this year would be approximately 300 crores from sanitary ware and faucets. And in faucets, we don't need more capacity. We're running, we can always increase the shift to double the production. So we have more than enough capacity for at least the next 18 months in the faucet.
And are there any plans to increase your own manufacturing, Abhishek? Currently, around 28% of your sales mix with joint ventures and others forming a majority of it. Is there a plan to take that level higher as well?
So we produce about 60-something% on our own, 65%. But I think the last expansions which have taken place, which has not been utilized, that's at 77%. So from that point of view, I think we have enough capacity to take this up to 70%. So we've added 500 crore rupees of expansions in the last 30 months in brownfield and greenfield. And now it's time to start utilizing them. The minute we start utilizing them, margins go up, top line goes up. Fortunately, none of this expansion has come at any balance sheet pressure. So we are still a net debt-free company, even after the investment. So looking good, looking positive. And we're in a sector, like they say, that houses are going to be built. And fortunately, we're replacing a lot of material, a lot of natural stone, wood, etc. So we're looking good.
Okay, good. No worries about that, despite the first half, as it were. That's nature of the beast, Just a final question before we let you go. You did say that you did see an impact coming in on account of the first half, but that was offset by increased value-added products. The last time I spoke to you, you said GVTs were close to around 36% of your sales. You were trying to take it to 40%. What's the target here now? Where does it stand?
We are at 38, so we've increased it by 2%. And if it would not have been for such a tepid, very muted demand, we would have been at 40. So I think we would cross 40 by the year end.
To cross 40 by the year end. Take that point, Abhishek. Thank you so much for joining in. Wish you once again a very, very happy Diwali and a prosperous year ahead as well. The management there of Somani Ceramics cutting its growth guidance for FY25. That's the bigger takeaway. The stock currently doing precious little at the flat line at 651. Well, time for a short break here on Halftime Report. But before we do that, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this.
Record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Reddy, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
We are getting very good resolution. On the top of it is KSK Mahanadi, where we are expecting recovery of more than 100% recovery of principal amount we are expecting, because the Swiss challenge process is on, and we are the rates that the bids that have come, it is indicating that our recovery is going to be more than 100%. Second case is that of Sinnar plant at Nasik. There also the initial bids have come, and the H1 bid is quite good. And third project is Hiranmaye project. There also the Swiss challenge process has just been completed, and the bids that we have received.
Welcome back. And auto sales numbers for the month of October will be released tomorrow, and Sudarshan is here with the key expectations of that. Sudarshan.
It's going to be an interesting month for these auto companies. When they report sales for the month of October, this will also have the numbers that they have received during the festive season. So overall volumes for the month of October are going to be mixed, with two-wheelers and tractors are expected to see a growth, and passenger vehicles may see a flat performance, whereas commercial vehicles may see a decline. Retail festive demand is going to be healthy for two-wheelers, followed by passenger vehicles and tractors. Now talking about segment-wise, first about two-wheelers. Growth is seen in the range of 4 to 20%, with TVS and Eicher Motors are expected to outperform, whereas Bajaj Auto is expected to underperform the peers. Now, talking positives about two-wheelers. First, retail festive demand is best amongst all the segments. Retail festive growth is seen somewhere in the range of 10 to 12%. And one more positive is rural growth continues to remain healthy. And if we talk negative, that is urban growth continues to lag the rural. Now, coming to passenger vehicle, retail festive growth here is seen around 6% for the industry, with Maruti and Hyundai may see a decline in total wholesales, and M&M is expected to outperform the peers. And for Tata Motors, weak commercial vehicle may weigh on the overall sales. Now, if you talk negatives about passenger vehicle, first, it has a high base. Second, here also urban growth continues to lag. And third, these companies have been providing major discounts due to competitive intensity. And now, if you talk positive, it is second half of the festive season has been much better than the first half. Coming to commercial vehicle, Ashok Leyland may report a decline both MOM and year on year. And negative here is decline on high base for cargo vehicles, and positive is EV build generation has been higher than the last year. Last one is tractor. Here we are expecting a flat performance year on year. On month basis, growth may be in double digits. If we talk positive triggers about tractor, there has been improving farmer sentiment on surplus rainfall, and there has been better kharif production. So overall, for the month of October, we are expecting a mixed trend where two-wheelers may outperform other segments.
All right, with that, we'll take a short break. Thank you so much for that, Sudarshan. On the other side, we will have Manisha Gupta, as always, join in with all things commodities. With her would be someone from the jewelry business, Amarendran Vumidi of the Vumidi Bangaru Jewelers.
Here today with a message of hope for all Americans. With your vote in this election, I will end inflation. I will stop the invasion of criminals coming into our country, and I will bring back the American dream. We need the American dream to come back home. This will be America's new golden age. It's going to happen quickly, too, very quickly. Every problem facing us can be solved, but now the fate of our nation is in your hands. Next Tuesday, you have to stand up and you have to tell Kamala Harris that you've done a terrible job, that crooked Joe Biden has done a terrible job. You've destroyed our country. We're not going to take it anymore. Kamala, you're fired. Get out, get out. You're fired. And I'm announcing a new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's about time that they were recognized, right? They add so much to
Well, seems like this sell-off is intensifying for the market now. The mid-cap index is down over 1%, and the sharp sell-off is what we've seen in the last few minutes on the Nifty as well. The mid-cap index, there you can see, it's a swooping decline to the low point of trade. The mid-cap index, apart from that, we have the Nifty Bank. You know, when we started the show, it was the Nifty Bank which was falling less than the frontline indices. The Nifty was down 0.4%, with the Nifty Bank down just 1/3%. Over the last 1 hour or so, the Nifty Bank has increased its underperformance, currently down by almost 1%, with the Nifty, which is struggling to hold at that 24,200 mark. Remember, the bulls were hoping for some support coming in at 24,250, but turns out not. There is a lot of put writing at 24,200. Let's see where we go. The Nifty Bank has dragged the Nifty lower, with HDFC Bank seeking lower levels. The IT pack has always been lower in today's trading session itself. So the first big casualty of the day so far has been HDFC Bank, with a cut of almost 156 points on the Nifty Bank itself. But that's it about equities. We have with us Manisha on this joyous occasion, taking us through all things commodities. Manisha, gold, silver, precious metals, what do you have?
Oh, well, all of that actually. There are so many options for consumers to buy this time around at Dhanteras and Diwali, and there are record weddings waiting to happen in November, December and onwards. And that would tell you that we are looking at strong demand continuing for gold and silver, even at these all-time high levels. Joining us to discuss that further is Amarendra Vumidi. He's managing partner at Vumidi Bangalore Jewelers. Anandran, hi. Thank you so much for joining us. What has been your sense with all-time high gold prices? How have the jewelry sales panned out for this week, particularly?
This week, and first of all, thank you very much for having me here. And this Diwali has been, like all other Diwalis, has been wonderful. There was a slow start, but like you asked, for this week has been one of the most fieriest weeks for us. The sales have been extremely good, unlike what we had expected. We thought will be a dull season, but towards the end, it made up for all the dull weeks that we had, and we probably are at least 15 to 20% higher than what we did last year.
Amarendra, and what is it that people are buying? Because with the way the prices have been rising, is it more to do with bridal jewelry, or would you say people are buying more of gold as in sense of investment and wealth creation?
People are buying everything gold this time, though. You know, it's a tradition to buy gold for every occasion. From the child is born, for every occasion, people buy gold. And Diwali is a typical gold buying season. So people are buying bridal jewelry, buying occasional wear. And typically for Diwali, there are lots of parties happening in the town. You know, at least 10 days before, there are lots of parties happening. So people are buying party wear. The wedding season is coming up, so people are starting the wedding purchases. This season, we believe, is going to be a good season for us.
Amarendran, you said 15 to 20% of a surge this Diwali as compared to previous. What kind of buying trends have you seen?
This time, we've seen a lot more of the lighter weights. People are buying more pieces than larger pieces. So although the ticket size has come down, but the number of tickets has increased this time.
And even as there is a lot of buying, would you say that it is more about gold jewelry, or would you say studded and polkis and jadaus, diamonds, all of that seems to be doing well too?
All categories have done well this time, surprisingly. Diamonds have done really well since there was a drop in diamond prices. So people found that to be a little bit more attractive than the other commodities. So people have bought diamonds. Silver has gone up, so silver also has done very well. All of this, people buy with the belief that, you know, their investments are good. This is the only sector, the investment that the woman makes, and she has always been right, because for so many years, the gold has only gone one direction.
Well, yes. Amarendran, you know, when it comes to the overall country, we do see South actually leading by far with sense of numbers that is bought in sense of gold or jewelry for that matter. And then comes North, and then West, and then East in some sense. How have you seen this play out this time around as well?
I don't think so. The trend has just changed. It's still the same. South still leads. The markets were absolutely chock-a-block this time. Everybody who I spoke to have expressed the same sentiments. said that gold has done very well and they are all very happy for the season.
So you're saying that all-time high prices have not deterred buying at all. Would you have a sense of also on what kind of buying has happened in sense of quantity in this week until now, and what are the expectations? Because a lot of people that we are talking to tell us that 42 tons of gold was sold the previous time it was Dhanteras and Diwali. Are we looking at similar numbers this time around as well?
I think the market should have done at least 10 to 15% higher. So if last time was 42 tons, I think we should be around about 50 tons this time around. And not lesser.
Okay. All right. Amritan, also going forward, because it is a wedding season, are there any new launches that the street is looking at? And also, is there a lot of competition into the market? Because a lot of people that I spoke to tell us that there are offers and schemes and monthly deposits as well. And there are various ways that jewelers are trying to do businesses. What's your sense?
I think offers is a very good way because the first 2 weeks, were a little bit slow. So the offers started to go up, and then once the offers started to kick in, then the crowd started to flow. So I mean, there's no other best way to get a client than giving an offer, and world over, people love a discount.
They do. Amritan, a final thing then, as compared to last year, what kind of penetration would you see in case of diamonds? Because yes, the prices have corrected almost 20% from the highs that we saw in the previous year. So what kind of an increase in growth and sales have you seen in that one?
Diamond has seen quite a robust growth. There's almost a 30 to 35% growth in diamonds. And we expect this to continue. And if this continues, we can expect the diamond prices to stabilize a little bit. So we feel that we are stocking up for diamonds, and we are pretty bullish on the diamond market. Despite there's a lot of talk about other diamonds, of man-made diamonds, but still has hardly impacted the natural diamonds business at all.
Oh, well, absolutely. Lab-grown has its own market, but natural diamonds has a lot of takers. Continuing, a final question, then I'll squeeze in one more here. What's your sense on the gold prices going forward? Where do you see the prices now until next Diwali?
I think even a layman can guess this. It's only one way. So with the added geopolitical tensions, I don't think there's any other direction for gold. Only up.
Amrendra.
I trust a jeweler to always say that gold prices are always up, right? Thank you so much. Wish you, your family a very happy Diwali as well. And if you say that gold is going to be up, then perhaps it is, because all Indians in some way or the other do have their savings in gold itself. Can't say the same for the IT index though right now, Manisha. It's at the low point of trade right now as we look at it, it's being a big drag on the index. Yes, the Nifty bank is lower, but just pull up the IT index. You have a big cut coming in from what? Infosys currently at the lower end of today's trading range. We have Tech Mahindra, which is down nearly 5%. TCS is the other one, which is down about 2.5% as well. So the IT index on the whole has now seen a cut of almost 3.5%, a little over 3%, has been a big drag on the index for most part of today's trading session. Just over the last few minutes or so, we had the Nifty bank that did decline. But for IT, those who are just tuning in, we just reiterate, all the IT stocks are actually under pressure, largely because of overnight developments that took place where, French IT major Capgemini went ahead and cut its guidance downwards, or revised its guidance for the year ending in December, and this is the second consecutive quarter of guidance revision on the way downwards. They expect a degrowth of 2 to 2.5% versus a previous expectation of a degrowth of 0.5 to 1.5%, telling you that the cut is slightly deeper than what they earlier anticipated. On that note, what we'll do is we'll take your leave on this edition of Halftime Report. Wish you once again a very, very happy Diwali, your family members and your loved ones. On the other side, we'll have Business Lunch, take all the market action forward. The October series expiry in the second half of trade coming up for you. The Nifty's lost almost 7.5% this series.
करें शुरू?
What should I call you? The comeback kids? The comeback men? Is that appropriate?
I think I like kids more. Young Turks has been on from 2001.
Yeah.
I think it seems like all of us have grown up together again.
I'll end up in DPS, that's where me and Kunal met.
What keeps or has kept the two of you together?
We have some manufacturing defect in the two of us. When you're at the bottom of the list, you find the courage to continue. And I think that's where our partnership, our friendship, our relationship has been so crucial.
ABCD, astrology, Bollywood, cricket and discounts.
Good memory, Shriram.
And not money,
13 years later.
We have to unravel the enigma that is Rohit Bansal.
To us, our individual egos almost stopped mattering. And the only ego that we had in mind was a joint one.
We have lunch every day together.
And are never spoken of, ever, but they're going to be spoken of now. Thank you all very much. The United States is now an occupied country, but it will soon be an occupied country no longer. Not going to be happening. Not going to be happening. November 5th, 2024, 9 days from now, will be Liberation Day in America. It's going to be Liberation Day. On day one, I will launch the largest deportation program in American history to get the criminals out.
Hello, good afternoon. You're watching Business Lunch on CNBC-TV18. And firstly, festive greetings. Happy Diwali to everyone who's watching. And thank you so much for tuning in. But at this hour, let's look at what are the top headlines that are there. And we'll start with some of the important updates that are coming in today as well. Let me start with the first headline for today. Indices set to close a strong somewhat 2080. The Nifty registers gain of nearly 25%, while mid and small cap outperform today. Even as headline indices trade in the red, advances outstrips the declines. Pharma stocks gain while tech stocks drag. Strong order assertion in the first half for the new year props up L&T, which now boasts an order of around over 5 trillion rupees. The company holding on to its guidance for FY25 also infuses confidence. Cipla has got a green signal for its Goa unit from the US FDA, clearing the way for its launch. The 700 million respiratory drug Abraxane, much ahead of the expected timeline. The unexpected boost fires the stock up. French IT consulting major Capgemini is cutting its 2024 guidance after a weak quarter on the continued weakness in its manufacturing vertical. This is the company's second downward guidance revision after a cut in July. Let's look at the Nifty, right? What is that doing? Opened up on the positive, a bit of a up move, but then since then we saw a bit of a decline coming in through the day. And at one point of time, as of now, also Nifty is trading at the day's lowest point, 24,200, just managing to hold on to that mark as of now. So Nifty, not much excitement there, down almost 0.5% in trade. What's the top drag today for the Nifty? Let's look at that. Infosys, TCS, we have ICICI Bank as well as ITC, which are among the top drags coming in for the company, for the Nifty. So when you look at it, IT, obviously clearly the top sectoral loser, and other than that, FMCG, also some of the names over there. What's holding on to some bit of a gain today? Let's look at that, right? We are seeing pharma side. So we have Cipla, Torrent Pharma, which is holding on to gains, and we'll get more details on Cipla a bit later on, but today holding on to gains of 10% as of now. Let's talk about small cap. Where's that headed as well? Because that is the only one which is managing to hold on to some bit of a gain there. So yes, small cap is the one which we are seeing some bit of a positive up move today. Even mid cap is not doing that well, but small cap is outperforming. As of now, small cap holding on to gains of 0.2%. Let's move on and talk about Cipla furthermore. Why is Cipla a stock that is buzzing in trade today? And like I mentioned before as well, Cipla's Goa facility that has received a US FDA approval. Now, this facility had been, under restrictions for a while. Since 2020, there was some bit of an issue that was going on, challenges that this facility was facing. And now, obviously, they've gotten a voluntary action indicated status. So that's a positive sign and a big development coming in for Cipla, because there are a couple of drug launches that were set to be made from this facility, especially generics Abraxane. That is the main one which will be manufactured in this facility. Now, analysts were expecting that this drug would be launched somewhere in FY27. But obviously, because they've gotten this approval right now, we could see a sooner launch of this drug as well. Obviously, we'll wait out for more details from the company. But this drug has a $700 million market size. And currently, there's only one generic player who has gotten an approval, that is Sandoz, in 2024 for this drug. So surely a positive move that analysts are expecting. Sales could be around $70 to $90 million for this drug for Cipla on an annual basis. So interesting to watch out for Cipla. And no doubt that's why it's holding on to very strong gains of 10% today. Let's move on. Another stock that's been buzzing in trade today is L&T. Now, they reported a good set of numbers during the quarter. It was yesterday post-market hours that we saw that the company reported their good set in quarter 2, 7% uptick as of now for L&T. Vivek is joining in with us to talk to us about the details and highlights of the earnings as well as some key takeaways there.
Well, you're right, Winnie. L&T delivering a strong set, and along with that, addressing quite a lot of the investor concerns that were there going into Q2. First, to put into context the L&T numbers. Number one, what are the concerns that the street had going into Q2? Order inflow was expected to be quite muted. In fact, the street was worried that the company may tone down its 10% order inflow growth guidance that it had kept as far as FY25 was concerned. Along with that, the project and manufacturing margins was expected to remain quite muted, and street was anticipating that there could be a toning down as far as the margin guidance was concerned. But let's look at the key takeaways and what is it that L&T actually addressed. Talking about the core P&M projects as well as manufacturing margins at 7.6%, below what the company had guided for, but up 20 basis points on a year-on-year basis. Order inflow for H1 surprised positively. Now, this is despite that domestic ordering momentum remaining quite weak, indicating that the international share as far as the order book has remained quite robust, putting to rest concerns about moderating capex as far as Saudi is concerned. Along with that, the guidance for all key parameters was retained by L&T for FY25. Order book is very strong. Over 5 lakh crore is where the order book stands at. And along with that, a significant change as far as strategy is concerned in terms of bidding for Indian thermal power projects. The company said that they will selectively bid for BTG portion of the thermal order wins. Now, along with that, when you're talking about the numbers themselves, revenues higher by 20.6%, EBITDA up 13%, margins muted 10.3 versus 11%, and profitability up almost 5.5%. We were working with a profit growth that was expected to remain flat on a year-on-year basis. Now, along with that, order prospects expected to be at rupees 8.1 trillion, 8.1 lakh crore. Domestic share at 57%, indicating a strong rebound in the domestic ordering momentum as far as H2 is concerned. No wonder then, a lot of upgrades have come in, and on the back of that, stock is up almost 7% in the day-to-day.
No, I think we are staying course with that guidance because I think it's too early to read much into how the year will end. But we are reasonably confident that we will be able to meet the guidance as we see today.
Now, we had sort of said earlier that we'll withdraw from the thermal power plant business as they had originally scoped it out and packaged it, which included not only BTG but the entire EPC for the balance of the plant. Once we kind of communicated that, there has been some discussions and interactions with stakeholders. And I think the packaging has been different now, so we are looking at now more as a BTG, which fits very well into our core manufacturing capabilities. We are currently placed L1 on one of the bundles. The discussions are ongoing. We are hoping to win two of those at least.
Okay, on that note, we're going to slip into a very short break. But as we slip into break, hear out what Manish Chakani of Enam Holdings had to tell us when we asked about the sectors he's bullish on and how he expects the market to perform in Samvat 2081.
In the market, there are enough things to do.
Like what?
So, again, if I go back to financials is number one.
Okay.
This whole energy, renewable energy kind of is area number 2. The whole hard assets is area number 3. And in that, what else have I done recently? Let me think. So I have renewables. I have an airline stock, for example, believe it or not, that there is a, hopefully a revival in that as well. And number of these things, we have still years to catch up with China, and there's fear about execution and so on over here. So there's enough to do. I mean, from an individual investor perspective, there's enough to do. And it's not a market which is going to crash, and therefore you say, I want to sit on cash.
It's a hold market, basically.
It's a hold. I'd be very happy if we go sideways. Because remember, my underlying theory still is, at some point we have a melt-up in India. So I'll just reiterate, the horses that you know best. And again, the names I just mentioned in passing, I'm not meaning to recommend, and they are tiny parts. But I just say it's enough to do in the market rather than say, let me go and build 25% cash.
Absolutely. And in renewables, it's through financiers or?
No, not through financiers. You'll get enough over there. I mean, just look, there's enough. The whole power energy transition is still a big
And anything else at all? I mean, any other any new sector?
It doesn't, listen, I don't have to go shopping every day. I'm a farmer. I plant the seeds and I wait for the crop to grow. It may take 3 years. The longer it takes, the better, because you get the underlying compounding. And I'm in no eagerness to harvest the crop. Because I have no need to harvest the money and take it elsewhere. I'm going to be here invested in India.
Next Diwali will be higher or lower?
Next Diwali, if we get double digits from the index, I would be surprised. I think at some point, and there are a lot of stocks. Even remember, we've spoken in the past about EMS. Some EMS stocks are down 40%. And it's not like the story's over there. Some of them are over 100 multiple. Some of them are not. So you get things over here.
But you're saying you'd be surprised if you get double digits.
If you get double digits from an index perspective, despite the large caps being the store of value today, is difficult. And that tells you what likely to happen in the small and mid as an index.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for
Welcome back. You're watching Business Lunch on CNBC TV18. The festive season is usually a period that we see strong growth for consumer durable companies, but as the consumption across the country is slow, what is the demand this time for consumer durable goods looking like this year? Shilpa is joining in with us to give us a ground check on that. Shilpa, you're looking pretty, but is the consumer durable goods demand looking pretty this festive season?
Hi Vinny, thank you for the compliment, but you know, it's a mixed sort of a response that we're getting from consumer durable makers this time. And most, the most common comment that I heard is it's good, but it's reasonably good, but it's not that great. So that is sort of the commentary that is coming in from consumer durable makers. Now, from the conversations we've had with people across the industry, it seems like we're going to see a 10% growth this time over last year's festive season. Remember, usually festive season accounts for about 30% of sales for consumer durable makers, and last year also there was about a 30% growth that they had seen over the previous year, but this year 10% growth is what we are expecting. There is some signs of pickup in rural and semi-urban markets, and consumer durable makers are saying this is because the products like semi-automatic washing machines, LED TVs have been doing well. Premium segment, as usual, this time also has led growth. But what some of them are saying is that this is mainly because consumers are looking to upgrade and they're opting for financing options. They're opting for EMIs, and that's why the premium segment also has done quite well. So if you look at the fiscal so far, the expectation is about a 9% growth roughly, and this is likely to be led by ACs, washing machines and refrigerators. Now if you look at at the segment level also, washing machines expected to grow about 4 to 5%, refrigerators about 10 to 12%, televisions saw about roughly 7% growth. But what we're understanding is that large screen TVs, which is more than 55 inches, they grew in double digits like the premiumization trend. So the large screen TVs actually did double-digit growth this time. And some of the specific comments that came in, Vijay Sales for instance, like I said, they said that they saw reasonably good sales this year. They're expecting a high single-digit growth over last year, and they say that this itself in the current environment is a good sign. Blue Star, though this is not really the season for ACs, it's expecting about a 15% to 20% growth over last festive season, again led by premiumization. LG India said that it saw good growth across all categories, especially in premium products like large capacity washing machines and refrigerators also. Demand for premium products also have increased in tier 2-3 towns, and a similar comment came in from BSH home appliances as well. So overall reasonably good, not as good as they would have expected it to be. Back to you.
Thank you so much for that, Shilpa. Reasonably good. Market may see 10% growth this time in consumer durables versus last year. So keep an eye out on that. But let's move on and let's listen to some insights coming in from Shriram of Enam Holdings as he gives his views on gold as the yellow metal continues to hit new highs.
I've been very bullish on gold for a while. Actually, I started investing in 2013 and I have been doing a sip on gold, and then the sovereign gold bond came and I realized what a great instrument that is. But apart from this, gold has actually done very well. If you take a 20-year period also, it has done almost as well as Nifty. About 14% return it has given, and people miss that gold actually is a hedge against the currency also. For people who are seasoned like us, we still prefer gold. Plus, central bank buying has become a big, reason for gold going up. I think gold will continue to do well over the next 4-5 years. The other interesting statistics on gold is that if I take the last 20 years, there have been only 4 down years in gold. So it's had a positive on every of the other 16 years, and the volatility has been very less. The maximum drawdown in any year has been only 8%, as compared to, say, a Nifty, which has had 2 years when it has had more than 25% drawdown. So it's been a very stable asset class, and my view is at least 10% of your savings should be in gold. It can be in one of the paper instruments, ETFs, or any of the others.
Okay, on that note, we're going to slip into a short break, but here's a programming note. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC's India's Hitendra Dave, Tech Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this, so stay tuned.
What should I call you? The comeback kids? The comeback men? Is that appropriate?
I think I like kids more. Young Turks has been on from 2001.
Yeah.
I think it seems like all of us have grown up together again.
I land up in DPS, that's where me and Kunal met.
What keeps or has kept the two of you together?
We have some manufacturing defect in the two of us. When you're at the bottom of the list, you find the courage to continue. And I think that's where our partnership, our friendship, our relationship has been so crucial.
ABCD, astrology, Bollywood, cricket and discounts.
Good memory, Shriram. 13 years later.
We have to unravel the enigma that is Rohit Bansal.
To us, our individual egos almost stopped mattering. And the only ego that we had in mind was a joint one.
We have lunch every day together.
A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. You're watching Business Lunch on CNBC-TV18 and moving on to some updates coming in from the US front. US presidential candidate Kamala Harris and Donald Trump continue to showdown on the US political battleground. In the last week of US election campaigning, the presidential candidates started the tour of swing states, and NBC's Bree Jackson is getting us more details on that.
A battle to seal the deal with voters in battleground states.
Well, thank you very much, North Carolina. You are a special group of people.
We have just 6 days left in one of the most consequential elections of our lifetime.
Both candidates focusing on their closing message amid controversy. Former President Trump distancing himself from a comedian at his rally who called Puerto Rico a floating island of garbage.
I don't want anybody making nasty jokes or stupid jokes.
When asked to weigh in on the comics comments, President Biden said this.
The only garbage I see floating out there is his supporters. His demonization is seen as unconscionable, and it's un-American.
Vice President Harris distancing herself from the president's remarks.
I strongly disagree with any criticism of people based on who they vote for.
The president clarifying his comments on social media, saying he was referring to the hateful rhetoric about Puerto Rico spewed. The White House stressing Mr. Biden was taking aim at the comic's words, not Mr. Trump's supporters. The former president pouncing on Biden's comment.
Remember Hillary? She said deplorable. That didn't work out. Garbage, I think, is worse, right? Please forgive him, for he not knoweth what he said.
All this comes as Americans make their voices heard.
What scares me is, again, like possibly losing my reproductive rights, my right to an abortion.
I voted for Trump last time. I'm going to do it again. The economy sucks at this point.
Voters divided over issues and rhetoric. In Washington, Bree Jackson, NBC News.
Okay, and with that, it's a wrap on this edition of Business Lunch on CNBC-TV18. Thank you so much for tuning in. It's a goodbye from myself as well as the team who put this show together. But don't go anywhere. Midcap Radar up next.
ये लाइट्स का त्यौहार है, ये दिए जला के मोमबत्ती जला के हम अपना त्यौहार मनाएं, ना कि पटाखे जलाएं। पटाखे जलाने से प्रदूषण होता है। प्रदूषण से कोई ऐसा नहीं है कि किसी पे एहसान कर रहे हैं, हम अपने ऊपर ही एहसान कर रहे हैं। जो प्रदूषण होगा वो हम ही उससे भुगतेंगे, हमारे बच्चे ही, छोटे छोटे बच्चे वही उससे भुगतेंगे। तो इसमें कोई हिंदू और मुसलमान और इसका कोई वो नहीं है। सबकी सांसें ज़रूरी है, सबकी ज़िंदगी ज़रूरी है।
Hello and welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. Well, today it is seeming like a day where we could see some more pressure. It's the monthly expiry as well. The last 1 hour of the trading day will be very, very crucial to watch out for as well. So we'll be tracking all of that and a lot more. But Vivek, it's a power-packed show today and we do have a lot of stocks to track as well.
A lot of stocks to track, a lot of managements to connect with. So quite a lot lined up on the show today. Let's start off with the top headlines. Indices are set to close a strong summer 2080. The Nifty registered gains of nearly 25%, while mid-caps and small caps outperformed, even as indices trade in the red today. Advances outstrip declines, pharma stocks gain, tech stocks drag.
Manappuram Finance slips more than 3% after unit Asirvad Microfinance's profit declines 36% and asset quality deteriorates in the second quarter.
Prudent Corporate Advisory up over 11% after reporting Q2 numbers. Company saw its consolidated revenues rise nearly 15%, while total expenses grew 14% on a sequential basis.
Paras Defence gains after receiving a 42 crore rupee order from the Ministry of Defence. Company also reported its Q2 numbers, where its revenue surged 43% on a YOY basis.
DCM Shriram up over 2% after reporting Q2 numbers. Revenues up 9.2%, while EBITDA surges 59% on a year-on-year basis.
Okay, all right. Those are the top headlines and some stocks from the mid-cap space which are on our radar. By the way, the mid-cap space is not doing so well. It's now underperforming the benchmarks as well. At a point in time, both these indices were down around 0.3%, but now that has been extended. Mid-cap index at the day's low, the advanced decline ratio in favor of the declines by a huge margin now. So that's the kind of picture that we are seeing. The advanced decline ratio is in favor of the advances, despite that big cut that we are seeing on the mid-cap index right now. but a lot of stock-specific action, and we'll be discussing that through the course of the show.
You're absolutely right. The advanced decline ratio, largely helped by the fact that the broader end of the markets, and especially if you're looking at the small cap index, that continues to remain in the green. A lot of stocks in the cash segment, they continue to move quite well in today's trading session. But a whole host of stocks is what Hormaz has on his radar. He's standing by the wall to discuss the list of stocks in the broader end of the markets that are doing very well.
Well, earnings have been a little considerate in taking a pause on Diwali Day, but earnings reactions continue thick and fast within the broader markets, especially the ones that came out yesterday. Aditya Birla Capital down to the lowest point of the day. Biocon has recovered from the lows, now down only 2%. But IRB Infra, after a soft quarter, is seeing a bit of an impact in today's trading session. Some of the other movers, and IT is the top sectoral loser today, and mid-cap IT is the one that is leading the losses. Look at this: Persistent, Emphasis, Birlasoft, all of them seeing losses of anywhere between 3.5% to 5.5% within the mid-cap IT space. Some stocks that are bucking the trend in today's trading session, and otherwise red screen. Vodafone Idea is among the top gainers today, 5.5% higher. Reddington, after its earnings, continues to move from strength to strength, as does Piramal Pharma, and BLS International is having a good day at the office. Stocks that are doing well on the back of strong volumes in today's session: Rainbow Medicare, Chalet Hotels, Jupiter Wagons, DOMS Industries is at the day's high, 7% higher on very strong volumes. And lastly, some other stocks that are extending losses in today's session: Five-Star Business Finance, Manappuram Finance are the two of these stocks that are not having a very good day in today's session. Back to you guys.
Well, interestingly, the list of the green is much higher, right? So thank you so much, Hormaz, for joining in with all those names. Some interesting ones there. Vodafone, for instance, up around 6%. But as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das. We have industry leaders like HSBC India's Hitendra Dave, Tech Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? Watch CNBC TV18 for the best newsmakers and the sharpest analysis.
We bring you all the action live right here on CNBC TV18.
Deputy Minister Morrison and I spoke to the Washington Post on background late Sunday afternoon, October 13. We provided non-classified information on the action we had taken to cooperate with India and explained how the evidence showed links to the government of India conducting illegal activities against Canadians, including threats to their lives.
Investing.
Welcome back to Midcap Radar. Well, Prudent Corporate Advisory reported a decent set of Q2 numbers. The company saw its revenue rise nearly 15%, while total expenses grew 14% on a sequential basis. To discuss this and more, we have Sanjay Shah, the Chairman and Managing Director at Prudent Corporate Advisory Services, joining us now. Good afternoon, Mr. Shah. Thank you so much for joining us. Wish you and your team a very happy Diwali. First up, give us a sense of, number one, what percentage of your earnings are actually linked to the equity market rally? And also, with the last couple of weeks, the kind of correction that we are seeing in the markets, have you seen any impact on flows on SIPs? And what would be the resultant impact on revenues, if any?
Well, thank you for inviting us, and just convey my happy Diwali wishes to entire team of CNBC and all the viewers. So I think you are definitely very, very bang on as far as my earnings are concerned. So we are representing purely the India's retail investor sentiment. And if you look at last 1 year, if my AUM has gone up by almost 58%, 44% has came by way of mark-to-market gain. So significant rally has came in the AUM due to stock market performance, and that is the reason. If you look at YOY, our AUM has gone up by 55% and my profit after tax has gone up by 69%. So I think that has been impacting significantly. Coming to your point regarding the retail sentiment, I think probably if I just give you the number, in the month of September, we ended the quarter with a 1,07,000 crore of AUM. And in this month till date, I think the market has gone down by 7.5%. However, yesterday my AUM was at 1,04,000 crore. So just trying to communicate that overall sentiment are conducive. Money is not moving out. I think the SIP also growing strength on strength. And if you look at, I think because of entire AUM, which is mix of hybrid, balance advantage, multi-asset allocations, large cap and the mid cap, overall impact on the mutual fund portfolio at our end is about 3.5-4%. So overall, retail is very, very strong and the net numbers are very, very positive in the current month. So there is no impact on the retail side. Confidence are significantly better. And if I extrapolate this for the full year, if you do not see significant downside from here on, and if market remain in this range bound for some more point of time, I think retail will still remain committed as far as SIPs are concerned, because in case of SIP, with every fall as new money is coming in for the investments, I think retail is not significantly impacted.
Okay. It'll be interesting to see the October number, because September saw that SIP number about 24,000 crore rupees. So very important time to understand whether the retail culture continues or not. Mr. Shah, your AMC yields are coming under pressure due to telescopic pricing. Is there any cut in commissions paid by them to you? Is there an impact on revenue or margins, if any? If you can explain this to us.
Yeah, so if you look at, I think the last couple of years, the mark-to-market really has been very, very significant. And because as the AUM goes up, because of SEBI's pricing structure, with every 5,000 crore AUM going up, the TR goes down. And after a long period of time, I think the largest AMC of the country, which is the HDFC, has transferred the price, the TR cut to the distributors, and we are also the one who has been impacted. However, if I tell you about the numbers, it was the Nippon One scheme and the HDFC who has reduced the price on the overall book. But if I'll tell you about the 1 lakh crore of my AUM, if I let us assume earn with a 1% yield 1,000 crore, the cut which is going to impact on my top line is roughly about 6 crore. So I think less than half a basis point impact has came as far as my top line is concerned. We are one of the largest B2B player of the country. So if I earn, let's say 100 rupees, I share 65 to 70 rupees to my distributors. So we also passed on 65 to 70% to our distributors. So our impact on the bottom line would be limited to about less than 2 basis point.
Okay.
Okay. So at the end of Q1, you had actually told that you expect to maintain a similar kind of margin, although on an absolute basis point, margins may change as the commissions come down. Would you like to elaborate on that? At the end of Q2, where do you stand?
So actually, in the Q1, my top line was about 91, 92 basis point. In the Q2 also, I'm in the similar range, mainly because if you look at in the second quarter, or let's say about the entire first half, my net sales was about 12, my gross sales was about 12 to 13,000 crore, which is 12% of my current book. And if you look at post 2019, when entire the pricing structure got revised. If you remember 2019 ke pehle, we used to earn upfront as well as trail, and then we moved to an entire trail model. So currently my new business gives me a 1 or 2 basis point higher yield, and because my new business volume is significantly higher, my yield has remained protected in the entire first half.
Okay, so new business gives 1 to 2 basis points higher yield, and new business is growing faster, or at least it's a bigger contributor overall to yields. I just want to understand what's the differential between the commissions you make on distribution of, say, mutual fund products versus insurance products. Where do you see more margin?
Because I think both has to be looked at separately, because mutual fund is entirely based on the trail, where lifelong you continue to earn 1%, while the insurance is a one-time revenue linked to the premium whenever you mobilize. So definitely the insurance revenue goes into a significantly higher percentage. Just for example, if you do something, let's say the life insurance non-par business, which is the kind of investment product only, you earn in the range of 40 to 50%, which is linked to the premium. While in case of mutual fund, you earn 1%, but you continue to earn 1% for the lifelong. So both are non-comparable, ma'am.
Okay, Mr. Shah, give us a sense of the revenue mix. Now, going forward, how do you see the mutual fund business growing, the non-mutual fund business, and especially insurance off a low base is growing very strongly? So how do you see the revenue mix pan out, and any growth rates you could forecast for us?
So frankly, we do not give any forward guidance. However, as far as mutual fund is concerned, there is one very strong factor as far as Prudent is concerned. So we have a very strong SIP book. So if you look at, I think the month of September, we ended the SIP book with 870 crore monthly collection. And we have about 115 crore of STP, which are money moved from liquid fund to equity. So roughly about 1,000 crore. So if you annualize this to 12,000 crore divided by total AUM, we have about 12% collection comes by of SIP, and we assume that 10 se 12% should come by way of mark to market. So on a longer term, at least 3 to 5 year horizon, you can easily project that the equity AUM should grow in the range of 20 to 22%. So I think the mutual fund itself is likely to grow at a better pace. However, in my overall revenue basket, insurance is significantly lower. I'll just give you the number. We have 31,000 mutual fund distributors. We have converted 12,450 people as point of sales. So still large number of people are yet to be converted. Plus people who already became point of sales are still, everybody is not productive. So hardly about 4,000, 5,000 people gives me the business. So you are very, very true. Insurance on a lower base, we have a very strong possibility that it can definitely grow at 25-30%. But mutual fund will also continue to grow at 20-22%. So overall, currently mutual fund is roughly about 78% and non-mutual fund products are 22%. We believe in next 2-3 years mutual fund will go below 75 and rest all product will probably in the range of 25 to 28%.
All right, so that is the growth rates you are expecting for both insurance and mutual fund business. You know, you spoke about additional product offerings as well in Q1, be it ULIPs, be it the Fund Bazaar platform and the other aspects of the business as well. By when do you launch it? And are you seeing interest in ULIPs? Because that is not considered as an investment option so much generally. What makes you confident about launching this product?
So normally we never used to give ULIP because we are very strong in the mutual fund side, and we always believe that ULIP is nothing but the competitive product to the mutual fund. However, in case of insurance, now the insurance companies are also moving towards trail concept in the ULIP, where the upfront cost will be very, very low, and hence it becomes on the revenue side more or less similar product. At the expenditure side also they both are similar. So we started adopting that product into our product basket from the second quarter, yet we are yet to see a strong traction. And another important thing is, if you look at the structure of the Prudent, we have one 100% subsidiary called Gendex, which is the insurance broker. We also became corporate agent in the Prudent Corporate, which is the 100% hold the main parent company. And we have a very strong technological platform called Fund Bazaar. And we wanted to provide all the product to my mutual fund investors under one login. So there we started providing the ULIP. So we believe the traction is yet to come. The reason for adoption is that on the cost side and the revenue side, both are becoming now parallel.
Thank you so much, Mr. Shah, for joining us and explaining to us in depth about Q2, the way forward, and also the business going forward. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
But I think no president's done more for Puerto Rico than I have. So thank you. That's really nice of you to say. Appreciate it. Thank you, Mayor.
Donald Trump is that leader. Donald Trump is not only the right choice for the Puerto Rican people, he's the right choice for all of America. We're here today because we're tired of the empty promises. We're tired of being told how to think, who to vote for, and watch as we have this broken border, a broken economy under weak leaders like Kamala Harris and Tim Walz.
I strongly and fully support and endorse Donald J. Trump to be our 47th president, to make America great again, and of course, to make Puerto Rico shine again.
Welcome back. You're still tuned into Mid-Cap Radar. Well, some pockets in the broader markets are doing well. Pars Defense is one of them. It's gaining on the back of recent news flow. The company has also delivered good set of numbers. Upasna is joining in with all the details. The stock is up 4%, Upasna.
While the companies received orders worth 42 crore from Ministry of Defence, this order is mainly for the supply of 5 types of electronic control subsystems used in thermal imaging, fire control systems, and to be delivered mainly to the Indian Armed Forces. Now, if we look at company's consolidated order book, it has increased 5 times from March 21 to August 2024. And mind you that the company has given an order book guidance to reach about 2,500 crores by FY28. So we'll be keeping a track on that. Now, looking at the company's result, companies reported strong set of numbers this quarter. Revenue stood at 87 crores with an uptick of 43% on a one-year basis. And this strong revenue growth was mainly led by companies' optics and optronic system segment. Now coming to EBITDA, EBITDA saw an uptick of 46%, leading to an EBITDA margin expansion of 70 basis points at 26.1%. Now company's PAT stood at 12.7 crore with an uptick of 46% on a one-year basis. So all in all, a good order win and also a good quarter result is what is leading to a gain in the Paris Defence stock.
Thank you so much for that, Upasana. Paris Defence gaining in today's trading session. Well, auto sales numbers for the month of October will be released tomorrow. Sudarshan is here with the key expectations.
It's going to be an interesting month for these auto companies. When they report sales for the month of October, this will also have the numbers that they have received during the festive season. So overall volumes for the month of October are going to be mixed, with two-wheelers and tractors are expected to see a growth, and passenger vehicles may see a flat performance, whereas commercial vehicles may see a decline. Retail festive demand is going to be healthy for two-wheelers, followed by passenger vehicles and tractors. Now talking about segment-wise, first about two-wheelers. Growth is seen in the range of 4 to 20%, with TVS and Eicher Motors are expected to outperform, whereas Bajaj Auto is expected to underperform the peers. Now talking positives about two-wheelers, first, retail festive demand is best amongst all the segments. Retail festive growth is seen somewhere in the range of 10 to 12%, and one more positive is rural growth continues to remain healthy. And if we talk negative, that is urban growth continues to lag the rural. Now coming to passenger vehicle, retail festive growth here is seen around 6% for the industry, with Maruti and Hyundai may see a decline in total wholesales, and M&M is expected to outperform the peers. And for Tata Motors, weak commercial vehicle may weigh on the overall sales. Now, if you talk negatives about passenger vehicle, first, it has a high base. Second, here also urban growth continues to lag. And third, these companies have been providing major discounts due to competitive intensity. And now, if you talk positive, it is second half of the festive season has been much better than the first half. Coming to commercial vehicle, Ashok Leyland may report a decline both MOM and year on year, and negative here is decline on high base for cargo vehicles, and positive is EV build generation has been higher than the last year. Last one is tractor. Here we are expecting a flat performance year on month basis. Growth may be in double digits. If we talk positive triggers about tractor, there has been improving farmer sentiment on surplus rainfall, and there has been better kharif production. So overall for the month of October, we are expecting a mixed trend where two-wheelers may outperform other segments.
Thank you so much for that, Sudarshan. This particular month is going to be especially crucial for auto sales. Well, let's take a quick look at the market. Have a look at some of the banking names. Going near the day's lowest point, the Nifty Bank Index 2 under pressure. Axis Bank, one stock, that suddenly moved to the day's lowest point. RBL Bank, after a brief respite, that particular stock too down almost 2.5%. Some of the consumer names, have a look at names like Tata Consumer. That stock also down 2.5% in the session today. So some weakness emerging. There has been a bit of buying in the last 15 to 20 minutes of trade. Look at names like Dr. Lal PathLab. That particular stock has moved to the day's highest point. A name like Oberoi Realty too has moved up and doing quite well in otherwise a very lackluster market. But with that, it's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner when we return.
Donald Trump is? He is the person who stood at this very spot nearly 4 years ago and sent an armed mob to the United States Capitol to overturn the will of the people in a free and fair election. An election that he knew he lost. Americans died as a result of that attack. 140 law enforcement officers were injured because of that attack. America, that's who Donald Trump is. And that's who is asking you to give him another 4 years in the Oval Office. America, I know the vast majority of us have so much more in common than what separates us. I know it. And that's why I am in this race, to fight for the people.
Hello and welcome to this Diwali special MF Corner. I'm Sonal Bhutra in the Mumbai studio. We kickstart a new Samvat and may this be prosperous for all our viewers and the investor community. The last 1 year has been very interesting for the mutual fund industry. We have seen record high SIPs, big inflows into equity funds. At the same time, a lot of focus on small and mid caps as well. But now we are at a juncture where there are some geopolitical issues, earnings risks. So how does one start their mutual fund investments now? We have industry veterans and experts joining in now. Mihir Vora, Chief Investment Officer at Trust Mutual Fund, and Mr. DP Singh, Deputy Managing Director and Joint CEO of SBI Mutual Fund, joining us now. Gentlemen, thank you so much for joining in today, and happy Diwali to both of you and everyone at your company and the AMC as well. So, that's the big question now. Mihir, let me start with you. Thank you for joining us in the studio. Every time it's a question, how do I start my mutual fund investment? So what do you think at this juncture, if someone's starting and taking that leap in fresh Samvat, should be their strategy when they start mutual fund investment? Should it be pure equity funds, a mix of a lot of things? There's so many options available now.
Absolutely. So first of all, thanks for having me, and wish you and your viewers a very happy Diwali and a prosperous new Samvat. See, the thing about investing, whether it's mutual funds or directly, is that first of all, first principle, earlier the better. Yeah. The younger you are, the more flexibility you have, the more risk you can take and more wealth you can create. So I think it's essential that first of all you fix what your objective is, depending on your socio-economic background, your age, your income profile, your targeted lifestyle aspirations, whether you want to buy a house, kids' education, marriage, all that stuff. So define your investment objectives, so whether it's wealth creation, income generation or capital preservation, right? So once you're clear about the objectives, then you can go about choosing the asset class. So for a thumb rule is basically for wealth creation, you go for equities. For income, and as you go older, you switch more to fixed income, right? But within equities, if you're really young, then you can take more risks. So probably you want to start with a flexi cap or a mid cap or small cap fund, because that really gives you that long runway of growth. But as you grow older, probably you want to go for more of multi-cap or large cap equity funds. And then as you go even further and then you need your retirement income, you switch more to fixed income. So I think ballpark, it's a function of, a lot of variables. First and foremost, start young. And second is know yourself.
That's the two most important things that one investor should keep in mind. Mr. Singh, thank you for joining in. We're speaking after a long time, so I'm glad it is on an auspicious day. Your take, a lot of interest in markets, of course, we keep talking about that, but starting in the new Samvat, how do you think a new investor should go about their mutual fund investments?
A new investor, definitely, first of all, let me thank you for having me especially on this auspicious day, and happy Diwali to all. And now coming back to your question on the first investor, I absolutely agree with Mihir, whatever he said, and at the same time, the investor has to start his journey with asset allocation keeping in mind and goal keeping in mind. See, with the goal, we know even though some correction has happened, but still the valuations are stretched. And at this point of time, when we know that on the one side there are green shoots, our economy is one of the best performing economies in the globe. And though the valuations are a little stretched, but there's a demand supply mismatch also, and our markets are likely to do well. May not be that much kind of firecrackers as being talked about during the last year, but just it will give good double-digit return. So asset allocation, where you get money, put your money in equities and fixed income securities as well as precious assets. I think at this point of time, starting the journey through multi-asset allocation fund is the best way to move forward.
Okay, so multi-asset allocation fund, the way you can put your eggs in different baskets, that's the way to start. Mir, let me come to you, because right now we're also talking about that big geopolitical issue, the valuation stretch that we've been seeing. What are you making of the markets right now? And we are halfway through the earnings for Q2 as well. How did you analyze them?
Sure. So first of all, the geopolitical global situation is one of the most complex that one has seen in a long time, right? And it's all over the place, frankly speaking. Good thing is that India is a shining star or an island of growth in a world of uncertainty. So the tag that has been given to India is the fastest growing large economy in the world. That tag is here to stay. That's not going to change in a long time. But if you look at the big components of the global macro, the US is amazingly strong in terms of growth. The growth numbers in the US have really surprised on the upside, and GDP estimates for the US have been upgraded, but it has come with inflation, right? So we are seeing a situation where the US is growing in spite of interest rates having risen. That's a situation which we have not seen really before. And that's purely because of the fiscal pump priming that they are doing. They have just let the fiscal deficit go all over the place, but that's the way things are. They are growing, and a lot of money is going back to the US because of that. So that's one big, animal which is driving global growth, helping India. China, the other big giant, is struggling. And that's never happened where US is doing well and China is struggling. So a very unique situation. China is trying desperately to pump prime growth as well as to pump prime the markets with limited success, I would say, which means that commodity prices probably will stay cooler, which is again good for India. Europe continues to struggle. It's always been a low growth rate, and I don't see any light at the end of the tunnel for Europe. So against this backdrop, I would say that it's India, US, and the rest of the world. The Japanese yen will keep giving you sleepless nights from time to time. It's already back to 155, so you might see some kind of a knee jerk there. But I think overall situation seems to be fine. Second is on the earnings. The headline numbers, when we talk about, frankly, all news channels talk about, is the Nifty earnings, right? And that's where the problem is. Because Nifty now is actually dominated a lot by financials, by global commodities, and by IT, which is again a global sector, right? So a disproportionate amount of the Nifty earnings are basically commodities driven and IT driven. And those, as we look at the global backdrop, which we just talked about, are not doing that great. So we have seen some downgrades in the Nifty earnings estimate for the next couple of years, but that's a lot to do with cement, metals, oil and gas, energies, and some of the banks, but I would not say most of the banks. So I think if you look at the broader market, the mid-cap earnings, the small-cap earnings, they're not doing so bad. So I think it's time we started looking at the broader market also, rather than just focusing on the Nifty earnings.
Okay. We focused on the broader markets also a lot last year when we saw those record high flows in the small caps, mid caps. Then there was a worries, there a lot of fraud there. And now we're talking about large caps in that in the same segment. So interesting times, definitely. Mr. Singh, let me come to you. Your take on how earnings are looking like right now. We are halfway through Q2. And generally on the markets, you think the pullback that we are seeing, this is something that could continue?
No, I absolutely again agree with me. The larger mid caps are doing pretty well, very, very well. And though there is still some froth in the small cap, because small cap companies, the valuations are far more than the fair valuations. But larger mid caps are doing pretty well. And too much concentration and too much exuberance to be shown on the Nifty definitely is an issue. The earnings have been disappointing temporarily because there have been 3-4 sectors which have not been doing that well, like energy, cement, or auto sectors, have not given that kind of returns which was expected. But if you look at, though there are companies which are flattish, but there are good companies which are there, and they're giving good kind of what you call returns. It's a bottom-up strategy, and how quickly you can churn the portfolio, rebalance the portfolio, and the recent correction has definitely given that chance to the fund managers to do that. So that's something which is important. We have to pick up the gems from this thing. It's a difficult and hard work for all the portfolio managers, but that's what optimism also remains. That in the times to come, some of the sectors will definitely give very good returns.
Investors are trusting you on that hard work and the extreme amount of opportunities that you all are looking at in the markets as well. Coming back to you, Mr. Singh, one of the themes that we saw in the mutual fund industry in the last couple of months is thematic funds. They're still in vogue. Sectoral funds, they are more than 14% of total equity AUM. First, I wanted to understand why AMC is showing so much interest here. And second, what is your advice to the investors in this case? Should they go all out when they see thematic funds or sectoral funds in this case?
First, I'll take your second question first. I mean, whether the people should go all out, the answer is absolutely no. You cannot have more than 15-20% of your total portfolio into thematic funds. But the themes are also becoming quite big. When we look at a particular theme, and then you have to look at the quality of theme, the universe of the theme, how big the market cap of that particular theme is, and how many are the companies in that universe. Those are all those are the things. As Mihir also said, that the IT and BFSI are actually coloring the whole this profitability of the Nifty 50. But these are the big things. So BFSI, I mean, banking and financial services is a theme. Then IT is a theme. Technology is a theme. And beyond that also, I mean, if you look at the themes which are bigger, like energy opportunities, a big thing. Infrastructure is another big theme, and these the themes like infrastructure are multi-sectoral. This is not dependent upon the sector or one sector only. So these things can really do well, and with the kind of the reforms the market is giving now, the market is supporting some of the sectors like infrastructure is the end thing. But naturally, it's likely that a lot of capex will come there, and these kind of things will do well. But yes, these will remain. And the another reason, practical reason, is that then SEBI is categorized fund large cap, mid cap, small cap, and most of the manufacturers have already completed the bouquet. Now, if they want to play on any particular thing, then it is thematic only. And thematic one should not be seen completely negatively, because whenever you come out with an NFO, you really get so many new investors in the market because of the focused market push, marketing pitch, which is given for during these NFOs. And overall, I mean, nothing negative about thematic funds, but you have to be choosy. You need to, when the investors need to avoid where the themes are too small. In that context, I will not mind naming defense as a theme. It looks very good, but defense universe is very low, very limited companies in the listed space. So the overall capacity of that sector itself is very low. So you have to be choosy. You have to depend upon the financial advice of the financial advisor in a big way, because I presume, and that's a fact also, that financial advisors can understand the thing much better than an individual himself.
I think that is something also that scared the markets, right? As you said, defense is a smaller basket. So after a while, where do you deploy that money that you're raising? And that's the exact same question to you, Mir. Yesterday, we had a SEBI notice on NFOs. They said AMC should deploy that money in 30 days. Do you think these are signs generally which says that one should be more careful with thematic funds, with NFOs which are coming up? What's your take on the entire thing?
See, the point is, one needs to understand what thematic funds are all about. See, in principle, when you are putting money into a large cap fund or a diversified fund or a flexi cap fund or a multi cap fund, what you are doing is, as an investor, you are letting the fund manager choose the most optimum portfolio, whether it's a sector mix or a thematic mix or a stock mix or asset mix for that matter. So there the responsibility or the call is that of the fund manager.
Correct.
Once you choose to put extra money into a particular theme yourself, then you are the deciding person. So the responsibility of taking less risk or more risk when you put money in a thematic fund lies squarely with the investor himself or herself, So that's the in principle, which logically means that as a thematic fund investor or a sector fund investor, you have to be a little more informed about that particular theme or sector. You need to do some homework and understand the risks associated with that sector. That's why I think Mr. Singh mentioned there should never be a disproportionate amount of your overall portfolio, because obviously you are not, as a retail investor, your full-time job is not to analyze stocks and sectors. But if you really feel strongly about it, put 10%, 20% into such funds.
Okay, so that makes sense. So do your own research as well, because that's a very niche segment that you'll be investing in as well. It's a very interesting chat, but we have to get into a quick commercial break. On the other side, we'll continue our discussion with our guests all about investing in the new Samvat. Stay tuned for that.
I always have. On day one, if elected, Donald Trump would walk into that office with an enemies list. When elected, I will walk in with a to-do list. Full of priorities of what I will get done for the American people. And I will work with everyone, Democrats, Republicans, and independents, to help Americans who are working hard and still struggling to get ahead. Unlike Donald Trump, I don't believe people who disagree with me are the enemy. He wants to put them in jail. I'll give them a seat at the table. And in 7 days, we have the power. Each of you has the power to turn the page and start writing the next chapter in the most extraordinary story ever told.
Welcome back. You're still tuned into MF Corner. We still have with us Mihir Vora, the Chief Investment Officer at Trust Mutual Fund, and Mr. DP Singh, the Deputy and Joint CEO at SBI Mutual Fund. Mr. Singh, let me come to you first up, because, while we've been talking about this pullback in the markets in large caps, a lot happening on the earnings front, small caps and mid caps, they were in vogue last year. Do you think it is still the time to look at this space? Are you sanguine here?
No, I think larger mid caps and selective small caps, very, very selective small caps, still there is a scope where they can get money. And then we are getting a lot of IPOs also in the market. And whenever there's a good IPO or there's some good block available in the market, we definitely try to create value from there on and for the investors. But today it's not a totally dry kind of market. It's not that there's nothing which we can invest in. There are investments, ideas still available. But again, a small cap, very, very small number of stocks are there, which we feel still has some value. But just there's an issue on the supply side.
Okay, we take that point, but you have a different opinion here on small caps and mid caps.
Absolutely. For me, small caps and mid caps are a stock picker's paradise. And the market composition has changed dramatically in the last many years. The top 100 stocks used to be 80% of the market cap. Now they are close to 60%, which means 40% of the market cap is already mid and small caps. So if you want exposure to the wider Indian economy, you have no choice but to go for mid and small caps. And secondly, is a lot of the themes which are high growth in nature, and we discussed the large cap index, how they are very skewed towards financials, IT, commodities, and global. The mid cap and small cap indices are far more domestic looking. So if you want exposure to certain sector like say hotels or cap goods or pharmaceuticals or CDMO, you have no choice but to be in the small and mid caps. So I think broadly speaking, I would say that the ratio of high growth stocks in the large cap to small cap would probably be 1:8 or 1:10. So you got 10 times the number of stocks, 8 times the number of stocks to choose from. So it's really a stock picker's paradise. And we've also seen that even in a flat year, there are stocks which deliver absolute returns in a big way. And when you have almost 800 stocks to choose from, and you want to build a portfolio of 40-50 stocks, I think it's a good exercise.
And you're comfortable with the valuations that they're trading at? Absolutely,
because again, the large cap index earnings growth is expected to be now about 10 to 12% or 8 to 12% thereabouts. Whereas the small cap, if consensus earnings, if you see, is closer to 18% for the next couple of years. So the valuations, the PE ratios is similar for large caps and small caps now. But the growth, earnings growth for small caps is almost double. So adjusted for growth, I think small caps still make a lot of sense. But I would not compromise on quality. I would be very picky and choosy about the background of the promoter. So all those qualitative filters anyway have to be there. You have to be extra careful about liquidity, quality, promoter background, etc. But that does not mean that you can't find 40 stocks.
No, of course. And that is where the expert opinion or advice comes in for help, right? You need to be very careful when it comes to stock picking or any small cap fund picking in the mutual fund space as well. Mr. Singh, in this case, where are you seeing margin of safety in markets right now?
That's what I'm saying. Actually, it depends upon how much volume you are going to put in that particular stock or that particular sector. See, it depends on how big is the market. The margin of safety is, as I am saying since beginning, that we are looking at margin of safety and the larger mid caps, which is very visible. But as means that there's always some good stocks available. If not available today, will be available tomorrow because of some corrections or something or some new supply coming in. But one good thing about Indian market is now supply is coming in a required manner. Earlier there was a dearth of supply, but new supply is also coming in on the mid cap, small cap side. So that's something very important. But for overall, we'll say we'll concentrate more on the hybrid strategies because see positive trends in consumer spending and see ongoing digital transformation which is happening is driving growth in some of the companies, some of the stocks. So we'll definitely pick up from there on. But then when we are having almost $1 billion coming in a fund house every month as a net flows, then naturally you have to struggle to invest that. So that's an issue.
Okay, we get that because now the opportunities, of course, you would look at opportunities, but they're becoming narrower by the day. What would your take here be, Mihir? Any margin of safety segments that you're looking at?
Sure. Again, I'm not a big fan of looking at aggregates. So while, for example, the small cap index is, of course, it's corrected 6-7% from the peak, but it's quite close to the all-time highs per se. But within that, there's a lot of churn. So financials, chemicals, defense stocks, a lot of cap good stocks have corrected by 20, 30, 40% from their 52-week highs. Even banks have not performed for almost 1.5 years. Chemicals have not performed for almost 2 years. But these are companies which still are going to demonstrate earnings growth, even if they don't improve their margins, because they are going to show good volume growth, for example. So there's a lot of dynamism in the market. And given the fact that even at these high levels of the index, we have seen stocks correct, which means that the market is still a rational market. It's not an irrational market. It is rewarding stocks which are demonstrating good earnings growth, and it is punishing stocks which are not, So I won't say it's a bubble, frothy valuations, etc. There is ample scope for stock picking.
Okay, interesting. That was about equity markets. Debt is one side where people are still trying to understand the nitty-gritties of that space. How do you look at the debt space right now?
Debt is also a very interesting space. Just to put things in perspective, say a couple of years ago, if you had asked me what my preference is, I would say, all in equities. But now with equities having, given good returns and, debt also has now started correcting, I would say the balance is tilting a little bit more evenly, so to say. And with, say, the AAA bond trading at about 7.25 or so, if you look at a 1 year perspective, we still expect rates to come down a little bit, though not as sharply as we expected, say, 3 months ago. Yeah. But still, rates will come down. So we can easily make in a bond fund about 8% or so. That's our expectation. Not bad in the overall scheme of things.
Oh yes, considering the kind of moves that we've been seeing, 8% is not bad for any investor right now. Mr. Singh Meer, thank you so much for joining in today and giving us your take. I would have liked to have more conversation, but we are completely out of time on this edition of MF Corner. So thank you for tuning in as well. All right, with that, we'll take your leave on this edition of MF Corner today, but you stay tuned for Closing Bell to take you through the last hour of trade.
Well, cheers to the festive season that's raising the bar literally. India's alcobev makers are toasting to the record sales and new launches, hoping to make this their most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Reddy Khaitan, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Reddy Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
We are getting very good resolution. On the top of it is KSK Mahanadi, where we are expecting recovery of more than 100% recovery of principal amount we are expecting, because the Swiss challenge process is on, and we are the rates that the bids that have come, it is indicating that our recovery is going to be more than 100%. Second case is that of Sinnar plant at Nasik. There also the initial bids have come, and the H1 bid is quite good. And third project is Hiranmaye project. There also the Swiss challenge process has just been completed, and the bids that we have received is quite encouraging.
Hang Seng is higher. It's the third continuous day of gains on the Hang Seng.
Packaging has been different now, so we are looking at now more as a BTG.
Get above the swing low of 24,567.
Goa facility that has received a voluntary action indicated.
The Nifty is absolutely flat. The Bank Nifty is absolutely flat. That's more like it.
Fundamentals of the company are very good, very strong foundation.
We have to face reality. Most high-frequency indicators have slowed very sharply.
The selling pressure continues. The Nifty is down 84 points.
ITPL Capgemini actually declared its results, and the outlook coming in from Capgemini was not too encouraging.
It's a mixed sort of a response that we're getting from consumer durable makers this time.
The advance decline ratio largely helped by the fact that the broader end of the market, and especially if you're looking at the small cap index, that continues to remain in the green.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that has been the day so far. It's been down for most parts. We are, of course, coming to you from the CNBC-TV18 Motilal Oswal studios. This is Closing Bell, last hour of trade coming up. Markets down and out. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon. And I know that a lot of the bulls out there would be missing the color green, so we're trying to do our bit. You can see the studio, you can see some of our clothing and attire. We're trying to throw in the dash here and there. Yeah. But yeah, I think for the markets, it's been a little disappointing because the week started off with some promise, right? We had the 2 positive days. Yeah. But yesterday and today, it's very clear that this sort of uncertainty and this, sell the bounce kind of a mindset is still not completely over and done.
Well, and after a while, the Bears are on top in this series, right? It's been 4 series since they got any taste of good luck. And in fact, this series belongs to them. So they're the ones with the ammunition. And that's why we're seeing that the market is, as we speak, at the low point of the day. But very often on monthly expiry day, things can turn around in the last 60 minutes if either party gets very, very confident. And as we speak, there is aggressive call writing that's taking place. So we'll have to see whether they get stumped on the wrong side. But for the time being, the Bears are on top. And the problem is the Nifty Bank has broken that 51,500 mark. We're 150 points below that mark. So I think we'll have to watch that. 51,500 is the crucial Nifty Bank mark that I'm looking at.
All right. Not forcibly trying to find a silver lining, but, it's largely IT. I mean, if you want to take a look at the pressure, the market is down 160 points and 130 out of that 160 point cut in the Nifty is for IT services stocks. And I think that, now, of course, I mean, you can say, well, if you exclude this, market would be here, market would be there. And that is little meaning. But for what it's worth, market breadth is positive, strongly positive. I mean, about 1650, 1700 stocks are higher for about 1,000 stocks which are lower on my screen. And as you can see, I mean, it's Infi, TCS, HCL Tech, Wipro. It is the IT pack which is doing bulk of the damage. Broader markets are doing actually much better just in terms of what is up and down. So L&T is, of course, pulling for the bulls in a big way. 60 index points single-handedly from that one name. It's just that it doesn't have too much support from many of the other Nifty stocks. For the Nifty Bank, as Nigel said, 51,500 is important. Basically, around 51,500, 51,450. It's a 20-day moving average for the Nifty Bank. Yesterday, we gave back about 1% of the 2% rally we saw earlier 2 days back. And today, we're giving back another 0.9% or so. So we're very close to it, about 100 points under the 20-day. And one can only hope that by close, either you're very close to it or maybe even slightly higher. So let's sort of hope things pick up. Today, by the way, of course, is the last hour, but tomorrow as well, we are trading. Muhurat session, 6 to 7 p.m. markets will be trading. So there will be the opportunity to react. But of course, it's a very limited token kind of session, which usually we see. Surabhi.
Yeah, and the thing is that in the mid-cap market, the cuts are a little deeper than even the Nifty right now. The Nifty, you can still say, and that's a very fair argument that Prashant made, that it's largely IT-led, but the broader market is under pressure. The advanced decline ratio has been weak for pretty much the entire session today. We've got about 1,000 stocks declining, and the advancing stocks are right now about 1,400 or so. So one would want to see that these lines don't cross and they kind of remain where they are. in the best case scenario. Having said that, if you look at the 1% decline on the mid-cap index and talk about sort of some of the names that have come under pressure, some of them are, of course, earnings reactions, IRB, Manappuram Finance. Those would be some examples. There are other names as well. So, for instance, PNB and Info Edge, Memphis is losing about 4.5%. On Voltas, the negative read-through on earnings is still continuing. Second day running, that stock's also down quite a bit. L&T Tech Services. So even some of the mid-cap tech names, IT names, they are facing the heat for the time being. So, let's see if there can be some last half an hour expiry-related magic. I think the bulls will take that with both hands.
Well, that's right. And, the recent listing of Vare Energy, that stock, in fact, many expected actually be closer to 3,000 rupees on the listing day itself. But it didn't do that. But as we speak, volumes are very high, and that stock actually has moved to the high point of the day. So good up move is what we are seeing. So there are pockets where things are looking quite good. And just one more point, ICICI Bank, there was a very large trade. If I'm not mistaken, there's around 49 to 50 lakh shares that have got traded in the last 5 to around 6 minutes odd. So ICICI Bank, I'll be interested to see what were the participants out there. But, there's a very large, I think 50 lakh large trade on ICICI Bank. That's large in size. We'll try to find out more on that. Mitesh Thakkar is back with us, though. Mitesh, final 60 minutes before you get into, party mode, so to call it. How would you trade the index? Do you think this final 60 minutes will belong to the bears that have been on top in this series and even today?
So, Nigel, I think very difficult to guess purely because of two reasons. One, I think this 24, 180, 170 is an area where the trend line comes in and, we're right there. I don't know how it will pan out. The overall structure, which was looking oversold in the last 3-4 days, we got some intraday bounce back, so we're not exactly very oversold right now. So there is a risk of breakdown, and also given the fact that the structure is on the medium-term charts is negative, I think puts just a breakdown. So in that sense, I'll be trading with a lot of caution. We are avoiding long position despite the fact that we are near the support area, because let's see some kind of sign of reversal, before you want to venture into long positions. So that's a precondition for me to, look at long positions right now. Shorting, I'm not really sure, because again, some stocks are reversing oversold levels, some stocks are not, and the Bank Nifty, which has been good, has lost in the last 2 sessions. So the way I think one can take positions is that in case you break 24,150, try and do some bear spreads on the Nifty, not sure of an aggressive short right now. So that's the way we'll approach it.
Okay, what about stocks, Mitesh?
Yeah, so I have a buy on Suven Pharma. I think that's a stock making a fresh swing high, and the pattern is quite positive over here. So keep a stop at about 1288 and look for a target of roughly around 1350 to begin with, though I suspect eventually 1375-80 zone is what I'm looking at. And a sell on Asian Paints with a stop at about 2956 and a target of around 2850.
Okay, all right. Got that, Mitesh. Thanks for the calls. We'll come back to you in just a bit. Nigel, not 60 minutes, final 120 minutes for us before
tomorrow.
the party can start. Yeah. Not counting in, we have, by the way, a special edition of Editors Roundtable coming up as well. It's a big one. With a lot of special guests.
60.
That's what I'm saying. It's 60 plus 60. So it's 120 today, and then tomorrow we will do separate accounting for tomorrow. That's right. But anyway, I mean, it is fairly festive all around. So, the good cheer continues. Deven Choksi is with us. So let's take the conversation to him. Deven, happy Diwali to you. Thank you for joining in. May this be a very prosperous and happy year for you, your team in the office, everybody at home. So let's start with a pick, actually. Why talk about what's down today? Let's talk about, ideas, because I think the market after a long time has taken a pause. The whole complaint on valuations perhaps is sort of ebbing a little bit. Give us the one or two stocks if you were to buy for the next somewhat, which ones would they be?
Hi, Surbhi. Happy Diwali to you as well and to all the viewers. Well, I think the opportunities are going to come with the fall in the prices in the market, and that's what I think we have been asking for. So I think we have been liking few companies, and one among them is Tata Technologies. The company got listed last year. I think whatever it did in this 1 year period, it is now available at a corrected price post-listing. And that's where I think we believe that I think there is an opportunity out here. Both the verticals, the automobile vertical as well as the aviation vertical, both of them are showing a robust signs of growth in the business. And that's where I think we believe that I think this company could possibly sustain the growth, which basically it has initiated. Larger amount of revenue mix, I think, is coming from auto today, which is probably getting balanced with the higher amount of contribution coming in from the aviation over next 2 years' time. So we remain, I think, distinctly positive about this particular company with a complete end-to-end solutions on ER&D side, engineering R&D side, that this company is providing for their customers, including the JV that they have struck with the BMW, is something which is very interesting proposition that this company is going up. So it's again, I think, an investment idea, nothing to do with, I think, near term. Maybe I think one needs to hold the stock in the portfolio for at least 3 years to get the best benefit out of it.
All right, but you know what we'll do, Deven, is come back to you. But let me just quickly talk about the IT space, right? I referred to it. 4 stocks responsible for about 120, 130 odd point cut on the Nifty. The index has been recovering, but broadly 3% down from the morning, and that's a large one. So what's going on here? And is it sort of local? Is it global? Well, let me give you a hint. It's global. Vivek, of course, has been tracking this since the morning. Vivek, tell us.
Well, that's right. No, yesterday, in the last hour of the trading session, you actually saw a peer of our IT companies, Capgemini, that went ahead and declared its results. Now, remember, they follow a calendar year accounting standard. And what they've actually done is they've gone ahead and downgraded the revenue estimate for the year ending December. So what is it that they are expecting now? They are expecting a degrowth of 2 to 2.4% in constant currency. Remember, even earlier they had maintained that they would see a degrowth, but the degrowth was expected to be in the range of 0.5 to 1.5. So from a degrowth of 0.5 to 1.5, now they're expecting a deeper cut from 2 to 2.4%. Not only that, even the margin band that the company was anticipating, earlier it was 13.3 to 13.6. Now they've trimmed it down, so the upper end of the band has been cut lower. They now expect it to be in the range of 13.3 to 13.4%. In terms of commentary, they've actually said that they're continuing to see quite a lot of stress as far as the manufacturing vertical is concerned. And on the back of that, a whole host of analysts have taken note of this. And today the street have taken note of this. And no wonder then you're seeing quite a lot of deep cuts across the entire IT pack today.
Okay, all right. Thanks for putting that in perspective. Vivek, that's quite helpful. Let's take this back to Deven. Deven, so clearly it is this Gemini worry that spooked the entire street and how that company is interpreting the demand environment. But what is your sense? There's a lot going for IT, and many of the companies were talking about maybe some additional green shoots in the North American markets in the results season that just concluded. Would you buy this dip on IT or would you stay away?
So should be, I think, the larger part of the confidence stays with the mid-tier IT companies who are having a display in their respective fields. The engineering R&D part, I think, is an important one, I think, which many of these companies are serving to their customers, dedicated customers. There, they have got a higher amount of visibility of business, and at the same time, I think, the growth as well. So in my viewpoint, I think this is an important area that one can possibly look at. The frontline IT companies are not bad, but I think their growth prospects are remaining a little muted at this point of time vis-a-vis the mid-tier companies. And that's where I believe that I think one can argue for buying them to the portfolio. Current valuations may be slightly adequately priced given the market condition, but I would think that I think any correction in the price, in the journey next, I think one could possibly look around for buying some quality names in the portfolio.
Okay, all right. Deven, I wanted your view on Mahindra and Mahindra. We have some source-based information that's up for you on the screen. Mahindra's BEV is likely to cost under 35 lakh. I think they're going to be launching a couple of new EVs as well. So that's going to be important. And I think a couple of more details is what we have. They'll be launching its first ground-up EV on November 26th. And I saw that correctly. They're also going to make a couple of announcements on battery charging infrastructure. So, so that's the important piece of news that's coming. The stock is clearly reacting positively to that piece of news. We'll try to get in Parikshit and give us more details on that. But Deven, what do you make of the stock? Mahindra and Mahindra, in the last 18 months, it's done very, very well. Some channel checks suggest that tractor sales as well are picking up, besides this, SUV EV part of the business that's been firing. Your view at around 2,700 rupees?
Yes, Nigel. I think this is one company within the auto space which is possibly beating entire trend out here. They have got the pending order book to execute. They have collected money in advance. So to a greater extent, I think it's a very different proposition compared to many other OEMs in the PV segment. The kind of vehicle that they have been launching at a price point has certainly, I think, given this company relatively, I think, much fresher look by the investors, because I think the business demand itself, I think they're generating through this new launch of vehicle is quite impressive. Not too sure about the electric vehicles at this point of time, but do believe that I think there is a good amount of prospects going forward for companies which are offering the right price product into the market. And that's where I think in the right kind of appeal that product should be making. That is what M&M is probably asking for, and I think they're getting it. So in my viewpoint, I think the business-wise, they're quite good. And I think glad that you mentioned the point about the tractor business. The farm equipment business definitely, I think, is picking up. That is what we gather. And I believe that the rural demand is also going to add to it in the coming quarters. So certainly, I think the stock looks interesting. Though must say that I think most of it, I think, in price today. Maybe I think one will have to hold it for a little longer period of time to get the right kind of appreciation of around 15 to 20%. But otherwise, I think most of it is in price, all the prospects that we're talking about.
Okay, all right. That's a quick word coming through. Let's move on and talk about one of the biggest Nifty winners of the day, and that stock has been Cipla. Let's pull it up on the screen as well. It's been up about 6-7% right from the start of the morning. And that's because some good news came in. Yeah, look at that, 9.5% right now. That's because some good news came in on their Goa plant from the US FDA. Vinny is here with all the details. Vinny, tell us more.
Yes, so, surely a sharp up move that we're seeing coming in for Cipla today. At one point of time, it was up as much as 10%. This Goa facility has been under issues and challenges, facing challenges since 2020. So once this clearance comes in, that is a VAI that they received, voluntary action indicated, it means now they can make those launches that were in the pipeline from this facility, and especially a drug that is used for cancer treatment, that is generics, Abraxane, that has a market size of around $700 million. And it will be a big drug. Cipla could maybe look to be making almost $70 to $90 million from this drug on an annual basis. That is what analysts are highlighting. And there is less competition right now from this drug right now. When you look at it, Sandoz is the only player that has gotten an approval to make this drug in October 2024. Analysts also say that they expect a 4 to 5% EPS upgrade coming in for FY26. And the respiratory pipeline which Cipla has, that will help support the US sales growth for the company beyond FY26. The numbers that were reported in Q2, there was a bit of a miss that came in on the US sales. Now, this is something that will start supporting the growth. So, big positive for Cipla.
Okay, all right. Winnie, thank you very much for that. Devin, any thoughts on Cipla?
Yeah, Prashant, I believe that the company definitely, I think, is well positioned. If I've seen the result yesterday, I believe that the numbers, particularly coming from the European region, emerging market region and African region, they are in good double digits, except I think US and India where the numbers are relatively muted. But I believe that I think that given the new drug launches that they are having, and particularly in the area of specialty generics, I believe that both the demand as well as the margin part is definitely playing out well for this company. And the strategy that they've adopted in different markets of the world of offering, I think, the one unit, I think, for all the products, which is also acting well for this company for more than 15,000 products, I think, that they have. All these particular products, I think, offered through, I think, one channel is also working well for the growth purpose. So certainly, I think it's a good news. Maybe, I think, further things will have to be seen in the area of inorganic growth activities that they're talking about. But at this point of time, I think the results suggest that I think the company is probably showing better signs in coming quarters, along with the new product launch that they're talking about.
Okay. All right, Devin, stay on. Let's just address that news on M&M. Their first EV launch. I mean, M&M calls it Born Electric. That's the way they address their entire portfolio. And this has been the next big talking point and perhaps the next big trigger for the stock as well. We have Parikshit joining in with some perspective. I think, Parikshit, both customers and the market have been very eagerly awaiting to see what M&M has to offer when it comes to this Born Electric portfolio. Tell us more about it, and what are the company's aspirations on the EV side?
Well, the Mahindra Group was lacking a strong electric portfolio for the last few years, wasn't it? Now we're told the company is all set to launch not one, but 2 new electric SUVs which have been developed ground up, and these will be launched on the 26th of November. And what sources tell us that the company is likely to use these cars to make their foray into the luxury electric vehicle segment. Their aspiration is, the Mahindra Group's aspiration is to take the fight to the likes of Mercedes-Benz, the BMW and the Audis in India. Now, the name of these SUVs will be unveiled next week, is what we are told. One of them will be a pure luxury SUV. One of them will be more of an off-roader. They will have advanced Qualcomm chips. That's what sources tell us. And they'll have several futuristic connected car features, ADAS, and safety features as well. As far as the pricing is concerned, they'd like to price it somewhere close to their current SUV portfolio. So we expect the pricing to be either around 35 lakhs or under 35 lakhs. So what's going to be different as to how these cars will be marketed by the brand? Well, we believe that a team of at least 500 to 600 specialized people have been hired by the Mahindra team. They'll be deployed across dealerships in the country, and their job will be to exclusively promote and explain the features of these cars to customers. Initially, the customers will be called by invitation only. Sales will begin early next year. There is a plan to begin exports as well. A charging infrastructure plan will also be launched by the Mahindra Group. So lots in the offing. So we'll have to stay tuned for the 26th of November. In fact, the month of November will have some other EV launches from some of the big car makers. So we'll have to wait and watch for a lot of announcements then.
Yeah, exciting times ahead, and I think this is going to be a big one to watch from M&M. Parikshit, given that you said that they're going to try and compete with the best names in luxury here, I mean, including the likes of Mercedes, and you mentioned about 30 to 35 lakhs. I mean, what would the blended average, pricing of the M&M portfolio be now? Because again, we're just thinking from a margin perspective, as this scales up, if they hit the right notes with these new products, then the overall margin for the company will start increasing, right, with these EVs as well. So what would the average selling price be now across the portfolio? And these ones, like you're saying, should be coming in at around 30, 35 lakhs.
You know, the average selling price of the Mahindra portfolio would be around 20 lakhs is what I would say. For example, the top end SUVs, the luxury SUVs from the Mahindra Group right now in the XUV and the Scorpio segment will cost you around 30 lakhs or a little more once you add all the regulatory costs together. The lower end variants would cost somewhere between 16 to 20 lakhs. So I would say the average selling price of the Mahindra portfolio is around 15 to 20 at this juncture. Some of the SUVs, the mid-range SUVs, have seen a drastic price cut also. That is also something we'll have to keep in mind. But considering that there are a lot of electric offerings in the market, and Mahindra has to target exports as well. You have the likes of Hyundai Ioniq. Luxury car makers are launching a lot of EV options in India, and the government is also trying to sweeten the deal for EV makers like Tesla in the future. That's why the Mahindra Group wants to price their new EV portfolio very, very competitively.
It's an exciting market, and they have established absolute dominance in the SUV market very early on. Let's see what they come up with when it comes to the EV side. Parikshit, thank you very much for joining in with that perspective. Well, Deven will thank you as well on that note. It's been great to have you with us throughout this year for all of the wealth ideas, and we look forward to more in the new Samvat as well. Have a very happy Diwali.
Happy Diwali to you as well.
Thank you so much. Well, we need to take a very quick break, but here's a quick reminder. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikant Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders as well. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. So you don't want to miss this opportunity.
today with a message of hope for all Americans. With your vote in this election, I will end inflation. I will stop the invasion of criminals coming into our country. And I will bring back the American dream. We need the American dream to come back home. This will be America's new golden age. It's going to happen quickly, too, very quickly. Every problem facing us can be solved, but now the fate of our nation is in your hands. Next Tuesday, you have to stand up and you have to tell Kamala Harris that you've done a terrible job, that crooked Joe Biden has done a terrible job. You've destroyed our country. We're not going to take it anymore. Kamala, you're fired. Get out, get out. You're fired. And I'm announcing a new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's about time that they were recognized, right? They add so much to our country and are never spoken of, ever, 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 but they're going to be spoken of now. Thank you all very much. The United States is now
Okay, welcome back. We got the market, which is down 140, so not very much change since 2:30. We're right there, 24,200 is where we are standing. We are at right now. Rohan Mehta is with us. He's CEO and Portfolio Manager at Turtle Wealth. Rohan, good afternoon. Thank you for joining us, and season's greetings to you. Happy Diwali. Prashant this side. I think first time that we're speaking on the air. Tell us a little bit about Turtle Wealth and what you do, and because I have the fact sheet, but would love to listen from you. Because what I understand is you look at investing in turnaround businesses, but with a quant mindset. So just the process, if you can explain. Go on.
Yeah, hi Prashant. All the viewers, happy Diwali and New Year, and thank you for having me in the show. So 15 years, 17 years, we have made some processes where we have seen a great research that how we can make a long-term wealth and what are the credentials of picking up the stocks which can create an exceptional wealth creation point. And that's where our 16 to 17 years, we have invested in a lot into the quant making process, that how to pick up the companies. And in that, we have found that the best wealth creation happens into turnaround businesses, but turnaround businesses picked up not by emotion or by just, intuition, but rather than purely on the data making process. And that's where we have created a specific quant into 3 areas of businesses, where is the selection, allocation, and reviewing of a stock. Because generally we talk a lot on allocation, or rather selection of a stock, but very less on allocation of a stock and nearly about nothing on how to review a stock once it is allocated. So that's where our, the fund works onto the process. We feel much ahead of a time, but I think so that's where the world is going onto quant-driven process rather than emotional-driven process.
Sure. If you can be a little more specific, say for example, the reason I'm asking is if there's a turnaround stock, usually you'd want, which means you'd buy in early, right? Something is down 30-40%. And things are changing. I mean, that is, or if you by turnaround, you mean something else. But that's typically what our viewers would understand with turnaround. But when you apply quant to it, which is, mathematical things like, outperformance through a certain index. I mean, those things won't show because, it's at a trough. The stock's not running away. It's not, no one believes it. So how does the two square? Go on.
Yeah. So turnaround doesn't mean, buying up a stock at 20-30% downside, rather than it's the different way around what we have picked up. To buy companies which has not done anything great from last decade, but at the same time the stock PAT has been rising from last 15 years. And we pick up the stocks only once the stock crosses all-time high. And that's where the whole quant changes the game. And if you have seen in last 30 years, The best wealth creation stock is when the company has not performed or a sector has not performed for a longer period of time. But at the same time, the revenues have come up higher, but the pricing have not been discounted. And there can be a re-rating in that sector. And that's where I can give you an example in 2022, could be an auto or a PSU in 2021, or maybe in 16 chemical story. These are the sectors where 15, 20 years, nothing had happened. And the first indication of a stock to do turnaround is when it does an all-time high after a longer period of time. And second indication is that when the company is making a consistent all-time high profits. And the third indication is that when the company does an outperformance to its index, because that's where we buy stocks, right? We want an outperformance to index. We don't want an underperformance to index. So there are a lot of credentials to this for sure. But if you look forward for what are the top 3 credentials, defining all the 500 credentials, what we have done into a research, we have found that these are the 3 key credentials to find out a turnaround story. I can name a lot of companies into the point, but rather I can put it on the sector. And the sector comes down a very interesting sector that would be auto in last 2 to 3 years.
Hi, Rohan. Good afternoon. Good to see you in. Nigel on this side. Good to have you on the show. Very simple one. From this Diwali to next one. What's the big bet you're taking? You can mention 1, 2, or 3 stocks. Our viewers will love it.
Yeah, first of all, being a quant, we don't take bets, we see the data. So I'll tell you something which is very different onto the show is we are taking a very big bet on silver. ETFs are not on the MCX side on the silver, but look at where the wealth has been, the value has been there into silver, and specifically in the quant side also, silver looks very well. Where our portfolio, we have 10% of the silver ETF. Also in the same side, we have created something, we are looking forward for companies which are pure into the consumer durable side, companies like Gillette. A company in the agro-organic side, AMI Organics looks very interesting. So if you're talking for 3 things, I think so very different. It's silver, Gillette and AMI Organics makes a lot of wealth into, and looks forward for a good 1-year wealth creation story.
Lovely. On silver, let's take that point first out of the way. A lot of people are looking at gold, and gold has, seen a good run in the last 1 year or so. But now people are getting incrementally more bullish on silver. They're saying that ratio between silver as well as gold, well, that will narrow. So that means silver will catch up and outperform. Any targets you have on silver?
Generally, we as a quant point, we don't have targets, but seeing at the value, we feel that in next 3 years, we should at least expect more than double of the silver. I would be not surprised if we can do it in next month also. But yeah, being fair into it, 3 years down the line, we can expect double of the silver. And also, we are taking a very best hedge to equities also, right? So if you see this month, Nifty 500 is somewhere around 7% down, and silver is somewhere around 8.5% plus. And that's where the hedging comes into the portfolio. Gold has done exceptionally well. There's no doubt about it. But silver would create for sure a larger value than gold in next 2 to 3 years.
The call on Gillette is going to be very interesting, and I'll track that closely, Rohan, because I remember Gillette in 2019, the stock was 8,000 rupees. And for the next 5 years, it did nothing. In fact, it eroded wealth. Yes. And in the recent past, I think the last 6 months or so, Gillette has seen a big rally. But if you look at it from that 8,000 rupee mark that it's on 2019, well, it's up only around 20%. Yeah, Rohan, you want to comment?
Yeah, so Gillette is a very interesting business. See, we all shave, and that's a man grooming brand. We talked with management with Gillette, and then we found the turnaround story, and they completely missed the man grooming industry, right? And that was been taken all by the startups. And look at what the back of the brands they have, and they are coming very aggressively into the man grooming industry with the toothbrushes and the shavings and the trimmers and the other man grooming industry. It looks superb, and see the numbers. 6 years, nothing has happened. At the same time, the profitability has gone at least 3x into the stock. And I don't have to talk more about the company. We are having the best management and best brand. And what a monopoly! You don't keep beard, so I can tell you that I can tell you without any doubt, the only the shaver you will have or the blade you will have is Gillette. There's no other alternative. It's Tina. There is no other alternative.
I mean,
Prashant's thinking about Tina, I think.
I said this earlier also, long back, right? Warren Buffett, 20, 30 years back, he was asked why he invested in Gillette. It was one of his talks. He said, I'm paraphrasing, I don't exactly remember. He said, men have one face, women have two legs. so there you go. That's, But anyway, it's great speaking with you. Appreciate you joining us and, wonderful chat. Have a good Diwali and season's greetings to you, as always. Thank you.
Thanks.
Well, I think we're going to take a quick commercial break here. We're going to come back in just a bit from now. We'll look at markets. 30 minutes to go, but at least at an index level, there isn't very much by way of change. So we're down about 130, 140 points right there. Stay with us.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
Country, but it will soon be an occupied country no longer. Not going to be happening. Not going to be happening. November 5th, 2024, 9 days from now, will be Liberation Day in America. It's going to be Liberation Day. On day one, I will launch the largest deportation program in American history to get the criminals out.
Welcome back. Well, HCL Tech is the one actually that slipped a little bit more. That's moved to the low point of the day. And Sun Pharma in the last few minutes, it's lost its way a little bit. So Tech was as still under pressure. But I think even Sun Pharma has slipped a wee bit just in the last minute. Trent as well should come up for you on the screen. Actually, that was trading in the green. That's moved into the red. It's down close to under 1.5%. But it's a good time to get in Nimesh to help us out with what he's picking up in D-Street Chatter. Nimesh, take it away.
And Nigel, a bit of expiry-led pressure as well. Again, there is selling, is what I understand. There is a market close basket selling as well at LD FI desk and largely in the Nifty name. So clearly, from a flow perspective, it's a down day, and there is aggressive selling, is what I understand. The sector which are dragging the markets down is clearly IT on the back of Accenture, earnings and the guidance, and also to some extent financials are under pressure today. But the sector which has seen some bit of buying for the last couple of days is auto names, and for the second day running there is aggressive buying. And I understand Street is anticipating a strong festive demand sales, so that's something to track as far as autos are concerned. Technically, I think 24,200 is a level to watch on the downside. But again, the November series is going to be quite interesting and quite large as well. The big events to watch out for: the US election, the Fed outcome. We have the state election outcome as well, which markets will react to, and of course the MSCI rebalancing on the 14th. So, some big events to watch out. But I guess today's fall is dragged by FI selling as well. Of course, it adds to the expiries also. But there is selling in the large cap names from larger institutions today.
Okay, all right. Nimesh, thanks for that feedback. In terms of specific stocks, what's on your list today?
Well, the first name is AkzoNobel. Big move on that name and large volumes as well. It's generally a thinly traded stock, but the volumes on the higher side today. I understand some HNI investors are active buyers. And also, while the parent has already indicated that they're looking at exploring options for their Indian company, I guess the street is sensing something to come very soon, and hence a big move on that name. So that's the first stock. Second stock is Genesis Industries. There was a large block in the morning trade, nearly 4% equity got changed hands. I understand a domestic AIF was a buyer in today's block. So again, disclosures there could be quite interesting. The third is NTPC. Within the PSU basket, while there is selling across board, NTPC stands out on the buy side. So there is aggressive buying from some large FIIs in today's trade in NTPC. And the last is L&T. We've been talking about why fundamentally the stock has been buzzing in trade, but there are very strong buy flows. And additionally, there is a Morgan Stanley tactical call as well that they expect the stock to rally on the upside post the strong quarter two. So that's the reason why L&T is holding on since the morning gains.
Okay. All right, got that.
By the way, Surabhi, let me tell you, Nimesh, usually when you walk up to Nimesh on his desk, he's on
the phone forever.
He's like this, always. Nimesh, how many phone calls today?
Today was not a very hectic day, Prashant, because half of the market participants seems to be on off and they're enjoying their Diwali.
Yeah, so today would be more, I think, festive greetings, right? Yeah. Today there would be more festive greetings and less of khabar. Yes. But otherwise, I completely agree. You have to really wave and get Nimesh's attention, get him on the phone. Thank you so much for that, Nimesh.
Thank you.
See you in a bit. All right, let's quickly move on. We've got, I think, Mitesh back with us for some final calls as we're going to Mitesh. The market is still reeling under pressure, 121 points down on the Nifty. The mid-cap index, however, is looking better now. The cut, which was about 0.8%, almost 1% when we started the show, is now about 0.3%. So that's not too bad. Actually at this point in time. Yeah, that's the mid-cap recovery. It's quite evident at the index level at least.
Mid-cap is recovering. Small cap anyway was up. The small cap index should come up on your screen. I think it was up about 1% or so. And pull up, there you go, 1.25%. Look, pull up the Nifty micro cap index. That yesterday was up 1%. I think it's up 1.5% today as well. And this is what I was talking about in the morning as well. The broader market, 2% now on the Nifty micro. This is the small, really small stuff below the small cap level. And this is actually starting to look a little better. And that is the reason why the market breadth overall, I think, should have also improved. If I can just get this up. Yeah, 1,800 stocks are higher and about 950 stocks. So almost 2:1 in favor of advances right now.
And just one more point, Prashant, with regard to these metal stocks, you have the inflationary data coming out of the US today and the jobs data tomorrow. Sometimes there is a play on metals. And Nalco is a stock that I've been talking about for the last few weeks. Quarter 3 and quarter 4 will be absolutely blockbuster because of the shortage of alumina. And that stock is getting bought on every dip. The the markets have corrected, what, 7% from the peak. The stock is closer to the 52-week high. So sometimes there is this play on the Chinese, on the US data that's going to come in and what the Fed is going to do next. Yeah. And besides that, there are some of these metal stocks that will enjoy a good run in the near term. That's for the next year or so, because there's, as it is, an alumina shortage. And this is one of the few companies that is selling alumina. They're making less amount of aluminum, but they're selling alumina in the open market. So they'll enjoy.
Absolutely. And, we've been sort of, as Nigel said, putting that to you over the last many weeks now. Nalco getting bought. It's picked up from the day's lowest point. Mitesh is with us with what to buy or sell today for a reverse trade tomorrow. Mitesh, good afternoon. What do you do?
Yeah. Prashant, I think, you're right. The breadth is very good, but what is dragging down the Nifty is the IT index. And despite that, I think the Nifty has just managed to hang on to 24, 170, 150 zones. We'll take some shot on the IT side. STBT on TCS, keep a stop at about 39.75, look for target of 39.30. And the other one is HCL Tech, also giving a breakdown on the short-term charts, so could see more pressure. STBT here with a stop at about 17.75 and a target around 17.45, 17.40 in the downside can be looked at.
By the way, I just want to point out that US futures are down quite significantly right now, about 1% lower on most of the benchmark indices. Most of the Asian markets also closed out negative, despite the fact that you had positive manufacturing data from China today, with the economy finally entering into expansion after 5 months. You had the Bank of Japan holding rates, nothing changed there. So Qs were all right. But the market is reacting quite negatively, the pre-open in the US, that is.
I think Meta and Microsoft as well will react to its numbers, and both of them in post-close, I think they were down 3.5 to 4%. So that will weigh as well on a couple of those headline indices.
And also the fact that the GDP print that came out yesterday itself, I mean, it was lower than estimates, dipping below 3%. The first estimate of the Q3 US GDP.
There is, by the way, Apple which reports today. Later.
Yeah.
Amazon reports, Intel reports, Uber reports. So it's a big one.
Hectic. Tracking any of them later in the evening?
We'll do it together now. All right, well, we won't be. Just in case you're wondering, but we'll get you, of course, everything tomorrow as we come back for the motor session. L&T is what we want to talk about, right? Because good set of numbers. It's a big reason why the market is not selling off more, let me put it that way. 60 index points on the positive side coming in from that 6% move on L&T. Vivek is here with details. Vivek.
Well, that's right. So going into Q2, when you're talking about L&T, the expectations were quite muted. What was tempering down the expectations of the market? Number one, ordering activity, capex spends, government capex spends in H1 was very weak. Also, there were worries that there was moderation in capex as far as Saudi Aramco was concerned. And along with that, there were also worries as far as the margin, core margin guidance was concerned, given the fact that the company was still executing quite a lot of the legacy projects. And along with that, there were expectations that there could be a toning down of the guidance, especially as far as the 10% growth in the order inflows that was being projected by the company at the start of FY25. But with this particular quarter, the company has managed to go ahead and give a clarification on all of these parameters. Number one, as far as the core projects and manufacturing margins are concerned, still underwhelming, but it's at 7.6%. Up 20 basis points on a year-on-year basis. Order inflow for H1 quite above what the street was anticipating. Remember, L&T typically tends to bunch up the orders and only then puts it out to the exchanges at the end of the quarter. Guidance for all key parameters, top line growth, order inflow has been maintained. The order book is very, very strong, continues to hold out above the 5 trillion or rupees 5 lakh crore mark. And along with that, a significant change in stance as far as bidding for thermal power projects in India is concerned. They are now bidding for the BTG portion as far as thermal projects are concerned, and that will help aid the order book. Now, when you're talking about the key highlights, order inflow is down 10%, but still very strong at 80,000 crore. When you're talking about the international orders, it remains very strong, 40% of the September order book, and this is against worries that that particular portion of the order book was actually depleting. Order prospects very strong, 8.1 trillion is what they're anticipating for H2, with domestic share of that particular order book expected to be around 57%. So they're expecting significant pickup in spends, both private as well as public, in H2. Brokerages obviously enthused. We just heard about how Morgan Stanley has RTI or Research Tactical Idea on that particular name. Kotak too upgraded L&T today. They have upgraded it to an add from a sell rating. Strong print on execution, ordering as well as working capital, benefiting from new avenues of growth and a large, well-diversified order backlog. No wonder then L&T doing very well in the session today.
I think, Vivek, thank you very much for that. Ambrish Baliga is with us. Ambrish, L&T was one of your picks, if my memory serves me right, and not too far back.
Exactly, and still continues to be my pick. In fact, I have an immediate price target of about 38.50, slightly medium-term target of about 42.50, 42.60. But anyways, this is a long-term hold. I think this should be in the core portfolio. One should not even look at trading into, in and out of L&T. Just keep holding on. Maybe the next 3-4 years, I'll not be surprised if this becomes 2 to 2.5x.
Okay, so L&T is the pick. Got that, Amrish. Let's talk about the fall in IT stocks today. That's been sort of the biggest problem area for the market, right? Even now, many of them are down anywhere between 2% to 3-4%. What do you make of this, Amrish? And would you buy large cap IT, or would you look at niche tier 2 plays? Some of them, of course, have had phenomenal growth in the quarter gone by.
Exactly. And here I would surely look at the large cap IT names. Because whatever said and done, I think clearly green shoots are there, and the management commentary more or less has been positive. And I think we should see at least a decent up move in the earnings over the next 2 to 3 quarters, decent order flows. So I would surely go in with HCL Tech, TCS and Infosys at this point of time. Possibly we could see another 3 to 4 or possibly 5% sort of a correction from here. Utilize that to actually buy for long term.
Okay, all right. Amrish, just hold that thought. I would like your view actually on Vare Energies, because that one should come up for you on the screen. Now it's up close to 13% and volumes are very, very high. Remember when Premier Energy as well did list out there as well, we saw the stock go up 2.5x, I think, in a matter of a week. This one as well, in comparison to its IPO price, it's high. We have seen smaller issues in the SME space, like an Insulation Energy as well, which has a big order book now. That stock, I think, has gone up 80-90 times in the last 4-5 years. So the space itself seems to be very, very hot, and it appears it has a long runway. Amrish, stay with us. We'll slip into a break, come back. We'll get a couple of calls from you as well as wind down the markets.
What should I call you? The comeback kids? The comeback men? Is that appropriate?
I think I like kids more. Young Turks has been on from 2001.
Yeah.
I think it seems like all of us have grown up together again.
I land up in DPS, that's where me and Kunal met.
What keeps or has kept the two of you together?
We have some manufacturing defect in the two of us. When you're at the bottom of the abyss, you find the courage to continue. And I think that's where our partnership, our friendship, our relationship has been so crucial.
ABCD, astrology, Bollywood, cricket and discounts.
Good memory, Shriram. 13 years later.
We have to unravel the enigma that is Rohit Bansal.
To us, our individual egos almost stopped mattering. And the only ego that we had in mind was a joint one.
We have lunch every day together.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order.
The markets are still down. They're down close to under 125 points, but the Nifty Bank, that's the one that's managed to pop up yet again. It's conquered that 51,500 odd mark. In the last few minutes, it's put in a fight. Axis Bank has cut its losses. That's doing well. The big boy, HDFC Bank, says, I want to end in the green. So that as well has recovered, and that's been doing a lot of the firefighting actually for the bulls. 1,800 rupees, that's the recent high out there. If HDFC Bank can move to that 1,800 odd mark, well, the bulls will be counting on it to break out, because otherwise it's been a bit of an underperformer. But the dip on that one clearly got bought into. So Nifty Bank doing quite well, bouncing out the lows of the day. Amrish, I wanted to ask you about the paint space that is heating up over there. You know, we heard about Bidlas coming in. Asian Paints has not given any returns, the last year or so because of this threat. But now it seems the street is digesting the fact that the new competition has come in. It's not had a very, very dynamic impact. And also input costs have cooled off. Your view?
And clearly, I expect that Asian Paints market share really will not go down too much from here because of the new entrants. I think they will affect more of the players at the lower end than leaders like Asian Paints. And Asian Paints has been the market leader for the last 55 years, and they keep doubling their top line every 5 to 6 years. And if you look on a 3-year basis, Asian Paints has been outperforming the industry growth with a strong volume CAGR. And they've been adding dealers in Tier 2, Tier 3. So there the demand traction is decently good. And also the other businesses like waterproofing business has a strong traction. Even the kitchen and bath business, which is decently small, but again, that's growing at about 25-30% CAGR. Like you rightly said, key raw material prices have stabilized, which is a positive. And there's a strong capex cycle underway at Asian Paints. In fact, the in-house decorative paints capacity is being expanded by about 54%. At the same time, aggressive product launches are being planned. Retail touch points are being increased by about 5,000 touch points every year. And their new brand, Neo Bharat Latex, is being positioned quite well in the mass market. So, there it will compete with the local brands and possibly take that market share. And in fact, if you see the distribution reach is more than the next 4 players put together. So, this clearly defines the size of Asian Paints. And now with the festive and wedding season in, I think that should benefit in Q3 also. So I'm looking at EPS of about 66 in FY27. And with that, have a price target of about 39.60. Which is a good 30% higher than where we are right now.
All right, we leave it there. Thank you very much, Amrish, for joining us, and happy Diwali if you don't speak before.
And all of you are very happy Diwali and a prosperous year ahead.
Thank you, and thank you for being with CNBC over the years. Appreciate it. Well, 120 points lower on the Nifty, 24,220. You basically, the market basically flatlined, not very much at all through the course. Actually, since, I'll tell you, since about 2 o'clock, nothing. Last 1.5 hours, up and down a few times over in a small range. But basically, you'll end about 100 points lower. And the bulk of the damage, of course, being caused by the IT services stocks. 4 IT stocks contributing to about 60-65% of the sell-off that we've seen. The small cap index ends strongly up. The mid cap index, decent recovery from the lows, and the Nifty micro cap index ends about 2% higher. And I think that's, small mercies in an otherwise sort of down and out kind of a day today. Nigel.
Well, that's right. From the broader markets, actually, let's pull up some intraday charts if that's possible, because you had a few stocks. Shriram Industries towards the end, that stock, pulled back from the lows of the day. Easy Trip as well. The stock has been a big underperformer, but that as well pulled back a goodish bit. We just spoke about Nalco. Well, that one as well did very well in trade. So that stock, did pull back towards the end. But let's talk about the big movers. Pull up Tourism Finance, TFCI. The stock, I think, has seen a correction from 230, 240 to around 115. Today, the stock was up close to around 10%. So Tourism Finance should come up for you. Prudent Corp, we had the management with us. They were sounding very optimistic about business going ahead. The stock goes on with a gain of close to around 17.5%. LG Equipment, well, that stock as well was up more than 10%. Windlass Biotech, that's another stock that's up close to around 11%. The recent listing, Vare Energies, well, that one is up close to around 13%. So big move is what we saw. Newland Laboratories, after the rally that we've seen, it continues to build on to those gains. So good going out there. Voltam Transformers as well, close to 7.5%. PG Electroplast, another one that's moved well, it continues to move up. So a lot of winners, Prashant, from the broader markets. And as we speak, as we wind down trade, there are a lot of shorts, I think, that are covering. There's an expiry-related factor that plays out. That's why the Nifty has recovered 50 points from the low point of the day, and the Nifty Bank has cut its losses by half to 250 points down.
No, absolutely. And, it's could have been worse, let's put it that way, right? So we go home with a cut of about 100 odd points as we wrap up today's trading session. Just a few more minutes to go, and then we are done for the day. Maybe just a few other stocks. Piramal Pharma ends about 6% higher. Rainbow Hospitals was a big mover. I think about back to highs, I think, for Rainbow. 7-8% up on Rainbow Hospitals. Reddington with a 6.5% it's pulled back so nicely on the last 2-3 days. 158 to 194 in, I think, 3 sessions flat. Tejas Network continues to do very well. So 1344. I mean, the highs were about 1500, so not quite there, but good pullback. KAI Industries had sold off sharply. Low recently was about 3700. Stocks about 40-50 now. That's KAI Industries. Prudent had a fantastic day today. So that did well. We had the management with us as well. Akzo Nobel India, 16%. It was on D Street Chatter with Nimish earlier. Anantraj Industries was up 7%. DOMS, the stationery company, big move, 8.5%. PG Electroplast, I think we mentioned. Saregama, 5.5%. Interrug Builders, 9% gain. And that's done well since it made it to the market fairly recently. I mean, actually, it's a pretty vibrant screen if you look at the broader market and not just look at what the Nifty really did. It's a wrap on this edition of Closing Bell. Thank you very much for staying with us here. Editors Roundtable coming up next. We'll pick up on all the action in just a bit.
Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
ये लाइट्स का त्यौहार है, ये दिए जला के मोमबत्ती जला के हम अपना त्यौहार मनाएं, ना कि पटाखे जलाएं। पटाखे जलाने से प्रदूषण होता है। प्रदूषण से कोई ऐसा नहीं है कि किसी पे एहसान कर रहे हैं, हम अपने ऊपर ही एहसान कर रहे हैं। जो प्रदूषण होगा वो हम ही उससे भुगतेंगे, हमारे बच्चे ही, छोटे छोटे बच्चे वही उससे भुगतेंगे। तो इसमें कोई हिंदू और मुसलमान और इसका कोई वो नहीं है। सबकी सांसें ज़रूरी है, सबकी ज़िंदगी ज़रूरी है।
Me, along with my friend Sunil Singhania, welcome you all to this very special Diwali show. We are very excited to face not one, but the entire editorial team to bring you the best of content over the next 1 hour. I hope all of you enjoy. Thank you so much.
Happy Diwali in advance, and we look forward.
I think we should
Happy Diwali to both of you.
Happy Diwali. And I think this feels great. You know, we're going to now start looking at you more like co-anchors than you know, market guests. But thank you so much for coming to us, to our studios.
That doesn't take away the fact that
I
they've been
want
market
to
veterans.
wish first Happy Diwali, and I also want to acknowledge, and Sunil will agree, you know, we have of course grown professionally and also made money, but I must acknowledge you guys have played a significant role in really making who we are. You know, when I go to an airport and when a promoter comes and approaches me, I know it is because of my interviews of CNBC TV18. So from bottom of my heart to all of you, thank you so much for being the friends you have been, and it's been delight to come every year. It's a ritual for to come to CNBC and celebrate Diwali.
You know,
But it's very generous, and I must say,
yeah,
you're very
it's
generous.
really mutual, and we want to thank you as much as well.
And also the fact that, you know, because you both are sitting here, you are the ones who actually sow the seeds, sow the seeds of what the retail evolution, what we're seeing right now.
Yeah.
I know you've been sharing those stories of how you used to go to every remote place and sell that mutual fund, you know,
the concept
20 years
of equity,
back.
exactly.
And now you're actually seeing that fruits, everybody can benefit from
the
it.
trees grow.
Everything needs a platform.
Absolutely.
And we are thankful for this platform.
It works both ways, absolutely.
All right, so there's plenty to talk about. This is a special edition of Editors Roundtable, and it's going to be a full 1 hour. So let's kickstart. Well, it's been a very strong summer, 2018, with the Nifty clocking gains of nearly 25%. And of course, mid caps and small caps have done even better over the course of the year. In fact, here's a bit of an interesting trivia before we start off. This somewhat, I mean, the one that's closing now, 2018, the Nifty on an average has hit a record high every 3 days. Every third session, we've made a record high if you sort of, average it out. Hello and welcome to a very special edition of Editors Roundtable. Over the next 1 hour, we will decode the big near-term triggers for the market. We will also put the spotlight on a lot of the wealth creators and the wealth destroyers of the year and what the going forward story is for both of them. And then we will celebrate the retail revolution that's been the hallmark of the last 12 months. I'm Surabhi Upadhyay, and with me, as you can see, is a star-studded panel. We have our guest editors, our experts in the house, Madhu Khela and Sunil Singhania. And of course, as always, the star team of CNBC-TV18, Nigel, Nimesh and Prashant. So looking forward to it, guys.
Oh yeah, absolutely.
That was the intro after the intro. That was nice. But how's Samvat 2080 been? I mean, as you reflect back.
I would say last 3-4 years have been brilliant. Why only last year?
Absolutely.
Post-COVID, one would have never thought that the biggest opportunity of wealth creation lies in COVID, right? Because I think the prices fell to such abnormal level, and people thought that this problem is going to last for much longer. But world came together and the problem got solved much easier, much earlier. So I think last 3-4 years has been, anyone who has been in equity market would have been really fabulous, unless you have chosen really not to make money. It was difficult not to make money.
But now is it going to be difficult, Madhu? We've seen the last 3-4 years, but looking forward, will now it become more challenging to make money?
See, Nimesh, if you look at the last 25-year return, finally return tend to come to the mean
average.
Right? And we have seen lots of bull runs and lots of bear runs. Final return of last 25 years is 15-16%.
Yes.
And we know that last 3-4 years, these returns have really far exceeded that long-term average. So today, I don't want to sound cautious or bearish. This is not a day to really sound cautious or bearish. However, I would say that, if you are coming in the market now, please do not extrapolate what has happened in the last 3-4 years. Do not make your expectation that otherwise बहुत सीधा simple है निमेश मेरे भाई. वो व्यापारी को जिसको हम पैसा देते हैं वो 18-20% आरओई कमाता है और हम इतने स्टार है कि 40-40% साल का कमाएंगे तो there is some disconnect somewhere, right? So this kind of thing is not going to last. So I think India from a long-term perspective still remains very, very promising. But whoever is coming has to take a long-term view and should have really moderate return expectation going forward.
Your take, Sunil?
No, I think I completely agree. But just coming to the last 1 year, frankly, last 1 year was a year which surprisingly turned out to be very, very good. But if you actually see, it was full of uncertainties and massive uncertainties. We had elections in India. We had multiple wars. You had this yen trade going up and down and so many other things. So I think that clearly points to the fact that India's resilience as an economy is only getting highlighted more and more. So irrespective of whether we make superlative returns next year or in the next 3, 4, 5 years, I think the good thing is that Indian economy has never been so resilient, so stable. And I think that gives us the optimism that this move from 4 trillion to 8 trillion and onwards is definitely going to be there. Now it's all upon the investors to ensure that they don't get carried away and stick to this mean return which Madhu mentioned of 14-15%. I think we are set.
So you gentlemen spoke about, of course, we're not trying to be bearish, but we're just being realistic here because I think a little bit of self-awareness is always important, and Diwali is as good a time as any to sort of look within and look at your portfolios as well. So when you gentlemen now look at the near term, let's say the next 12 months, and when you think about perhaps headwinds or speed bumps or challenges, सबसे पहले दिमाग में क्या आता है? Madhu, you want to take that first?
तो पहला तो देखो, there are 2 or 3 next 2-3 month event. I think outcome of US election to a large extent will also set up some kind of a tone, right? If Trump comes up, then you will have a massive stimulus from China, right? Because they would know that there is tariff war, etc. Because this is not about economics between America and China, to my understanding. This is now about being the superpower, right? It is about some kind of a supremacy in the world.
The Chinese maybe in fact have held back from real cash stimulus because they want to see what's the electoral outcome.
Clearly, I have no doubt in my mind. So that is point number 1. Then you have, a small event in Maharashtra election, which way it goes. And plus also in the very near term, you have had 1 lakh crore rupees of foreign selling, which everyone talks about. No one talks about 1 lakh crore rupees of domestic buying.
We talk about it every day.
So the question is that are we expecting another 1 lakh crore rupees of foreign selling in this month or in the next month? I am not expecting that, And Surbhi, while we are all in a way quoted little cautious, the fact is that we are not only 2 people who are cautious. All our 50 friends who are wise, they're all cautious, they're all sitting on cash. There is absolutely no leverage in the market, So that, in a way, that is why, regardless, it's a good thing, but regardless of what comes, that's why the markets are not falling, disproportionately. When it falls, it looks like abhi ho gaya karke, but hota nahi hai.
Because excesses perhaps have not been built up what we saw in the earlier bull runs, despite the elevated levels. Maybe we've kind of kept the guardrails in place.
Markets are self-correcting. So wherever there is real excesses which are being built, let's say select defense names, or select railway names, or select PSU names, by and large, there's a deep correction, like 30, 40,
all these
50%.
mini bubbles have kept popping.
Kept popping, exactly.
So that's good.
Exactly.
At times people tell me that among all of us, I wasn't on television in 2008. So Nigel, you didn't see that pain. But there are a couple of things that are different. The retail money wasn't so strong in 2008. So when people tell me that, and also balance sheets of corporate India, they weren't in the shape that it was in 2008. So that's my defense. And as always, most of what I earn goes into equities, in terms of my SIPs. But that said, let's get Prashant. And Prashant, you've got a piece for us in terms of how you're seeing trade setup.
I think Madhu gave us a sneak peek of the US elections. Yes. For our viewers, we promise this is going to be long term, but let me get the very near term out of the way, right? Let me go across to the wall and just sort of put some of these out. So November is going to be important because you've got, as Madhu was saying, US elections, but you've got a couple other things as well. So the dateline will come up on your screen. Tomorrow you get the jobs data out of the US. Then you get the China NPC. And then you got election day, which is 5th of November. Result day. I mean, will we get the result on 5th? We don't know. And then, of course, you got the Fed decision, which is the 7th of November. So this is, the lineup of events. Later, of course, you get the state election results as well. But I'm just focusing on these global things. 2 points each. US jobs data, still remains the most important for the pace of Fed cuts. We got the first cut, which was deep, 50 basis points, but now many stalwarts are saying maybe that was a mistake. The Fed is tied to its forward guidance. They've said they have to cut, so they will cut. But the data is going the other way. All the data which we've got till last night is all strong. So, we'll see. Remember, last month, after the 50 basis point, the September jobs data came, which was much stronger. So this one now will tell us, tomorrow's data will tell us whether September was an aberration or something else. Does the market need to reprice expectations of what the Fed will do? Now I come to US elections. We'll talk more about this, but very quickly, the Electoral College and how they decide the president depends. Essentially, it comes down to 7 swing states. Pennsylvania is essentially the key state because it's got the most number of electoral votes, and that's key to winning the US election. Expect most news networks to so-called call the US election by for us, it will be Wednesday, 8:45 in the morning. So, we'll be air on Bazaar. And I think around that time, news networks in the US will call the election. They could be, there have been contested elections as well. 2020 is an example. So it's possible people go to court. The Republicans or the Democrats go to court and we don't get a clear verdict. But historically, recount has not changed the outcome per se. So that's essentially point number 2. Then you got China NPC, right? And this is important because China has very smartly deferred this to happen, to coincide, or actually they want to wait and see what the result of the US election is, as Madhu was also saying, and have the flexibility to respond to a Trump victory if the need be so. You know, this is a newspaper which said that Chinese policymakers plan to mitigate any potential impact of geopolitical surprise, and they could announce a much bigger stimulus if a Trump win intensifies headwinds for China. Remember, he's threatening big tariffs, etc. 60%. We'll know if that is just election rhetoric or this is something actual. And of course, we get to the FOMC. By the time we get to it, I think a lot more things will be clear. But for now, markets have not changed their consensus expectations of a 25 basis point rate cut. They still think that a 25 basis point cut is what we will get. Madhu, just to wrap up this point, for India, what does it mean? You said that if Trump were to win, and markets are looking like Trump perhaps will win, yields are higher, dollar is higher, equities are up. But what does it mean for India? Is it automatically positive? If it's negative for China, does it mean it's positive for India?
Economically, I would argue it is positive for India.
Okay.
Because, that whole rhetoric of China plus one really gets momentum. And that we are seeing in a lot of businesses, that is, whoever I am speaking to, whether you're speaking to in the pharma sector or you are speaking even in energy sector, that the boom which we are seeing today is a result of China plus one. Because, those guys are not buying directly from China. So there is a window of opportunity which has opened for India. So I think economically it will mean good outcome for India. I don't know geopolitically what happens, because if you put really like 60% tariff on any country, how they will respond, and they have the right to respond in any manner. Last time when COVID happened, there was a conspiracy. Is there some unseen hand in this debacle? So we don't know how nations respond.
But what about markets?
Markets will be positive, I think.
Positive.
Markets will be, short term will be positive. Trump victory has always been positive.
Emerging markets also, not just US, but emerging markets.
Emerging markets should also be positive, according to.
Sunil, apart from the US election, which Madhu spoke about,
in the short term.
there are a couple of other things as well to watch out, right? Our own state election outcome on 23rd of November. We have the MSCI as well. We saw a massive selling from FIs in the last 1 month. What are the few things that you'll be watching? Very near term, what are the few things that you'll be watching out for?
No, so I think I agree that state election will be watched, very, I would say, intensely.
Especially after the Haryana surprise.
Yeah, and if you remember, the Haryana election sort of ensured that the market did not collapse, because that was one of the reasons why the market sort of got its feet together. So I think sentimentally it does have an impact. I don't think it lasts for a long time, but it does have an impact. I think from my perspective, near term, earnings have to now rebound in December and March.
So I wanted to ask you that, this quarter was a bit of a challenge, right? But was it a one-off quarter, or you think it's a structural slowdown that you're going to
If you actually see this week, the week starting from Monday, the earnings were pretty decent. And that's why the market has sort of, stabilized a bit. You had banks which did very well, PSU banks which did very well, and then you had, obviously Larsen, which did very well. You had some positive news coming in from a couple of pharma names, and I think the market stabilized. Otherwise, still last week, the result season was disastrous. So it's not as bad this week, and hopefully, at least our interaction with companies point that the last 2-3 weeks, there has been some sort of, movement in terms of consumer demand also, in terms of government spending also happening. If you would have noticed, the fiscal deficit is only 29%. Normally by this time, it is like 70%. So the government spending has all got deferred. So I think what will be watched in the near term.
This was the first month where we saw a bit of an uptick in the government capex as well. So I think that's the belief.
December and March quarter becomes very crucial from an earnings perspective. I would say more than Trump and all, I think that would be a bigger factor.
Absolutely. We noted that actually this morning as well, that this fall in capex, which is why the deficit numbers are looking better, whether that government capex kind of push can come in, and then private capex is anyone's guess right now. That's an open question. We do have to take a very quick break on that note. We come back on the other side, the conversation continues, and then we talk about the retail revolution. Really need to sit up and celebrate the retail investor for the resilience that he and she have shown. But will that resilience continue? That's the big question. We come back with that in just a bit.
Welcome back. You're still with us here on Editors Roundtable, and this is a special Diwali edition. We have Madhu Khela and Sunil Singhania who've been talking to us about the near term. Thanks for being with us once again. Madhu, if I can sort of complete that earnings question, what's your own sense?
No, it's a big thing. I completely agree with Sunil because ultimately markets, as they say, are slave of earning in the long run. In the short term, you can keep discussing various things, ultimately earning. But my own intuitive sense is, like the data which we got, there is no intention of government to have fiscal deficit collapse to 2% by the year end, you know. So they will be quite aggressive in expanding. And one day, understandable because of election, it always slows down. So I am quite hopeful that there is nothing which we are seeing that structurally has gone really wrong, which should make us really think that earnings will not come.
On the consumption side also, you're not very worried? On the consumption side, you're not...
Consumption also, government से पैसा नहीं आता प्रशांत, तो उसका impact होता ही है ना. Once the government releases money, like what I'm talking to some people in Maharashtra, this entire Ladki Behna and people getting real money in the bank, which will have impact on the consumption.
Okay, Surbhi, you want to talk about some numbers, big numbers that we've seen in terms of retail investors coming into the market?
No, absolutely. And I think personally for me, because I've been tracking, personal finance for the last 6-7 years, this is just such a great celebration. And like Nimesh pointed out, you gentlemen were like there to sow the seeds back in 2003, 4, 5, right? To tell people that...
We had huge conviction, trust me.
Absolutely.
That time,
absolutely. I remember I started some of my first SIPs, some of my first funds, must have been funds that you folks were managing. So just a minute to actually talk about the numbers, to recap what a great journey it's been for the market from a retail perspective. Because if we hadn't had these kind of retail flows, then this 24-25% rise on the Nifty perhaps would not have been the reality. And the flows have come in not just in mutual funds, but even in direct equity. I mean, that's also been a hallmark of this year. So let's talk about it by looking at first the demat account additions. That number has been a very steady number. So we're talking about 175 million demat accounts in India now. This is the latest data that's available as of September. The run rate every month is about 4 million. It was even higher in September. And if you look at it, I mean, from April, we were at about 150 odd. It's been such a steady rise, right? Markets could, come and go, and you could have some range-bound phases as well. But that number has remained intact. Now, just to put some more numbers in context on the direct equity side, if you talk about the number of active clients on the NSE, latest numbers almost touching 48 million. So that's one part of it. And discount broking obviously has had a huge role to play in all of this. So the likes of Grow, Zerodha, Angel One, I mean, they've had a phenomenal year this time around because of the kind of market share hold that they have. The top 5 discount brokers are contributing to almost 65% of the NSE client base. And Grow is actually, by the way, the leader with about 25%. Now let's come to the mutual fund story. It's sort of sipping away to that pot of gold, to the, that wealth that we're talking about. That's been the story so far. So as of the latest available figures, the industry's total AUM has crossed 67 lakh crore rupees. And the inflows at an average, I mean, I looked at this data starting from the fiscal onwards, the average inflow is somewhere between 35,000 to 40,000 crores every single month in equity funds. Let's actually bring up the tabs because, in May, we were at 34,000. So we crossed the 20,000 crore mark in April. May, suddenly there was this big surge just after, the election results came through. June, it just kept, going higher after the 4th of June. Dip was bought in a very, very big way. July, August, September, there's been a small blip. And I think October is going to be the true test. And we'll talk about that as we go forward as well. The SIP inflow, the SIP story is massive. It's phenomenal. Look at the number. The last number, we've crossed 24,000 crores being collected, being drawn in by systematic investment plans. That's been the power of retail. And it is this flow which has ensured that this $1 billion of selling that we're talking about, FPI selling in October, that has been neutralized. Imagine if these flows were not there, where the market would have been. And, this brings me to the question, gentlemen, that I want to sort of ask both of you. And Sunil, if I could start with you. A lot of this money is actually money that has not seen market cycles, right? It's come in after COVID. The question is, do you think they'll keep the faith? If we get into a listless, range-bound kind of a market, will they stay the course?
I think since, I would say 2003-4, which you mentioned, 20 years back and now, the maturity, I would say the awareness, not knowledge, the awareness among generally, Indian investors has gone up quite significantly. And again, thanks to you guys also who keep on harping the fact that this is a long-term mode of creating wealth. It's not a short-term machine. So I would say that the traders maybe are looking more at the short term, but the SIP guys have an object in mind. It's for a particular purpose, that I need this money after 10 years, I need this money after 5 years, I need this money after 15 years. And therefore, I don't think a big impact would be there in the near term. But yes, if for 2-3 years you don't make money, then there might be an impact. But we are not looking at that kind of a scenario. So I don't think 2-3 months is going to make too much of a difference. Maybe a few, maybe 500,000 crores here and there. But otherwise, investors are very matured. Even we run a AMC, not the retail AMC, but we also see that on a fall now, there are more questions asked whether we should invest more rather than take it out. So I think at least for the next few quarters, years, we don't see that. But as I said, if you have a scenario where for 2-3 years you don't make return, but which is not the base case we are working with, I think the maturity level is pretty decent. The only one I would say caution is that don't get carried away by the near-term themes and try to do exotic stuff. There are momentum funds and there are so many other kinds of funds. Just maintain your plain vanilla diversified fund route. Try and create decent returns over a long period of time rather than trying to maximize your return by going into funds which have done the best in the last 3-4 months. I think that is the only advice I would like to give. Otherwise, it's all fine.
The MF industry has also had its back against the wall, right? I mean, they can't innovate, can't offer more than one fund per category. So therefore, you have thematics and you have quant funds and all kinds of new strategies that are there.
But we already have 20-30 funds for every fund house, and they can keep on growing those funds itself. Right?
This retail flow has also created this industry, right? I mean, which is AMCs and brokers and wealth managers. I mean, that segment has done phenomenally well.
And I think it's just a start. Because I think this is a great business. It's linked to the economy, and obviously it's linked to the market. So the markets do well. Obviously there is I would say AUM pump up because of mark to market, and then there is returns also. But if you see the numbers, if you see the numbers, we have like 5 crore investors. We still have a long way to go, and this 5 crore investors are maybe investing 5-10,000 rupees a month. That will also grow. Correct. So you'll have more investors, plus per investor also going up, plus you'll have an appreciation because of AUM.
So, Sunil, Nigel has put out a nice piece on the financialization and how many of the sector stocks have done so well. Nigel, why don't you just put that?
Well, Surabhi put it beautifully with regard to the financialization theme, right? And I feel personally very happy and responsible as well to be developing this equity cult here in India, because it's got a big runway, as you all mentioned as well. So how do you play? There are a few themes. Either you look at it via the stock markets. BSE has done very, very well. IEX has its own set of problems because of the coupling issue. You have MCX as well as NSE in the unlisted market. So some of these stocks have done very, very well. Just want to pull up a valuation plate on the screen. BSE currently trades at around 48 times odd. IEX now trades at around 30 times, so there are some uncertainties out there. And NSE in the unlisted market is trading roughly around 30 times or thereabouts. Well, IEX, the problem is with that coupling, and that's why that stock has been a big underperformer. But otherwise, you pull up the screen, all those stocks have done quite well in the last 1 year or so. AMCs, they have been the other outperformers. In the last 1 year or so, some of these stocks have given you 50 to around 80% returns or thereabouts. And the commentary that's been coming in from some of these AMCs has been very good. SIP flows are going up, so it's one way to play it. The other one is, HDFC AMC, valuation-wise, it's not very, very cheap, but the results were strong. There was AUM growth over them, and the yields as well increased. So the street, did take note of that. And the stock ran away. Nippon, the revenue number was a bit of a miss, but operationally it was quite strong. And that's why that stock as well has done well. I think there was a large seller which has got cleaned out. So that's why that as well in the last couple of weeks, that's come back into play in the AMCs. And UTI, it was, the estimates, it was more or less in line, but I think they lost some market share. That stock has done quite well. All these names, they trade anything between 19 to around 30 times on a forward earnings. UTI being the cheapest at around 19 times odd. Brokerages and wealth companies, you have a lot of them that done well. Actually, Angel One has been a rank underperformer. If you compare it to Motilal and the other stocks in there, Anand Rathi, you have 361 WAM, Nuvama as well. Keep in mind, all these stocks, they're trading at roughly around, 20 to around 45 times or thereabouts. But all of them actually have doubled, barring Angel One. It did well in the previous year, but in the last year, it's been a bit of an underperformer out there. And finally, the enablers. The K FinTech, you have CAM, CDSL, and Prudent Corp. Prudent Corp, even today, after its numbers, it was up more than 15%. And the good part about these enablers is that the numbers have been very, very good. All of them, CAMS came out with a good set of numbers, K FinTech as well. So there's a big basket of these financialization themes to play. I wanted your opinion. Madhu, you go first to tell us how do you play these themes? Because if the equity cult is going to develop, then some of these companies are going to do very, very well. Near term, you'll have this, F&O restrictions and, the watchdog having their word with regard to trying to curtail any kind of speculative trading. But otherwise, some of these companies have a big runaway.
So I would say that, the data which Surabhi put and the data which you gave is the reason for my real bullishness in the market. That, this is why I'm not scared.
Yeah.
That, I'm not in that camp that this is some fly-by-night thing. It came because of COVID and it will go away. I strongly believe that first time the Indian investors are recognizing equity as an asset class.
Correct.
Yeah. People are getting used to investing systematically. And this is not that this is the first time in the world this is happening. This is what has happened in America, a lot of developed nations, where equity forms significant portion of people's saving. Like what happened in the US and that under the tax scheme of So I would say that, I don't doubt and none of us should doubt that ho sakta hai, 1-2 crore demat accounts may get reduced. You have had 17.5 crores in one few months. It may not add up, or few months it may even decline. But this looks like a real structural story. And it is like abhi this is a lot of these people have come seeing the people who have made money. So I call it in my own language, like you made money और आपके पड़ोसी को दिखा आपका पैसा बन गया तो now the पड़ोसी is coming और उसका पड़ोसी is coming, right? But it is not that the game is over. We are still talking of out of these 17.5 crore demat holder, there are only 5 or 6 crore individual real investors in a country of 145 crore population. So if you look at the, there is still long way to go. And the fact that you have such robust, reception to a lot of these QIPs, in good old days, if you hear that 2000 crore ka koi stock mein selling aayega, we would become nervous. Today we celebrate that selling aayega to absorb hoega and maal milega, right? So I think market is gone. Just to finish this point, market has gone through a real structural shift in the last 3-4 years.
Indeed.
And I think it will continue for some time. The second point, which I would say that, this asset class, equity being created as an asset class, if you look at what portion of saving is still coming in equities, of the overall portion, it may still be 5-6%. It's not some abnormal number for us to be really alarmed about. And which is why I say, while we gather here from Diwali to Diwali and we talk Diwali to Diwali, my friend, this is not about this Diwali and next Diwali. This is about tens of Diwalis which are in front of us. We are talking, if you can generate income if you put time frame. You can't generate wealth if you put time frame.
Absolutely. And narratives also change with the market, right? The same conversation 2 months back, you remember all the chatter about whether there's money, household shiftings moving from banks to the stock market, and a lot of chatter. And now we're saying, thank you, retail investors, for the resilience, because the rupee has been stable, FPIs can sell. I mean, there's so much money coming in here. By the way, just an anecdote. So I caught up with the CEO of a large asset manager, and the chatter was about, ground events. The sales teams do a lot of activation. So he said, Surabhi, guess which is the city from where we get the maximum number of queries, and a non-metro city. And I thought maybe it's Pune or one of these places.
No.
He said it's Patna. The kind of sort of interest that those events in Patna generate is really the story of the Indian retail investors. So,
Sunil, I want to ask you about what Nigel spoke about. The companies which represents the financialization. From a long-term perspective, should investors look at valuations and be worried? Or if it's a decadal theme, then one should just look to add into their portfolios these kind of names, the brokerages, the asset management companies and all.
You have to understand is they are all part of the financial ecosystem, but very different. So exchanges, they have the advantage of entry barriers.
Yes.
So if there is BSE and NSE, there is not going to be a third exchange.
True.
So they will always have that advantage, and I think to that extent, they should always trade at a significant premium to others. Then you come to the asset management companies. They will have entry barriers, which will be significantly more than others, less than the exchanges, but they have entry barriers because you have brand, you have distribution and all. So I think they will continue to grow. The advantage which AMCs or wealth management companies have over exchanges is that you make money even on the appreciation.
Yes.
So for exchanges, it is a transactional revenue, and for wealth and asset management companies, it's an annuity revenue.
Yes.
Then you come to the broking side. Again, it's more transactional. So I would say the broking companies should get the least valuation.
Okay.
Maybe the asset and wealth management
That is where
companies.
valuation will be important. But for others, I guess opportunity will be more
100%, because once you have asset, your base level profit is assured. So which is where the asset and wealth management companies will come into play. So imagine if you talk about, say, the market's giving 12-15% CAGR for the next 5 years.
Yes.
Without selling a single new fund, you will have your assets double in 5 years.
True.
So your profits will automatically double in 5 years.
You own the customer in that sense.
You own the customers and you make money on the appreciation also. So I think it's a great business. We are lucky we are in that business. But I think this theme, we also are a little bit value conscious. But I think this theme
which is why I
we
asked you.
picked up 5-7 years back. We should have bought it irrespective of the valuations. We are even still waiting for valuations to correct, but I don't think they will.
What's the comfort zone? Like so that we have a reference.
Question here. You should have asked, when are you listing a
I was going to ask. I was waiting for the break.
So why don't you tell us, Sunil?
No, I think see, the business is great, and at some point of time we'll look at it. But I think the size of opportunity is so huge. In the US, you have so many AMCs. I think in India you have handful,
40, 45, yeah.
and out of which maybe 10 have assets of 1 lakh crore or more. 1 lakh is what, $11 billion. 11 billion is now chiller for India. We are, not the old India where a 200 crore IPO or a 500 crore IPO used to get the front page. Now the media will not even cover a 200 crore IPO.
I just
We're
want to
used
ask
to 11,600 Swiggy, 23,000
Just one
crores
question.
Hyundai.
And we speak so, like 20,000, theek hai.
हो जाएगा.
So BSE and NSE, right? You started with exchanges. You think we are in the process of seeing a significant accretion to BSE's share as well? What is your view?
See, I think there are two exchanges. Obviously, NSE was miles ahead, but BSE has done a lot of catching up. It's very tough to hazard a guess. But obviously, in a two-player market, if the second player starts to do slightly better than the number one player, because the market share is so low,
correct,
you can always gain market share. And I think that is what was happening. Actually, if you actually see, Sensex was what we used to track. Abhi bhi hai na, log bolenge 80,000 hai.
Correct.
No one talks 25,000. Frankly, Nifty, even now, not too many people will remember the exact level of Nifty, but Sensex everyone relates. But somewhere they lost the plot, maybe they're getting it back. If they continue to do the good work, maybe, they might inch up their market share further.
Okay, all right. So exchanges, wealth management firms, asset management firms, brokers,
IPO.
probably an IPO. So this is one hot theme that's going to continue well into the next year. Okay, we do have to take a very quick break, but we'll come right back. And on the other side, we'll talk about some of the biggest wealth creators of the year and also pockets where wealth was destroyed and whether there's any revival possible or not and how you should be looking at both the creators and the destroyers. Back with that in just a bit.
Deputy Minister Morrison and I spoke to the Washington Post on background late Sunday afternoon, October 13. We provided non-classified information on the action we had taken to cooperate with India and explained how the evidence showed links to the government of India conducting illegal activities against Canadians, including threats to their lives.
Welcome back. As you can see, we are really enjoying this conversation with market veterans Madhu Khela as well as Sunil Singhania. We've discussed the retail revolution. We've discussed the immediate sort of areas of concern and triggers for the market. Now let's look at some of the biggest wealth creators of the year and some of the biggest wealth destroyers as well. And then we'll get our guests to comment on whether they still make sense for our portfolios or not. Nimesh?
So, I've not looked at this year, but I've just looked from the COVID lows.
Okay.
And again, Diwali is all about prosperity, about making big money, creating wealth. We have the two biggest voices to tell us and guide us how to create wealth, because they've done this all these years. So I just looked at Nifty, the indices and some individual names as well. If you look at Nifty Sensex, they've given 200% return since the COVID lows. The mid and small cap have actually doubled, like double of what they've done. So 400% return in the mid cap and the small cap indices. So that's been the massive outperformance we've seen in the equity markets. Now, in terms of individual stock, we normally don't talk about some of those names which have been massive wealth creators in the last 4 years, right? Autumn Investment, Lloyd Metals, CG Power, Anantraj, which Madhubhai knows the company very well, Jai Balaji Industries, Elcon Engineering, Jupiter Wagons, Titagar, and HBL Power. These are the few names. The percentage returns will be seen on the screen. So massive money, wealth has been created in these kind of stocks. I've just identified 10, 12 top gainers, so to speak. In terms of big losers,
940%.
Absolutely. That's the kind of return.
49 times.
Yes. That's the kind of.
That is the 10th number.
That's the 10th number. So imagine the kind of wealth that's been created in so many stocks. But on the other side, some of the big losers since the COVID lows, right? Paytm has been a bit of a wealth destroyer, so to speak. Rajesh Exports, Yes Bank has been a big disappointment. Z Entertainment, which a lot of people used to track a lot, has been a big underperformer, and so is Delivery as well. So these are the few names which have not done well. But while I was preparing this list of the biggest wealth creators, Madhu, a couple of names really stand out which you've been part of and you've seen the journey, like say Titagar, or maybe Sunil would have been part of so many of these multi-bagger ideas. How do you first identify and how do you ride?
Sunil is part of the rest.
Part of the rest, nice. So, Madhu, again, from a viewer perspective, while we all look at short-term, near-term trends or whatever, but from a real wealth creation point of view, how to identify these names? And then how do you sit on to it for a longer period of time to make real money? What is the inflection point for such companies?
So I want to remember my friend Rakesh Jujunwala, for two reasons. One, I think he was the only person who predicted this boom in the retail money, right? He was talking way 10 years back. कि इतना पैसा आएगा, ये बाढ़ लग जाएगी. So we must pay the tribute to him, right? Second thing, he taught me one thing, that if you want real multi-baggers, then you can't have time constraint. You can't think that you want to make 10 times return in 3 years. You have to allow time to build up over a period of time. It may happen in 3 years, it may happen in 5 years, it may happen in 7 years. But if you are making 10 times return, it's still a large money, right? So I would say my first
it's a journey, right, Madhu?
Yeah, my first criteria is that whenever I am making an investment, I am normally not restricting in terms of the time. Second, these companies which really become multi-baggers, you have to really buy them really cheap, right? And when you buy them, at that time, 100 out of 101 people will tell you, don't do this. But that is another characteristic of investing, right? Investing is never a consensus game, right? Third, wherever you have seen really big money being made, it has to be a part of a larger theme. Very rarely individual stocks on their own stream do well. Like, because railways did very well and that was our call. Titagar Wagon, Jupiter Wagon, so many of these companies did well. Because defense did well, so many of defense companies did well. So it has to be part of a, and then, if you get them at a right valuation and you get a right entrepreneur, right? It's a lethal combination. And then you have time by your side. That is when you really make return. So I would say, Nimesh, I'm being honest, Diwali day, I also did not understand for many years. For me, market was a means of making income. ₹1 मिल गया, ₹2 बेच दिया, अपने पैसा बहुत बन गया. Maybe this is the first time we are also holding on to stocks even after they have gone up 10 times, 20 times, right? Because now that experience is there. Now only time will tell whether it was right or wrong. But at least till now it has worked out well.
Sunil, if you want to stay the course as long as the story is intact.
Exactly.
And play big.
Stay the course. And just because P multiple has become from 20 to 25 or 25 to 30, it's not a reason
to sell.
Always to sell. You have to see real euphoria or some really bad thing happening to a company or a sector for you to be able to sell this company.
Sunil, when you've been part of so many stocks where they've become multi-baggers, if you can just explain with one example on how you identify and how you sit onto it, and what are the things that you'll watch out for from a pure viewer point of view.
So one thing which was
in Reliance Mutual Fund. Sunil's name was Sunil Multi-Bagger Singhania.
Nice.
Madhu is being modest. Madhu is our guru. He is today decided that he wants to take me.
But your secret.
In your list, one thing which was very interesting. See the world, when we talk about US markets, we talk about 7 stocks, which are all technology stocks. And all your stocks which you mentioned in India were all domestic,
absolutely,
economy, brick and mortar stocks. So I think the moral of the story is that it's not only in very high tech or very exotic, sectors or companies you make returns. I think if your base is right, if your perspective is right, and if you identify both time, company and valuations right, I think you are home. I think how you lose money if your time is wrong, your company is wrong, and your earning expectation is wrong. So I think when you talk about companies, I think the best way of identifying them is in the worst scenario for that sector. Are the companies still generating some returns and some ROEs? Because the moment the sector changes, I think the company which is the strongest in that sector will do very, very well. And I think it's all about then taking a call whether, like Madhu mentioned about railways. If the government would not have focused on railway, even if the company would have been good, neither the opportunity would have been there nor the PE multiples would have been there. So I think there is no formula as such. But for us, the clear formula is that you have to identify a company which in the worst scenario survives and makes some returns. And then in the good scenario, it will do very, very well. And the other thing which I would like to mention here is that, obviously in India there is private equity which have done very, very well. I think one thing which at least pains us is that all the large returns have been made by foreign investors to the PE funds. So we are very clear. I think we want to give Indians also an opportunity of investing on the PE side, because why should Indians not make money? The way we have made money in the secondary market, let Indians only make money even in the unlisted space. So I think that space, Indian investors have not been able to make, and that doesn't get captured in your returns.
Exactly, true.
But that is also a space where you're working and it's done well.
I think many more will come, but I think there again there's an opportunity because the technology side, it's not listed. So this when you give the returns of 30 times, 40 times, the unlisted companies don't get captured here. I think those returns have just been captured by the foreign.
And we're seeing that change.
See, this process, after 20 years, it looks very easy when you put all these data now. But to be able to buy a stock and be able to see the volatility and to be able to face markets where your markets are down 2,000 points, your stock is down 30%. Where does that come from? That only comes in the market. Always, your patience will be tested, but your conviction will be rewarded. And when you are convinced, you are suddenly convinced in consensus. It's a rare conviction. It's your own individual conviction. So the quality of work which you do into these ideas and the kind of thematic understanding which you have about this company, that is what allows you. Because if you look at last 20 years, best of the companies would have fallen 30-40%, maybe 5-10 times, including companies like Titan, Divi's, Infosys, right? But who has the guts to really see that kind of fall? And still be convinced that I want to hold it for a very long period. That is what truly determines whether you are in in do that multi-bagger return.
So conviction is what matters when you're talking about creating
Conviction
real
and
wealth.
preparation. Yeah.
Conviction and preparation, conviction for the right kind of themes and the right kind of companies, promoters and stocks, right? In fact, after the break, we talk about exactly that. What are these two gentlemen currently bullish about in terms of the next big themes for the next decade or so? We'll discuss that in just a moment.
But I think no president's done more for Puerto Rico than I have. So thank you. That's really nice of you to say. Appreciate it. Thank you, Mayor.
Donald Trump is that leader. Donald Trump is not only the right choice for the Puerto Rican people, he's the right choice for all of America. We're here today because we're tired of the empty promises. We're tired of being told how to think, who to vote for, and watch as we have this broken border, a broken economy under weak leaders like Kamala Harris and Tim Walz.
I strongly and fully support and endorse Donald J. Trump to be our 47th president.
Welcome back. You're tuned into the special Editors Roundtable edition, and we have with us our stalwart Sunil as well as Madhu. Well, before we wrap up on the show, Madhu, you tell us some of those top themes that still look good, taking valuations, taking the industry dynamics into play as well.
So, you know, because I spoke, it's not about this Diwali, but it's about many Diwalis. So I really focus on two large themes. Last year we spoke about this whole energy transition and carbon neutrality as a theme. I still am very, very bullish. Because after many decades, you come across a theme which is going to really last. Like again, I would reiterate the same point. If you identified internet in 2000, there's more than $25 trillion of wealth creation which happened only on that one word, internet. Whether you talk of Google, Apple, Amazon, everything was part of the larger theme, right? Yeah. I think carbon neutrality and climate change is a big challenge for the world, and it is not going to get solved in 1 or 2 or 3 years, right? So this is something which will play out, whether it's government, bureaucracy, business people, everyone has to work together and to play out. And when I look at, ये सब शाने लोग क्या कर रहे हैं, whether it is talk of Gautam Adani or Mukesh Ambani or Sajjan Jindal or Elon Musk, everyone is truly focused only on capitalizing on this theme. So I think this theme still have legs, and you have to be able to identify the right companies. The entire Adani group, major portion of that is the creation of this theme.
But Madhu, I know you can't get into stocks, but at least narrow it down a little more, because energy transition, you could be playing, grid companies, you could be playing people who are doing solar, there could be, hydro. Exactly, there's so many parts to it, right?
There are, I think,
then there are current coal-generating companies moving to renewables in a big way.
There are a lot of connected, really bottom-up ideas. Trust me, if I could tell you one thing, like I'm very bullish on this whole value chain of ethanol to ENA to green chemicals. A lot of companies will come. This is again part of our carbon neutrality only. We bought a transformer company thinking that it will be part of the overall carbon neutrality thing. So if you put your mind, you'll get many ideas. And just quickly, 30 seconds. One other powerful thing which comes in my mind is this AI disruption. While it will kill many people, but it will have a tremendous benefit to a lot of people, because the way and the speed at which things are changing. I think, so we will not be able to buy an AI company, but let's look at companies where game is changing because they are enabling AI. Right, where there is significant time reduction, cost reduction. I think there will be not one, many companies will be there. And again, the speed at which people adopt. So I am at least very eagerly, whenever I am talking to any company for investment, I am asking him, what are you doing in AI? How are you adopting? What will it do to your business?
Sunil, what about you?
So I would stick to the financialization of savings perspective. I think there's a long way to go. It's maybe a 10-20 year story very clearly. But just picking up on what can do very well for India next 10-20 years is oil just going belly up. My view on oil is very negative, and it all comes down from this climate change or renewable, hydrogen, battery storage all coming up. I think that is the best thing which could have happened to India. We are overshooting our targets. This is the first time, instead of 30-35 gigawatts, maybe we will start to install 50 gigawatts of wind, solar, and then with this battery BAS coming up and hydrogen coming up, so many companies looking at electrolyzers. I think the whole reliance on imported energy would just go away. And it's not only in India, it's globally. And that's why if you see multiple wars going on and oil is at $70. Earlier, chota bomb bhi phutta tha na kahan, so oil would have been 100, 110. So I think that is a mega theme for India, and that would give India multiple legs for the next 15, 20 years.
Okay, all right. I think that's a lot for our viewers and us to chew on as well. Gentlemen, it's been an absolute pleasure. Thank you so much for making our Diwali celebration special here at CNBC-TV18, for joining in. And we look forward to more thoughts, more guidance from you during the course of the new Samvat as well. Thank you for joining
Thank
us.
You so much.
Thank
and
you.
Again, all of you and all your viewers, a very, very happy Diwali. A lot of prosperity, not for this year, but for many, many years to come. Thank you so much.
Thank you so much. And with that, viewers, we are going to take your leave on this edition of Editors Roundtable. Here's wishing all of you a very, very happy and prosperous Diwali.
America great again. And of course, to make Puerto Rico shine again.
Trump is? He is the person who stood at this very spot nearly 4 years ago and sent an armed mob to the United States Capitol to overturn the will of the people.
Let's talk money.
Hello and welcome to Let's Talk Money. Here's wishing all of our viewers a very, very happy Diwali. This year has been a gracious one with markets doing well and investors getting plenty of opportunities to create wealth. So what does the new Samvat hold in store? What do you need to keep in mind as you look at your portfolios as well as your overall financial well-being? Well, that's the theme of this Diwali special. I'm your host, Surabhi Upadhyay, and helping us get on that path to prosperity in the new year, we have with us Radhika Gupta of Edelweiss AMC as well as Ashish Shankar of Motilal Oswal Private Wealth. Lady and gentlemen, thank you very much for joining in. First of all, happy Diwali to both of you. And I want to start by saying a thank you because you've been partners in the wealth creation journey over the last 1 year and the last many, many years. So happy Diwali, Radhika. Opening thoughts.
Happy Diwali to you, Subhi, Ashish, all your viewers. I think opening thoughts, there should be a lot of gratitude for the last 1 year of Samvat. I think I was looking at mutual fund numbers. You look at any category of funds, returns are 40%, 50%, 60% on a 1 year basis. I think the Indian economy has never looked better from a macro standpoint. I think it was a year where I say that if there was a movie theme to define the year, it would have been Swades. Because in a period of such relentless FII outflows, we've seen such strong retail participation, such strong consumer confidence into our own equity markets. So I think the word to sum up the Samvat should be a lot of gratitude for what we've got.
I think that's beautifully put, and it's something that investors must keep in mind. We need to start with gratitude. Completely agree with you on that. Ashish, your thoughts?
Yeah, so happy Diwali to you, all the people at CNBC and your viewers. I completely echo Radhika's thought on gratitude. I think it's been an amazing year. And, you know, sometimes we forget the mood we were in last year and we look at near-term developments. If you look at last year, the same time, we started in a situation where there were geopolitical tensions and we almost thought there's going to be a third world war. You had planes flying over Taiwan, so on and so forth. So considering where we started, I think this year has been spectacular. I mean, the index itself on the equity side has done about 28%. And like Radhika said, you've had schemes which have done 40, 50%. And the best part, Surabhi, is that all asset classes have shown. It's not just equities, right?
Correct.
Gold has glittered again.
30% gold.
Absolutely.
Who would have thought?
Gold has glittered again. Fixed income has done reasonably well because interest rates have come off. So really, we have no reasons to complain. So a lot of gratitude. And we should go cheerful into the next Samvat.
No, absolutely. You know, I completely take your point as well. But that's the thing, Ashish. You know, you spoke about planes flying and the planes are still flying. It's a question of now whether you're talking about the Middle East or it's still Ukraine. And there are still a lot of risks out there. The fact that markets have managed to climb all these walls of worry and mountains of worry, I mean, does it sort of make you a bit nervous? Or do you think there's been good reason behind the rally and behind the buoyancy that we've seen this year?
Yeah, so obviously there's very good reason behind the rally. And like Radhika said, you know, our economy is looking in extremely good shape. And I think this will be the 5th year consecutive double-digit earnings growth for the Nifty. It has never happened in our history, including 2003 to 8. So there is a lot of good news which is translating into this market returns. There are risks on the horizon. I mean, some of the geopolitical tensions have continued to linger. And then you have the big one, which is the US elections, you know, in 10 days' time. I believe that once that is behind us, things will settle down. But having said that, given the situation where we are in, and that's the reason, you know, I think we had met probably a month and a half back, and I'd echoed this thought that, you know, people should go into this Samvat with a balanced portfolio.
Correct.
Right? Whilst things have been extremely good, but there is no reason to be carried away. So there are two things I would advise. One is moderate your expectations. You know, what has happened in the last 2-3 years is very difficult to replicate in the next 2-3 years, although the next 2-3 years look pretty good from an equity point of view. But at the same time, the risks are lingering on the horizons. So have a balanced portfolio and continue to have some gold in the portfolio. I mean, gold has obviously glittered. Maybe the returns on gold moderate, but I think you look at gold now as a risk or an insurance to any untoward happening at the global level or even in India.
That's typically how it should always be looked at, right? But it's become a, asset class in its own right. Yes. People look at gold for now, generating more wealth, not just sort of to hedge their portfolios. Right. That's been a new thing. And we'll come back to gold and we'll talk more about it. Yeah. But Radhika, the story of the, the Indian retail revolution, that's been absolutely phenomenal, right? What are your thoughts? We've spoken several times through the year on this 40,000 crores that keeps coming into mutual funds month after month. And what now? Because we speak at a time where this is the first, so to speak, test for equity investors where markets have not been going up in a straight line.
I travel the country a lot, especially now increasingly because of our expansion to tier 2, tier 3. And one, I think everybody understands the equity story. In fact, I often think we underestimate sort of the confidence even in tier 3 and tier 4 in India and the interest in mutual funds. I mean, I'll go to a tier 3 or tier 4 town where there's no airport connectivity, but thousands of people will show up for an equity meet. So I think the India equity story is a structural story. Month on month, when the SIP numbers come out, there's almost a sense of surprise, or they're 20,000, or they're 22,000, or they're 25,000. I do believe you will see in India not far from now where you have a 1 lakh per month crore SIP book. So I think that is a realistic possibility because financialization is genuinely just about to start. Now, as far as correction, of course, we've had a lot of new investors come in after COVID. I think seasoning of investors is a natural process. We had seasoning of investors who came in 2006 and 2007, learned some hard lessons in 2008 and have become wiser. I do think net-net the Indian retail investor is acquiring wisdom. When markets fall, people are adding. People aren't closing down SIPs. There's a lot of awareness. Yes, there are the old mistakes that are repeated. So my theme for the year has been Dal Chawal. In a year when 50% of the money comes into thematic funds, the idea is to move people into the middle path, tell them not to do too many exotic things. So that will happen. But finally, I think consumer confidence in equities is here to stay. A little bit of moderation needs to happen.
Okay, so now let's get to the task at hand, and that is to try and ensure that we remain on the path of prosperity. Come what may, markets can go up and down, but it's our job to ensure that we are very systematic and hygienic and disciplined when it comes to our portfolios. So Ashish, let's straight away get to it. Like you said, yes, even earlier this year, you have had a tilt towards more balanced strategies. It's not like full whole hog into equities anymore, right? Tell us why.
Right. So one of the reasons, Surabhi, is that, look, it's 3 years into a bull market, right? I do believe valuations are not super expensive, but at the same time, they're not cheap. They are probably in the reasonable zone. There are pockets of exuberance which investors need to be wary of, and like Radhika said, a lot of money coming into thematic funds, and some of the thematic funds have fallen about 25-30%. So I think people have got a wake-up call. Whilst we continue to remain bullish on equities, I think there are risks lurking in the background, whether it's in terms of geopolitical tensions or in the near term, earnings slow down. I mean, we saw this quarter, I think the downgrades were more than upgrades. So these things happen in the midst of a bull market. So as a result, I think having a balanced portfolio just helps smoothen the ride. So equities is one asset class which clearly we continue to be bullish on, albeit with moderate expectations. Gold, we continue to be positive on for different reasons. I mean, we were bullish on gold as an asset class maybe a year back, and we believe gold will perform well. It has done extremely well. But expecting gold to deliver these kind of returns year on year is very difficult. So I think gold now takes the original role of a protector in the portfolio, right? So if something goes wrong on the global front, then gold tends to shine, and it also gives you the much needed firepower to rebalance. One should look at fixed income because, given where equity markets are and the way gold has rallied, fixed income gives you that cushion in tough times. So having a little bit of fixed income, and we do believe that interest rates will go lower in India, and even globally, that's the stance of most of the central banks. So if that happens, you can get a little bit of upside. And for people who have larger portfolios, structured debt, etc., is emerging as an attractive option to enhance the yield in the portfolio.
So let me ask you, if you were constructing a portfolio from scratch today for a medium risk investor, how much of each? I mean, how much equity, debt, fixed income?
Yes. Yeah. So I would continue to be, more exposed to equities because when I talk about medium risk investors, somebody who's 30 to 40 years of age, I think equity still stands out as an asset class because you're still in the wealth creation stage of your life, right? So about 50 to 60% would still be equities. I would say 10 to 15% in gold, like I've always messaged, and the remaining portion could be in debt. And some part I always, believe should be in cash as an emergency reserve because that just helps you tide out volatilities in the market.
Okay, fair enough. So that's a good starting point. At least we have the basic sort of construct that each one can keep in mind. But Radhika, I want your thoughts on a point that Ashish raised on thematic funds, and that's been the biggest trend of the mutual fund industry this year, right? There have been funds on defense, funds on consumption, funds on, any and every theme that you can perhaps even imagine. Now, what are your thoughts? Because in some cases, when the themes are extremely niche and narrow, like PSU or defense, the drawdowns and the fall in stock prices has been severe as well. So will this scare away people, or do you think the investors have matured enough? Your thoughts on thematics?
So I don't have a problem with thematic funds, but I think our definition of thematic funds has, evolved to be too narrow. In the old parlance of mutual funds, thematic funds used to be things like financials or consumption or manufacturing or tech. And so these were broad-based sectors, And even when these kind of thematic funds existed, my view was that these should be the satellite part of the portfolio. So if 80% of the portfolio is some combination of the things that Ashish mentioned, multi-cap equity, fixed income, gold, silver, international, then 20% was allocated to these thematic funds, and that is well and good. The problem now, and where I really get nervous, is the extremely narrow thematic funds. And I always tell investors to do a couple of checks. Check one is exactly how narrow the sector is. So historically, we've seen retail investors, and in fact, all investors don't do the best job timing themes. I mean, last year, if you looked at the 10-year returns of PSU funds, it was single digits, less than 10%. You had a huge rally, a lot of funds were launched, and then, the numbers look great. So people don't do a great job timing. Don't do very narrow themes, and where you do themes, stick to that satellite part, and then I think people should be okay.
Okay, all right. So I think that's a good way of approaching the whole thematic space if it is something that you want to dabble in. And I guess, Ashish, you want to add to that because we always hear about this core and satellite approach, right? So overall, would you keep thematics in a portfolio, and if yes, you'd limit then to what percentage, and what themes are you convinced on?
See, thematics by definition are for a little more sophisticated investors. I mean, let's say you're bullish on a particular sector and you don't want to spend the time researching on stocks, then you can go and buy a thematic fund, right? Or if you're a contrarian investor and a particular theme is not done well for the last 3 to 5 years, then you could take a contrarian allocation to that particular thematic fund. So I believe that, a certain portion of the portfolio can go into thematics, but like Radhika mentioned, a broader theme always helps. So for example, a year back, I think pharma as a theme had not done too well, and we were messaging that this is a sector which is ripe for re-rating, and you could have gone and bought a pharma fund. And pharma is a much wider theme. Similarly, for example, IT services, digital is a much wider theme, and those stocks have underperformed until three months back. Most of these stocks had derated. And we continue to be bullish on that particular sector. So, you have a core portfolio which consists of flexi cap, mid cap, small cap funds. And then you probably have 20-30% where you're trying to also apply your expertise. So, for example, if someone is working in the IT sector and you believe you know the IT sector extremely well and you want to apply that thought to markets, it's not a bad idea. I mean, you could go out and do that.
Okay. All right. So that's some advice on thematics. Good to keep that in mind. We do have to take a very, very quick break. But when we come back, we dive a little deeper into the perfect portfolio creation for the new Samvat. Back in just a moment.
Let's talk money.
And fair election. An election that he knew he lost. Americans died as a result of that attack. 140 law enforcement officers were injured because of that attack. America, that's who Donald Trump is. And that's who is asking you to give him another 4 years in the Oval Office. America, I know the vast majority of us have so much more in common than what separates us. I know it. And that's why I am in this race, to fight for the people, just like I always have. On day one, if elected, Donald Trump would walk into that office with an enemies list. When elected, I will walk in with a to-do list. Full of priorities of what I will get done for the American people. And I will work with everyone, Democrats, Republicans, and independents, to help Americans who are working hard and still struggling to get ahead. Unlike Donald Trump, I don't believe people who disagree with me are the enemy. He wants to put them in jail. I'll give them a seat at the table. And in 7 days, we have the power. Each of you has the power to turn the page and start writing the next chapter in the most extraordinary story ever told.
Let's talk money.
Welcome back. This is the Diwali special edition of Let's Talk Money, and we are ensuring that you remain on the path to wealth and prosperity. Come what may in the markets, they can go up and down, but you need to ensure that your portfolio is on track. And Ashish is going to help us do just that. He's already told us that Ashish, you're saying about 50% for a medium risk investor, 50 to 60% can go in equities. So let's go a little deeper. The industry keeps saying and experts keep saying buy large cap funds. People still want to chase alpha. So you tell us some 2-3 interesting funds that you would look at for this new year.
Yeah, so what we are telling our clients is that you stick to flexi cap funds. See, a large part of the alpha has already been created. If you look at the last 3 years, although Nifty has done about 12%, the mid cap and small cap funds have done far better. I mean, they've done last year about 40-50% kind of returns. Obviously, a lot of the stocks in those sectors have got re-rated. So going forward, one needs to be a little more discerning. So some of the funds that we like in the flexi cap space are Helios flexi cap fund. It's a small fund run by a veteran fund manager, has done reasonably well, and we are confident it will continue to do well going forward as well. And we like Franklin flexi cap. It's come back pretty well after all the challenges they had on the fixed income side. The equity team continues to do extremely well. And the third fund is 361 flexi cap fund. Again, it's a small fund. And the fourth fund, if I have to add, will be the Motilal Oswal large and mid cap fund. So we are preferring the slightly diversified portfolios to, let's say, concentrated funds like mid cap or small cap. Not that we are bearish on mid and small caps, but I think one has to become far more discerning. And a fund manager giving him the flexibility to invest across market caps is the need of the hour today.
Okay, fair enough. That's good advice to sort of keep in mind. On gold, Ashish, like you're saying that you're still optimistic on it. So would you keep the allocation to as high as 15% of the portfolio? And what is the vehicle? I mean, from sovereign gold bonds to ETFs and funds, how would you get into gold?
See, we've always been messaging for 10 to 15% allocation in gold. I think more the equity exposure, the more the allocation to gold. So if your equity exposure is in excess of 60%, then having 15% in gold helps, because then it acts as a insurance asset class. Because if equity falls, then gold typically tends to do well in those periods. Earlier, sovereign gold bonds was a fantastic vehicle to take gold exposure. But as you know, the government has stopped issuing sovereign gold bonds because it was too good to be true. But what has happened is the taxation on gold funds has become very favorable after this budget. So earlier, they were taxed at marginal tax rate. after this budget, they've again brought back long-term capital gains rate on gold bonds, if you hold it for gold funds, if you hold it for more than 2 years. So the best way to take exposure is these gold funds, which feed into the ETFs. So you have liquidity. At the same time, after 2 years, you end up paying long-term capital gains tax. So that's a great way to take exposure into gold.
Okay, got that. So that's lots of advice on the funds to look at and how you can look at gold as well. Radhika, let me ask you, we spoke about thematics, but I also want to get your take on the multi-asset fund category, right? I think in this year, I have heard a lot on MAFs as a product. Now they're called, I think there's a fund house also running an ad saying MAF, right? So why the appeal? Do you personally like these products? Because they do bring a blend of equity, gold. It can be multiple asset classes, right?
So I like the hybrid fund category in general. I think with the fixed income taxation norms, taking outright exposure to fixed income is not the most tax efficient, and people struggle. Even if you're trying to take long-term debt exposure, people struggle with timing fixed income. So I think blending equity and fixed income and multiple asset classes into a single product is very good. So whether it is aggressive hybrid, whether it's balanced advantage, or whether it's multi-asset allocation, I like the category. I think it's a very, very underrated category. And in fact, in bull markets like this, I think people tend to ignore this whole category of funds. With MAF in particular, I think it's a very good category. The only thing is, in the industry, MAFs are the least well-defined category. So, you really need an advisor there to guide you on which kind of MAF, because there'll be people taking very low equity exposure, there'll be people taking very high equity exposure. So there's a little less standardization in the category. But fundamentally, I think the idea of blending multiple asset classes into a single fund is very tax efficient for the consumer.
Radhika, what about you? I mean, if you were to look at suggesting someone an MF bouquet, and I'm sure you get asked this question all the time personally around friends and family, what would your recipe or advice be for the new Samvat?
So I keep it very simple. I say that if you're a moderate to aggressive investor, you should either be in flexi cap or multi cap. I tend to echo the view that mid caps and small caps are not cheap, but I think moving to completely large cap is not the best idea, because I think people should build decadal portfolios. And if you want an accurate representation of the Indian economy, you do need some dose of mid and small cap, because large caps are concentrated in a certain set of sectors. So flexi cap or multi cap tends to have a little more mid and small cap. Flexi cap tends to have a little less, but flexi cap or multi cap is what I recommend. You can also do a large and mid cap index fund if someone wants to do that. For conservative investors, I am very pro a category like balanced advantage. I know it's not been popular over the last 1 year, but we're actually seeing that change with the last couple of months of volatility. So conservative investors can really look at balanced advantage funds. I really think they're all weather.
Okay, all right. Plenty of ideas there. So finally, coming to last thoughts. And Radhika, you go first, because I think the industry in the coming year perhaps will offer us newer concepts, strategies, and products, because we know that the regulator has okayed this idea of a new asset class. It'll be set up by asset managers like yourselves. So what should we expect from the MF world this year? And what would your one wealth tip be? Something to do or something to not do? Any wealth tip for this Diwali?
So I think the MF industry has been super innovative. If you look at the last year, for instance, the innovation that's happening both in the active and passive space is incredible. For instance, factor-based investing, particularly on the passive side, has taken off. You're also seeing a lot of factor-based ideas on the active side. So the MF industry never stops being innovative, and I say that in the best possible way. We are certainly very excited about what is going to come out of the new asset class, already cooking a bunch of ideas internally and working with SEBI to develop that. So I think we'll have more options on the platform for investors. I think wealth tip is keep an open mind, because the world is expanding so much in terms of products and offering, but also keep it simple.
An open mind, but also keep it simple. All right, that's a fairly evolved tip to be able to do both in a well-balanced way. Ashish, closing thoughts and your wealth tip for this year.
Yeah, so see, as the market keeps going up and we continue to be positive on the Indian economy and markets, you will get a lot of narratives, right? So my wealth tip will be, don't get carried away by narratives. Do your own homework, speak to your advisor, and then take a decision on the portfolio. Because, you know, as various sectors do well and they show returns, it's very easy to get carried away into sectoral funds, into thematic funds. But we've seen in the past that ultimately it comes to hurt your portfolio. So beware of narratives. At the same time, be positive. And the next 2-3 years look pretty good. But, you know, have some balance in the portfolio.
Okay, all right. Thank you very much, both of you. I think those are really enlightening ideas that are going to help our viewers. Radhika, once again, wish you a very happy Diwali, and to you as well, Ashish.
Thank you.
And that's where we will take our viewers' leave on this special Diwali edition of Let's Talk Money. Here's hoping the coming many months and years remain very, very prosperous and positive for you in every possible way. Thank you for watching.
Let's Talk Money.
Well, cheers to the festive season. What should I call you? The comeback kids? The comeback men? Is that appropriate?
I think I like kids more. Young Turks has been on from 2001.
Yeah.
I think it seems like all of us have grown up together again. I land up in DPS, that's where me and Kunal met.
What keeps or has kept the two of you together?
We have some manufacturing defect in the two of us. When you're at the bottom of the abyss, you find the courage to continue. And I think that's where our partnership, our friendship, our relationship has been so crucial.
ABCD, astrology, Bollywood, cricket and discounts.
So, good memory, Shriram.
And not money,
13 years later.
We have to unravel the enigma that is Rohit Bansal.
To us, our individual egos almost stopped mattering. And the only ego that we had in mind was a joint one.
We have lunch every day together. The valuation being a certain number assumes that beauty needs to lie in the eyes of some beholder.
Else, yes.
The concept of unicorns, we just don't like at all.
But did you not like it when you were one?
Because we didn't know better.
Who all were part of the IIT Delhi cohort while you were there? Sachin and Binny?
In those couple of years, there's a lot of companies that came
Dipinder.
From Dipinder, Sachin, Albinder. There is no word for retirement in Japanese.
You know, I just want something to do, someone to love, and something to dream about.
Hello and welcome to Young Turks Reloaded. I'm Shriram Finance. This show has been about first-generation entrepreneurs chasing their dreams. The two guests that I have with me on the program today first made their appearance on Young Turks way back in 2011. At that point in time, Snapdeal was being called one of the fastest-growing e-commerce companies in India. At peak valuation, they were valued at $6.5 billion. And then 2017, things unraveled and unraveled fast. Today, Snapdeal is in its second avatar trying to make a go in the world of e-commerce. But more importantly, they've repositioned themselves more as investors today with Titan Capital. Joining me now on Young Turks Reloaded are, what should I call you? The comeback kids? The comeback men? Is that appropriate?
I think I like kids more.
Kids more. No, the reason why I'm using that word is because it was in a LinkedIn post that you wrote, Kunal, where you said setbacks happen and so do comebacks. And I want to understand from you, how do you see comebacks? Because it also carries a certain expectation, a certain baggage along with it. Because the expectation is that you're going to have to deliver what you delivered when you first started off, but you're different. The company is different. You're different as people today. The environment is different. So, how do you see a comeback?
Firstly, always a pleasure being here and speaking with you, Shireen. I think it seems like all of us have grown up together at this point. Old. Right? And so there's something endearing about that as well. So it's a real pleasure. Look, at least from our standpoint, this is a journey that continues. When we first started, we never thought in 2007 that we would even get this far. And in any entrepreneur's journey, there'll be twists and turns. The question is...
And there have been many twists and turns in yours.
Many. And for sure there have been many. And there will be more in the future, I'm sure also. So we do anticipate there will be more twists and turns. However, I think every time we've figured out a way to get out of a tough situation. There will be times where you'll find yourself at the bottom of the abyss, right? And most people don't know what bottom of the abyss feels like. Bottom of the abyss feels like you have no answers. Your well-wishers have no answers for you in that situation. You can't read anything. You can't listen to a podcast.
and work yourself out of an abyss.
Yeah. It is like the bottom of the abyss feels like there is no answer. The only answer is give up.
Is that how you felt in 2017? To be specific, July 31st, 2017 at that crucial board meeting that took place?
I think there have been many moments where we felt like that. Not just one. Many, many moments through the years. In the early years as well, we felt like that on many occasions. But I think what matters is when you're at the bottom of the abyss, do you find the courage to continue, right? And can you muster that courage? And I think that's where it has been, our partnership, our friendship, our relationship has been so crucial to coming out of the abyss each time. And everyone expects, like you said, that you're going to come back in the same way. But actually, most comebacks happen in a different avatar, right? When the phoenix rises again, it generally rises again in a different avatar, and that's what it has been for us.
That's an interesting, many thoughts there rising from the ashes, but I think what I like about what you said on comebacks is just having the courage to continue, and I think that's an appropriate way to actually look at the idea of coming back. But we have to unravel the enigma that is Rohit Bansal in Kunal's words. So, you guys go back 25 years, all the way back to DPS RK Puram. That's where this story really began.
Yeah, we were both 16.
Yeah. What is it? I mean, of course, you have work that keeps you together. But we've also seen stories where, over time, you grow, you change as individuals, and you don't necessarily have the same value systems. You don't necessarily see life the same way. What keeps or has kept the two of you together?
No, I think... first of all, pleasure. Always a pleasure to be here. And I remember, I think the first time we met was many, many years
Yes,
back.
many years ago.
Seems like a different generation altogether.
It was a different generation.
But always a pleasure to be here. Look, I think between the two of us, I've seen that over a period of time, there's a very strong foundation of trust and mutual respect, which has only grown in one direction over a period of time. And look, because we work together, it doesn't mean we have the same views on everything, right? We work together, at least in the early days. I remember when we started working together, both of us had worked a year each separately.
Yes.
And actually, when we started working together, so we became co-founders, we started working together, and then we realized there are 10 things to be done. Neither of us knew who's
How
good
do you
at
allocate?
what. forget how to allocate, but I mean, me and myself and Kunal didn't know who will be good at what. So actually, we started almost our professional journey started of learning ourselves what we are good at and not so good at.
Have you figured it out? Have you figured it out now? So who's good at what?
Well,
what do you?
the big secret.
what do you believe he's good at?
He's fantastic. He's he's a great visionary. He's very, very creative. He can look into the future, and I think the art and sort of will to never give up. I just, every single day I meet him, I still I think I can learn a lot more from him. So I've learned a tremendous amount through these years, and I know I will continue to learn, besides him being extremely good at food.
You changed to being non-vegetarian courtesy him, isn't it?
And by the way, still, if we go out to eat, I neither choose the restaurant, nor do I choose the menu.
He does all the hard work.
He does everything. I just tell him we are going out to eat. He will choose the restaurant. He will know the menu by heart. He will know the off-menu dishes. He will order. We will enjoy food and we'll come back.
So you called him nebulous and enigmatic. Now you have to explain that to us. What makes him a nebulous character?
No, because I think he's so secure in his being that he doesn't feel the need to explain himself. He doesn't feel the need to get out there to tell people how he's
That
thinking.
is very different about the two of you. You're the public face of Snap TV.
Someone's got to do it, right?
So now one skill which we are different.
and clearly one that he's better at.
No, that's not true. I think just because one of us does it doesn't mean that the other can't do it. Like he can.
No, of course he can do it. He actively chooses not to do it. Yeah.
But I don't think you will meet a person who is as obviously brilliant and sharp as Rohit, but also someone who is as, just has the best heart ever, right? He's the nicest person, the purest heart ever, right? And I think all the points that Rohit said about the point he made about trust and mutual respect is really what has kept this going from strength to strength. And what I've seen, Shireen, is that many times what happens is that in relationships, if there is even a unnoticeable fissure, when crisis hits, it just breaks it apart.
Yeah.
And we've seen many, many crises together, and at least that hasn't happened. Through the years, you'll have people who'll try and come whisper things in our respective ears about the other person. People try all kinds of things, and they almost assume that we don't talk. We have lunch every day together, every day. If we are in office, the two of us, we have lunch every day together, right? Now for last 17 years, we are absolutely in sync. Actually, now when we are sitting in meetings, we don't have to even ask the other person for
Isharo.
No, it is beyond isharo. It is telepathy. Next level now. Right? Just maybe completing what Kunal said. I feel there came a point. I don't know when it came, but I think in our journey somewhere, where at least to us, our individual egos almost stopped mattering. And the only ego that we had in mind was a joint one as to what can we achieve together. And it doesn't matter whether it's my point of view, his point of view, do I look good, does he look good, it doesn't matter. I think there came a point where, look, if we'll win together, if we lose, we'll lose together. So, and as a result, not an iota of doubt ever comes in our minds as to when I'm sharing something with Kunal or when Kunal's sharing something with me, as to is there any other agenda, but what we may have different points of view on what we think is right for both of us.
Yeah.
But it's never, okay, he has his agenda or I have my agenda. It's always a joint agenda.
The key to that would be honest communication, right? I mean, the key to, say, as you said, people have tried to create fissures and friction, but I would imagine that the only reason it hasn't happened is because you've had an honest communication. But who's the one who is the first to kind of bring up an issue if there is one?
Either of us. I don't think I don't think we've been through so much together, Shireen, that honestly, if either of us is sensing that there is some part of some business that we are in or some investment we made where there is an issue, whoever notices it first brings it up. We talk through it. We make a plan, usually over lunch. All our planning is
that you pick and you decide.
No, but lunch we eat in our office cafeteria. But
we don't have gourmet food.
Not every day anyway.
No, but I think it's you're absolutely right. I think this constant, open, transparent, clear communication is the reason, and honestly that transcends just our relationship. That is also why we have our colleagues who worked with us for so many years, right? Most of our colleagues that Rohit and I would work with have been around with us from 5, 7, 10, 12 years in some cases, through the thick and thin, because founders are often very good at communicating the good news, like the celebration, the euphoria.
Yes.
But what we've always done is communicated the bad news also as it's happening, along with the plan, along with our own insecurities about what we don't have a plan for. And at that moment, it may be a tough communication to do, but we've seen over a period of time that's also built trust with the team, that when things are going tough for us, we all come together and solve it, which is why we've endured, right? We were talking about that Young Turks has been on from 2001. Not many companies have endured for 17 years, despite the twists and turns, and reincarnated themselves over and over again.
Literally, India's Alcobev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Reddy, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad, after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
We are getting very good resolution. On the top of it is KSK Mahanadi, where we are expecting recovery of more than 100% recovery of principal amount we are expecting, because the Swiss challenge process is on, and we are the rates that the bids that have come, it is indicating that our recovery is going to be more than 100%. Second case is that of Sinnar plant at Nasik. There also the initial bids have come, and the H1 bid is quite good. And third project is Hiranmaye project. There also the Swiss challenge process has just been completed. And
Snapdeal has seen many pivots from the time that you actually started as couponing to eventually getting
coupon
into
booklets.
Exactly, and in an offline era to getting into e-tail. So you've gone through pivots. Change is not something new to you, and adaptability is not something new to you. And then you had that spate of acquisitions, 11 at last count from what I remember, that you went through to the point of saying, look, either this merger with Flipkart happens or we're toast. Now, I want you to go back in time to what was going on in that board meeting when that decision had to be taken. I mean, you didn't get the valuation that you wanted, but you talked about ego. What finally decided it? Was it the fact that the investors just said, hey, this is no good for us, and that kind of sealed the deal? Or did the two of you say, we want to still retain our independence?
Look, I mean, this is now many, many years back. And at that point of time, I think this discussion was, publicly going on also for many, many months. But, I think eventually it came down to the point that all of us as a board, because look, I think as you can imagine, in such big situations, I don't think either of us can take a decision, because eventually every decision has to be a board decision. And finally, it came down to a point where, because we were also running out of money very quickly.
You had what, about a month's runway left?
Very short from what I remember. And it came to a point where all of us had to take a decision which can get executed in a very short period of time. And that was the most important thing, because if you're not decisive and we kind of let it linger on, then over a period of time, there'll be nothing left to save. I remember after that day, we've probably spent 0 days thinking about what if, because it doesn't matter what if.
Both of you talked about being at the bottom of the abyss and then pulling yourself from there and rising from the ashes, so to speak. What was that like for the two of you? And were you sort of leading in on each other for support, for counsel, for just, a shoulder to say, hey, like, how do we pull ourselves through this?
Yeah, absolutely. I think, look, that's the advantage of having two of us, right? Because we are human. Like, people keep saying, oh, you guys are the most resilient founders in the ecosystem, etc. But we are human, right? Like, there'll be days when I'll have a low day, but Rohit will be there to support me and pull me up, and vice versa. Thankfully, neither of us there was never a situation where both of us were having a low day. That would be troublesome, right? But thankfully that never happened. Or maybe we just know, we can just sense the other person's having
energy.
And then today it's my turn, right? Like, so I think, or his turn. So I think we have some manufacturing defect in the two of us.
And what manufacturing defect would that be?
We have many, but one I can definitely point to is that we have never felt that failure is an option, right? Like, we've never felt
that failure is fatal.
Yeah, like, success is also not permanent, but failure is also not fatal, right? It's only in conversations like these that we recount what happened, and then we have to rummage through our memories. Oh, what were we thinking then? But on a day-to-day basis, we rarely think about it. But I think the important point, on the point of learning, Shriram, these have been invaluable lessons for us.
For resilience, for building resilience.
And many other lessons, right? Which we now bring into the way we run our businesses and the way we support founders through our investing activities.
Since we are talking about the future, what is the future looking like as far as Snapdeal is concerned now? I mean, what do you believe in a world of quick commerce and, Blinkit and Zepto and this, that, and the other, where, the big boys are feeling like, okay, where is this shifting to? How are you reading the market today, and how do you see yourself staying relevant in it?
No, I think over a period of time, many, many years back when we started, the number of internet users were extremely small in India. And when internet users did start going, they started going on desktops and laptops, etc. Then mobile phones came, smartphones came. Today, I think we are at an age where almost every single person in the country has a smartphone. And thanks to all the social media and all the sort of things around it, people now have aspirations of not looking very different from what anyone can look, because earlier people didn't have access. People didn't know what does this person wear, what does that person wear. Now everyone can see.
You may not have the means to afford some of that stuff, but at least the
aspiration is absolutely there. But the more important thing which has changed, equally importantly, is things have also, thanks to internet, things have also become a lot more affordable than they used to be. Because again, the supply chain networks were not there. Many of the manufacturers used to use 7 layers of distribution to get to the customer. Now a lot or most of those manufacturers have started selling to consumers directly. And as a result, when I look at my own buying behavior or the buying behavior of many people around me, the average things that people buy have become cheaper, I feel, especially in categories like clothing, apparel, home, etc., etc. I think what we are addressing is very fairly and squarely the value market, where people have aspirations, people want to look good, people want to buy good things, but their means allow them to buy things till a certain price point. Fortunately, those things are now available online, and that's what we connect the dots for.
This takes me back to that 2011 interview, and I remember you said that the Indian consumer is not price sensitive, is value sensitive, and you said that he or she believes in ABCD, astrology, Bollywood, cricket, and discounts.
Good memory, Shriram.
And not much has changed, has it?
Yeah, I think you're absolutely right. You talked about the plethora of business models that have spawned in e-commerce. I think it's obviously true. What has happened over the last 10 years in the evolution of e-commerce is, as Rohit was saying, as the number of users have exploded and incomes have started going up, earlier in e-commerce, it was assumed that only one kind of business model will work, which is the classic e-commerce model, which let's call it an infinite aisle model, where you have everything, like the everything store.
So the Amazon and the Flipkarts of the world,
What has happened is, over a period of time, as income levels have gone up and the number of users have gone up, there's a clear segmentation emerging in the market, where at the top is a band of quick commerce, which is metro users with high incomes, high frequency of buying, and mostly branded goods. Then at the middle is what the classic e-commerce model is, which is the everything stores. And at the bottom is the value commerce, right? Which is lower price, like 500 rupee items of decent quality, but it's not going to get there in 10 minutes. It'll get there in 3 days, right? And while there are some, spillover areas on the edges between these 3 bands, but these 3 bands are independent and mutually exclusive also of each other and sizable.
Very distinct now.
And very distinct, which is not the case like 7, 8, 9 years ago.
And so the value market or the value segment is what you intend to chase after.
Yeah, and that's what we've been doing now for a few years, and we've made good progress in that direction. And in some ways, if you think about it, that is the future, because as India still has about 350 million e-commerce buyers. It's not a billion internet. It's not equal to the billion internet users we have. The next 650 million internet users who will become e-commerce buyers are actually all in this segment, because the metro dwellers who are internet users are already e-commerce buyers. And with their income levels, with their aspirations, platform like ours will have a lot of applicability.
Okay.
And I think the big other, in addition to this, because this market has started coming online, the other big thing which has changed, which is at least I know where we've spent a lot of time over the last few years, is the quality of merchandise which is available to consumers in that segment. Because look, this segment was always there. They started coming online now. But, while we call it value segment, for them it's their hard-earned money, and they're still, whatever they buy, they're still reaching up and sort of buying aspirational things. The last thing that they want, because that is the biggest problem, right? Because this is relatively unorganized, not many well-known brands, etc. The single most important thing to consumers in this segment is that, will I get what I want? Or will I get what it looks like? And I remember when we started, we also started with a very theoretical understanding of marketplaces, that, we are just a platform, we are just connecting, sellers to buyers, and we'll show some ratings and people will figure out whether it's good or not, etc. We spoke to a lot of our consumers. Consumers said, we don't care about who's the seller,
exactly.
What's the rating? I bought it from you. If it's good, I will come back. If it's not good, I will not like you at all.
Absolutely.
And I think that if I were to over summarize the one single thing that we've done really well over the last 4 or 5 years, it's solving for that quality. Because infinite merchandise had started becoming available for many, many years. But I think it's about solving the problem of quality that consumers, when they buy, they feel they will get what they thought they will get.
The bids that we have received is quite encouraging.
Here today with a message of hope for all Americans. With your vote in this election, I will end inflation. I will stop the invasion of criminals coming into our country, and I will bring back the American dream. We need the American dream to come back home. This will be America's new golden age. Going to happen quickly, too, very quickly. Every problem facing us can be solved, but now the fate of our nation is in your hands. Next Tuesday, you have to stand up and you have to tell Kamala Harris that you've done a terrible job, that crooked Joe Biden has done a terrible job. You've destroyed our country. We're not going to take it anymore. Kamala, you're fired. Get out, get out. You're fired. And I'm announcing a new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's about time that they were recognized, right? They add so much to our country and are never spoken of, ever, 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 but they're going to be spoken of now. Thank you all very much. The United States is now an occupied country, but it will soon be an occupied country no longer. Not going to be happening. Not going to be happening. November 5th, 2024, 9 days from now, will be Liberation Day in America. It's going to be Liberation Day. On day one, I will launch the largest deportation program in American history to get the criminals out.
...2023 and 2024 in terms of IPOs and in terms of exit options becoming much more of a reality. And many of the companies that you backed, I mean, when is your IPO coming, by the way? But, you know, many of the companies that you backed have IPO'd, Kunal.
Yeah, so, I mean, not only backed, but built.
Yeah.
Right? So, Unicommerce, which is also part of our
Correct.
group, oftentimes, you know, Snapdeal hogs all the headlines, clearly, right? And our, and you know, our Unicommerce, which is obviously a B2B software business, and actually the first SaaS company to list in India.
Yes.
We had acquired this business in 2015, primarily to run the software for Snapdeal's warehouses. And before we knew, over the next few years, we realized that many other brands and platforms wanted the same software. So we started selling it. To fast forward 7-8 years, now it's a listed company. Right? So I feel that there's such a big learning in that, right? Like there's learning around resilience and never saying that. I can tell you nobody would ever put their money on the thought even won't occur to them maybe 3 years ago or 2 years ago that Unicommerce would get listed, right? And have a very successful listing. At the time when it listed in August 2024, it was, I think, the second most subscribed IPO of 2024. For a relatively modest sized company, I remember, I think we received like 21 lakh applications in our IPO. That testament to the quality of the business, obviously to the markets, but also quality of the business. So, it is also, our strong view, Shriram, that in the end, if you build a profitable business that maybe is not growing at 100%, 300% a year, but it's compounding year on year, eventually you will be able to access the public markets. Because venture capitalists oftentimes will push companies. We have seen that also. We have experienced that also. They'll push companies to grow very fast.
At the cost of everything else.
Right. Our view is very different now, and we've learned from our own experience, right? Where in the same group, right, our Ace Vector, our holding company, we have one business, Snapdeal, which was built a certain way, and then eventually we course corrected and now are building it the way we want to build it. And Unicommerce, which was always built this way, which is, we have raised zero primary capital to build Unicommerce. Zero. We never raised a single rupee of primary capital. So it is doable.
I think I hate to use the word propaganda, but there's this mental imagery that has been built in the minds of many young entrepreneurs that unless you're growing really fast, you're not good enough. And many
unless you're a unicorn, you're not good enough.
Unicorn, growing very fast, etc., etc.
The concept of unicorns, right? It's a concept, we just don't like at all. And we are very vocal about it because we just don't understand why we have to chase a mythical animal which represents maybe not even an animal, mythical creature that that points to a currency that is not ours.
But did you not like it when you were one?
Because we didn't know better, right? We didn't know better, and we have to be honest about it. And now we know better, so it's important that we talk about it. Mythical animal representing a currency that is not ours and a number that has no relevance to our country. Like, we realize that it's very hard just telling people this is not the chase we need to be in. We need to build lasting, enduring businesses. And that's when we came up with this term called Indicons, right? Because we feel names stick, right? At some level, unicorn has stuck for some reason. But if we need to change the mindset, we need something to take its place. Right? So Indicor is basically a 100 crore revenue business, which is profitable, started in the last 15 years. Now, at least our view is that India does not need like 100, 200, 300 unicorns. We need 10,000 Indicons because they will form a more lasting, enduring and stable bedrock for the ecosystem. Once you're at that point, you're profit making and at 100 crores of revenue, chances of mortality have dropped dramatically for that business. So we'll have less blow-ups, we'll have less significant corrections that companies have to do because they've run out of money.
And most importantly, entrepreneurs and teams have full control of their business getting to that point. Look, the valuation being a certain number assumes that beauty needs to lie in the eyes of somebody
else.
Someone else is coming and telling you you are a unicorn. But whether the underlying business is good, not good, profit generating, growing, not growing, that's all one person's assessment basis which you are carrying or not carrying a certain badge. Whereas being an Indicon is completely up to you. It's your business, your revenue, your profit. No one else needs to come and tell you, yes, you are valuable. You need to know yourself whether you're valuable or not.
Yeah, absolutely. But, so that's now the investment thesis that's going to drive where you allocate your money as far as Titan is concerned?
I think we've always been allocating capital that way. Just that now we've, because I think that happens many times. I've noticed that you have a certain behavior pattern of doing things a certain way. And then one fine day when you name it, it becomes a lot more obvious to you what you were doing. I think it's the name which has come up now, whereas we've always been investing that way because like from day one, when we meet companies which are very small, like 5 lakhs of revenue, we ask them about product market economic fit. We don't ask only about product market fit because if the economics don't work, you can't really tell whether this product market fit or not. And from day one, like really small companies, we've always, I remember, asked founders, does the business have product market economic fit or not?
What were the questions? Let's start with the questions that you asked. What were the questions you asked Bhavish? Who wants to take this one on?
Well, it was very interesting circumstances in which we met Bhavish. I was at a conference, hawking our coupons, I guess, in 2011. Like we were always hawking something at that point. And as I was stepping out, ironically, I was looking for my cab, right? And this, young, sharp-looking guy walks up with his bag and says, "Hey, Kunal, I just want to chat with you for 5 minutes." And I was like, "Okay, I'm waiting for my cab." So we sat down on a sofa at the entrance of the hotel, and he just showed me that they're launching this intercity service, and they're doing like 5 rides a day. But I think at that point in time, we were also new to investing. It was our first investment that we made in December of 2011. But it was very clear he was a very special kind of founder, a great, brilliant mind. And I think he then did one call with Rohit and we were done, right? Like it was very straightforward. He wanted to partner with us. We wanted to partner with him. There was not much discussion. But over a period of time, as the ecosystem has become deeper, revenues become more real very early on, which was not the case 12, 13 years ago. Now we have enough data in the beginning, even for very early stage companies, let's say a Mamaearth, right? When we invested in Mamaearth, they were doing maybe 5 or 7 lakhs of revenue. Also an interesting story how we found them. Right?
Because of your daughter.
We found everything.
It's my job.
Right? So, I saw the shampoo in my daughter's shower. I turned the bottle and there was a mobile number and it was Varun's number, right? So, but it was very clear when we met them also, even at 7 lakhs of revenue a month, it was very clear what the shape of the P&L is and likely will be. And I can tell you for like the subsequently the next 6-7 years, I don't think the shape of the P&L changed much. The number may have moved from 5 lakhs to, God knows, like 250 crores, but I don't think the shape of the P&L changed. And we have generally seen that companies that have stability in gross margin, stability in unit economics, tend to outperform those in the long run by orders of magnitude than those that don't. The other thing we have learned is that companies that have great reporting governance outperform those that don't have it. Doesn't mean it's a sufficient condition to succeed, but it's definitely a necessary condition.
Absolutely necessary. We've seen from month one, all the companies that have done exceptionally well, each one of them had extremely high quality reporting from day one of the business. Because, as founders, all of us can sometimes start feeling, I'm too busy to create this report, etc. But just there is nothing, it's the perfect mirror as an entrepreneur as well, because you want to see every month what progress have you made. Funnily enough, while it's something, at least to us, extremely simple, that we even have a format now of how it needs to look like.
We call it the Titan MIS.
Titan MIS, okay.
Each of our portfolio companies has
the biggest, like most of our founders, like most of the companies we invest in, we try to get them to institutionalize from day one. It's so simple, but founders over and over and over again tell us that was the single most helpful thing that you guys did from day one.
Well, the thing that's also different now for you at Titan is the fact that it's not just your money. You've gone out there and you've done some fundraising yourself. What's that experience been like?
We mostly always wanted to just invest our own capital. But what started happening 2-3 years ago is a lot of founders started approaching us saying that, look, you are our first believers. You are, I'd love to. We love hearing it, but they tell us this also that you're our best investors, right? Right. So because I think we bring that operator mindset, and we bring a mindset of understanding the practical issues of building a business. They would tell us that, look, we'll go out, we'll get a lead investor. Can you do the remaining round? Right. In the subsequent rounds that they raise after we've invested at the seed stage. We said, look, that will require a lot more capital to invest. But let's think about it. Concurrently, a lot of people are reaching out to us, like our peers, family offices, etc., that we want to invest alongside you because you guys obviously have a good deal flow and a good selection criteria. So that was a good culmination of setting up this, what we think of as a capital amplification vehicle, that we were anyways going to invest in subsequent rounds of these companies with our own money. Now other people can invest alongside us, right? Like-minded investors, etc.
Right.
And that's how the Titan Capital Winners Fund was created. Everyone told us, guys, first time fund, it's going to take you 3 years to raise, right? But we were just amazed by the response we got. I think we were going to raise 200 crores.
You've done 300.
Yeah, 333.
Right? 333.
It's a coincidence. It was a total coincidence.
But speaking about rounding off numbers.
Yeah, so it was a coincidence, and I think it's testament to, because this first time other people have seen our results, right, of the investing we've done for 13 years. And obviously they liked what they saw.
So what is the report card, the 280 company report card for Titan Capital look
I
like?
think, because we were investing our own capital, but we were very sort of always extremely diligent about reporting, tracking, not only giving the sermon to other entrepreneurs, but sort of applying that sermon on ourselves as well. But, the fund, all the investments, as Kunal mentioned, have done quite well, and we are very fortunate.
You've had tremendous amount of success with at least some of the listed entities in the portfolio.
At least the investment world uses IRR as one of the metrics, which we've had like early 60%, like somewhere in the 60s, early 60s, which is we consider to be fairly healthy from what we've been told. So
realized IRR. So I think one of the things that we were disciplined about was not getting too greedy either way, which is either selling too early or not selling at all. I think that is one of the issues that early stage investors often have. And 100% of post-tax proceeds, last 13 years, we've reinvested back in the next cohort of companies. See, what motivates the two of us is like the ability to keep supporting entrepreneurs and, the next generation of entrepreneurs in the country, right? Like almost everything we do is to that effect, right? Whether it is creating companies which create jobs for people, many of whom go and start companies of their own, in which we also invest in. Right? So it's a full cycle. And like about a few months ago, someone asked me that, oh, you turned 40, like what do you want to do at 60? Right? Actually, I didn't have an answer immediately. And so I said, let me think about it. So I thought about it for a week or two. Then I got back. I told her, actually want to just keep doing this. Right? Like I can't
exactly
see.
The same for
Exactly I can't imagine what else would I want to do. I just want to keep building companies, keep investing in companies, keep supporting founders. It's an enduring purpose, right?
Yeah. And I think over the last many years, we've seen both the quality and maturity of entrepreneurs, as well as the respect for entrepreneurship has grown tremendously in the country. I remember when we were starting, most people, told us कि इनकी job नहीं लगी होगी. That's why they're starting on their own.
For someone who grew up in Bhatinda before they made it to DPS RK Puram and then to IIT Delhi.
Kunal was right to remember everything.
No, but speaking of IIT Delhi, you were a very special batch. I mean, who all were part of the IIT Delhi cohort while you were there? Sachin and Binny?
Quite a few. Actually, it's such a big coincidence that in those couple of years, there's a lot of companies that came from Dipinder, Sachin, Albinder, many actually. I can't remember all the names.
Did you guys hang out together in
I mean, in some ways, but I mean, I don't think either of us were thinking that eventually
we will go on to building India's
unicorns
I
and
just I feel it's such a big coincidence.
but what is it about the IITs in general, but also about IIT Delhi in specific that's really been the incubation ground for so many startup stories?
I have a very personal story about this, not with respect to IIT, but with respect to DPS. Is that, as you rightly mentioned, I grew up in actually a town which is 50 kilometers from Bathinda, which, like before Google Maps, no one could find out where it is.
I know Bathinda. The Air Force has a very large base there.
So, when you grow up in such a small town, you can grow up with one of two mindsets. You can either, because look, I used to do okay in studies and used to do well in studies. And you can grow up with one of two mindsets. Either you can start thinking that, okay, because I'm good here, I'm superhuman and I'll be able to do everything, etc., etc. Or you can grow up with the mindset that I grew up with, where I used to think that, okay, I'm okay till the time I'm in this village. But the moment I go into the big club, which is like Delhi and national level, etc., nothing will work out. I used to have very low confidence in my own abilities. Used to think that, all the people who go to IITs or some of these good colleges must be some superhuman people. And I landed up in DPS somehow. No one in our town had ever been to an IIT. I landed up in DPS, that's where me and Kunal met. I had extremely low confidence that I'll be able to do anything, even though I got very decent marks in class 10th. And I think for me, the big change happened when I saw some of the people, because I came in grade 11th, and many of the seniors who were in grade 12th, many of them are people, like growing up in a small town, we used to think that people who go to good colleges are some superhuman alien beings with wings, etc., etc. But when we saw all these people, these were people like us, who looked like us, talked like us, behaved like us. And the next year, many of them went to good colleges. And I think that's what made, at least demystified the whole thing for me personally. That look, if these guys can do it, then hopefully I can too. And I think that just humanization becomes very important. You don't put things on a pedestal. I feel the same thing has happened with entrepreneurship as well.
I want to end by asking the two of you and, picking up on where Rohit left off. Success at 27, what did that mean to you then? And success at 40, what does it mean to you today?
Well, Rohit can go first.
He's going to think and come up with a podcast answer.
I think maybe, I think going back in time, it's, I think at 27, maybe success was just being known for anything, right? Because, as I mentioned, both of us, I grew up in a small town and, there was no reason for us to be known. I think at that point of time, at least speaking for myself, I used to probably attach a lot more importance to being known and getting that external validation. It's changed quite materially to what it is today. Today, for me, there is only one parameter of success, which is, am I happy? That's the only thing that matters.
And what makes you happy?
Many things. I think as Kunal mentioned, I myself, I really, I've been to Japan many times. And one of the things that I observed there, which I really, really connect with, is people there is no word for retirement in Japanese. There's just no word. And it's, at least I can so connect with that, because if you are...
I can too.
If you're happy with what you're doing, if you enjoy what you're doing, I actually just can't relate to. There's so many people when I talk to them, they say, I want to work really hard and I want to retire at a certain age. Now, it may work for them, but just I can't relate to that at all. Which I just feel like if I can continue doing what I'm doing.
And 70 hours a week.
It doesn't feel like work. That's the more important thing, because it gives me so much joy that I think this is happiness to me, and then everything else that comes along with it is sort of bonus.
Yes. Over to you.
I think, look, success, I feel what success means to you at that point in time, it keeps changing. I feel that it probably meant very different things 2 years ago. And it'll mean very different things today and 2 years later. But, this F1, the McLaren Mercedes F1 boss, Toto Wolff, he has this really interesting saying, which is about like happiness, right? Like, he said, what makes you happy, right? And he said that, I just want something to do someone to love, and something to dream about, right? And actually, that's what it boils down to. Thankfully, I have all the three, right? And I think, and I feel that I'm so blessed, right? Like to have all three very much in place. The first two are known, but the third one, there's this enduring purpose of pursuing and promoting entrepreneurship in India. I feel it's a very enduring purpose. Like I think we can do it till our last breath, literally, right? So I think we are so blessed to be at this age with this experience in a country like India at this point in time, right? Because this time is not coming back, right? This is probably the first time this is happening in India, and maybe the last time it'll happen in India, right? This significant inflection point. And to be in our prime, to have learnt our lessons, to have a lot of wisdom, to have resources, to have a good reputation. At this point in time, I mean, we really couldn't have asked for anything else.
And which is why you're all set to play shark now. What is that about?
I feel you must try everything in life once, right? I feel you should lead an absolutely regretless life, right? I feel that it is interesting. And actually, if you think about it, it is in sync with this enduring purpose of promoting entrepreneurship. Yes, it is, entertainment and drama and all that, but it draws people in. And as a result, hopefully inspires enough to pursue entrepreneurship.
Well, I hope that the two of you continue to have the courage and the conviction to not just fund your own dreams, but to fund many, many other dreams. And, thank you so much for very honestly and candidly sharing your own experiences and stories. As I said, we've tracked their journey for over a decade now, and I have to say that it's great to have you back on the program, and I wish you all the very best for all your future endeavors. Thanks very much for joining us today.
Thanks, Shireen. Thanks. It was a pleasure.
Thank you so much, Shireen. Always a pleasure.
My pleasure entirely. And with that, it is time for us to wrap up this edition of Young Turks Reloaded. From all of us here on the team for now, goodbye. Thanks for watching. More lessons in entrepreneurship coming up shortly.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to Global Market Mighty?
Hello and welcome to our special coverage of the US elections. I'm Parikshit Luthra. Which way will the US presidential election swing on the 5th of November? The answer lies with the voters of 7 swing states. Both Donald Trump and Kamala Harris spent large chunks of their last week campaigning in these states. So which are these battleground states and why are they so crucial? Kiran Khatri takes a look.
Will America get its first woman president, or will Donald Trump secure a second presidency? Most opinion polls point towards a dead heat, which is why a lot is riding on 7 battleground states which haven't historically aligned with any of the two parties and could sway either way. The 7 states, Arizona, Georgia, Michigan, Nevada, North Carolina, Pennsylvania and Wisconsin, control 93 electoral college votes. Pennsylvania has the highest at 19, followed by Georgia and North Carolina with 16 each. As per polling averages calculated by ABC News' analytical website 538, neither of the candidates has a decisive lead in any of the states. However, Kamala Harris seems to be doing better than Joe Biden, who was trailing Trump by 5 percentage points in polls earlier this year. Trump has a small lead in Arizona, Georgia, Nevada and North Carolina, while Harris has a slight edge in Wisconsin and Michigan. Remember, the polls have a margin of error, so the numbers could be higher or lower. Let's take a look at how the swing states voted in the previous elections. Pennsylvania, the 5th most populous American state, has seen aggressive campaigning by both candidates. Trump clinched the state in 2016, but Biden showed strength here in 2020.
In the 2020 election, this was won by the Democrats by the razor-thin margin of just 1%, and the margin could well be narrower this time. It's a very, very close call. The Republicans, the Democrats have put everything they've got into winning this state, into winning every vote.
Remember, the state is witness to an enduring image of blood dripping from Trump's ear after a failed assassination attempt in July. Trump believes that if he wins in Pennsylvania, he will win the whole thing. Georgia voted for the Republican candidate from 1992 to 2016 but flipped towards Biden in 2020. He clinched the state with a margin of over 11,700 votes. Harris and former President Barack Obama shared the stage for the first time at a star-studded rally in Georgia's Atlanta, appealing to black voters. Meanwhile, Trump, in his last-minute speech in the state, declared that he is the opposite of a Nazi. Michigan was in Trump's kitty in 2016, but he lost to Biden just 4 years later. In primaries earlier this year, many Michigan Democrats did not back Biden because of his support for Israel's war in Gaza. Harris was heckled by an anti-war protester in a recent rally. Nevada, with 6 electoral votes, has leaned Democratic in every election since 2008, with candidates winning by a slim margin. The state has lagged behind in terms of economic recovery post the pandemic. Both Harris and Trump have promised to turn things around. North Carolina, a state recently ravaged by Hurricane Helene, had last voted for a Democratic president in 2008. Trump clinched the state in 2020 by just 75,000 votes. Joe Biden won Wisconsin in 2020, flipping the state that sided with Trump during his first presidential run. In both 2016 and 2020, polls underestimated the support for Trump. For now, we'll have to stay put and see who will emerge the victor. This is Kiran Khatri for CNBC-TV18.
So if Donald Trump wins, this will be his second term in the White House. That's not all. He will become only the second president in America's history to have lost power and then staged a comeback. Grover Cleveland did the same 132 years ago, fighting the enemy within, carrying out a mass deportation of undocumented migrants, and tariff for a tariff. These have been a few threats from Trump's election campaign. The big question we're asking today is, what are Donald Trump's intentions? To understand more, we are now joined by Michael Wolff, American journalist and author of the best-selling trilogy about Trump's time at the White House, Fire and Fury, Siege and Landslide. Wolff has had a front-row view of Trump's presidency. He has also been a columnist for top publications, including the New York Magazine and The Guardian. Mr. Wolff, thank you very much for joining us on the program. Let me begin by asking you, in 2017, in Fire and Fury, you had written that he never really wanted to win. He never thought he could win. He only wanted to be the most famous man in the world. What do you think when he's fighting for re-election this time? Why does he want to win, and why does he want to be on the ballot?
Well, he wants to win because, for one reason, because that's the way, probably the only way, he will stay out of jail. So it's kind of elemental. But the other reason, the broader reason, is that he can, his basic interest is not being the president of the United States. His basic interest is being Donald Trump, the most famous man in the world. And he's kind of boxed himself into a corner. In order to be the Donald Trump that we know, he has to be either the president or running for president. So it's existential for him. Existential because this is the only way he'll stay out of jail is to be in the White House, and the only way he can continue to be the most famous man in the world is if he becomes president.
Right. So primarily he wants to stay out of jail. Tell us about his understanding with Elon Musk, the Tesla CEO. From what we've read, that he is likely to become the chief of the Efficiency Commission in the White House if Trump is elected. But is there an understanding between the two?
Let me interrupt. There is no such thing as an efficiency commission. So that's like, Trump makes a lot of promises to a lot of people, and I think some off the top of his head, he came up with this idea of an efficiency commission, which means nothing. I suppose that Elon Musk has an agenda. He wants something. He wants a better business environment for himself, and he sees that as he sees the way to get that through supporting Donald Trump. Elon Musk is the richest man in the world, so he may have ambitions beyond that. One of the things that there's a lot of speculation about is that Elon Musk is trying to ultimately elect J.D. Vance, Trump's vice presidential pick, as an ultimate president. So we don't know. He's a rich man. He's given an enormous amount of money to Donald Trump. Obviously, he wants something for it. But the other interesting point about this is that both men, Elon Musk and Donald Trump, see themselves as kind of king of the world. So is there room for two kings of the world? I will tell you that certainly in Donald Trump's White House, there would not be. And I would expect that Elon Musk will depart his love for Donald Trump in tears at some point.
Right. Very interesting. There can't be two kings, king of the worlds in the White House. You had a front row view of Trump's presidency. I would like to ask you, what is currently motivating his strong views on immigration? He said a lot of harsh things, probably harsher than his previous campaigns. What's going for him right now? Who's motivating all of this?
Well, I mean, he's just motivated to win. He's always felt that his issue, his singular issue, the issue that won him the presidency in 2016 was immigration. So he's just continued. Trump always continues to do what has worked for him in the past. Actually, often he continues to do what hasn't worked for him in the past. He just is he continues to do more accurately what he has always done, and his political career is built on immigration or baiting the immigration issue, and he is now continuing to do that.
Right. You're someone who has interviewed Trump and so many people who are close to him. What is the real understanding within his family? What's their role in the current election campaign? You were one of the people who recently said nobody's talking about his relationship with Melania Trump right now. Could you give us a sense of the background? What are his terms with the family right now?
Well, I mean, let's start with his wife. Trump has been campaigning for 2 years. His wife's first campaign appearance on his behalf was just the other day, 6 days from the election. She has never, in all of his court appearances, she has never once been at his side. It's always been quite unclear where she lives. She's already been saying that if he wins again, that she would be spending most of her time in New York. I mean, I think that there are reasonable questions here. I mean, questions that would be asked of any other politician or candidate, certainly someone who might be the president. What exactly is the nature of the marriage? Are you really married, in fact? Or is it an arrangement? So these questions obviously hang out there. That's called the "Where's Melania" question. As for the other major family relationship, which has been with his daughter, who was in the White House, had a job in the White House during his presidency, and his son-in-law, her husband Jared Kushner, who had a senior-most position in the White House, and they have kept their distance from Trump, never appear with him. Seemed like his wife, you might infer, to be shunning him.
Right. You have also, have you ever in your interviews with Donald Trump understood his relationship with some foreign leaders? Because he's always maintained that he can stop the Ukraine-Russia war within 24 hours if given a chance. Does he have any sort of understanding with Vladimir Putin? Has there ever been some sort of strong foreign interference, foreign support to his campaign?
Well, we don't know that. There have been investigation after investigation, deep investigations into this question. So there's been clearly an enormous amount of suspicion about the nature, the meretricious nature of the Trump-Putin relationship, but we don't know. Trump does this thing that he likes to imply that there's a relationship, but then, of course, when there's an investigation, he denies there's a relationship. The idea, this idea that there would be no wars if Donald Trump were president, because other leaders would be afraid to go to war and to affect the interests of the United States if Donald Trump were president, because they don't know what Donald Trump would do, because they suspect he's a crazy man, is part of the Trump the image that he likes to protect. Does it have any substance? Donald Trump is vastly more interested in image than substance.
Right. And finally, very briefly, you said during his last re-election campaign, Sean Hannity of Fox News dictated Trump's election strategy? Is there someone dictating things right now, running the show for him behind the scenes?
No, I didn't. That's inaccurate. I didn't say that that Sean Hannity dictated his election strategy. I said that Sean Hannity was calling up all the time with advice and ideas and at one point, created an ad for Donald Trump. That ad actually then only ran on Sean Hannity's shows. So more to the point, no one dictates Donald Trump's strategy. Donald Trump is very hard to tell Donald Trump anything. So it's a kind of hit and miss. Whose ideas prevail, and ultimately it is all about Donald Trump, as everything is.
It is all about Donald Trump, isn't it? But thank you so much. We got a sense of the mind of Donald Trump as he is trying to get re-elected, and you gave us the reasons for that as well. Thank you very much for joining us, Michael Wolf. On that note, we are slipping into a short break here on our election special, but don't go anywhere. We will be joined by former Indian ambassador to the United States, former Foreign Secretary and former G20 Sherpa Harshvardhan Shringla on the other side to decode why the US election matters for India-US ties.
Crafting your investment strategy. How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our...
Welcome back. You're watching our special coverage of the US presidential elections. Getting America a better deal on trade has been one of the hallmarks of both the presidential campaigns. How does this augur for India? As per our understanding, if Vice President Kamala Harris were to succeed Biden, she could largely stick to her predecessor's trajectory on trade. However, Trump could act as a disruptor in chief. He has already hit out at India as being a big abuser of trade ties. To decode this further, we're now joined by Harshvardhan Shringla, former Indian Foreign Secretary. Ambassador Shringla, thank you very much for joining us. Do you think the mini trade deal, which we were negotiating so closely in the last year of the first Trump presidency, could be back on the table if he wins?
Absolutely. I think it's logical that the trade deal that we were so close to concluding at the end of Trump's presidency would be back on the table. I think both sides would benefit from even a partial trade deal that would allow a certain amount of goods to go in at low or no duty rates into both countries. And I think that would boost trade, boost confidence, and it would be good for both countries. So that certainly seems to be on the cards if Trump comes back.
Okay. But there has been a lot of momentum in Indo-US ties over the last 4 years. We've seen ISET take off in a big way. We have big ambitions in the Indo-Pacific. Do you think the progress that India and US have made on trade, on semiconductors, on AI and technology and clean energy manufacturing, do you think that could be undone or maybe reviewed if Trump were to win?
I personally don't think so. You see, every presidency adds to that relationship. I mean, after all, the term Indo-Pacific was coined during the Trump presidency. President Biden took it forward. The Quad was revitalized by Trump. He first brought it to the level of foreign ministers. And President Biden then convened the Quad at the level of heads of state and government. So every presidency does its bit to take forward that relationship. And there are certain areas of cooperation which involve India, which I think either side would be happy to work on and develop further. And these include, areas like technology, areas including the ISET, where I think we've made some good progress on very, very critical technologies. And of course, on areas that involve providing a boost to trade investments, the startup and technology sectors. All of these will get a boost irrespective of who's in power in the United States.
Right. And speaking about Kamala Harris's trade policies, from what you know about Kamala Harris and those close to her, how do you think she is going to approach the relationship with India? Trade is a contentious issue in American elections. Do you expect that even under a Kamala Harris presidency, the US could become more inward-looking?
Well, certainly, I mean, the trends suggest that the US will be more protectionist when it comes to their core interest, and especially given the widening trade deficit that they have with many countries, with focus on the economy and the focus on, restoring America's capabilities in manufacturing, in terms of getting the economy moving. The focus of any president will be to try and secure their interests. So we will have to brace for a more protectionist United States. But it's not new. I mean, we have seen it during the Trump presidency. And I'm sure whether it is President Trump or Kamala Harris who becomes president, both would, I think, stress on greater market access in India, greater, I would say, efforts to, collaborate in areas like defense and acquisition of defense items from the United States. These are normal pressures and normal aspects of our relationship. The important thing is what can we get from a relationship despite the pressures that could be there in terms of both presidents trying to show that they are looking after number one, which is their own economic interests, whether we can increase our own ability to have joint ventures, get some manufacturing jointly going, develop joint research and technology interests. These would be very important for both countries. And I think this is an area where even any president that comes in will be able to demonstrate the relationship is working to America's advantage and from our side to our advantage. So it should be a win-win, and that is how I think it would work, irrespective of Kamala Harris or Trump coming in as president.
Are there enough guardrails for arrangements such as the recent agreement we had on making chips for national security in Jewar in Uttar Pradesh that was a collaboration between the US Space Force and Indian startups. This will be done for the Ministry of Defense in India. For example, the HCL engine deal, for that matter. Do you think there are enough guardrails around that so that despite who is in the White House, these deals don't get impacted?
No, absolutely. I think any defense contract would have to have safeguards built in. I also see that we are threatening to impose a certain amount of punitive actions on GE for not moving fast enough on that contract as per contractual terms. Obviously the contract does provide for certain steps in the absence of performance of contractual terms. And I think any contract should be watertight and should have those elements. Having said that, most of these deals are G to G, that means government to government. And, really will work on the basis of a government wanting to share that technology. Keep in mind that the G144 engine is cutting edge technology. The fact that the United States and India are collaborating on aircraft engineering and aircraft engine manufacturing, I think, and design is a very, very important step forward. And it will certainly require a lot of follow-up and a fair amount of, I would say, work on both sides to keep that deal on track. But having said that, I mean, there are safeguards that we can exercise. And I think any retraction would only be, detrimental to the interests of the United States if they decide to, either go close or go slow on that particular agreement. But I don't see that happening because this is really a win-win, and we have a larger strategic, interests to go on. We have a much larger vision on that collaboration in the defense sector that would involve both countries, moving in a certain direction. And I don't see either Kamala Harris or Donald Trump resigning on some of those commitments.
Right. Finally, sir, when it comes to the unfinished agenda, both India and US have a common strategic vision. But if there was one big national security priority from an India point of view, what would that be?
I think for us, what is very important is to have access to cutting edge technologies in the defense sector. With the policy of an Atmanirbhar defense industry, we will need to focus on developing defense manufacturing capabilities, which is why the private sector is coming in, has been asked to come in. There'll be a lot more private sector investment in that area. For that, you will need the United States to not only transfer technology, but be willing to part with some of the cutting edge technologies that they haven't yet done so. And the G144 is an exception. And for that, of course, we need our companies also to be proactive because they need to be within that secure area, which is a zone of comfort for the U.S. Department of Defense. That when they transfer technology to an Indian company, that company has to have the safeguards in place that technology is used for the purposes for which it is contracted, and does not in any way go beyond that, go to others, for example, who might not use it in the way that it is intended. So essentially, we have to make sure that we bring in that ecosystem of trusted partners, a number of our top-level companies that can invest in the defense sector, who are then ring-fenced inside a sort of a special area, a zone of confidence, and who have the ability then to make sure that technology transferred is secure. It does not go out of our, let's say, factories or our areas, and that it is used for the purposes for which it has been contracted. I think that is possible, but we need to work on it. There's a lot more work that needs to be done. And I think, as I said, I mean, we are in a good space here, and irrespective of whether it's Donald Trump or Kamala Harris, I think the US presidency and the US administration will move further on areas that are important to both countries in the strategic sector.
All right. Thank you very much, Ambassador Shringla, for joining us on the program. Wishing you a very, very happy Diwali and a great festive season as well. With that, we've come to the end of our program. Thank you very much for joining us. Goodbye.
CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
ये लाइट्स का त्योहार है।
Hello and welcome to Young Turks, India's longest running show on startups and entrepreneurship. I'm Shriram Finance. Well, it is that time of the year when we ring in the festivities, and Diwali in particular symbolizes the victory of over inertia and the start of a new cycle with the light of clarity and positivity. It wouldn't be wrong to say the Indian startup ecosystem has rounded off a cycle of its own, hitting the concrete hard from the record-breaking highs of 2021, followed by a bitter correction over the last 2 years to now finally emerging with a sense of sturdiness and signs of spring. 2024 is set to become the best year for startup IPOs since 2021, when Zomato, Paytm, Nykaa and others raced to the Lal Street as flag bearers. So far this year, we've seen the likes of Ola Electric, FirstCry, Digit, Exigo, Unicommerce, Office starting their public market journeys. More are on the way with Swiggy, MobiKwik, BlackBuck and Ecom Express set to get their fireworks going with plans to list before the year closes. Now, if we assess the venture capital funding data for the 9 months so far in 2024, it's been better than 2023, with $9 billion having come into the ecosystem, a tad bit more than what the Chinese market has received. This as per data from Traction. We've seen 6 unicorns take flight in 2024 compared to just 2 last year, and that's come on the back of large deals returning with as many as 12 funding rounds valued at more than $100 million each. Besides the big highlight of Zepto's $1 billion fundraise in 2024, it's the secondary share sales that have fueled $100 million rounds in the Indian startup ecosystem. The strong IPO lineup and the emergence of secondaries have offered much-needed mode of exit for early investors, challenging the long-held notion of Indian startups being trapdoors for funders. Sectorally, the AI hype is flatboarding. India's quick commerce players have turned into global outliers, albeit with some regulatory noise that has also plagued the fintech sector. So what does 2025 have in store for India's startups? Before I get into that, let me start by wishing all our viewers a very happy Diwali. And it's time now to welcome our guests on the show, Karthik Reddy, the co-founder and partner of Bloom Ventures, and Hemant Mahapatra, the partner at Lightspeed India. Karthik and Hemant, thanks very much for joining us on this special edition of Young Turks. A very happy Diwali in advance to the two of you as well. Karthik, I gave a very brief but a quick snapshot of what the year has held out as far as India's startup ecosystem is concerned. Let's dive deeper into some of those headlines. What, to your mind, Karthik, and I'll start with you, has been the biggest takeaway of 2024 for India's startups so far?
I think definitely the path to liquidity cycles being, predominantly the IPO sort of, journey and the route has become very clear that India will have to pursue that. If you have a domestic company that's actually trying to build value within the boundaries of this country, eventually whether someone's acquiring it, someone's trying to buy a secondary in a unicorn, or whether someone actually thinks this is a sustainable business, they all approximately look the same. If you ask a private equity player to come and buy into a large digital company, they want to know whether it makes money, whether it's going to get to EBITDA, not right away, but in 2-3 years. And I think they were more adventurous in 21, 22. They've gone back into the same mode of judging a company as if it were IPO ready. And so I think the learning for at least the Indian lot that where we're building for the market opportunity that is India, is that you have to build within the constraints of what the profit pool in India demonstrates, and then you're judged by the public markets relative to what else is out there. So if you're Mamaearth, then it's Unilever and Marico. If it is Paytm, then it is an NBFC or a bank, and so on and so forth. So I think it's great that we have that momentum now building up. If we end the year with 12 to 15 IPOs, and we can keep this momentum going for the rest of the decade, suddenly we'll have 100+ companies listed across small, mid, and large cap in Indian tech. And I think that'll be a watershed moment to welcome the next decade. I know I'm talking very far out, but I feel what we started this year is going to become a consistent trend line over the rest of the decade.
Hemant, let me ask you, to Karthik's point, what would you signify as the big takeaway for the Indian startup ecosystem in 2024, outside of the fact that we've seen this spate of IPOs? And I think it would have been unimaginable even a couple of years ago that India would have been the IPO nation versus the US market, for instance.
Yeah, and absolutely. Thank you again for having me here, Shireen, and good to see you, Karthik. Always a pleasure. Look, I think Karthik is absolutely right. When capital was easy to raise, and easy to deploy, there was a glut of capital around the world. Now that it is harder to raise capital and deploy capital, there's a flight to quality in all dimensions of our business. There's a flight to quality in businesses and business models, teams, and even investors. So we are seeing that happen across all the geographies Lightspeed operates in. So that is a theme you're seeing in the capital markets globally. From a thematic perspective, and I would say, AI is looming large in every single category out there. We are seeing AI leading to a resurgence of consumer tech. And I know consumer tech has gone through a bunch of ups and downs over the last few years, but now there is a wave of new consumer tech companies, new modalities, new behaviors that AI is enabling, that is making it a very interesting category for us to invest in. We've done a bunch of those this year. We're also seeing a resurgence of hard-to-build companies, hard-to-build technologies. And you can call it deep tech, you can call it frontier tech, you can call it infrastructure tech and software. But we are starting to see a lot of net new companies coming up and attracting a lot of high-quality capital that are building hard-to-solve problems globally, especially coming out of India as well, which is a net new thing for us, and is a theme that we are digging in a lot more now.
Give us examples of the kinds of companies that you've invested in and what those check sizes look like at this point in time.
Yeah, so as a fund, we have been pretty active in what you could call frontier tech and deep tech. But maybe just zooming out from there are companies that are hard to build in different ways. We are investors in a company called Zepto, that is hard to build in a very different, operationally intensive way, and requires a lot of capital to prove a business model out. And then they have companies like Pixel Space that needs to get heads down for 3 to 4 years in the lab and prove the science and the engineering risk behind their approach before they come out in the market to raise more and more money. So we have looked at both of these categories, and like I said before, the capital is now flying towards companies that have built businesses of high quality, whether they are operationally intensive and require a ton of capital to prove the business model out, they are attracting a lot more capital now once they have gone through that needle hole. And companies like Pixel Space that have actually spent 3 to 4 years building world-class de novo net new to the world technologies, and now they are kind of reaching commercialization stage. They've also gone out and raised a lot of capital globally. So we are seeing a bit of both happen in the India market.
That's been the story. But Karthik, let's just pick up on this quick commerce story, because we spoke about this, including at the India Business Leader Awards jury, which you were a part of. And the point is not just that these are companies that are trying to do something that's hard to build. The disruption that these companies are creating across different sectors, the fulfillment expectation that these companies have managed to change, whether it's Zepto or Blinkit, and now more and more companies are getting into the fray. Do you believe that this quick commerce story is going to be the clear India outlier for the next decade?
I think it definitely rewrites a lot of rules, right? Unfortunately, our early pick in this space, Dunzo, became a victim of this, little bit of a capital bloodbath and fell behind, sadly. But, we were believers that the delivery model required disruption, and it required rethinking in a market like India, where you don't have big format retail like you did in other markets, and you have high density in almost 20, 30, 40, 50 cities, and which is where the biggest part of Indian consumption is concentrated. It's not, by the way, we are also contrarians, in the sense that we don't think quick commerce, for example, will work in tier 3, tier 4 India, and we actually have 3 to 4 retail or supply chain bets into tier 3, tier 4, which we started 2 to 3 years back. So we're always, as guys who do early stage, we have to be ahead of the frontier. I'm commenting on something that all of you are aware of now when it comes to quick commerce. What I'm seeing, though, to your point, is it is forcing both D2C brands, conventional retail, conventional FMCG, to rethink business models. And then every time that happens, just as AI is doing in the polar extreme of technology, this is more around logistics and supply chain, it's forcing people to rethink how to rebuild supply chains. And if you actually build a picks and shovels business that fuels, an acceleration to this business model, you could build a very, very valuable company. So now we're seeing plans around, dark warehouses on the cloud. We're seeing, how do you get, we are beneficiaries by way of Yulu and Battery Smart, which actually supply to the quick commerce model. So the picks and shovels businesses are beginning to pick, right? The logistics businesses have to be rewritten. I don't know what delivery will do, and I don't know what Ecom Express will do to be able to, shift their model to be able to compete with these guys. Similarly, as you're seeing, Flipkart and Big Basket are all forced to compete. Let's see if Reliance and DMart also get into that.
दिए जला के मोमबत्ती जला के हम अपना त्यौहार मनाएं, ना कि पटाखे जलाएं। पटाखे जलाने से प्रदूषण होता है। प्रदूषण से कोई ऐसा नहीं है कि किसी पे एहसान कर रहे हैं, हम अपने ऊपर ही एहसान कर रहे हैं। जो प्रदूषण होगा वो हम ही उससे भुगतेंगे, हमारे बच्चे ही, छोटे छोटे बच्चे वही उससे भुगतेंगे। तो इसमें कोई हिंदू और मुसलमान और इसका कोई वो नहीं है। सबकी सांसें ज़रूरी है, सबकी ज़िंदगी ज़रूरी है।
2024 has been an interesting year for the rise of new venture capital in India. Would you say that?
I think it's a year where things are stabilizing a bit. I wouldn't say we've added too much. I think the additions happened over the last 2, 3, 4 years. So we've had an explosion in new managers who, as you rightly said, raised predominantly from India, and it's a surprising trend because Indian, investors stayed away from very long-term locked-up capital, which is what venture capital is, right? Somewhere in the middle part of the last decade, I think the appetite was beginning to get whetted, given the headlines were like, Tiger's made so much money, or SoftBank has made so much money of some of our biggest unicorns, and they don't get a slice of it at all, right? But from what I recall, the AIF regulations came in 2012, which made it a little more streamlined to raise from domestic pools of capital. And what got raised between 2012 and 18, Shireen, I think between 18 and 22, there was 10x more capital coming from domestic shows, right? That's what we heard in IBCA. So what it meant is that there's a lot more appetite to take that risk. I would actually argue to the contrary that it's actually slowed down a little. I'll tell you what I mean by that. Playing blind into a capital pool that's a venture fund is less appealing than playing directly into companies. So if you saw today, Zepto, for regulatory or other reasons, is able to tap into Indian family offices for direct investing. So is ACO, right? These are the headlines in the last 2 days, right? Zepto and ACO are able to tap into large Indian family offices. And I think Indian family offices are getting savvy. If there was another article or somewhere that I read about the quality of talent that's going up in Indian family offices. So you're suddenly building Indian family offices becoming as professional as venture funds suddenly, because they're taking direct exposure, right? So we might be writing 10, 20 crore checks to start a relationship. They're writing 100 crore checks into a single investment, right? So they are becoming sort of mid-market PE / pre-IPO kind of investors, if not classic venture investors. And it's wonderful to see the spectrum of risk evolve in India. And I don't think it'll be one size fits all. I think a lot of their investing into funds like us is more experimental. They're buying pipeline to understand the market better, to be able to look at what's coming down the pipe, understand trends. They all come very attentively to our AGMs. They hear what's going on. And then they want to play the best of those companies as they're breaking out. And they're getting close to public when actually, ironically, most of the funds want to exit. And, Indian investors are saying, it's our market. This is a company that can grow 10x like a Zomato. I'll buy into it now, right? And so they're getting savvy. And it's good to see this. It's good to see this because that you can't rely on SoftBank and 10 other SoftBanks to buy out all our late stage risk. It's a path to public risk, which only the Indian domestic capital should, sort of anchor. And that's happening a lot more, I think.
Well, Hemant, what's your thought on the anchor that has emerged in the Indian startup ecosystem driven by domestic capital?
I mean, look, one of the biggest beneficiary is the IPO market, right? So it used to be that majority of the capital going into public markets in India was foreign. Now it is well balanced, and actually at some point in time it was actually much higher on the domestic side. And what is really exciting for us is that while of course the valuations may be a bit inflated compared to the peers in the same category in the US or other European markets, we do think the potential for upside in India is just so much higher. The internet penetration is still fairly low. E-commerce penetration is still fairly low. Wealth tech, health tech, insurance, all these things are still very, very nascent in India, which is the reason why these multiples are much higher, sometimes 2 to 3x higher for the same category in India versus in the US. The other thing I'll add is I think India is an attractive destination because as we saw with Unicommerce, even small to mid-size IPOs are getting a lot of attention. It is very hard for some of these companies to provide liquidity to their investors in other markets, especially US and Europe. In the US, you've got to get to about $500 million of revenue to even be noticed by the ones that build their IPO book. But I think India market in IPO is where the US market was probably in the 80s or 90s. If you just take an example, like Amazon, when they IPO'd in 96 or 97, I think they had about $15 million of revenue and they had no profit. I mean, they didn't have profit for many, many years after that. Netscape, that IPO'd in 94, 1995 was $11, $12 million in profit, sorry, in revenue and zero profit. They IPO'd at that stage. And then when you allow these kind of companies to healthily IPO at the right valuation, a lot of the benefit goes back to public market investors, which are primarily retail over time. So I think it's a really good trend that we are seeing continues.
Well, Karthik, one of the concerns, though, and I don't want to generalize this because these are specific events and specific incidents involving specific companies and specific investors, but that has been the sort of dark cloud hanging over the Indian startup ecosystem through 2023 and 2024, and especially when you have what you would have thought were, the poster child, the poster boys of this space, face the kind of music that they are facing today and virtually in an existential crisis. It does put to question the governance metrics that people are operating with. How much of that is a concern today and how much of it is being acknowledged and being worked on in terms of course correction? Karthik.
I think it's a kind of I would say those cases that you talk about are itself nuanced and layered. So outright bad behavior in terms of punishable offenses, I think are a very small number, Shri, right? The second is a little bit more rampant, I would say, which is do they know how to manage their capital, their runway in a down market when capital is tight? Can they control costs? Can they turn profitable? I don't think that is as much as governance as exuberance that has to be curtailed. And if somebody didn't do it on time, companies have blown up as well. It's happened all through the history of venture. It's not unique. It's just that nobody had seen a correction and cycle in this particular bull market for like post-GFC in venture, right? And it peaked 14 years in as opposed to usual 7-8 year cycles. So I think it got a little out of hand. But when you look at even those collectively put together, there's not probably more than 20-30% of startups which are in trouble. Yes, you might say it's a large number, but you'll see that even in stock market downturns usually. So I don't think it's fair to not compare it with what would have happened in a public market downturn necessarily. That's one. The second, and that's why you have bankruptcies. They happen in the US, they happen here. Chapter 11 exists because of that. Now there's another 25, 30, 40%, including companies in each one of our portfolios in venture, where I think the founders have been smart that to acknowledge that they got lucky with a lot of money in 2021, 22, course corrected in time, will not maybe hold a candle to the valuations from 21, 22. And if you realized First Cry and some of these folks, they all listed at down rounds, right? So I think there's an acknowledgement that this is not a one-way street to go up. Markets will correct. And you have to correct your valuation and your inherent value expectations that you set with your investors to more realistic levels. And you can't wing the public markets, and private markets are absent at those levels any which way. So I think most of them who want to believe that they're building for 10 more years, 15 more years, and they're building sustainably, have done a great job of course correction, I would argue. And then, the last 30-40% are actually doing well. The numbers are like 2x, 3x from where they were 2-3 years ago. And they're riding. So I think it's a mixed bag, and you're absolutely right. You can't generalize. What you should be worried about is, have we finished the cleansing? And I thought it'll be done by 24 end, if you ask me. I think it's still a year and a half, right? I said that last year.
A year and a half.
But it's still going to take 12 to 18 months to fully cleanse. It's not done yet.
It's not done yet. Hemant, you agree that the cleansing is not done yet? And as Karthik pointed out, I mean, you've got some of your own portfolio companies that are going through difficult times at this point. On the resetting of expectations, on the recalibration of valuations and the cleansing that Karthik spoke of, where are we today and how much further do you believe we need to be in order for us to be able to get that reset?
Yeah, maybe let me add a few thoughts, because I generally broadly agree with Karthik as well. But when there is a glut of capital, it does affect behaviors. So we've seen that happen over the last couple of years, and we certainly are seeing correction in the market. What is true now, which wasn't true a couple of years ago, is that having a down or a flat round used to be a ding on your resume. That is no longer a ding on the resume, which is making a lot of these conversations easier for the boards to happen, for new investors to look at a company and think about, well, why is this company raising a down round? It used to be a negative chatter in their heads. Now it's no longer that case. What this new wave or the post-Zorpira wave is bringing full center and attention is that a company's primary job to exist and reason to exist is to solve a problem that a consumer will pay money for. And for better or worse, when capital was freely available, that had become the primary job of the founder to go raise as much capital as easily as possible. And then that did lead to bad behavior, lead to defocusing of the business. It did lead to overspending in an inefficient manner in many ways. I think all that attention is now coming back to, well, what is the core reason for my business to exist? And in some cases, the business does not need to exist. We've had those companies shut down as well, where they were scaling and flying quite high during the pandemic, and post-pandemic behavior shifted back. And they don't need to exist anymore. So they had to return capital, and this was a collaborative discussion between us, the board members, and the founders. So we've seen all of this happen. It's hard to really call whether it's going to take another 18 months or not, but I certainly see the trend lines are positive, and we are seeing a lot of that cleanup already happening across the portfolio that we have, and also portfolio that we see as net new investors in other people's companies.
Well, it is the season for hope and optimism. So let me end by asking the two of you, and Karthik, I'll start with you. What gives you the most hope as we look at 2025, and where would you place your biggest bet on? Is there a sector? Is there a company? What do you feel most confident of in 2025?
Me, the theme all year, we have like an annual theme, and it's been about doubling down around our right to win globally as Indian startups, right? And historically, that was understood to be the domain of just software companies, and we actually think that's changing. We actually think we can win on hardware, we can win on hard tech, agri-robotics. We are co-investors with Hemant in Pixel. We're seeing the courage of founders who are now exposed to things that we never were at their age, to say that, why stop at Indian boundaries? So I feel like, in the future, 40-50%, and that's when you ask me, what am I looking at? If we raise a new fund next year, it's going to be indexed a little higher on our ability to win in global markets, which means we're chasing global revenue pools. And I think it's, that the whole semiconductor question you asked about, if we have supply chains now to deliver the cheapest raw material for what is required to compete in the future, then we'll be even more equipped to go and win against the world. I won't fund semiconductor like chip, fab units, but everything that leaches off that, I want to be a party of, right? To build for the world. So that's my hope, that we actually have stellar outcomes across consumer health, consumer education, deep tech problems like space, agriculture, where we can service the world over the next decade and a half.
So right to win in global markets, that's the big theme that continues to dominate Karthik's playbook for 2025. Hemant, what about you?
Yeah, I think we are, as investors, we are at a very, very lucky point in time in the evolution of technology. Every 10 to 15 years, a new wave reaches an inflection point. And those who enter the world of investing and founding companies at the beginning of that wave, when they come out 10, 15 years later, a zero gets added to the outcome sizes. A zero gets added to the revenues that they are able to build. A zero gets added to the number of people that can be serviced through the technology. This happened in the 90s with internet, happened in the 2010s with mobile, and now it is happening with AI. And we believe that, people say, hey, what is your AI investment? We don't think of it like that. We think the question is as moot as asking, what is your internet investment? There is no such thing as AI. It will permeate and absorb every little thing that humans are going to do over the next 10 to 20 years, maybe even more. So what is exciting for us, there is a new technology wave that has reached an inflection point, but it is starting to look very hard to differentiate that from magic. And that will lead to new behaviors, new human population scale behaviors across consumer, across enterprise, across deep tech. Even hard to do things are going to be possible, where you could deploy AI to design new chemistries for us, new materials for us, and so on and so forth. So it's like a smorgasbord of interesting stuff that we can look at globally and invest behind. So it's a really place for us.
Well, Hemant and Karthik, many thanks for joining us on this Diwali special here on Young Turks to take us through the interesting intersections that you're going to be playing on and what you're watching out for in 2025. Always a pleasure. Wishing you, your families and your teams the very best from all of us here on the Young Turks team. And with that, it is time for us to wrap up this special edition of Young Turks. From all of us, here's wishing our viewers a very happy, safe and prosperous Diwali. Thanks for watching.
Me, along with my friend Sunil Singhania, welcome you all to this very special Diwali show. We are very excited to face not one, but the entire editorial team to bring you the best of content over the next 1 hour. I hope all of you enjoy. Thank you so much.
Happy Diwali in advance, and we look forward.
And I think we should Happy Diwali to both of you.
Happy Diwali. And I think this feels great. You know, we're going to now start looking at you more like co-anchors than you know, market guests. But thank you so much for coming to us, to our studios.
That doesn't take away the fact that
I
they've been
want
market
to
veterans.
wish first Happy Diwali, and I also want to acknowledge, and Sunil will agree, you know, we have of course grown professionally,